And there are a lot of skeptics who believe that science is out to get them, or that, we're all just sitting here lying. Is there work being done that you think could actually win over some of these skeptics? Is there a way to demonstrably show them?
Yeah, I do think all the work we are doing will help towards this, because, this is not some model that's in some supercomputing facility, right? Not available to the public. I mean, you can download this and go try some of this yourself. Just like a video game, you can play the game of climate change one day, right?
Quantum physics.
So everything becomes accessible. At least my hope is, chunk of the community that is curious will have resources online that is much more open, so they feel like they can participate in that.
If you think about the scientific journey that humanity's been on over the last 300 years, it's been quite good. Just take us 10 years from now. Like, how different will things be?
I think the whole process of scientific research and development will be accelerated many, many times, right? Even orders of magnitude in some areas. And that'll just mean that we can quickly rule out things that don't work and hone in on things that work. Certainly, drugs designed by AI, they're already coming into trials, and that'll just increase fully. Personalized medicine for cancer and all of these, where we really haven't been able to understand, right, for various different targets, how to quickly design drugs. This can make it much faster and also cheaper, because right now so many of these treatments are too expensive to be done at scale. So it'll make this democratized and cheaper. And yeah, I think this will hit every area. I don't think any area is immune to this.
I think it will be interesting, won't it? 10 years' time, if it takes the average drug 10 years to come to market, and if AI systems right now are coming up with some of the potential candidates for a future successful drug, then in 10 years' time, are we going to see a waterfall of new drugs?
I mean, it may not be a huge number, right? Because you can't test all of them. It'll be more targeted. It will be personalized. It will
actually work.
Exactly, effective.
Thanks so much for joining us.
Thank you.
Thank
it's been
you,
fascinating. Yeah. Thank you for taking the time.
Yeah.
Over the past decade, China has gone from a Silicon Valley copycat to a top contender in technology on the world stage.
Its ascent is peaking at a time when geopolitical tensions with the US and Europe are intensifying, and the rise of artificial intelligence has sparked a new arms race.
The US is rushing to curb China's influence in AI while balancing the need to regulate the powerful technology within its own borders.
How America manages these competing priorities will have implications for where the balance of power in tech will shift to next.
On this episode of AI IRL, we'll explore how China's playbook went from imitation to innovation and discuss what's at stake in the competition between these two superpowers.
Mustafa Suleiman, thanks so much for coming in. Now, you are the co-founder and CEO of Inflection AI and a venture partner at Greylock. Some people will know you as one of the co-founders of DeepMind, now owned by Google. Tell us, what made you want to start fresh with Inflection?
Well, now is really the moment. I mean, it was very clear to me during 2020, 2021 at Google when I was working on Lambda, the conversational AI that now powers Bard, that these large language models were truly going to be the future. And I wanted to start a company to build personal AIs, an intelligence that is completely aligned to your interests on your team and really functions as a personal assistant or a chief of staff, one that knows you intimately and over time can actually help you with practical tasks like scheduling, prioritizing, planning, and those kinds of things.
And that's what you're working with Pi.
Exactly, yeah. Pi stands for personal intelligence, and we see it as your personal assistant, essentially.
How do you feel about the concentration of power in technology right now among the big companies coming out with their own AI models? Microsoft, Google, Meta.
Well, I mean, I think you're right to point out that the big companies have the resources and the people and the compute infrastructure to be able to adapt and compete faster than ever, right? And that is a very impressive, reality of how technology works these days. It requires a huge amount of compute. And at my own company, Inflection, we've managed to raise a lot of money and build one of the largest supercomputers in the world. But on the flip side, the other trend that's taking place is that the open source movement is now almost at cutting edge. I mean, it's probably about 12 months behind the very largest models built at the big tech companies. And so that's kind of a contradictory trend. Like the big companies are getting bigger and better faster, but also everybody is now going to be able to get access to these same capabilities in open source.
Let's fast forward a little bit into the present day where the world order has changed since you first entered the tech industry. How did China go from being a copycat culture to a contender when it comes to digital innovation and specifically AI?
Yeah, I mean, China is more than a contender. I think in many respects, it's one of the leading players now. I mean, they've always been incredibly creative. And I think that we may have sort of overstated the extent to which they were simply copying, what we were doing. And I think it's important to remain humble about the fact that, these ideas are going to be widely available to millions and millions of people. And, in many respects, all of our cultures are, equally creative, and they've been able to take, tools and ideas that are available both in open source, in the academic literature, and move them forward, innovate at the cutting edge. They've produced a lot of very good papers, contributions to the academic conferences that have been peer reviewed. So, I just think overall it's better to take an approach of humility, acknowledging that, they're also going to be a really significant player in this field over the next few decades.
How would you rank the United States in terms of technological prowess in that world order?
Well, I mean, there's no question that we, in the US and in the West more generally, are currently in the lead. I mean, we have the very best, most innovative technology companies and technology hubs. There's, without doubt, Silicon Valley is leading the pack. And I think we'll continue to. I think we worry too much that we're going to sort of be dislodged from our podium position.
For how long do you think?
Well, I think the question is, what does it look like to be dislodged? And is that really the right framing in the first place? Like, what is the difference between first and third? And, people talk about there being a race for AI, and it's very unclear what that looks like to come second or third in that race. I think it's sort of the wrong metaphor.
We're talking about superpowers, Clash of the Titans sort of stuff. It reminds me of back when the previous US administration banned companies from doing a lot of business with Huawei, and Huawei ended up basically having to get a lot better very quickly at making its own chip designs and all that kind of stuff. And it feels like it backfired a little bit.
Yeah, you've also advocated for the US restricting sales of some NVIDIA chips, which are crucial in training AI systems, to buyers who don't agree or who refuse to use them ethically and safely. So what do you think is the best way the US can actually flex its power? Is it through the technological innovation, or by stifling effectively some of its adversaries through regulation?
The first thing I should say about that is I don't think now is the time to do that. I mean, I think in theory, when the time comes, if the time comes for us to adopt a kind of global anti-proliferation strategy, we're worried about technologies being so powerful that we have to stop their spread. If that moment arises, and I think we're quite a long way from experiencing that, then technically that would be an appropriate containment strategy. Because much as this technology is manifested in software, it lives on the internet, it still sits on chips, you know, whether you're training a model or serving a model. So in order to ask a model a query, you have to have access to one of those NVIDIA GPUs. And, you know, for what it's worth, there are really only like one major company in the world that produces those high-end GPUs, NVIDIA. And they manufacture the vast majority of their chips at TSMC in Taiwan that use one single company, ASML, a Dutch company that manufactures the core chip that produces the chips, and they sit in the Netherlands. So it's actually a very narrow supply chain. And so I think the point I was sort of trying to make is that if you wanted to adopt a containment strategy, there is a supply chain where you can impose chokeholds on it.
And in 10 years from now, which country do you think will be leading the world in AI? Is it going to be the US? Will it be China? Will it be Europe?
It's going to be the US, I'm pretty sure of that. I mean, the fundamentals in the US innovation ecosystem are unquestionably the best in the world. I mean,
what could flip that balance of power?
Well, I mean, I think it's hard to say. I mean, I really do think that the US is in the strongest possible position. At the end of the day, you know, it's talent that drives, you know, this innovation. And talent still concentrates around a small number of physical places. Despite everything that we've experienced in the pandemic and people wanting to work remotely, you know, it's still really important to be physically proximate to other people who, you know, are working with you in the office. I mean, you know, I think that trend isn't going to change. I do think China is going to catch up. I think they're going to develop their own AI chips, their own fabrication facilities. But that is going to take 5 years or so. The export controls that the US has implemented, you know, are real, and they really will prevent China from getting access to the next frontier of models, so the GPT-5 onwards. Right now, I don't really see how China could train those kinds of models.
Is there any downside, any unintended consequences that could come from this containment strategy the US is employing?
Yes, I think it is a very aggressive strategy. The counterattacks have already started, right? The China restricted gallium, which is a raw material used in chip manufacturing. And I expect them to have their own reactions in time. You know, we're very dependent on their supply chain. And so the idea that we could completely decouple, I think, is misguided.
I'm going to just put you on the spot really briefly and wonder, like, can you tell, because we're all friends here.
Sure, go for it.
Like, do you have a major regret about your work in AI? And do you also have a major single goal?
Yeah, my major single goal is to show that it is possible to create safe and ethical artificial intelligences which are accountable to humans. There is a possible trajectory where, you know, some groups may recklessly experiment with algorithms that can self-improve. And if in 10 to 15 or 20 years time, those kinds of AIs are set loose on the open web in, you know, a reckless way, then I can imagine that possibly causing serious harm. And so for as long as I can remember, almost 15 years that I've been involved in AI, I've been trying to raise awareness and concern about the possible ways in which it can go wrong. And part of doing that is to show a bunch of practical ways that it can go right, both with writing my book and laying out a series of containment strategies and things that we have to do in politics to improve our governance and regulation, but also in actually building and making Pi, which I think is hopefully going to continue to remain a very safe and controllable personal AI that can work for you.
Mustafa, thanks so much for coming in. Been a pleasure.
Thanks very much for having me. It's been great.
Helen Toner, thank you so much for joining us. You're a director at Georgetown Center for Security and Emerging Technology, and you're also an OpenAI board member. Dan Wang, thank you so much for joining us. You're a visiting scholar at the Tsai China Center at Yale Law School, and you've been studying technology and China for many years now.
And we've just heard from Mustafa Suleyman, and he thinks that China's emerged as one of the biggest contenders in AI. So Helen, I'm just curious to start with, do you think we're overestimating China's capabilities?
It's certainly true that they're a big player. And it's also true that we shouldn't underestimate them and that we have a bit of a history of underestimating China's ability to innovate. I mean, I think 10, 15 years ago, the story, at least in Washington, D.C., where I'm based, was, yeah, China can't innovate. If they're producing things that look like new technology, it's because they've stolen them. I think that's clearly no longer true. At the same time, I think it's also very possible to overestimate them. And sometimes I think I see that as well. So are they a serious competitor? Yes. Are they eating our lunch? No.
So that copycat culture, it's fair to say that most people are thinking, we're past that stage. Dan, what do you think of that?
Well, I think it's certainly the case that China focuses on different things. So President Xi Jinping is, I think, a little bit less enamored with the internet platforms, with a lot of the cryptocurrencies, with a lot of the AI businesses that Silicon Valley specializes. He's also a little bit less enamored of Wall Street and financialization and hedge funds. And if I had to think about what Xi's broad views are, it would be much closer to being something like capitalism with German characteristics, which is much more about building cars, building hydraulic pumps, building heavy machinery, the heavier the better, about all sorts of these major industrial projects. And I think China is very much a leader in things that include electric vehicle batteries now, solar photovoltaics. It is making a lot of electronics products, and it is innovating on a huge sort of a lot of the automotive supply chain. But I think they have a little bit less of a focus on AI, and therefore there is not so much political direction anymore to really push forward these consumer applications.
I think it's fair, though, that some of those areas, the US is also innovating very, very strongly. So are there any areas where China is innovating significantly better than the US?
Well, I would say something like electric vehicle batteries, where China has something like the 70% of all global expansion, all global capacity of electric vehicle batteries is now mostly in China. When it comes to the clean technology supply chain, again, these very industrial projects, these pieces of heavy machinery, that is a little bit more the focus. I think the US is really strong in things that include semiconductors, artificial intelligence, biotechnology. These are things, the smaller things where China is not so good, but there are big areas in which China is way outbuilding the US.
I mean, the semiconductors is getting significantly better in China. I mean, partly maybe as a result of the Huawei issue. Helen, what's your view on the semiconductor side of this?
So China's definitely been investing for decades in trying to have their own independent semiconductor supply chain, and they've been making some progress. The thing to know about semiconductors is there's a huge range of sophistication, from the really basic semiconductors, computer chips that go in basic devices, your smart fridge, your car, up to the kind of more advanced chips that might go in a brand new iPhone, up to very advanced chips that go in kind of the data centers, gigantic warehouses full of computing, which is what you're training advanced AI systems on. So China has made a lot of progress on the more basic end of the semiconductor sort of scale, and is still really struggling to hit the most advanced end. And that's where, it's not even, you can't even say the US is, alone able to create those advanced semiconductors, but what you have is an incredibly advanced global supply chain.
Many describe artificial intelligence and its development across these two superpowers as an arms race. Is that framework misguided, do you think?
I think it's a bit misguided. I think you really want to look at what kind of AI are we talking about, and in what way might it be a race. I think the place where it's clearest that it makes sense to think in a competitive framework is in kind of military domains. So, it's just true that the US military really wants to make sure that it is keeping pace with, and ideally a little ahead of, the Chinese, or a lot ahead of the Chinese military in terms of what technology they have.
Dan, Washington has taken some steps to curtail some of China's ability to get their hands on the cutting edge chips that really power these AI platforms. What's your take on that? Is that an effective strategy, or will China just find a way to build their own?
I think that China is going to try to figure out a lot of the way to build their own. A lot of the chip makers now have been under very significant stress from US sanctions dating back to about a year ago now, released by the Biden administration, that is really stopping their ability to access not just the high-end chips, but also the semiconductor production equipment as well.
And I think in general, it's really difficult to distinguish between what kinds of technologies should the US really not want China to be able to develop, and where is it fine. So, you mentioned, clean technologies before, where China, if you're looking at, manufacturing solar panels, as you mentioned, EV batteries, a lot of other areas, China is doing amazingly at that. And what you're starting to hear in some, US policymaking circles is that maybe that's a bad thing, that China is making a lot of kind of clean technology stuff. And I find that a little sort of tricky to reckon with, is at what point do we want to really shut them out or prevent them from being, able to manufacture anything if it's something good, useful that we can use. Of course, if it's technologies that we think have really significant military value, I understand, but then it starts, the lines between those categories start to get very, very blurred.
It seems like these tensions are just ratcheting it up even higher as time goes on. With each administration, they're intensifying. So to your point, if we do need these other technologies, solar technology for this transition into a greener future, what kind of happens next? How much do we place on kind of the AI arms race that could then potentially work against us in climate change? Is that a concern, or is that too far in the future still?
Well, a few months ago, Beijing did announce some export controls on certain solar technologies involved in making production wafers.
So it's already happening.
It is already happening, that there are some threats out there that, relatively speaking, Beijing has been pretty restrained against retaliating against American companies of the likes of Intel, of the likes of Tesla so far, but these things could escalate more.
how does the relationship between, the ruling party in China play out against the kind of the development of companies?
I think the Chinese system is definitely more top-down when it comes to AI development. You see less kind of individual tech companies like OpenAI or Google taking the lead, and more these kind of multi-institution partnerships, or maybe you have a university and a tech company and a government, department all collaborating on big AI projects. That's much more common in China. At the same time, China is a huge country, so there's a limit to how much the government can achieve from the top. So a lot of what you see is sort of Beijing providing direction, providing ideas, providing sort of signaling of this is what we in the central government would be excited about.
Dan, how would you compare how the Chinese government is handling AI with its people versus how they handled social media?
Well, I think President Xi Jinping doesn't necessarily view AI right now, a lot of these ChatGPT-like applications, as some of the most economically productive things that are coming into our society. So I think that President Xi looks much more at AI like he would at Facebook or Twitter, now known as X or whatever it is. These are platforms like TikTok that, if you're asking me, is something like TikTok or Facebook really increasing my personal productivity? Well, I would say actually it is really horribly detracting from my productivity. And so I think that a lot of these AI platforms right now create speech issues. When an ordinary Chinese person sitting in Beijing or Shanghai asks AI, well, what happened in 1989? Well, what do you think of socialism? What do you think of President Xi's performance? These AI tools are having a lot of challenges actually answering socialist correct values that are in line with the government's ideas. And so these are major speech platforms, first and foremost, and perhaps not really the economically miraculous thing that raises our productivity growth at the very moment. Now, it might happen later on. Right now, I think the party views it as somewhere between economically not that useful and potentially very socially destabilizing.
So from a consumer standpoint, AI is almost, it can potentially create more problems for the Chinese Communist Party. But then if you look at it from like a surveillance standpoint or military type of AI applications, that's kind of in a different camp. Is that right?
Yeah, that's right. And I think they're definitely, one area where China is, I would say, leading in AI is on surveillance. They really have leaned hard into facial recognition, voice recognition, even gait recognition. So how you walk in a crowd, can they pick you out by that? I think in the West, there's been some development of these technologies, but with a lot of criticism from civil society, a lot of hesitation, sort of, I would say, like very yellow light. And in China, it's been blaring green light.
On the topic of WeChat, when we spoke ahead of this, I think we touched on the fact that there are some generalized misunderstandings about China's approach to social media and data and AI. It's AI relying on huge amounts of data, and the perception is that because of things like WeChat and similar things in China, that there's this huge pool of data that the population in China is just very happy giving over and is used to giving over, and therefore is just sitting around waiting to be exploited by AI. And I remember that you made a pretty significant point. It's like, that's probably not really the case. And people think that's the case, but it isn't. So I wonder if you could touch on that.
Yeah, I think people have this perception that because the Chinese government is very controlling and has a lot of access to what's going on in Chinese citizens' private lives, that means that there's these beautifully curated, extremely complete, large databases of information that can be used to train AI systems or to do other things. But for anyone who's ever worked with data, you know that cleaning data, structuring data, making sure that the right information is flowing in the right places is incredibly challenging. So it's both true that the Chinese government can get very detailed information on the private lives of its citizens if it chooses to, and also true that it's incredibly messy the way that works, and incredibly difficult for any given actor to get access to something. So, for instance, a company trying to train some AI model using data is actually subject to a pretty significant data governance setup in China, data governance regulations that make it really challenging to use customers' data for things it wasn't already designed for, or that you didn't already get consent for.
Which we learned from Cambridge Analytica scandal just as one case, and there are many others. That is not the case in the US. It's not the case in Europe. There's a lot going on. The EU's AI Act is pretty widely praised by some people, not everybody, but it's quite broad and far-reaching. But that's not the case in China. in terms of what you're saying?
So China's setup is now more similar to the GDPR that exists in Europe. So around kind of protecting consumer data and giving people the right to, opt in to different uses. Of course, in China, there's always the exception, unless the security services, think that you might be a dissident, and then they're going to get whatever they want on you. But in terms of kind of companies, they're certainly relatively restricted in what they can do.
Switching gears a little bit, Dan, I'm curious about how China's sluggish economic growth recently weighs into the government's calculus and how they're thinking about AI's potential to spark social unrest.
I think that the Communist Party is very much involved in trying to think about, how to control possible social unrest. I was in Shanghai in November 2022 when there were protests in the streets denouncing zero COVID, denouncing the Communist Party by name, that these were things that were erupting. And so I very much sign on to Helen's description of AI, that China is leading in the AI of censorship. It is leading in the AI of facial recognition. That right now it looks very much like the US is a place where ordinary consumers can tinker with and play around on a lot of these AI tools, whereas in China is mostly reserving these very powerful tools for its own use, potentially to control society. That right now China is in a moment of economic weakness. This might deteriorate further, this might get a little bit better, but there is always this presence hovering over there that the state security might ramp up its technology really to make sure that there are no socially destabilizing incidents.
Well, Helen, Dan, thank you so much for being here. It's been great to learn from the both of you.
Thanks so much.
Thank you very much.
Good morning. This is Horizon's Middle East and Africa. Our top stories this morning. Mixed signals. Asian stocks and U.S. futures fluctuate after a global tech-led sell-off revived concerns the AI-driven equity rally had gone too far. President Trump defends the move to unfreeze some Iranian accounts, saying the funds will be used to buy food and medicine from the United States, a claim Iran disputes. And U.S. Secretary of State Marco Rubio arrives in the UAE as Washington seeks to reassure regional allies the interim deal with Iran is good for their security and economies. It's just gone 8 a.m. across the Emirates. I'm Abir Abamar in Dubai. I was getting ready to start the show saying a rebound from yesterday when it comes to Asian equities. Not the case. They were ticking higher earlier in the morning, but now we're seeing the MSCI Asia Pacific 0.7 lower, led down by TSMC, which was pretty much, it had escaped the route that we saw yesterday that led markets like the Kospi to drive down 10%. Hang Seng in China entered a bear market. So we're seeing that route actually continue into today. And then when it comes to U.S. futures, they're ticking higher just slightly this morning, 0.1% higher, again, after a 1.4% drop in the S&P 500 yesterday, over 3% drop in NASDAQ 100. Now, everyone is waiting for one thing today in U.S. hours later today, and that's Micron results, because they're really going to be a gauge about the AI infrastructure and whether it is actually holding. We await those details on the results later. Micron did drop massively yesterday. It is still 250% higher year to date. So some positivity there. When it comes to oil prices, Brent is at $76 a barrel. It is dropping again today, 1% lower. And that is as the flow of ships in the Strait of Hormuz continues. We'll have more details on the geopolitical story later on. And the yield on the 10-year notes in the United States ticking lower, 1 basis point. We await personal spending data tomorrow in the United States, and that will give us a little bit more clarity on all the fun talk about inflation and the Fed hawkish tilt that we've been talking about over the past week or so. Now, for more on what is happening in Asian markets, Winnie Su is in Hong Kong for us. Winnie?
Good morning, Abir. As you just mentioned, it's been such a busy day for Asia. Again, we are seeing a bit more pressure for Asian stocks. MSCI Asia down for a second day, and in fact, seeing its 2-day decline, the biggest in about 3 weeks. Now, technology shares continue to lead the decline with some caution around the upcoming Micron earnings. So that's why we are seeing Taiwan's TAIEX index down more than 2%, but also seeing Indonesian stocks turning to the negatives after MSCI delayed its market status review to November. When it comes to the Japanese yen, still hovering around those weakest level in about 4 decades, and still lots of risks rising around the potential yen intervention to come. Now, flip the board, we take a look at the biggest action today is again in South Korea's Kospi index. And when you look at the 2-day chart, yes, it was down about 10% yesterday. That's why we saw a bit of a rebound earlier in the morning when dip buyers step in on that positive earnings story, and also report that Samsung Electronics might be doing a share buyback. However, that really didn't last long before Kospi again turned into the negatives after the report that presidential policy chief is in fact saying that chip makers should be sharing their profits. So you can see that the market has become very volatile, with the implied volatility also at record highs, and that all these small news coming in can really drive big moves in the South Korean market. Back to you, Abir.
All right, Winnie Su in Hong Kong with those market details. Now, a cautious rebound in Asian stocks is fading as losses in bellwether chipmaker TSMC weigh on the market. This comes amid renewed concerns that the AI-driven equities rally may have run too far. Joining us now to discuss further is Dan Farley, State Street Investment Management Executive Vice President and CIO of the Investment Solutions Group. Dan, good to have you on. Thank you for making the time for us. Yeah. Let's talk about the latest from yesterday, the drop that we've been seeing across global equities. Are we starting to see signs of a bubble bursting?
I don't think so. I think that's probably a bit premature in terms of where we are right now. You said it a few minutes ago in terms of talking about Micron, right? It was down 8% after being up 250. So I think it's important for us to recognize that these things don't go in a straight line, that in general, this trend is one that we think is going to be continuing. We're broadly supportive of equities here. But I think that the call for a bubble at this point is probably a bit too early. Earnings continue to follow through on this, and so we think this is it's a step along the way. Obviously, we'll see what the numbers come out with today, and as we start to move things forward. But for the most part, we think this rally still has room to go.
Room to go. So you think that the valuations still make sense when it comes to those numbers that we're seeing across the S&P?
Well, I think valuations are not cheap by any measure. But when you start to look at that in the context of how earnings have continued to be able to grow, it starts to say, yeah, they can be supported here. I think it's interesting if you look at the returns that we've seen out of the S&P 500, for example, and across multiple markets for that matter. Most of it has been earnings led. You know, the fact that we have seen markets and companies' ability to continue to deliver on their earnings component. We saw strong Q1 numbers. We've seen strong upgrades for the rest of the year, right? And there's actually been price multiple contraction in many markets. I think that's actually a healthy environment. If we'd seen the inverse, where earnings were going down but multiples were expanding, that might get me a bit more concerned about your bubble question.
So we're talking about semiconductors. The SOX index is gaining as much as 100% this year. It saw some declines yesterday. And you say there's more room to grow when it comes to this AI rally. So where are the risks coming from? What are the risks for you?
Yeah, I think that obviously it's the earnings pieces that we're all talked about. That's what we're all worried about in terms of where we're seeing this volatility that's coming through. So to the extent that these companies are not delivering on that, I think that's one big one. I think the other outside of the industry is going to be around things like rates. To the extent, and this is true in semis, but I think this is true in the market broadly speaking. You know, we're not priced for a 5% U.S. 10-year. And I'm not suggesting we're going there anytime soon, but if were we to see a big move up in rates, I think that would cause a bit of a repricing across the board. And obviously, given the movements that we've seen in AI, they're probably more vulnerable than most.
So generally or historically, investors have been quite afraid of the risk of recession. And then now, do you think that the positioning game becomes positioning at a time where rates, growth, and inflation are structurally higher?
So I think the growth story for us is actually one of a bit of a slowing story. If we look at macroeconomic growth across the world, our expectation is that we're going to continue to move into a world where it's below average, right? That was our story in January. Obviously, the conflict has gotten in the way in the middle, but I think that continues to be the thing that we are envisioning. So that says slower growth. We think that inflation is probably peaking here, okay? And then ultimately, particularly in the U.S., but really around the globe, looking at the labor market is starting to soften a bit. And so we think that this gets into a good, not great environment for companies to be doing business. But that also means it's probably okay for stocks.
So you brought up the conflict, and you were telling me before the show you're visiting the region. Now, when it comes to the conflict, is it, you know, have we forgotten about it, or has the geopolitical risk become conventionally more or harder to sort of gauge or hedge against?
Yeah. Well, I think this one in particular is particularly hard because when negotiations historically have been behind closed doors, and it feels like it's being done on social media these days. And so there's all sorts of different posts that are causing volatility in the marketplace. I think you've got to kind of try to look past that, past the noise a little bit, and sort of see direction of travel. Our expectation is that the current negotiation that's going on does hold. I think both sides have a lot of incentive to get this right and get this taken care of. And so our highest probability that this is likely, it will take maybe a couple of months to play itself out, but for the most part that this sticks. And so, you know, the ability to expect that, and what has been especially interesting has been how markets have just sort of looked past that, right? Oil down at sub 75 now is really quite interesting in a world where this is not a done deal yet. And so equities have seemed to look past it. Oil has seemed to move past it. I'm not quite sure I'm ready to call it a non-issue quite yet, but that's what we've seen markets be willing to do.
Then what should Kevin Warsh do? Does he hold? Does he raise next year? Do we see a rate hike in December?
Yeah, we're actually on the opposite side of that view. We think that the Fed is likely to hold here for the rest of this year. And if we're right and we're in a slowing economic environment and that inflation has peaked, we think that the Fed is actually, we're penciling in 2 cuts next year one in January, one in June. I think the fact that he kind of came out and was very hawkish in his statements was perfectly appropriate. It was a little bit of the Fed being able to use their communication strategy to reset the market a little bit. But also, as your first meeting as a new Fed chair where independence is a question and inflation is very high, I think you have to come out hawkish. And so his comments weren't surprising, but I don't think it's indicative of the path of travel.
All right. Well, Dan, thank you for your time this morning and for visiting us. Dan Farley, State Street Investment Management Executive Vice President and CIO of the Investment Solutions Group. Now, for a look at some of the other stories we're following, Meta is also launching a lower-priced smart glasses model. On Tuesday, the social networking giant unveiled what it calls the Meta Adventure and Fury glasses, each priced at $299. This marks the first time the firm is moving down market, launching lower-priced models under its own brand. Meta is also introducing a $399 Starfire model in collaboration with Kylie Jenner. Alibaba has sued the U.S. Department of Defense, seeking to be removed from a blacklist that identifies the company as a supporter of the Chinese military. The e-commerce giant argues that it was added to the list without substantial evidence, violating due constitutional process. The U.S. this month accused Alibaba, Baidu, BYD, and other Chinese companies of aiding the People's Liberation Army. And AFP is reporting Airbus has found cracks in A380 aircrafts used by Emirates and Qantas. On Tuesday, Airbus said it would inspect 16 A380s, 5 of them immediately. The cracks were said to be found in a key wing component on the aircraft. And according to the report, the European Union Aviation Safety Agency ordered urgent inspections. And coming up, President Trump says Iran will use unfrozen funds to purchase food from the U.S. But Iran is disputing this. We have the latest developments on that story next. This is Bloomberg.
The most important news and financial information whenever and wherever it happens. I'm Michael McKee on the Mexican border, and this is Bloomberg.
Key investors, top executives, global innovators. Join me for in-depth conversations with the biggest newsmakers on the day's top stories. Insight with Haslinda Amin, only on Bloomberg.
It's a multi-trillion-dollar industry. We'll show you what's happening in ETFs like no one else. ETF IQ, only on Bloomberg.
What is going to be the consequence for U.S. markets? We are seeing modest gains across European equity markets.
Take a look at how we're faring when it comes to Asian markets.
Welcome back to Horizons Middle East and Africa. I'm Abir Abu Amr in Dubai. Now, before we start with our next segment, some lines coming in from President Trump now saying that he's ordered the Department of Justice to look into gasoline prices. He's also saying that gasoline prices better, quote, start going down a lot faster. This is on a Truth Social post from President Trump just now coming in across the Bloomberg terminal. Which leads us to our next story. President Trump says Iran will be able to use funds released from frozen accounts only to purchase food and medical supplies from the United States. But Iran has disputed Trump's comments, saying the funds would be used, quote, freely in whatever manner it deems appropriate, and that there were no plans for new nuclear inspections.
Our missile program was not included in the MOU, and it shall not be. I would like to say that if it was not for Iran's missile capabilities to defend ourselves, our country would have been plundered and destroyed by the Zionist regime and the U.S., like Gaza, and they wouldn't have mercy on the young and old.
Joining me now to discuss further is Stuart Livingstone Wallace, Bloomberg's executive editor for the Middle East, North Africa, and Russia. Stuart, you just heard the latest lines from President Trump. Clearly, he's under pressure to get those energy prices in the U.S. lower. The negotiations, the technical negotiations, have stopped yesterday, but we're still seeing negotiations among lower-level negotiators in Switzerland. What's the latest on that, and do we continue to see those discrepancies?
Yeah, and again, like we've repeatedly said, you should anticipate more of that going forward. The key thing is not so much to look at what they're saying, because, as you said, pretty much every statement that's put out by one side is almost immediately contradicted by the other. Let's see the reality. So the good example I would point to is what happened over the weekend, where Iran said Hormuz is shut. All the evidence points to ships continuing to go through Hormuz at a trickle, but still they're going through. So that I think is kind of the playbook for what's happening in these negotiations. Now, the markets will continue to react. There's no doubt. They're going to trade off this. But when we take a slightly medium, longer term view, again, it seems to be going in the right direction. I don't want to get too optimistic, but that seems to be the direction of travel.
And Secretary of State Marco Rubio is doing a regional visit. He is in the UAE. What can we expect out of that?
He is. I mean, it's very hard to know exactly what he's going to say about it. We've not had a sort of a readout yet on what that is. We assume the substance of it will be confidence-building measures, to basically go around the region. Because it must be said, right, the US and Israel started this war with Iran, but the countries that got hit the most and suffered the greatest damage, both economically and in terms of their security, was the Gulf. So one would presume that he's going to be going around the Gulf states telling them this is a decent deal, we can go forward. We do know a lot of the Gulf members were intimately involved in negotiating that deal. They've been acting as very strong mediators. So we think that's the substance of it, but let's see what comes out at the end of this mini tour.
All right, let's see what comes out of it. Stuart Livingstone Wallace, Bloomberg's executive editor for the Middle East, North Africa, and Russia, always with those details. Now, for a look at some of the other stories we're following, Israeli Prime Minister Benjamin Netanyahu has again called for his country to increase its military autonomy and reduce reliance on support from the U.S. It comes as Washington's interim deal with Iran to end the war has come under fierce opposition in Israel. President Trump has been publicly critical of Netanyahu in recent weeks as Israel's war with Hezbollah in Lebanon threatened peace negotiations with Iran. Israeli stocks and currency have turned to the world's worst performers this month. That is on concerns a peace agreement with Iran will leave Israel in a weakened position. The Israeli shekel has retreated about 5% against the dollar so far in June, and Israel's equity benchmark, the TA-35, has plunged more than 12% in dollar terms this month. Coming up, another big launch for SpaceX, this time in the bond market. We'll discuss Wall Street's big bet on Elon Musk's rocket science next. This is Bloomberg.
Join me each week on Wall Street Week for stories of capitalism from business, markets, economics, tech, and climate. More than what you need to know, it's what you need to think about.
Good morning. Good morning. This is Bloomberg Surveillance.
Welcome back to the opening trade.
It's Bloomberg Money.
This is the Asia Trade.
This is Wall Street Week.
Welcome to Balance of Power.
You're watching Bloomberg Deals.
Welcome to Bloomberg This Weekend.
This is Bloomberg Television.
Technology is embedded in every aspect of our lives, and that revolution is playing out in real time. From finance to defense tech, AI to entertainment, from the road to the stars. Bloomberg is bringing you the stories of companies and people that are pushing tech to new frontiers, and the politics reshaping global tech markets. I'm Ed Ludlow, live in San Francisco, and this is Bloomberg Tech.
Every weekday, only on Bloomberg Television. We're at the epicenter of a global realignment on a scale not seen for decades. At the intersection between markets, economics, and geopolitics, a forum for sophisticated conversation. This is Bloomberg Surveillance.
Welcome back to Horizons Middle East and Africa. I'm Abir Abu Omar in Dubai. Let's take a look at some of the stories we're looking at today. Saudi Arabia's cabinet has approved the areas of the country where non-Saudis will be allowed to own property. The country's official SPA news agency did not identify any specific locations, and Saudi Arabia is overhauling its property ownership law as it aims to draw foreign buyers into the Gulf's largest economy and reduce its dependence on oil. Oil exports from the UAE in early June recovered to nearly 85% of the country's pre-Iran war levels. That's according to a report from the International Energy Agency. The UAE achieved this by using a pipeline to the port of Fujairah and its Mandus underground storage facility. It also ramped up exports through the Strait of Hormuz with tankers' transponders turned off. Russian President Vladimir Putin says he is ready for peace talks with Ukraine based on agreements reached in Istanbul. Those talks, held last May, were the first direct discussions between Russian and Ukrainian officials in more than 3 years. Putin says any negotiations with Ukraine must take into account agreements reached during talks with the U.S. in Alaska and, quote, realities on the ground. German industrial giant Siemens is making a push into the AI space, betting that the new technology is moving beyond chatbots and onto the factory floor. CEO Roland Busch told us more about their AI strategy.
We call it industrial AI. Why? You need a couple of things. Number one is you need a technology stack, and the stack includes hardware and software. Both is super relevant. Number two is domain know-how. We know how to build things. We are on the shop floor. The next one is data. We have a lot of data, our own data shared with our customers and partners. And we have the trust of our customers, because when the AI hits the real world, hallucination is not an option. So you need hardcore results. They should work. So we have all this, and we can bring it now to the real world. And last but not least, we have great partners like NVIDIA, like some others, who are with us in making this transformation for our customers.
I asked you at CES in January, give me a case study, an example, some evidence of AI in a factory anywhere in the world. Fast forward to June, is it real now? Is there a deployment that you can point to? Please.
It's real now. And we can talk about the design phase, the manufacturing phase, and the operation phase when your assets are in the field. But you talked about an example on the shop floor. Actually, we now launched our Eigenengineering agent. What is it? It is an agent which programs an industrial PC for you. So if you have a cutting job on the shop floor, and the cutting is not precise anymore, now an engineer has to go there, reprogram your PLC, and so on. Eigenengineering agent does it for you. You say, I mean, my cutting machine is not working precisely. Eigenengineering agent analyzes the problem, breaks the problem down, looks for all the data, the machines, the job which has to be done, analyzes it, develops a code, runs it, compiles it. If it doesn't work, it compiles it over again, fixes it until you can say, now go, and you push a button, and then PLC is running with the same precision as before. So we are talking about 50% higher productivity, while the quality of your programming is increasing by 80%.
That was Siemens CEO Roland Busch speaking with Bloomberg Tech co-anchor Ed Ludlow. Now, before we head into the break, let's take a quick look at where equities are trading this morning. U.S. futures are now flat. They were ticking higher slightly earlier in the session, quite literally unchanged at the moment. NASDAQ 100 futures are also flat. A cautious return, perhaps, after the 1.4% drop in the S&P 500 yesterday, led by those AI names. Dow Jones futures 1/10 lower, and Euro Stoxx 50 futures 0.5 lower. Oil prices are also ticking lower this morning. Brent is at $76.5 a barrel as shipments through Hormuz continue. And coming up, we'll discuss SpaceX's bond launch and the market shipwreck with Eileen Burbidge, founder of Passion Capital and NFG Ventures. That is coming up next. This is Bloomberg.
We should not deny that change is coming. And change is not coming just in data centers and AI. As a world, we are building infrastructure, we're building energy, we're doing energy transmission, we're building next-gen manufacturing, we're ramping defense, and we're doing this thing called AI and data.
Yes.
We will see the largest need for capital ever. And that's what we've seen so far this year. And so now to your specific question, it's about underwriting. There are a number of very strong US tech companies who run diversified businesses, Amazon, Google, Microsoft, who are interested in seeing these centers built and are interested in not consolidating the debt on their balance sheet. And to the extent they are prepared to lend their credit, one can lend against those types of things and make sensible underwriting decisions.
Asia is at the forefront of some of the world's biggest stories. I'm Sherrian in Tokyo.
And I'm Heidi Stroud-Watts here in Sydney, where the trading day begins. We're here in the center of all the action to get you set up with the numbers, news, and knowledge you need for the day ahead.
The demand is indeed recovering. We've been waiting for this moment.
The opportunity of a century.
Join us on Bloomberg The Asia Trade. Weekdays only on Bloomberg TV. Context changes everything.
Making money isn't about drowning in emotions. It's about understanding what's actually happening. Markets are the best way to glean signal from noise, and that is what we try to do every morning. This is Bloomberg Surveillance.
Bringing you up to them in the news whenever and wherever it happens. I'm Sherrian in Seoul, and this is Bloomberg.
Every weekday, Bloomberg puts the spotlight on a different aspect of global finance. Flows, funds, and the forces shaping markets on ETF IQ. The future of money with Bloomberg Crypto. The players behind major transactions on Bloomberg Deals. Rates, risk, and the cost of capital on Bloomberg Real Yield. And personal finance, retirement, and wealth management on Bloomberg Money. A different topic every weekday, only on Bloomberg Television.
Good morning. This is Horizon's Middle East and Africa. Our top stories this morning. Mixed signals. Asian stocks and U.S. futures fluctuate after a global tech-led sell-off revived concerns the AI-driven equity rally had gone too far. President Trump defends the move to unfreeze some Iranian accounts, saying the funds will be used to buy food and medicine from the U.S., a claim Iran disputes. And U.S. Secretary of State Marco Rubio arrives in the UAE as Washington seeks to reassure regional allies that the interim deal with Iran is good for their security and economies. It's just gone 8:30 a.m. across the Emirates. I'm Abir Abu Omar in Dubai. Quick look at where markets are trading at half past. U.S. futures are now flat to the upside, less than 0.1%. Now, again, the AI rally and the reasons that have been fueling it were put into question yesterday as investors doubt the AI infrastructure. But again, everyone is waiting for Micron results coming out later today to gauge whether the reasons that have driven this AI rally in U.S. equities and Asian equities over the past 6 months or so are still very much relevant. Micron did fall about 13% yesterday. Now, something to note about it is that it is more than 250% higher year to date. So still a whopping performance for Micron and other chip makers in the S&P 500. The SOX index, which is a gauge for semiconductors in the United States, did drop yesterday in the midst of all of this, but it is still very much higher for the year. So that is something to just bear in mind as we await those quarterly results later. Asian equities 1% lower this morning. Now, this is a reversal from earlier in the session when they were actually gaining. But TSMC, which had escaped yesterday's rout pretty much, is now dropping. It contributes about 10% to the overall gauge. So that's weighing down on the MSCI Asia Pacific. Kospi was also gaining earlier in the session, but is trimming those gains. Brent crude is about 8/10 lower this morning. It is at $76.5 a barrel. We continue to monitor the movement of ships through the Strait of Hormuz. It's definitely ticking up over the past couple of days or so as those interim deal negotiations carry on between the United States and Iran. And then the yield on the 10-year notes in the United States is 1 basis point lower this morning. We await personal spending data later this week and take a look at what it means for the inflation outlook, but also what the Fed decides to do later this year. Now, for the weakness that we're seeing in Asian equities, we've got Winnie Su, as usual, in our Hong Kong studio. Winnie?
Yeah, good morning, Abir. We are seeing Asian stocks extending losses and now down for a second day. Still, technology shares leading the declines ahead of those earnings from Micron. And that's why we are seeing Taiwanese stocks leading the decline down more than 2%. We do have Kospi here fluctuating. Yes, there is pretty much some mixed news that we are hearing. On the positive note, we have the report potentially that Samsung might be announcing a share buyback, but also some concerns after the remarks from the presidential policy chief that the chip makers' revenues and their profits should be shared further. Remember, we also had MSCI keeping South Korea as an emerging market status, saying that there are still some problems remaining unresolved. When it comes to Japanese yen, still around those levels that are the weakest in about 4 decades. So we are monitoring those risks for potential yen intervention. Now, flip aboard, we take a closer look at the chip stocks because overall it is down, especially in Taiwan. You have just mentioned TSMC here down almost 6%, a bit of a catch down from yesterday, and also again caution building ahead of Micron's earnings. But the outlier today is in fact in Chinese chip makers. You have Hua Hong here, in fact, up about 16%. So that optimism around the self-sufficiency theme, and we're also seeing a report from the FT that around the surging black market prices for NVIDIA's H200 chips in China. Back to you, Abir.
All right, Winnie Su in Hong Kong with those market details. Now, SpaceX shares ended higher on Tuesday, snapping a three-day sell-off that wiped out more than $600 billion from the company's market value. The Elon Musk-backed company also raised $25 billion of bonds in its debut offer, making it the latest mega-cap tech firm to tap investors for its AI expansion. Joining us now to discuss further is Eileen Burbidge, founding partner at Passion Capital and founder of NFG Ventures. Eileen, good to have you on. Thank you for making the time. Look, SpaceX, let's start with SpaceX. It's still trading above its IPO price, but we're still talking about a company that's revenue, or whose revenue is way below that of mega peers in the S&P 500. Do you think that this performance for SpaceX is going to be realistic going forward?
Well, I guess the question is whether or not it's sustainable. And I think that Elon Musk himself, as an individual, as the CEO of the business, as the largest shareholder, that with more than 80% of the voting rights, he does command a huge following, particularly with retail investors. And also, I would say, institutions that might have a fear of missing out. And so there does drive this compulsion to keep boosting the stock up and trading at levels of 100 times revenue. So I do think we're going to see that for quite some time, even though there'll be a lot of volatility to come.
And Eileen, SpaceX's bonds, I was reading across the Bloomberg terminal this morning, are more expensive than Oracle's. Now, despite that, rating firms have given it a solid rating, but investors seem to be taking a cautious view on these debut bonds. Why do you think that is?
Yeah, I think it's a bit of a mixed bag. There is caution, like you say. Having said that, they were oversubscribed. So from what I understand, there were about $90 billion in orders. And I think there's a premium now being ascribed to this debt because of the potential risk in underwriting it. However, it really does carry through that same compulsion or that same motivation I mentioned with respect to retail investors wanting to follow SpaceX and wanting to be part of its offering, its bond sale, its listing, whatever way, shape, or form it can take. And again, that's what's going to keep the sort of the trading volumes up as well. That's what you see swinging back and forth. It's going to be probably added to the NASDAQ index, the FTSE Russell index, one of them coming online probably as early as Friday this week. And then thereafter, maybe in another week and a half to the other index. That's going to force the ETFs and a lot of the index funds now to go into it as well and redistribute their holdings across those big indices.
And Eileen, both OpenAI and Anthropic have made their wishes to list clear. Right now, what do you think Altman and Amudai are looking at SpaceX and thinking, what lessons are they learning from the performance of SpaceX over the past 10 days or so, and what to look forward to when actually IPOing?
Yeah, I probably shouldn't speculate, but my guess would be that they're probably pretty happy, pretty confident. Again, if SpaceX can trade at 95 to 100 times, maybe 105 times revenue, they're in a much better position. Both OpenAI and Anthropic have much stronger revenue. They have given indications of profitability, even though SpaceX is nowhere near that. So they're hoping to come to market to trade at 20 to 30 times, maybe in the case that was Anthropic. Maybe in the case of OpenAI, you're talking 40, 50 times, but neither is looking for the lofty valuations that SpaceX is getting. And so I think they're probably feeling quite confident that they're going to be able to list without any issue.
So speaking of those valuations, let's take it a little bit more macro, and the route that we saw yesterday, it keeps popping up every now and then, Eileen. Do you think there is more downside risk to the AI rally that we've been seeing over the past quarter or a couple of quarters? Do you think there is more room for things to deteriorate further?
I do think there will continue to be volatility. I do think you'll see a lot of trading volume for the big tech stocks, particularly in AI. I think a lot of what could have been driving these last few days is any excuse to take some profit off the table. As you mentioned, even though SpaceX lost as much as it did in its market value, it's still trading above its initial listing price and where it debuted. And if you look at the other tech stocks, such as, say, Alphabet, for example, it's only about 13% off of its 52-week high, which was posted just a month ago. So the rallies you've been talking about for the last few months, they've really been super heady. And I don't think it's unreasonable for investors to take some of that profit off the table. And when you think about losses, or when talking about, say, a bullish sentiment, we're still talking almost double the share price of a year ago for much of these stocks.
So what are the next pockets of opportunity? I mean, when you look at semiconductors and how well they've performed, memory chips, where do you think that when it comes specifically to the AI pockets of opportunity, if you were, where do you think the next big thing is going to be?
I mean, I think it'll continue to be in the memory chips, in the semiconductors, in the graphical processor units, or whatever other CPUs that are going to be driving the underpinning or the underlying of the AI infrastructure. I'm not so sure about data centers, given, again, in their own respect, if they're isolated data center businesses, because of how capital intensive those are getting scrutinized now. However, I do think with these foundational models coming to list, such as OpenAI and Anthropic, you're going to see people spreading their bets across the application level, the foundational language model level, and the infrastructure level. That's going to continue to run.
All right, Eileen, we're going to have to leave it there. Eileen Burbidge, founding partner at Passion Capital and founder of NFG Ventures. Now, coming up, Namibia has upheld its decision to deny Starlink a license to operate in the country. We'll bring you the details on that story next. This is Bloomberg.
Welcome to Bloomberg This Weekend. I'm David Burr.
I'm Lisa Mateo.
And I'm Christina Ruffini. We're tracking breaking news today from Wall Street to Washington.
Let's start overseas. The sector is really propelling this deal forward.
Yeah, the hope is this will open up new markets and provide some additional liquidity.
Of course, now they're going to have competitors. We got a big week coming up in politics.
Earnings season is underway. We're going to get some key reports.
Everything you need to know before the markets open on Monday.
Introducing Bloomberg This Weekend, bringing a little Bloomberg into your weekend routine.
Guys, buckle up.
Middle East and Africa. Vibrant resources and high-yield investment opportunities abound. Join me on Horizons Middle East and Africa for the stories, newsmakers, and insight from this exciting region. Now weekdays, only on Bloomberg.
Bringing you up to the minute geopolitical news whenever and wherever it happens. I'm Anne-Marie Hodern in Beijing, China, and this is Bloomberg.
Welcome back to Horizons Middle East and Africa. I'm Abir Ahmed in Dubai. Namibia has upheld its decision to deny Starlink a license to operate in the country. The country's communications regulator rejected more than 600 appeals and said only 2 met the threshold for review. But neither presented enough grounds to change the original decision. Our chief Africa correspondent, Jennifer Zapasaja, joins us now from Johannesburg. Jen, good to have you on. Why did Namibia turn down Starlink's license bid, and what were essentially the key issues in this?
Well, we can point to a number of issues that Namibia pointed out, Abir, in particular as it pertains to Starlink. First of all, it really comes down to the legal and regulatory issues that Namibia saw with Starlink's compliance. And really, it's similar to what we've seen across some of the African countries, but mainly here in Namibia, they require operators and telecom operators to be at least 51% owned by Namibians. And what they said in their regulation is that Starlink, which is found to be true, Starlink was fully foreign owned and had not secured any exemptions to prove as such. And we also saw the authority citing some concerns relating to national defense, public safety, and also what they called as broader regulatory compliance issues. In particular, Starlink previously had operated in the country without a telecom license. So as you mentioned there, a number of appeals that Starlink and others had tried to make in order to be operational in Namibia, but it didn't seem to work at this point in time here in the country.
And Jen, what is the demand like for Starlink in Africa? Have other countries there relaxed rules to attract the Musk-backed company?
Yeah, you know, it's interesting, depending on where you look on the continent. We have seen a number of countries. We should remember there are quite a few parts of the continent that are still not connected. And so many do see Starlink as an entrance into being fully or more connected throughout some of their parts of their country. And so we have seen places like the Democratic Republic of Congo. We also saw Lesotho and Zimbabwe relaxing their own local ownership rules to adapt to and adjust to Starlink operations there. What's been interesting, though, here in South Africa, of course, we know the owner of Starlink, Elon Musk, was born here. It's still been quite a debate, and we're seeing local officials right now still taking up whether or not they're going to ease some local ownership rules, which have been in place for a number of decades since the end of apartheid, to maybe see Starlink operating here. It does seem to, though, still be something that Starlink is pushing forward with, wanting to operate here in South Africa. Right now, though, it's still being reviewed.
All right, Jennifer Sapasadra, our chief Africa correspondent, with those details. Now, for a look at some of the other stories we're following today, Kenya has halted construction of a U.S.-funded Ebola quarantine facility. This is after a court found the health secretary in contempt. All work linked to the project has been suspended, and the health secretary said there was no intention to defy the court's order. The facility was intended to house U.S. personnel exposed to Ebola as the outbreak in Congo continues to spread. And Nigeria's Dangote refinery has purchased Middle Eastern crude for the first time. Bloomberg has learned that the refinery bought cargoes of UAE crude from ADNOC for August delivery. Traders say the purchase follows a decline in Gulf crude prices after recent market disruptions. Cocoa prices have fallen after forecasts of rainfall in key growing areas improved prospects for crop development. The decline follows a sharp rally that pushed prices to a 6-week high on concerns about weather risks linked to El Nino. And Morocco's central bank has left interest rates unchanged. Policymakers cited improving economic growth alongside uncertainty surrounding the global outlook and energy prices. The decision comes as Morocco balances rising investment needs linked to football from external shocks. Morocco is set to co-host the next Men's World Cup with Spain and Portugal. And coming up, Abu Dhabi's MGX raises $50 billion to set up one of the biggest AI funds ever. That is coming up next. This is Bloomberg.
know how the market day started.
Find out how it finishes.
Public markets to private markets.
From the micro to the macro.
Covering retail, entertainment, the business of sports.
The supply chains, trade policy, how it all is impacting the U.S. equity market as we drive to the closing bell at 4 p.m.
A holistic approach to covering financial markets.
If it matters to your life, we're covering it. I'm Katie Greifeld.
And I'm Romaine Bostic, and this is The Close.
Live every weekday.
Only on Bloomberg. Context changes everything.
When news breaks,
a redhead across the Bloomberg terminal.
Bloomberg has you covered.
Trump's global tariffs are struck down by the U.S. Supreme Court.
For all the context and clarity you need.
There's going to be now tons of tariff headlines until midterm elections.
Hear it first on Bloomberg. U.S. jobs numbers are released. Bloomberg has the report under surveillance with crucial data and expert analysis at terminal speed. Nobody covers Jobs Day like Bloomberg.
Trading day is about to start.
And you're already looking for that edge.
The opening trade brings you everything you need to know as markets open across Europe.
Let's talk about the significant risk transfers to find space in their balance sheet.
Hedging some of that risk.
You could look at it the other way. Obviously, this stuff is risk-weighted.
I would much rather be long than be short.
We're in a kind of sweet spot.
Very, very strong alignment.
3 revolutions in one.
I'm Guy Johnson.
I'm Anna Edwards.
And I'm Tom McKenzie.
This is your opening trade.
Every trading day, only on Bloomberg.
IPO market is getting unclogged, if you will, is certainly helpful in terms of exit. So exits will be important, but I think new investment opportunities will also be important. I think the fact that there is a détente makes, I think, at least the near-term outlook a little bit more stable.
We have R&D hubs around the globe, but China is going to be really based around software and automation. And there's this notion of labs becoming more autonomous or more AI, physical AI ready. And that's where we feel we really want to be at the heart of the innovation here in China.
When the token cost becomes so expensive, people look for solutions. We have 40 million vehicles, EVs, in the market. If you think about multiplied by that, the power, the energy power and computation power, that's a huge resource. We will tap into that.
Those are some of our guests at the World Economic Forum in Dalian talking about doing businesses in China. Now, Abu Dhabi's MGX has raised nearly $50 billion from regional and international investors to accelerate investments in AI infrastructure and technology. The fundraising underscores the Emirates' growing ambition to become a major force in financing in the global AI build-out. Bloomberg's Nandu Nair joins us now to talk about the details. Nandu, good to have you on. Just how significant is it to have this $50 billion in investment, essentially?
Well, Abir, it's significant for two reasons. Firstly, at $50 billion, like you mentioned in the lead-up, it will be one of the biggest ever AI-focused fund globally. And it comes at a time when building out AI infrastructure and frontier models are getting increasingly expensive. And that gives Abu Dhabi and MGX a space at the table for participating in these big global deals. As we reported yesterday, Abu Dhabi and MGX are already starting to deploy some of the capital that they've already raised. Secondly, this also is sort of a turning point for Abu Dhabi because typically it's seen as an exporter of capital, and here one of its main entities is going out and raising third-party capital. So it's tapped regional sovereign wealth funds as well as global pension funds and institutional investors, marking a significant shift in its strategy.
Nandu, we've reported on these stories so many times. I actually miss reporting on them with your team. But the broader strategy of Abu Dhabi as this global backer of AI, where does MGX fall into that when it comes to this wider Emirates strategy?
MGX is absolutely central to Abu Dhabi's broader strategy in AI, right? So chaired by Sheikh Tanoon, backed by Mbadala, as well as G42, MGX has become one of the most aggressive investors in AI globally. Its investments span everything from frontier AI models like OpenAI and XAI to infrastructure partnerships with the likes of BlackRock and Microsoft. So it's front and center. It set out this target of building out $100 billion of assets under management. And as Bloomberg reported in February, it's looking to deploy $10 billion annually for the coming years, right? So again, this comes at a perfect time. This sort of is a vehicle for Abu Dhabi's ambitions in the AI space.
And how do these ambitions kind of compete with or compare with some other regional or countries in the region like Saudi Arabia?
So everybody wants to have a part in this AI race. We know you mentioned Saudi Arabia. Saudi Arabia has built out Humane, which again has significant investments in XAI. Like in neighboring Qatar, QIA has, over the last 12 months, become an increasingly important part of this AI race. It's got investments in Anthropic. It's got, it's possibly invested in SpaceX. So there are lots of broadening race in the region. Everybody wants to have a significant part in this race. Everybody knows that it's critical to their broader efforts to diversify beyond oil.
All right, Nandu, with all those details about the big numbers in Abu Dhabi, that's Nandu Nair, who leads our Mideast Money team. Now, on to some football news. Cristiano Ronaldo became the first player to score in 6 different World Cup tournaments by getting 2 goals in Portugal's 5-0 win over Uzbekistan. Ronaldo made history in the 6th minute and added another goal in the 39th minute. He was named player of the match for his performance. Now, before we head to the end of our show, let's take a look at where those equities are. S&P futures are now turning higher, 0.2 higher. It was fluctuating throughout the whole session, but we're now seeing a little bit more substantial gains. NASDAQ 100 futures are 0.4 higher. This is a rebound after yesterday's 3.3% drop. Dow Jones still lower or a little flat to the downside, and Eurostoxx 50 futures are turning lower as well, again trimming some of the losses earlier in the session. Oil prices still lower today as the ships make their way through the Strait of Hormuz. Brent crude is at $76.5 a barrel, NY crude at $72.6 a barrel. We continue to monitor those negotiations between Iran and the United States. Now that's it for Horizons Middle East and Africa. I'm Abir Abu Omar in Dubai. Stick around with us for Daybreak Europe. This is Bloomberg.
Some people would say that there's maybe a little bit of a bubble in AI. When you have companies with market caps of $5 trillion, you don't see any bubble there at all?
Whenever we have an acceleration in technology and people get excited about it, you have significant capital formation around new companies that are trying to capitalize on that opportunity. And we've seen this before through history, and you're seeing it now. It won't be a straight line. The opportunity set with AI is enormous. There will be winners and losers. And it's hard to pick the winners and losers now. And certainly a lot of the capital that's being deployed will not produce adequate returns. And a bunch of the capital that's being deployed will actually not produce any returns. But it's hard, it's hard to call the timing on these things. And the thing I'd point to just from a historical lens is in the fall of 1996, Alan Greenspan talked about irrational exuberance in stock markets and the NASDAQ was at 1,300. And the NASDAQ peaked 3.5 years later at over 5,000. So, these things can go on for a long time, but ultimately, there are adjustments, there will be drawdowns, there'll be rebalancing, and just, it's hard to call it because the trend, the technology trend and the investment is real.
From the world of politics to the world of business, Joe Matthew and Kaylee Lines deliver news, insight, and analysis live 2 times a day, every trading day. Balance of Power at 1 and 5 Eastern, only on Bloomberg. Get your fixed income fix. Watch Bloomberg Real Yield around the world right here on Bloomberg. Context changes everything.
Live from London, this is Bloomberg Daybreak Europe. I'm Lizzie Burden with your top stories. Asian stocks erase gains as hopes of a tech rebound fade after yesterday's global sell-off. Crude falls as more tankers transit Hormuz, while President Trump blasts oil companies for not cutting gas prices, ordering the Justice Department to investigate. And Treasury Secretary Scott Bessent backs Fed Chairman Kevin Warsh, saying inflation will ease as the Iran war subsides. Well, welcome to Wednesday. It is hot in Europe, but cool in these markets. We had that dramatic sell-off yesterday, and equities are struggling to find their feet today. The Asian stock rebound now losing steam. TSMC weighing on that recovery. European futures -2, down 0.2%, although Nasdaq futures are up 0.4%, and the focus is on Micron earnings later on. Flipping cross asset, and as I say, we have oil lower, 0.6% lower on Brent now at $76 a barrel as that tanker traffic through Hormuz picks up. Treasury yields pretty steady, down a basis point at 4.48 on the 10-year ahead of that core PCE data tomorrow. And euro dollar is at its lowest level in a year on the weak economic data. Also, those dovish comments from the ECB President Christine Lagarde that prompted a pullback in bets on hikes. That's what's happening in your markets. What's on the agenda for today? Well, we have 2 pieces of German data. Retail sales coming at 7 a.m. London time, followed 2 hours later by the EFO survey, giving us a bit of insight into how much the geopolitics has weighed on business sentiment and consumer confidence. And then after market, we'll be getting earnings, as I say, from Micron. And this company has topped revenue estimates for 5 consecutive quarters, 9 of the past 10 quarters. Shares up nearly 300% so far this year. So we'll keep out an eye for volatility in the aftermath. A busy day ahead. Let's get started. We begin with a fresh bout of selling, erasing a tentative rebound in Asian equities after yesterday's global sell-off. And we can go straight to Bloomberg's Winnie Su in Hong Kong for more. Winnie, help us make sense of what's happening here in these markets.
Yeah, morning, Lizzie. Another volatile day here in Asia. For now, we are seeing Asian stocks extending losses for a second day, down about 0.4% and taking its 2-day decline to the most in about 3 weeks. Now, we still have tech stocks leading declines today ahead of those earnings from Micron, and that's why we are seeing Taiwan's TAIEX index here down about 1.9%. And also, we have Indonesian stocks following those declines down about 1.6% after the MSCI decided to delay the market review until November, citing that they need more time to assess the effectiveness of the reforms from Indonesia. Now, when it comes to cross-asset, we are seeing the Japanese yen still hovering around those weakest levels in about 4 decades, and hence we are seeing a bit more risks when it comes to the yen intervention. Now, flip aboard, we take a look at the biggest action today in Asia still is in South Korea's Kospi index. You just mentioned that dramatic move yesterday, down about 10%. And hence, around the open, we did see a bit of a rebound, especially with dip buyers coming in and a report that Samsung Electronics might be considering a share buyback later this year. But also, we did see those gains fading fairly quickly after the presidential policy chief said again that the chip makers should be sharing its profits to the broader public. click. And hence you can see how volatile this market has really become, with the implied volatility also at record levels, and that all these small news really amplify the big moves in the market. Now, flip over, we take a look at the technology sector, because it is that biggest drag today, especially with TSMC here down almost 6%, the biggest contributor to the decline in Asia today. A bit of a catch down from yesterday, and also still that caution ahead of Micron's earnings. But interestingly, we are seeing the outlier, especially in the Chinese chip maker space, with Hua Hong here up about 17%. It is around those optimism around the self-sufficiency, but also we did see a FT report saying that prices are rising for NVIDIA's H200 chips in China's black market. So that's also supporting these stocks in China. Back to you, Lizzie.
Winnie, thank you for the update. That's Bloomberg's Winnie Su in Hong Kong. And I want to stay with tech, but zoom out a little here, because we have Nasdaq futures up 0.5% at the moment, after a session which saw a near 8% plunge in chip stocks, leading markets lower. Let's go to David Savage now, Bloomberg MLive strategist. Morning, David. Is there more downside risk for the tech trade, would you say?
Good morning, Lizzie. You know, it's been a very volatile session, as Winnie alluded to earlier, in Asia, and the Kospi has really set the tone, you know, for equities broadly in Asia, but also, you know, U.S. equity futures. So we saw, you know, a pretty decent rebound early in the session. Much of that was given up, and now we're seeing, you know, the Kospi start to rebound once again, and that's pulling up U.S. equity futures. So, you know, it really speaks to the level of volatility we're seeing across, you know, what's been an increasingly crowded momentum trade. And so if you look at, you know, the memory chip names leading into, you know, Micron earnings after the U.S. close, Micron, of course, and then the two South Korean chip makers, the implied volatility on these stocks is very elevated. It's been trending higher. If you look at the turnover on these stocks, it's really quite extraordinary. You know, Micron, you know, is seeing $60 billion of its shares being traded, you know, each day. So, you know, there's I think a lot of you know, instability in terms of the market structure, which isn't speaking much to sort of the fundamental story behind these. So I think absolutely that raises the stakes for where Micron earnings you know, come in, and certainly where the guidance points to.
Yeah, I do wonder how much volatility we could see off the back of those earnings aftermarket from Micron later. You know, this is such a massive test for the chip maker. The market cap crossing that $1 trillion milestone. So the bar super, super high, David.
Yeah, I couldn't agree more. And it's increasingly because, you know, we've seen just the pace of gains you know, across all of these chip makers, and how concentrated this sort of momentum trade has become, that it means, you know, sort of a very typical, you know, profit-taking or risk management exercise can become quite ugly when sort of the momentum trade, you know, sort of reverses. And you know, we've seen it here in Asia with, you know, the massive, you know, surge in leveraged ETF assets, which is really helping to sort of propagate upside and downside momentum. And so, you know, the fundamental catalyst can really kickstart, you know, that volatility on either direction. So, you know, I think that really raises the stakes in terms of where Micron, you know, delivers, and of course where they guide going forward.
Okay, David, we look forward to those earnings aftermarket. Stateside, David Savage there, Bloomberg MLive strategist for us. Well, Elon Musk's SpaceX, meanwhile, has sold $25 billion of investment-grade bonds. It replaces costly debt that had helped finance Musk's acquisition of X and expensive loans and bonds issued by XAI. Let's get more now with Bloomberg's Manuel Baigorri. He joins us from Tokyo, actually, this morning. Manuel, does demand for SpaceX debt suggest that many investors have faith in this company then?
Indeed, Lizzie, yeah, it's just remarkable that they were able to pull this off, and it's a clear sign of confidence that the company has a good outlook, interesting prospects. I mean, we saw it with the IPO just a couple of weeks ago. It kept us real busy, right? And we saw the huge demand for that transaction, and now obviously they're tapping the debt markets, and as you well explained, trying to replace that more costly debt that they had from years before when they were acquiring those businesses, including X, and kind of replacing it with investment grade bonds. And that obviously bodes well for the company and its financial structure, and definitely will be a good step for the company's future, and they look for a more stable strategy as well in the years ahead.
And what should we read into this about the broader story of issuance in the tech sector?
Definitely, there is being a lot of appetite from both issuers and investors, I think, to tap markets and try to, take advantage of this more benign market environment to try to become more stable, and also kind of with longer term horizons. We've seen a number of companies also kind of reorganizing their structure and kind of like shifting from that more costly, so to speak, high investment grade kind of like type of structure, and I think SpaceX is just the latest example. Obviously, very high profile name that it's been in the news recently on the IPO front. I think this was the kind of like the next much needed step for investors to look at the company with different eyes, and kind of like not this just risky startup type of company that is buying different businesses, but also kind of like a more stable, clear strategy of a company where they can invest in, and they shouldn't be too worried about their kind of like credit structure. So that very, very important step to assuage investor potential concerns on kind of like the financial credibility of the company. And definitely we've seen that across the sector with some high quality companies that have been kind of like transforming or shifting towards more investment grade issuances recently as well.
Manuel, lovely to see you this morning. That's Bloomberg's Manuel Baigorri. Thank you very much for your analysis. Well, still ahead on Daybreak Europe, signs of an economic slowdown in Europe, and we'll be joined by Nomura economist Josie Anderson to discuss that later on in the programme. But first, the US and Iran make conflicting claims over key issues, again, despite both sides claiming that progress is being made in the peace talks. We'll talk about that next. This is Bloomberg.
Bringing you up-to-the-minute geopolitical news whenever and wherever it happens. I'm Stephen Engel at Japan's Akasaka Palace in Tokyo, and this is Bloomberg.
Key investors, top executives, global innovators. Join me for in-depth conversations with the biggest newsmakers on the day's top stories. Insight with Haslinda Amin, only on Bloomberg.
It's the world's second largest economy with a growing influence in global affairs. Bloomberg The China Show brings you the unmatched expertise you need to keep track of breaking news, in-depth market analysis, and the most influential newsmakers in and around China.
We need to do more to engage the market more. We're risk on. I think we caught a little sweet spot.
Massive savings right now.
It's already a different game.
Bloomberg The China Show. Weekdays around the world, right here on Bloomberg. Context changes everything.
What is going to be the consequence for U.S. markets? We are seeing modest gains across European equity markets.
Take a look at how we're faring when it comes to Asian markets.
Welcome back to Bloomberg Daybreak Europe. Now, President Trump says that Iran will be able to use funds released from frozen accounts to only purchase food and medical supplies from the United States. But Tehran has disputed Trump's comments. They add that its nuclear missile program was not included in the Memorandum of Understanding.
Our missile program was not included in the MOU, and it shall not be. I would like to say that if it was not for Iran's missile capabilities to defend ourselves, our country would have been plundered and destroyed by the Zionist regime and the U.S., like Gaza, and they wouldn't have mercy on the young and old.
Let's go to our Bloomberg Horizons Middle East and Africa anchor, Abir Abu Omar. Abir, you heard there more mixed messaging on key issues here, and yet both sides claiming that they're making progress. Is that what markets should focus on, the good news?
Good morning, Lizzie. I think at this point you would be right to ask that question. Markets should be focusing on the news that we're at least getting a trickle of movement through the Strait of Hormuz, because over the past few days or so, what we've heard from both sides is really discrepancies in all the statements about the fundamental issues. For example, as you had mentioned, the frozen assets, the U.S. says Iran will use them to purchase agricultural products from the United States. Iran says, not really, we're going to purchase them to whatever we want freely, according to Baqai, that is the spokesperson of the foreign ministry. On the nuclear issue, President Trump said that Iran will allow inspectors to go into the country and inspect the nuclear facilities. Iran says no agreement has been reached on that. So I think over the next couple of days or so, or until those negotiations are over, what we're going to hear from both sides, it's conflicting statements. Every side is going to want to take a win. Just one thing to keep in mind here is to monitor what is really happening on the ground. And those are tangible things that we could monitor, and that is the Strait of Hormuz. The ships over the Strait of Hormuz are accelerating by the day. We're seeing more and more oil barrels making their way in and out of the waterway. So that is a tangible line in the progress that is being made in these wider negotiations. And then the rest will be figured out. Again, remember, this is a 60-day period in which both sides are going to negotiate Iran's nuclear weapon, the extension of the current ceasefire, and then some of the concessions that we had mentioned. But again, yeah, the conflict has been going on, Lizzie, into the early hours of our morning, with President Trump saying that Baqai was wrong in making those claims that the frozen assets will be used for Iran to do as it wishes. And he said that if they don't retract from that, essentially, that he will go back to bombing. And so we continue to monitor those negotiations. The technical talks, for what it's worth, were over yesterday. We are now going to see lower level negotiators talking about the wider concessions that are taking place in Switzerland, Lizzie.
Abir, thank you for the update. That's Bloomberg Horizons Middle East and Africa anchor Abir Abu Omar, and she'll be back with Horizons at 5 a.m. tomorrow. Well, staying with the geopolitics, the NATO Secretary General Mark Rutte will be meeting with US President Donald Trump at the White House this evening. And speaking to Fox News, Rutte defended European support for US actions in Iran, pushing back against criticism from Trump that allies weren't doing enough.
Planes taking off from European bases to support Epic Fury, and therefore Europe being this let's say, platform of power projection for the United States. So there's more to this than the isolated cases, and sometimes that gets a bit lost now, I think, in the discussion.
Well, Rutte will virtually join leaders of the E5 countries, Germany, the UK, France, Italy and Poland, who are set to meet in Berlin. So let's discuss now with Bloomberg's Ros Matheson. Ros, good morning. Just talk to us about what's on the agenda for Rutte and Trump and what it might mean for European leaders' discussions.
Well, essentially, you see Rutte trying to be this bridge between the Europeans and Donald Trump. I mean, Rutte effusively praising Donald Trump for his deal on Iran and pushing back on that US narrative that the European leaders didn't want to get involved and were reluctant to do so. Well, actually, they were reluctant to do so, and criticising them over that. So there's got to be papering over of that issue. There's going to be conversations, no doubt, again, about the future of NATO, because Donald Trump has again turned his ire to NATO and to European countries military saying they're not doing enough on their self-defense, and the US looking to potentially cut back quite significantly on the level of US military assets that would be available in the event of a conflict that involves Europe, and that's including fighter jets, including bombers, stealth bombers, and so on. So quite a big level of concern there for Europe. So Rutte will be carrying the message, hang on, Europe has indeed picked up the pace of defence spending. It is looking to bring more to the table for its own self-defence to counter that argument. And then thirdly, of course, there'll be the question of Ukraine, and that is the idea that Europeans want a seat at the table if there are any further negotiations between Russia and Ukraine, because the US has kind of pushed Europe out of those conversations. And so the leaders who are meeting separately today in Europe will be wanting Rutte to carry all of those messages, including around Ukraine. And it's all in the lead up to the NATO summit next month in Turkey. And all of this really is about smoothing the way into that summit to avoid another big disagreement between the Americans and the Europeans at those meetings. It seems to be what those summits are about these days, is avoiding some kind of blow up. And so it'll be very interesting to see how Rutte can maybe manage the messaging today with Donald Trump, carrying those messages on behalf of the Europeans and preparing the way for that meeting.
Yeah, and you wonder how diminished Keir Starmer will be at that NATO summit, and indeed in this call that's happening for the E5 leaders today, given the domestic political situation. But for now, Ros Matheson, thank you very much for the preview. Well, coming up, a major political victory for the New York Mayor Zoran Mamdani as 3 candidates that he endorsed win big in New York congressional primaries. We'll talk about that next. This is Bloomberg.
Bringing you the most important news and financial information whenever and wherever it happens. I'm Michael McKee on the Mexican border, and this is Bloomberg.
Good morning. This is Bloomberg Surveillance.
Welcome back to the opening trade.
It's Bloomberg Money.
This is the Asia trade.
This is Wall Street Week.
Welcome to Balance of Power.
You're watching Bloomberg Deals. Welcome to Bloomberg This Weekend.
This is Bloomberg Television.
We're at the epicenter of a global realignment on a scale not seen for decades. At the intersection between markets, economics, and geopolitics, a forum for sophisticated conversation. This is Bloomberg Surveillance.
An honor 1 year ago to work together to elect him the mayor of New York City. And it's been thrilling as he has been showing us what it looks like to fight for a New York City everyone can afford, for a place everyone is welcome.
That was Brad Lander, the New York City former comptroller, following his electoral victory in one of the city's Democratic congressional primaries. And the New York Mayor, Zoran Mamdani, has solidified his political strength after 3 candidates he had endorsed in those Democratic congressional primaries swept to victory yesterday. So let's discuss now with Bloomberg US government reporter John Harney. John, what should our international audience know about these winners?
that the political currents and eddies in New York are very unpredictable. It's just a year ago, or a little more than a year ago, that the conventional wisdom had it that Andrew Cuomo would be the mayor of New York, and that Zoran Mamdani was somebody who could safely be ignored. Today, Zoran Mamdani is not only the mayor of New York, he's an international celebrity, and tonight he became something of a power broker, elevating these three candidates to victories, including over and defeating the two incumbents. It certainly shows his influence has only been enhanced since he took office in January, and we'll see where all this goes next.
So is he the ripple that starts a wave for the Democrats, a wider shake-up for the party?
It certainly could be. I mean, we should point out that this was not progressives against conservatives. This was not progressives against moderates. This is progressives against liberals. These are very, very blue districts in New York. But once again, the whole issue that propelled Zoran Mamdani into City Hall included affordability, the high cost of living. You know, the rents have escalated dramatically in the last few years since the end of the coronavirus pandemic. And Israel has become a flashpoint. It used to be a standard of both parties that support for Israel was not questioned. That's no longer the case, and because of opposition to the Israeli military campaign in Gaza, and now in Lebanon, and the unpopularity of the Iran war factored into this. Mr. Mamdani has made no secret of his criticism of Israel, the Israeli government, and all three of these candidates were in agreement with that stance.
John, I also want to ask you about President Trump saying that he's ordering the Department of Justice to look into gasoline prices. Do the two connect? Because it all comes back to pressure upcoming ahead of the midterms and that real focus on the cost of living.
Well, that's certainly the biggest factor. You know, the Iran war, gasoline prices were already considered too high by a lot of people. In upstate New York, where I'm from, people were aghast at $5 a gallon gasoline. And this is a place where, you know, unlike in New York City, people have to drive. You cannot really be without a car in many parts of the country. So President Trump has to, or very much, it's very much in his interest, in his party's interest, to address these issues head on. Now, today, later Wednesday, he's going to meet with Senate Republicans at the Capitol, and some of these issues will be very much on the agenda, and it may not be a very pleasant conversation, particularly regarding Iran.
Okay.
Because a lot of Republican senators.
Yeah. John, thank you. That's all we've got time for. But John, thank you so much for the analysis. That's Bloomberg's John Harney in Washington. Coming up, we'll look at European markets and political change in the UK. This is Bloomberg.
It's a multi-trillion-dollar industry. We'll show you what's happening in ETFs like no one else. ETF IQ, only on Bloomberg.
Making money isn't about drowning in emotions. It's about understanding what's actually happening. Markets are the best way to glean signal from noise, and that is what we try to do every morning. This is Bloomberg Surveillance.
Technology is embedded in every aspect of our lives, and that revolution is playing out in real time. From finance to defense tech, AI to entertainment, from the road to the stars. Bloomberg is bringing you the stories of companies and people that are pushing tech to new frontiers, and the politics reshaping global tech markets. I'm Ed Ludlow, live in San Francisco, and this is Bloomberg Tech.
Every weekday, only on Bloomberg Television.
Join me each week on Wall Street Week for stories of capitalism from business, markets, economics, tech, and climate. More than what you need to know, it's what you need to think about.
Live from London, this is Bloomberg Daybreak Europe. I'm Lizzie Burden with your top stories. Asian stocks erase gains as hopes of a tech rebound fade after yesterday's global sell-off. Crude falls as more tankers transit Hormuz, while President Trump blasts oil companies for not cutting gas prices, ordering the Justice Department to investigate. And Treasury Secretary Scott Bessent backs Fed Chairman Kevin Warsh, saying that inflation will ease as the Iran war subsides. Well, a very good morning. Welcome to Wednesday, 6:30 a.m. here in London. This is the picture in markets this morning, and not a whole lot of movement. We're treading water, really, because we had that dramatic sell-off yesterday, and equities today are struggling to find their feet, really. In the Asian session, we're flat to the downside. Euro Stoxx 50 futures also down 0.1%. A big focus on the Micron earnings later, and indeed Nasdaq futures are up 0.6% as things stand. But all of this picture changing rapidly throughout the programme. In your cross-asset picture, if we take a look at oil, Brent down 0.8% at $76 a barrel off the back of the tanker traffic picking up through Hormuz. Treasury yields pretty steady. The 10-year, as you can see, at 4.49. And we are waiting, of course, for that PCE data tomorrow. But euro dollar at its lowest in a year on the weak economic data here in Europe, as well as the dovish commentary from Christine Lagarde. That prompting a pullback in bets on hikes. Euro dollar now at a 1.13 handle. Now, let's take a look at the front pages this morning. The Wall Street Journal first up. They're leading with the dramatic reversal in tech stocks that we were just talking about, and they cite investor concerns about higher rates as well as stretched valuations. If we look to the Financial Times, it reports that Andy Burnham will remove Rachel Reeves from the role of Chancellor, but offer her a different cabinet position. And this is citing sources close to the Makerfield MP. Staying in the UK, though, the Telegraph focuses on the football after England's goalless World Cup draw with Ghana, in a headline which says that the team has diminished its status as one of the favourites to win the tournament. But you can get a roundup of all the stories you need to know to get your day going in today's edition of Daybreak, which terminal subscribers can find by going to DAYB Go. Well, time to dive into the politics. The outgoing UK Prime Minister Keir Starmer is pushing ahead with a controversial plan for defence spending, which sets up potential tensions with the man expected to succeed him, former Greater Manchester Mayor Andy Burnham. Let's get more now with our Bloomberg opinion columnist, Rosa Prince. Rosa, Keir Starmer's already been accused of trying to seek revenge on Burnham for effectively ousting him by setting this tight timetable for a leadership contest. Burnham's not got as much time maybe as he would have liked to prepare for office. Is the defence move another trap?
No, I don't think it's a trap. I think it's something more actually almost emotional than that from Keir Starmer. So Keir Starmer is due to attend the NATO meeting on the 7th of July. That's 2 days before nominations close in the Labour leadership contest. And given the timetable, Andy Burnham couldn't be Prime Minister until July the 12th. 27th. So, sorry, excuse me, July 17th. I think Starmer doesn't want to go into that NATO meeting feeling humiliated, feeling that he is the only world leader who hasn't got a program for how he is going to fund defense going forward. And he is saying that he sees this very much as part of his legacy, that it would be just undone business if he didn't have that sorted out. Now, that's no good for Andy Burnham, because obviously just a few days later, he probably will be the Prime Minister, and he doesn't want to sign up to a package of measures which will have a very serious impact on Britain's economy and obviously standing in the world. He feels he shouldn't have his hands tied behind his back. So I think there are credible reasons for both men's stance here, but it doesn't really help resolve the situation. So it's a shame. There's a bit of a nasty sting in the tail of Keir Starmer's departure.
Yeah, surely Starmer's legacy relies on Burnham being successful. If we use a football analogy, the World Cup is going on. You've got Starmer in the long run assisting, and hopefully for the Labour Party, Burnham scoring the goal of winning the next general election.
Perfect football analogy, very early in the morning there, Lizzie. Yeah, I think you're right. Starmer doesn't want to be going down in history as the Prime Minister who inherited an enormous majority at the general election that was less than 2 years ago, and then threw it away by mismanagement to the extent that even Andy Burnham, the very popular former mayor who has just won this by-election, so it shows that he's a vote winner. If it seems that he's given Andy Burnham a legacy that's so poor that Labour just couldn't win the next election in 3 years' time, I think that would look badly for him too. Whereas, as you say, if he is seen ultimately, history is kinder to him, he did some good groundwork and handed over a reasonable ship of state to Andy Burnham, I think that looks better for him in the long run.
Now, Rosa, in the past few minutes, the UK Chief Secretary to the Prime Minister, Darren Jones, has backed Andy Burnham and ruled himself out of running in a contest against him to replace Keir Starmer. I wonder if you think that he stands any chance of being the next Chancellor, given his loyalties to Starmer, and indeed who you do think is going to be the next Chancellor now, because lots of names floating around.
Yeah, well, it was an interesting few words from Darren Jones, because what he said was, oh, I wasn't actually considering running, but I did want some assurances from Andy Burnham on the economy. And he said, I think there's nothing in the programme that will upset investors. So that could be a little hint that he would be prepared to serve as Chancellor. We are hearing briefings that Rachel Reeves is definitely on her way out, so that does create a vacancy. It had been thought for some time that Ed Miliband, who is on the soft left of the party, would be Burnham's pick. But there seems to be some market concern over Ed Miliband, and my expectation would be that Burnham will take that seriously. He wouldn't want to start with an appointment that was very destabilising. Other names in the mix, Wes Streeting, the former health secretary who resigned from the government to sort of put the pressure on Starmer to leave. Would that be his reward? Shabana Mahmood, also on the right of the party at the Home Office. Perhaps Pat McFadden, the welfare secretary. What about a left field pick? Lord O'Neill, Jim O'Neill, who is currently working as an advisor to Andy Burnham, but has previously worked for Conservative governments, is very well regarded. That would be an interesting choice. We haven't had a Chancellor from outside the House of Commons for, well, decades, probably over 100 years.
OK, wildcard candidate. Rosa, thank you for throwing him in the mix. Rosa Prince there from Bloomberg Opinion. And, of course, Rosa writes extensively on UK politics, so do read her pieces on The Terminal and Bloomberg.com as well. Well, Andy Burnham is under pressure to outline an economic plan for the UK following his sudden and spectacular rise towards the pinnacle of British politics. Let's discuss what the uncertainty means for the economy now with Josie Anderson, European economist over at Nomura. She joins me in the studio, so good morning. Nice to see you, Josie, again. Well, Rosa threw Jim O'Neill's hat into the ring there, but lots of names circulating. Is there anyone who would be as market-friendly as Rachel Reeves?
Oh, we all remember, likely, when she cried back in Parliament and the market reaction was very strong.
The market market cried, yeah.
Yes, the market cried. So there is a feeling that she has been fairly market-friendly as a Labour Chancellor. And so the question going forward is now, if Andy Burnham is to be our next Prime Minister, who will he pick as Chancellor? Actually, one point we might make is that this relationship we've seen between the Prime Minister and the Chancellor, where Rachel Reeves has had quite a lot of autonomy, might shift under a Burnham premiership. He might want to take slightly more control of the types of policies that the Chancellor participates in anyway. I think a key question, as Rosa just said, is will we see kind of a more soft left Chancellor who potentially might want to loosen the purse strings more or potentially alter the fiscal rules? That will be a key question for markets, or someone who will continue doing as Rachel Reeves has done. And a key thing is she always committed to the fiscal rules that she made. And so if a Chancellor continues doing that, that might make the bond market more relaxed.
Well, do you think the market would forgive someone who, for example, wants to borrow more if it's for investment, as we know that some of those names are proposing?
Yes, that is a key question at the moment. Could we see maybe some tinkering with the fiscal rules, or simply more borrowing for investment, which is always more palatable than just spending more but not for investment? So there will be some leeway to see that. The question is, how far does it go? And if the government perhaps borrows more to invest and can do so within fiscal rules, the question is, will that raise debt repayments going forward, and will that actually affect finances in the future to a more concerning extent?
Well, what's the answer then? So how much room for manoeuvre is there? How much could they get away with? And what would be the best things to borrow to invest in?
Oh, that's a tough question. What's a good thing to borrow to invest in? How much room for manoeuvre? I think that's a tricky question. I don't think there's a lot, right?
Yeah.
The UK has a high debt to GDP ratio. If it was lower, we might be able to do something a lot more like what Germany's doing with its 500 billion euro investment fund. That's investing across a broad range of things. So in general, investment to raise GDP growth is good, as long as the market and in reality we see those investments will raise GDP growth. At the moment, AI is a huge story. Hopefully that will raise productivity in the future. But you can invest in good ways in AI, and you can invest in ways that might actually not pay off in GDP growth. So it takes quite a wise person, a wise chancellor, to know where there will be that payoff in terms of investment.
Well, yeah, you kind of wonder whether there'd be more spending on defence. Of course, John Healey quitting as Defence Secretary. But if you are to put more money into defence, the multiplier just not as good as in other areas of investment.
Yeah, exactly. Day to day, your average business, your average person isn't interacting with the defence sector that much. So while it's an important category of spending and can raise employment and particularly spending on things like the industrial sector, so it will raise GDP growth if you spend that money domestically. It won't have the same multipliers as infrastructure type investments.
Let me just ask you about the Bank of England, because I'm wondering if the next move is going to be a cut. We heard from Alan Taylor, one of the doves on the Monetary Policy Committee, yesterday, saying that the MPC needs to be ready with cuts if a benign inflation scenario plays out. Do you think a benign scenario will play out? Do you think cuts are coming?
There are risks we think the next move is a cut, but not until late next year.
Okay.
We think they'll stay unchanged this year. There are risks that inflation does, head above 3%. We think that's likely later this year. In the inflation data, we still haven't seen a rise in the Ofgem energy price cap come through, because we know that has a lagged effect. So I think the Bank of England will still be keeping an eye out for potential indirect and second round effects. Most of the Monetary Policy Committee said in their statements in the minutes that if they start to see evidence of second round effects, that is the scenario that they would raise rates in. So they'll be attuned to that. And I don't think we're going to see a cut anytime this year, because they will be waiting to see if that they need to adjust policy, or at least keep it restrictive in order to ensure that inflation doesn't get carried away.
Well, are you concerned about second round effects in the Eurozone? Because we had the chief economist of the ECB, Philip Lane, saying that he could see inflation, price growth hovering around the 2% goal for quite some time.
Yes. So in the euro area, one of the key differences compared to the UK is a lower policy rate. So we've already seen one hike there, right? But it's 2.25% now. So that's lower than in the UK and so less restrictive. So there's more potential for indirect and second round effects as a result of that. We still see 2 more hikes in the euro area this year. That's partly to make that policy rate slightly more restrictive. And it's partly because we too think there is a slightly higher risk of second round effects there. And so we think that policy rates will partly act as policy rate hikes will partly act as a signal that the ECB will not allow, in particular, inflation expectations to de-anchor and wage growth to start to pick up as people think inflation is going to be elevated for some time.
I think you called that the Maradona effect in your note. Also getting on the World Cup train. Josie, thank you very much for coming to see us. That's Josie Anderson, European economist at Nomura. Well, coming up on Daybreak Europe, Western Europe is baking under another brutal heat wave this week as electricity prices jump. So we'll get you more on that next. This is Bloomberg.
We are dealing with supply issues, and so therefore fertilizer, the planting season, food security is high up there, but so too is fuel and energy. So yet again, as we had with Ukraine, the energy crisis, the food crisis, the cost of living, and that kind of fiscal space needs to be created for countries that are going to be dealing with the debt crisis. They are still repaying their debts. Inflation will result in interest rates that will put many countries in jeopardy on the debt issue. So we're looking to find solutions here from the IMF, from the World Bank. There have been many offers of the windows and facilities that could be put at the disposal of countries. But I think at this stage we need scale. Many countries are still recovering from the previous shocks, and some of those crises are not over yet.
Middle East and Africa. Vibrant resources and high-yield investment opportunities abound. Join me on Horizons Middle East and Africa for the stories, newsmakers, and insight from this exciting region. Now weekdays, only on Bloomberg.
Bringing you up to them in the news whenever and wherever it happens. I'm Shevrian in Seoul, and this is Bloomberg.
Welcome back to Bloomberg Daybreak Europe, 6:46 a.m. here in London. Now, as a heat wave grips Western Europe, dangerously hot and humid conditions and more record-breaking temperatures are expected in France, the UK, Spain and Germany. The excessive heat is putting pressure on Europe's power grid and energy markets with record cooling demand. So we can get more now with Joe Wirtz, who is Bloomberg's weather and climate reporter. Joe, I don't know how you've got a jacket on, first of all. I'm already hot this morning.
It's hot. Yeah, it was hot. Yeah.
There are a lot of questionable outfit choices out there. Shorts I have already spotted in the office this morning.
In the office already? Shorts?
Indeed. Not naming names. But look, this is a serious subject, right?
Sure.
Because we've got travel disruption, we've got schools being closed.
That's right.
Just walk us through what we're seeing in Europe.
Well, yeah, schools you mentioned, nurseries. Every parent in this building got a message the other day about nurseries being closed and schools being closed, and every parent having to scramble to find something to do with those kids. But yeah, a big heat wave gripping Western Europe right now. It's been particularly bad in France. They saw the hottest average temperatures across France for the whole day anywhere. They've seen the hottest nights. I don't know if you're like me. I had a lot of trouble sleeping last night in London. These are these so-called tropical nights where the temperature doesn't get below 20 degrees, and that's makes people tired and sleepy, but it's also really the exhaustion from the heat during the day really starts to mount.
And you were telling me that the Eiffel Tower has been closed early and the Louvre as well.
That's right. Both have been closed early in France and really some widespread disruptions. So it's really been a historic event in France. This has been going on for a week now in France. They had this thing set in last week, and this is the second one that's hit France in just a couple months. We had a big event in May as well. So 2 big heat waves, and very early on in the season too. Keep in mind that it's only just now June, and we're starting to see these extreme temperatures.
Yeah, and so what does it mean for power prices?
Well, we've got huge, just surging supply from obviously everybody using the air conditioning and flipping those on. At the same time, we've got a lot of constraints on supply. We've got low wind generation right now due to the same kind of weather pattern that's creating the heat. And in France, we've seen the operator of the nuclear fleet there have to dial back the output of some of the nuclear reactors there due to concerns about river temperatures being too hot. They have limits on how hot the water can be coming out of the plant. They've had to dial back the output there, and they've warned that they may have to do even more rollbacks to the power there. So we've seen power prices jump. French day-ahead prices yesterday hit the highest level that we've seen since the 2022 energy crisis.
Wow.
So we're starting to see pretty big ripple effects through markets as well.
Okay, so not just record temperatures.
Yeah.
Joe, thank you very much for bringing that to us.
Yep.
Stay cool.
You too.
All right. Thank you very much. Well, turning to corporate news now, German industrial giant Siemens is making a push into the AI space, betting that the new technology is moving beyond chatbots and onto the factory floor. The CEO, Roland Busch, told us more about the AI strategy there.
We call it industrial AI. Why? You need a couple of things. Number one is you need a technology stack, and the stack includes hardware and software. Both is super relevant. Number two is domain know-how. We know how to build things. We are on the shop floor. The next one is data. We have a lot of data, our own data shared with our customers and partners. And we have the trust of our customers, because when the AI hits the real world, hallucination is not an option. So you need hardcore results. They should work. So we have all this, and we can bring it now to the real world. And last but not least, we have great partners like NVIDIA, like some others, who are with us in making this transformation for our customers.
I asked you at CES in January, give me a case study, an example, some evidence of AI in a factory anywhere in the world. Fast forward to June. Is it real now? Is there a deployment that you can point to? Please.
It's real now. And we can talk about the design phase, the manufacturing phase, and the operation phase when your assets are in the field. But you talked about an example on the shop floor. Actually, we now launched our Eigenengineering agent. What is it? It is an agent which programs an industrial PC for you. So if you have a cutting job on the shop floor, and the cutting is not precise anymore, now, an engineer has to go there, reprogram your PLC, and so on. Eigenengineering agent does it for you. You say, I mean, my cutting machine is not working precisely. Eigenengineering agent analyzes the problem, breaks the problem down, looks for all the data, the machines, the job which has to be done, analyzes it, develops a code, runs it, compiles it. If it doesn't work, it compiles it over again, fixes it until you can say, now go. And you push a button, and then PLC is running with the same precision as before. So we are talking about 50% higher productivity, while the quality of your programming is increasing by 80%.
The Siemens CEO Roland Busch there speaking to Bloomberg Tech's Ed Ludlow. Well, we've got plenty more coming up. We'll bring you some charts to frame your day ahead, so stay with us. This, from a very hot London, is Bloomberg.
up-to-the-minute geopolitical news whenever and wherever it happens. I'm Anne-Marie Hodern in Beijing, China, and this is Bloomberg.
When news breaks,
A redhead across the Bloomberg terminal.
Bloomberg has you covered.
Trump's global tariffs are struck down by the U.S. Supreme Court.
For all the context and clarity you need,
There's going to be now tons of tariff headlines until midterm elections.
hear it first on Bloomberg.
Asia is at the forefront of some of the world's biggest stories. I'm Sherry-Ann in Tokyo.
And I'm Heidi Stroud-Watts here in Sydney, where the trading day begins. We're here in the center of all the action to get you set up with the numbers, news and knowledge you need for the day ahead.
The demand is indeed recovering. We've been waiting for this moment.
The opportunity of a century.
Join us on Bloomberg The Asia Trade. Weekdays only on Bloomberg TV. Context changes everything.
From the world of politics to the world of business, Joe Matthew and Kaylee Lines deliver news, insight, and analysis live 2 times a day, every trading day. Balance of Power at 1 and 5 Eastern, only on Bloomberg.
I am confident that the Fed chair will optimize the path for both inflation and economic growth. And the president said that at the chair Warsh's swearing in that he would be independent, that he should do what he wants.
US Treasury Secretary Scott Bessent speaking there. And at the heart of the Fed's dilemma is this: crude falling faster than rates. In other words, the bond market not really trusting that lower oil prices are going to translate to lower inflation durably. Why? Various factors. Bessent hinted at one of them there: Fed credibility. You've also got fiscal concerns and you've got embedded inflation expectations. So all eyes on that core PCE number tomorrow, because of course that strips out the energy piece. But before that, we also get, crucially, aftermarket today, Micron earnings, massive event this, so flip the board. This is a massive test for the chip maker. It's had this blockbuster AI growth story, but that is colliding here with a fiercely defensive options market. The market cap has crossed the $1 trillion level, so the bar extremely high for these numbers, to say the very least. That's on the docket for today. But before that, we've also got, at the top of the hour, out of Germany, retail sales numbers. Let's take a look at the risk events for today. At 9 a.m. London time, we get the German IFO survey as well. So giving us a bit of a read on how the geopolitics is feeding into business confidence and consumer sentiment as well. We'll take a look at those before those Micron earnings, as I say, coming out after market later. We also, on Bloomberg TV, will be hearing from the European Commission Executive Vice President Teresa Ribera. That coming up later on today at 8:30 a.m. London time. And with that, that does it for Daybreak Europe. Let me hand over to the opening trade. Anna Guy and Tom will take you all the way to the European Cash Open. This is Bloomberg.
World's most powerful investors don't ring a bell. They quietly reshape entire industries. This is the money shaping the world. The Dealmaker Playbook, where power and billions of dollars change hands every day. From private equity and credit to venture capital and M&A, we bring you the inside scoop on the biggest deals and debates, plus exclusive conversations with finance's ultimate insiders.
Great scoop on this. You've been reporting about an activist investor coming up and trying to shake things up. What's the latest?
We've been hearing that there was going to be an activist at some point. The question was who?
There is a convergence of technology and national security.
The United States is a big country. We're playing in the Northeast. That's an economy as big as the United Kingdom.
This is a really interesting space to watch. We're expecting more consolidation. As this is Bloomberg Deals at Bloomberg Invest, I want to talk about the broader deal and M&A environment.
This is a moment in time. We'll see how long we're here. It's far too early to call.
There is an underinvestment in what's going on in private markets because everyone's looking for additional AI cloud capacity, and it's very tough to build.
Everybody wants to get things going, and the IPO market is just one symptom of that. It is an early indicator of what we're going to see in the M&A market.
Let's go to Scarlet Fu, who's taking a closer look at drone companies. With ongoing conflicts in the Middle East and Ukraine, there's renewed investor appetite for new names in the space.
Excellent reporting. I'm Danny Berger, and this is Bloomberg Deals. Every week, only on Bloomberg Television.
Key investors, top executives, global innovators. Join me for in-depth conversations with the biggest newsmakers on the day's top stories. Insight with Haslinda Amin, only on Bloomberg.
U.S. jobs numbers are released. Bloomberg has the report under surveillance with crucial data and expert analysis at terminal speed. Nobody covers jobs day like Bloomberg.
Morning, folks. Wednesday the 24th. Let's talk about what's going on. Asia Tech is having a choppy, unconvincing session. This, of course, after yesterday's aggressive selling. Micron hits later today. PPM, prospective Prime Minister Andy Burnham, under a little bit of pressure this morning to name his new chancellor. We'll see who that is. Did you sleep well last night? I certainly didn't. Power prices in parts of Europe hitting highs last seen since the energy crisis of 2022. The heat wave in Europe is shattering records, Tom.
So on that choppy session over in Asia, European futures then picking up the baton, pointing lower by about 0.1%. There has been a bit of improvement around the Kospi that we've seen. S&P futures currently pointing higher by about 10 points after that sell-off yesterday. Around 1.5% on the S&P 500, more than 3% drop for the Nasdaq. The futures turning a little bit more positive. But again, looking for that catalyst. Maybe that's Micron, maybe it's the PCE data later in the year. Euro dollar currently below 114. This is a drop year to date of over 5% now for the single currency on the rate differential. Different picture, of course, in terms of the macro growth story when it comes to the US and Europe. Currently, the euro down 0.1% at 113. The countdown to the opening trade starts right now.
Wednesday morning, good morning. Tech still front and centre. So yesterday, massive sell-off. The Kospi this time yesterday was down circa 8-9%. It finished down 10%. Today, we get a choppy session. We're trying to rally. There is an impetus to the upside, but it keeps struggling. We keep kind of trading in this narrow trading range. Do we need Micron, as Tom says, to put us out of our misery?
Micron is going to be potentially the market event of the day then, because it's going to have that read on the demand for high bandwidth memory. It's going to have that read across to SK Hynix, to Samsung, of course, the three key players when it comes to demand. So what will Micron deliver, and will it be enough? Given the run-up that stock has had, we've got a chart that shows in the first half it is on course to come in third in terms of the most added market cap ever in the first half. That's the track record for Micron. Stock is up about 270% year to date. It was under pressure yesterday, of course. So Micron is arguably the story of the moment, and whether or not it leads to an easing of pressure on this sell-off that we've seen around the chip wreck, as it's been characterised by
I love
some.
it. Yeah, it's the chip wreck. I think it's how they handle this. I think in communication, I think it's going to be really interesting. I think the comms team has got a really interesting day in terms of how they pitch the message. If you pitch the message on capacity and say, we're going to bring it forward, we're going to take advantage of these high prices, this really strong demand, does the market go, this is still a cyclical business, ultimately it's going to roll over, you're going to bring on too much capacity, it's the end of the cycle, it's coming, we can see it coming? So that's kind of, but if they say we're not going to bring on the capacity, the market's going to go, well, you're not taking advantage of the high prices. Why aren't you taking advantage of the high prices? So I think the comms team has got a real challenge in terms of what it has to deliver today to kind of really thread the needle in the middle of those two factors when it comes to how much they build out this capacity story.
So that's the needle to thread then on the comms side from Micron. We had a reminder of the stretched expectations once again. It was the repeat of this story with Cerebras coming in. They actually beat on their earnings, but the stock was punished because they didn't come through with the highest earnings expectations. But again, broadly, it was a beat that came through from Cerebras. And of course, they're trying to compete in some areas, particularly in inference, with NVIDIA. So we'll look at pricing as well from Micron. What they say about pricing, we've heard from some executives in the space suggesting that price pressures continue to rise into 2027. So what they say on pricing will be interesting as well. Here in the UK, so switching from tech to what is continuing to unfold in the UK with Andy Berman, PPM, is that the way to describe it?
I'm calling him the PPM,
prospective Prime Minister. Let's go with that. The PPM, he is now getting access to more information. So Starmer has taken him into the fold. It was apparently a pretty frosty meeting, but nonetheless, he's going to get briefings from the civil service about parts of this UK government functioning. And we are hearing as well from our own reporting and others that he's going to be doing a set-piece speech on the economy next week. And clearly that could potentially be market moving.
So does he name the Chancellor before that? Does he have to name the Chancellor before that? Or does he lay out his vision and then name a Chancellor? It's interesting timing in terms of how you communicate what your message is. And because the danger is that there's this fear in Westminster that if he names Miliband basically takes his agenda, Miliband's agenda, and pushes it forward. So does the PPM get out in front of that, or does he name his Chancellor kind of today, tomorrow, and there's some speculation that can happen?
And there's reporting that Rachel Reeves will not be the Chancellor. That was not a huge surprise. She will be kept in the Cabinet, according to the reporting, if indeed she wants to do that, but at a more junior role. So we continue to speculate as to who will be taking over as Chancellor, and whether that happens before that economic speech, of course, by Andy Burnham. But again, some have taken some relief from the fact that he has surrounded himself by the likes of Jim O'Neill, Andy Haldane, and of course the former head of the OBR as well, to show that there are adults in the room when it comes to crafting that economic message.
Did you sleep well last night?
No.
No, I don't think many people did. I think it's going to be a fairly grumpy London today as a result of the heat that we are currently seeing. We are not prepared. We are not prepared for this kind of heat. We're going to see records shattered, I suspect, in the UK today. That is certainly the expectation of the Met Office. It's not just the UK. It's all the way across Europe. In fact, parts of Europe have already had to deal with it. French power prices in certain parts, nighttime prices have been hitting record highs. Europe is not ready for this. Again, Europe is not ready for this. We're trying to push through with this energy transition, but we don't have the capacity yet to deal with the consequences of climate change, and we don't have the capacity yet to deal with climate change. So we're kind of really in a difficult place at the moment. And it's interesting, Teresa Ribera is going to be joining us a little bit later on today, and she's going to be... so many questions for her about how this process unfolds, and can Europe be competitive and decarbonise and keep ourselves cool all at the same time? Oh, and build data centres and all the other things that we need at the same time.
When I was covering the tech story at Viva Tech in Paris last week, a lot of the commentary was France is very well positioned because it has nuclear power. Well, guess what? When the rivers run dry, the nuclear power stops. So then what? That was meant to be the backstop. That was meant to be one of the solutions. That was meant to be part of the energy mix that helps us in this transition. But if waters run dry, or at least they heat up to the point where you can't use them for the cooling, the water's too hot, then that takes out an entire nuclear plant in France. It's remarkable. So the grid is under pressure in the UK as well. So an alert has been put out from the grid operator, pretty rare during summertime. So we're getting peak energy demand in the summer and in the winter. So on both sides of this extreme, and what it does to pricing. And the grid has not had an investment, at least here in the UK, to be able to match and adjust to the changing in demand.
If we decarbonised faster, would our power prices be higher or lower? Do we need to consolidate our industry? Do we need to have one turbine maker? Do we need to consolidate Vestas with kind of? How do you make that happen? Because you can't. The other problem we have is we're not economically competitive with the current power prices we have. So we have to figure out a way of decarbonising and keep power prices lower, and that looks like a real challenge for Europe at the moment. can you go back to fossil fuels in the way that the United States have done? Should we be more pragmatic? So many questions. Anyway, Teresa Ribera is going to be joining us a little bit later on.
And as we think about the energy challenge for Europe, we think about the defence challenge as well. A line dropping right now from KNDS. The IPO will consist of the sale of up to about 20% of the company. KNDS intended listing on Paris and Frankfurt. Of course, there's that joint ownership between Germany and France, both governments taking a stake in this defence company, announcing its intention then to proceed with an IPO. KNDS announcing that intention to proceed with an IPO on Paris, so a dual listing on Paris and Frankfurt to consist of the sale of up to about 20% of that company.
Again, another challenge for Europe. Like, can you afford to upgrade the grid at the same time as defending yourself? So many challenges. Takes us back to the bond markets. Talking of which, James Turner is going to be joining us very shortly. He is the head of global fixed income for EMEA at BlackRock. We'll get Jerry Fowler's take on what this market is telling us. UBS Investment Bank's head of European equity and global derivatives strategy. And as I say, Teresa Ribera, European Commissioner for Competition, joining us in the second hour.
Here's what else we are watching throughout the day. NATO Secretary-General Mark Rutte will be meeting President Donald Trump in D.C., talking of defence. And 9 a.m. UK time, Germany's IFO Business Climate Survey comes out. We also get US economic data, including MBA mortgage applications and new home sales as well stateside. And then, of course, on the earnings front, it is Micron earnings, really potentially consequential for these markets. That's aftermarket. At 5 p.m. UK time, we also are going to be getting NVIDIA's AGM. So we may be hearing from Jensen Huang on as well the demand picture. Coming up, oil extending declines as more tankers openly cross the Straits of Hormuz. We get an update from the region. Plus, it is 10 years since the result of the Brexit referendum was announced. We look back at that historic morning and discuss the impact of the UK leaving the EU. Up next, we're going to be joined by Anika Gupta, Macroeconomic Research Director at Wisdom Tree. If you have any questions of your own for our guests, send them to us on IB plus BBTV Go. This is Bloomberg.
Every weekday, Bloomberg puts the spotlight on a different aspect of global finance. Flows, funds, and the forces shaping markets on ETF IQ. The future of money with Bloomberg Crypto. The players behind major transactions on Bloomberg Deals. Rates, risk, and the cost of capital on Bloomberg Real Yield. And personal finance, retirement, and wealth management on Bloomberg Money. A different topic every weekday, only on Bloomberg Television.
Get your fixed income fix. Watch Bloomberg Real Yield around the world right here on Bloomberg. Context changes everything.
What is going to be the consequence for U.S. markets? We are seeing modest gains across European equity markets.
Take a look at how we're faring when it comes to Asian markets.
Welcome to Bloomberg This Weekend. I'm David Gura.
I'm Lisa Mateo.
And I'm Christina Ruffini. We're tracking breaking news today from Wall Street to Washington.
Let's start overseas. The sector is really propelling this deal forward.
Yeah, the hope is this will open up new markets and provide some additional liquidity.
Of course, now they're going to have competitors.
We got a big week coming up in politics.
Earnings season is underway. We're going to get some key reports.
Everything you need to know before the markets open on Monday.
Introducing Bloomberg This Weekend, bringing a little Bloomberg into your weekend routine.
Guys, buckle up.
Good morning. This is Bloomberg Surveillance.
Welcome back to the opening trade.
It's Bloomberg Money.
This is the Asia trade.
This is Wall Street Week. Welcome to Balance of Power.
You're watching Bloomberg Deals.
Welcome to Bloomberg This Weekend.
This is Bloomberg Television.
Know how the market day started.
Find out how it finishes.
Public markets to private markets.
From the micro to the macro.
Covering retail, entertainment, the business of sports.
The supply chains, trade policy, how it all is impacting the U.S. equity market as we drive to the closing bell at 4 p.m.
A holistic approach to covering financial markets.
If it matters to your life, we're covering it. I'm Katie Greifeld.
And I'm Romaine Bostic, and this is The Close.
Live every weekday.
Only on Bloomberg. Context changes everything.
Thirty minutes past the hour. Welcome back. You're watching the opening trade. Let's talk about where markets are positioned this morning going into that European opening trade. Europe looks negative. So we're down 0.4% here in Europe. Looks like London is going to see maybe a little bit of underperformance coming through today. Out in the United States, we're a little higher. The Nasdaq in particular, I think, is up by around 0.6%. But all eyes, to be honest, have been on Asia overnight. Really choppy session coming through for many of the markets there, Tom.
Yeah, particularly pronounced, of course, in Korea with the Kospi. Across the benchmark in Asia, the MSCI Asia Pacific is actually up just 0.1%, but it is the Kospi where the focus has been. Very volatile session, currently up at 3.8%, having been negative earlier in the session. Taiwanese Stock Exchange as well, the TWSE is currently down 2.2%. But again, it is the chip names, it's the Samsungs and SK Hynix of the world that are very much getting that scrutiny and some concern about leveraged ETFs as well. Let's get more details and bring in from Hong Kong our markets reporter Anthony Stevens. Anthony, you and the team have been holding your hats again, presumably today, on what has been another volatile session. What kind of has drawn your attention? Are we starting to get? Is there any sense that this is stabilising at this point?
We've had some intraday news that kind of stabilized sentiment. Samsung came out with a massive buyback to fund bonus payments, around $58 billion, and that's got the stock up 9%. So when Samsung's up 9%, MSCI Asia is always going to be slightly skewed positive. On the other hand, we did see rumors that TSMC is increasing prices, and that has hit the stock down. In the past, that would have raised the stock, but now there's so much worry about the ongoing demand for the AI trade that this price rise looks a bit too opportunistic and a bit too sharp from TSMC. So there's a bit of concern there. And in China, we had the Premier Li Keqiang talking about Chinese AI being an opportunity, not a threat to the rest of the world. That's got the HS Tech ripping. And Tencent in particular is up 3%, while the Chinese semiconductor makers are up anywhere from 8 to 15% today. So it's been a very choppy day with a lot of intraday volatility. And all of this is in the context of volatility being very high anyway in the Kospi. The Kospi Volatility Index is trading at a 90 handle. Translated into basic maths, that's implying a 5.5% move every single day. So the intraday volatility we have seen today is just the new normal. And we're taking that price action into the pivotal Micron earnings tonight. Micron is expected to move 10% on its own, and this stock trades more than Korean's entire market put together.
Anthony, if we're going to get those kinds of swings, the ones you just talked about, with that kind of volatility, 5% swings every day, there is a lot of leverage in this market. Can we have that kind of volatility with this kind of high level of leverage? I presume we're going to see margin calls on a daily basis.
This has been part of a risk management exercise, as you alluded to, across the street. So we hear banks pulling back, kind of lending to hedge funds. When it comes to markets like Korea, we're seeing domestic banks pull back leverage to retail investors. And now you're starting to hear all these warnings around leveraged ETFs. That last product, leveraged ETFs, need to do so much trading that they're starting to leak into the single stock options and index options markets, which worsen their performance versus the underlying index. So things are really breaking down at the microstructure level, as you allude to, and that is causing a de-risking effect. Unfortunately, though, the speculative excess in the market is also very high. So cash buying is very high. So you see, on balance, things are very volatile. But to give you an overall stat, foreign investment have been leaving Asia in size. Asian stocks between Korea and Taiwan have seen an outflow together of around $90 billion year to date. And this volatility is probably partially to blame for that.
Anthony, great update. Thanks. Really useful. Bloomberg Markets reporter Anthony Stevens joining us on what we're seeing out in Asia. If you do see a tech sell-off, will your fixed income protect your portfolio? Anika Gupta, Director of Macroeconomic Research at Wisdom Tree, joins us now. Anika, we are seeing real volatility when it comes to the tech trade. How does that ripple into the economic story and into the fixed income story? How do you see an unwind of the tech trade working in terms of its wider macroeconomic impact?
Yeah, that volatility is causing investors to rethink their allocations. Right now we see market breadth globally remains very narrow. And at the same time, we have portfolios very concentrated because of this, high concentration risk that the tech sector has garnered. So investors are looking for other ways to diversify. And I think one particular area that has been under invested in has been the high dividend sector. We observed that in Q1 of 2026, when we had very high volatility, the onslaught of the US and Iranian war, that was the time when the high dividend factor actually had the best performance in the US, compared to any other factor in the market. And I think when you look through the data, going back decades from 1930s to 2025, we have observed that 39% of annualized total returns of the S&P 500 actually came from dividends and their reinvestment. So I think investors are likely to try to diversify a bit more, given this high volatility that we've seen emerge from the Asian markets.
Yeah. Back to the kind of portfolio protection question. For the last few years, and obviously we mourn the passing of Alan Greenspan, we have been protected by central banks. Central banks have cut aggressively if we do see a stock market sell-off. If we see a stock market sell-off this time, will it be an economy story or will it be a stock market story? And will central banks do anything about it?
Well, you're right. Central banks have always come to the rescue. And I think this time around, central banks are not going to, policymakers and central banks are not likely to jump to try to salvage the situation. And the reason for that is, these warning signs have been echoed time and time again, that the markets are at a very high concentration level. And the point is that investors are just pivoting to one particular area of the equity market, which remains the technology sector, and rightly so. Even in the emerging market equity opportunity that we've seen prevail, it has been dominated by the technology space, which wasn't the case if you look at it over the prior decade. And I think this time around it will be quite different, because if you look at what most central banks have done following the US-Iran war, is that they've struck a more hawkish tone, be it the most recent FOMC meeting, the ECB raising rates. I think they're on a more cautious trajectory, as opposed to the fact that they'll try to bail out markets should we face a global equity sell-off.
Is Anika, on the central bank response, I'm thinking of what's happening in the oil markets. Is oil delinked from the equity story now? Oil prices up during the war, equities rallied. Oil prices down now, equities off. I mean, it's a very simplistic take, but is there a delinking between the energy story and what's happening in equities broadly?
Well, it again comes back to the narrow breadth of the equity market performance, because you're right. When oil moves higher, that feeds into inflation projections, and then that then raises the probability of interest rate hikes, which then lowers the valuation of equity markets. But if you dig a bit deeper, the breadth of the market has been so narrow. So higher energy prices actually benefited the energy sector within equities. So we saw tech and energy, being the key beneficiaries of this equity rise that we've seen over the prior first half of 2026. So I would say, that feed-through channel has still continued, where higher oil prices have benefited energy as a sector. But in addition, the energy market, the equity markets continue to reward areas that are growing at the fastest rate, and the highest earnings projections have really come from the tech sector. So they continue to hold, that higher share of the market.
Does this recent sell-off in chip stocks, is that a valuation correction or is it a fundamental correction?
So I would say, it's a confluence of many things, of many factors. The first is the MSCI watch list disappointment. That's removed that structural bull catalyst. I think it's a broader AI de-rating that started, that we saw at the beginning of this week. And then I think it's also the mechanics of a market that has had a very strong run. I mean, it's up 90% year to date, again, on a very narrow base. So I do believe it's a valuation correction. It isn't a fundamental one, but it's a stark reminder that concentration risk is embedded in this AI equity trade.
And would you expect this situation to go? Can we go sideways with this trade at this point, do you think? We are very concentrated. We are very focused on a single bunch of stocks. We're going to get Micron numbers reporting a little bit later today. It feels like a macroeconomic event, the Micron numbers. Nvidia felt like that for a while. What does the second derivative look like here in terms of the build-out story and the narrative around the markets? Can we, if we don't keep accelerating, does it fall under its own weight?
We're moving into the summer period right now, and I would say that we could see a bit of range-bound trading over the summer period, a bit of clarity coming about when the Q2 earnings season updates are released, and also the expected trajectory of a number of central banks. Now, we've seen them turn a lot more hawkish in the aftermath of the U.S.-Iran war, but then what we're likely to get further indication on is how much further of that cautious strategy is likely to be maintained. So if we start to see inflation expectations start to come down, then that will also feed through in central bank policy on a global scale. So, if we do see a less hawkish tone being adopted by central banks, that would again be a lot more bullish for equity markets. So I would say, moving into the second half of 2026, I would say, over the summer period, we're likely to get a bit more range-bound trading. And following that, given the fact that earnings revision expectations, especially in the tech sector, are rising, they are likely to do a lot of the heavy lifting in performance.
Okay. Anika, thank you very much indeed. Anika Gupta, Director of Macroeconomic Research at Wisdom Tree. Let's check back in on the markets then, briefly, as we're looking at European futures, currently down a little over 0.1%. US futures, though, S&P E-minis pointing up by 0.1%, Guy.
OK, what else do you need to know this Wednesday, the 24th? Mayoshi Son says he plans to stay at the top job at SoftBank for at least another decade. He's not going anywhere. The move ditches a long-held plan to hand over the reins while he's still in his 60s. The 68-year-old tech investor says he's eager to stay due to the proliferation of artificial intelligence. He wants to make sure that SoftBank is going to become one of the world's most preeminent AI-powered robotics companies. A $7 billion private credit fund run by Morgan Stanley is capping investor withdrawals at 5%. It's allowing less than half of the redemptions that shareholders requested in the second quarter. Withdrawal requests at major funds across the $1.8 trillion market have largely come in higher this quarter after many moved to block full exits in the prior period. And the US Treasury Secretary Scott Bessent has signaled confidence in newly installed Fed Chair Kevin Walsh. He also predicted that inflation will retreat as the Iran conflict comes to an end. Speaking at the Economic Club of New York, Bessent said Walsh will be independent.
I am confident that the Fed chair will optimize the path for both inflation and economic growth. And the president said that at the Chair Walsh's swearing in that he would be independent, that he should do what he wants.
Coming up as markets await Andy Burnham's plan for the UK economy, we will discuss this and more with James Turner, Global Head of EMEA Fixed Income at BlackRock. That is next. This is Bloomberg.
Trading day is about to start.
And you're already looking for that edge.
The opening trade brings you everything you need to know as markets open across Europe.
Let's talk about the significant risk transfers to find space in their balance sheet.
Hedging some of that risk.
You could look at it the other way. Obviously, this stuff is risk-weighted.
I would much rather be long than be short.
We're in a kind of sweet spot.
Very, very strong alignment.
3 revolutions in 1.
I'm Guy Johnson.
I'm Anna Edwards.
And I'm Tom McKenzie.
This is your opening trade.
Every trading day, only on Bloomberg.
Power Players is back to take a look under the hood of the business of Formula One.
Hi, I'm here to see Pierre Gasly.
Welcome to my workplace.
Do you feel pressure?
Massive pressure.
Ferrari is the best example that we can be very proud of the past to look after the future.
From the iconic brand setting the standard.
Oh boy.
Can you imagine Ferrari without racing?
No, and I say no, no, no.
To the newcomers forging ahead.
I grew up my whole life racing against the boys.
This global phenomenon continues to chart new territory.
This was a tennis court 8 days ago.
I can't even believe that. And the speed of the business has never moved faster.
My career might stop, but I'll still be driving some.
Yeah. Probably very fast.
Yeah.
This is so exciting!
This season, we're along for the ride.
It's the world's second largest economy with a growing influence in global affairs. Bloomberg The China Show brings you the unmatched expertise you need to keep track of breaking news, in-depth market analysis, and the most influential newsmakers in and around China.
We need to do more to engage the market more.
We're risk on. I think we caught a little sweet spot.
Massive savings right now.
It's already a different game.
Bloomberg The China Show. Weekdays around the world, right here on Bloomberg. Context changes everything.
Bringing you up-to-the-minute geopolitical news whenever and wherever it happens. I'm Stephen Engel at Japan's Akasaka Palace in Tokyo, and this is Bloomberg.
Okay, here we go. 30 minutes to go until the opening trade here in Europe. Equities are getting going very shortly. The futures picture looks negative, but not that negative, unless you're in London, where it looks more negative. The London market is down by 0.4%. Elsewhere in Europe, we're basically marking time, waiting for the next catalyst, which feels like it's going to be Micron, and then, of course, we get inflation data out of the United States. US futures are kind of trading sideways at the moment. The Nasdaq's up by 0.5%, but it was a really choppy overnight session out of Asia.
Yeah, and you mentioned PCE, so maybe that's the catalyst for the bond markets. Right now, treasuries are largely unchanged. The 10-year is yielding 4.48. In Europe, of course, trading has started. We wait for gilts, of course, at 8 a.m. UK time, but German debt is largely unchanged. The benchmark 10-year is yielding 2.91. We did hear those relatively dovish comments from the ECB's Christine Lagarde earlier in the week. BTP is 3.63 right now on the 10-year, and over in France, OAT is currently at 3.62, largely unchanged as well. We mentioned gilts. It's also worth mentioning that it is 10 years to the day since the result of the Brexit referendum and when that was announced. The news setting the UK, of course, on a path to leaving the European Union in 2020. The result caught many in the markets by surprise. Here's how we covered it here on Bloomberg TV.
The latest results of the EU referendum. They started coming in around midnight UK time, and right out of the gates, it looked as if Leave were going to have a good night, and they did, against expectations, certainly. 370 out of 382 areas reported. The UK has voted, according to those 370 areas, to leave the European Union.
It is absolutely sensational this morning. We do not see these kinds of moves. You kind of, to get an idea of the historical context, just take a look back at your almanac. Even the 1992 exit from the ERM is just a minor blip compared with the move that we're seeing on the British pound this morning. It's already down by 11.22%. Remember, these are Z-scores, so these are giving you an idea of the magnitude of the move, not just necessarily the percentage of the move.
June the 23rd needs to become a national bank holiday, and we will call it Independence Day.
I will do everything I can as Prime Minister to steady the ship over the coming weeks and months. But I do not think it would be right for me to try to be the captain that steers our country to its next destination.
So that momentous vote, that momentous decision by the British public, of course, 10 years ago today. And, of course, Guy Johnson was there covering it. It's good to see, Guy, that you haven't aged in the 10 years.
I think I have, actually. That's what I'm looking at that going, oh, my Lord, there's a lot more grey hairs.
So Bloomberg Economics, I mean, there's continuing debate around what this has done to the UK economy. But Bloomberg Economics has crunched the data and suggested it's a 4% drop, a 4% hit to the UK economy as a result of Brexit. The City of London, though, remains the prominent financial district, the financial centre in Europe. We did not see that huge brain drain that some had feared to Paris and Frankfurt, at least not in the numbers that many had suggested. So the City of London remains strong, but the economic impact is there, at least according to Bloomberg Economics.
In some way, on to that last point, actually, Europe lost out. The fragmentation of financial markets has been one of the major reasons why Europe, in so many ways, continues to struggle. It doesn't have that core financial market story that the United States has, gives it the ability to fund so much of what we're seeing in the United States right now in terms of the AI build-out, etc. So you could look at it that way. But the other way is just politics. Look at the politics that has taken place since then. How many people have stood on that doorstep and announced their resignation since then? We're about to get another Prime Minister. The UK is struggling to know where the compass is pointing, and that feels like it's going to continue. And again, that acts as a discount to what we get in terms of how much we have to pay on debt, our ability to invest in our economy, our ability to come up with a clear plan for our economy. And that feels like the legacy, just uncertainty.
And that political risk premium that is now, some would argue, baked in to the debt of the UK. Andy Burnham, meanwhile, is in line, of course, to become Britain's 7th Prime Minister since the Brexit vote. 7th. He's poised to unveil a new economic plan and demote current Chancellor Rachel Reeves. James Turner, a mere head of global fixed income at BlackRock, joins us now. James, good morning. So Brexit 10 years on. We expect a speech from Burnham next week on the economy. Could that be market moving? What are you watching for? How are you thinking about different Chancellor options? What is front and centre for you right now when it comes to Burnham and his political team around him and his economic message?
Well, as you say, it's been a tumultuous time since Brexit, and it's still a tumultuous time and volatile time. I think the market clearly doesn't like uncertainty, and I suspect we'll see some. It would be wrong of us to think we won't see some machinations between now and we finally install a new Prime Minister. So we're still looking for some volatility, but having said that, we need to look through some of that noise and still see that actually rates are attractive, we still see a good income, we still see a good level and interesting level for gilts. So we're happy to purchase that when we see opportunities. I think we'll see some certainty, and we saw that the market reacted quite positively the other day to at least some certainty in terms of they didn't look as though they're going to be a protracted leadership. And I think that's all positive in terms of at least the direction we're moving in.
Do you have a view on who is best for the gilt markets in terms of the Chancellor role? Do you expect moves this morning on the news that Rachel Reeves will be stepping down, or is that already priced in?
I think the market has already accepted that there's going to be changes, and it reacted quite positively the other day to rumours about chancellors. But the thing that really settles the market is certainty, so we can move on. But it's not as if there's going to be any different issues affecting the UK economy going forward. I think they're going to have to deal with the same issues going forward.
I should just say, when I say Chancellor stepping down, the reporting that Andy Burnham will not be keeping Rachel Reeves in her current position.
Financial Times was reporting that this morning. Is the Bank of England keeping rates in the UK higher because of the political uncertainty?
I don't think it's to do with the political uncertainty. I think they're independent from that point of view. I think, though, that we are still in somewhat restrictive territory in the UK, and I think that's why we look at the starting point at the beginning of this year. We were expecting rates to drop. I still think when we look through, the Bank of England will still have the ability now, especially as we're seeing oil prices and inflationary pressures subside. I think they'll be much more willing to look through this now, and I'd be very surprised if we get a rate rise. I think the next move will definitely be down.
What do you think what would Hugh Pill need to hear from the government to convince him that rates could go lower from here? In some ways, you can argue, certainly from a government point of view, that we need lower rates in the United Kingdom. We're paying a very high premium to our previous conversation about what happened with Brexit and the kind of the years since. The UK pays more for its debt. And I just wonder what the bank needs to hear to convince it on the fiscal front and on the sort of economic front that it can deliver those rate cuts. if you're sitting at the Bank of England, is there something that kind of ticks the box that goes, OK, fine, actually, we don't need to keep rates where they are. We can see an opportunity here for higher potential growth, non-inflationary growth. What does the bank need to hear from the government?
I still think, actually, it's not necessarily what they need to hear from the government. It's actually the dominant force in the moment is them still looking at inflationary effects. So I think it's still that's what we need to focus on, and that's something that we see across the world in terms of all of the central banks trying to grapple with that, and the dilemma that all of them face, including the ECB, as to they've got on one hand, especially in Europe, we've got some slowing growth, but now we're going to see disinflationary pressures, and I think there's the dilemma they face to make sure that they don't stifle the growth that we're starting to see.
But we need growth that doesn't deliver inflation, because at the moment we're at kind of a level where if you get any more government spending, pushing wages up, you get higher inflation. We're at that point, but it's at a very low level. So how do we get up? What does the government need to do to get that number higher?
It needs to, I guess it's the discipline that we need to see on spending. And people are talking about whether there was clearly an attempt to cut welfare spending earlier in the year. We'll have to see whether some of that is resurrected in the new plans that Andy Burnham is going to announce hopefully within the next week or so.
How much of a rally could there be if he does surprise the markets and comes through with plans to cut spending? I mean, you're pretty constructive on gilts right now. Mm-hmm. How far does that story run? Where in the curve do you want to be positioned? What's looking most attractive? If you think the next move from the BOE is a cut, do you position at the front end? Is that where the opportunity is?
And this is our general view anyway, we much prefer this 3 to 5 year maturity level in all bonds as it happens, because we actually think that there's still that's where the opportunity is. There's still a lot of volatility to come in all of the markets, and it's not, sovereigns aren't quite the safety net they used to be, or the safe place, the risk-free area they used to be. That's where we think the opportunity is, both in gilts and in European bonds as well.
Is Europe heading towards a potential recession? How challenged is Europe right now, and is the ECB constrained in the next steps in terms of how it's thinking about rates?
We've just seen the rise, the 25 basis points rise in June, and all eyes now are on September. I think with the headwinds or the tailwinds we're getting now in terms of oil dropping, I think they're going to be tempted to look through that. I don't think that Europe is heading for a recession. I think there will still remain positive growth. And that's the thing that will also, and why we see spreads very contained in corporate bonds, in the corporate market, because actually we're not going to go into a recession. We think we'll work our way through this. Mm. But it's still a very, it's uncertain whether we'll get a raise, but nonetheless, on the other side of this, we'll see inflation drop. And I think it's an attractive opportunity to lock in these yields at this level.
Not July?
No.
September?
If
they're going to go again, it's in September.
We believe it'll be in September, but we think that's going to be a very finely balanced decision, because already we're seeing people being able to look through it. And if you even think about the practicalities of being a business at the moment, it's going to be very hard to push through a price rise now. Now we've seen oil start dropping, just in the mechanics of being able to go to your customers and say, well, we're going to put a price through rise. If you haven't put your prices up now, I think you're going to struggle to do it.
So they may go again in September. It's possible they go again in September. Is this an ECB then that's cutting, on your projections, is this an ECB that's cutting in 2027?
I think there's more chance of a cut in 2027 than a rise.
Mm. Should they have hiked?
I think they had to, from the point of view is that, remember, we were still in a position where we hadn't necessarily seen the peace deal struck, we hadn't seen oil start to decline, and I think just from the point of credibility, they had to put a rise in that, especially if they were seeing the second-order inflation effects starting.
One hike, is that if it ends up being one hike, does that enhance or degrade their credibility? What difference does 25 basis point make? I guess is the question that a lot of people will be asking.
I think it could have been the start of another hike, or it could have been the start of a rising cycle. And I think you just had to move at that point just to make a rise, just to show that you were serious about raising, rather than, especially if you started seeing some of those second-order inflation effects, which the committee members said they had. And I think you had to put that as almost as an insurance hike at that point.
Okay. What's the fiscal story in Europe? Where are we in that journey? What is the fiscal picture, the fiscal impulse for Europe looking like in 2027?
So we still have the government spending, we have defence spending, we have AI spending, we have government support. I still think we've got actually a tailwind from that point of view. We'll see how it looks. I think it's been slow coming through from that point of view, so we still have some of that expenditure to come through, and I think that will support the company. The thing that we're really looking at as well is the consumer's been pretty resilient across Europe, generally including the UK, and I think that that's been pretty supportive for the economies. We don't see any forecast recession, which is why we're really quite happy with spreads where they are at the moment. Fundamentals of the companies still look pretty good, and we think that's the area where people should be looking to capture that income, compound those yields. And let's remember, rates are still, at least compared to the last 15 years, at pretty high levels in both Europe and the UK and the US for that matter. And really capturing that income, compounding it over time is really the way to do. But it's going to need selectivity as well, because there are some winners and losers going to come out of this AI.
Much more active, kind of active story.
I think it's definitely a time for that, yes.
Yeah. James, great to see you. Thanks for stopping by to see us. James Turner, Head of Global Fixed Income for EMEA at BlackRock. OK. Commentators, meanwhile, are weighing in on the new Fed chair, Kevin Walsh's commitment to price stability.
I'm a little uncertain about, how fast monetary policy tightening is likely to occur or what that probability is, because it's not clear how much commitment Kevin Walsh has to actually doing it. I mean, the talk is cheap. Of course, everybody's in favor of price stability, but the question is, what are you actually prepared to do to achieve that outcome? And I don't think we really know that at this point.
What is Walsh prepared to do? Bill Dudley, Bloomberg opinion columnist and former New York Fed president, giving us his view. We're going to take a closer look at how markets are viewing the next Fed decision. We get inflation this week. We'll talk about it next. This is Bloomberg.
Do you mind being called an ideological lunatic or a bunch of left-wing nut jobs?
I've been called worse things than that.
Oh! You'd think she owned the place.
23andMe, I think, is so incredibly valuable. We're coming back.
It had that kind of detective story feel to it. When you're hot on the trail of something, you know that it's very exciting. What magazines were you reading as a kid?
I don't think I was reading magazines until I was in them.
You are on the cover of all of these.
Oh, and there's many, many more, but we just don't have time.
Why should people trust you?
I don't think anybody should trust any company or entity completely with any of this.
It's very uncomfortable. Artificial intelligence is this force that is far bigger than we are.
I want to build better businesses around these brands.
The shock will never wear off.
So you're a brother and sister running one of the most powerful companies in the world. When you argue, who wins?
No one. The way I could see AI being banned or blocked is if something really went wrong. And if something really went wrong, then maybe it deserves to be.
So is it paradise ahead or Gattaca?
Maybe somewhere in the middle.
We're at the epicenter of a global realignment on a scale not seen for decades. At the intersection between markets, economics and geopolitics, a forum for sophisticated conversation. This is Bloomberg Surveillance.
Bringing you the most important news and financial information whenever and wherever it happens. I'm Michael McKee on the Mexican border, and this is Bloomberg.
Okay, we are about 13 minutes from the opening trade this Wednesday as we look at European futures currently called lower by 0.1% after the shipwreck of yesterday on Wall Street and a very volatile session over in Asia. The Kospi is actually up right now 3.3%, but across the benchmark in Asia down 0.2. So a negative picture broadly leading into the European markets after a sell-off yesterday of about 0.7%. A little bit of upside being flagged for the AAX over in the Netherlands, the FTSE MIB as well. But here in the UK, the FTSE 100 is pointed lower by around 0.3%, Guy.
Micron, that's what's coming. Maybe that's going to change that story. Maybe not. The bar is obviously incredibly high. Let's get a sense of kind of where we are right now. Markets in 3 minutes. Mark Cudmore's here, our executive editor for MLive. Mark, yesterday you were unimpressed with the price action. How are you feeling this morning?
It's pretty neutral today. We've actually just been discussing the Kospi. It kind of finished in that weird range where we can't kind of say it's conclusively bearish or conclusively bullish. What I will say is the recovery, the bounce we saw on the Kospi today was almost entirely driven by Samsung. That's not entirely unusual, but it's driven specifically because of fundamental news about Samsung potentially having a large amount of buybacks. I think the US dollar amount was almost $50 billion in buybacks. So therefore, I would say on net, the price action was not great. You're right, both of you, to highlight that it's all about Micron earnings tonight. That's just going to provide more volatility. Volatility should normally be just a negative. Obviously, we all look at kind of volatility adjusted returns if you're a trader. And you know, there's a mechanical thing that if there's higher volatility, it means higher value at risk. It means lower ability to take leverage or margin. Now, what's weird at the moment is that retail participation is so large in these stocks, and they're trading it like a casino that's kind of rigged in their favor. Everyone knows if you go to the casino, the odds are in the house's favor and you're going to lose your money eventually. But there's kind of this perception that central banks and the US administration are determined to get the stock market higher. And so therefore, this is like a casino with wild random returns that are skewed in your favor. And the reason I kind of go into that digression is that it's in this weird dynamic that normally a catalyst Micron that we know is going to stir up big volatility, that would be normally just be a pure negative. But in this market driven by retail, some of that negative impulse is kind of slightly kind of negated by the fact that retail see it as a great positive.
Mark, is there a case to be made that if this is some of the froth taken out of the markets, particularly in terms of the chip and AI trade, that is healthy ultimately and sets this bull market up for further and more sustainable gains?
I'm going to be difficult by saying no to construction, but yes to the ultimate question. What I mean by that is I think that this is froth coming out of the market. I dispute the idea it's healthy. We talked about that since the market kind of became broken in May, we're in this volatile end stage. We don't know how long it's going to last, but in 1999 and the GFC, it lasted about 6 months. So that's my ballpark estimate, but who knows? It might be much shorter, it might be longer. So we're in this kind of volatile end stage. We're expecting more of this kind of massive, crazy moves up and down. I don't think this is the bubble popping. I do think we have a massive AI capex bubble that's going to be really, really problematic when it bursts. I don't think it's finished inflating yet. I just think we're in that volatile kind of end game, and I think we've got more inflation to come. And maybe Micron earnings tonight will kind of stir it up. Without having any insight on Micron earnings, and that really is dominant, I would say that my slight bias is that the current sell-off isn't quite exhausted yet, but this isn't the bubble bursting, the bigger bubble bursting.
Okay, Bloomberg Markets Live Executive Editor Mark Cudmore. Mark, thank you. Remember, you can get up-to-date analysis and insight from Mark and the rest of the team. Just go to MLive Go on your terminal. Let's get your stocks to watch. Charlie Wells is standing by, and tech inevitably is in focus. Charlie.
Tom, where does that European AI trade go from here? Because yesterday, tech was the worst performer in the Eurostock 600 index. We see so much red here. Does it go further down, or do we see a bit of a recovery like we're seeing in Asia today? I think that's a really key question as investors are really waiting on tenterhooks from those really key Micron earnings. So again, where does tech go from here? Let's flip and take a look at German pharma, because this is an indication that we're getting from Germany that the health ministry wants to continue on with legislation to pay pharmaceutical companies less for drugs. Now, this has irked the Trump administration. Last week, they opened a tariff investigation into Germany over this issue. So we're going to want to keep an eye on Bayer and Merck as well. These are crucial German pharmaceutical companies. They have a lot of operations in the United States. They've had a good year so far, but does this sort of tit-for-tat rhetoric on tariffs, does that put this sector under pressure? Key to watch as well. I want to end on a merger watch, because we've been talking about this deal in energy services for a long time. We've got Subsea 7 and Saipem. We have a Brazilian regulator who approved the deal. Now, why are we talking about Brazil, given that these are European energy services companies? Well, Brazil was a key geography for this potential tie-up because their operations there materially overlap. So that regulator has approved the deal. This was seen as a key roadblock. That deal, of course, not done yet. But we've got a note out from Morgan Stanley talking about how, investors could start to price in deal completion, given that that roadblock has been completed. So again, more to go, but this is a key deal we're going to want to watch out for at market open.
Charlie, great stuff. Thank you very much indeed. Setting us up for the European market open. We're 6 minutes away. Do we just sit here, wait? Is Micron the big story? Is that the narrative that you have to basically sit here on tenterhooks until after the close in the United States for later?
If the question is that this has run too far too fast, and whether or not there is that still constructive demand picture, then yes, Micron could tell that story. Micron could come in and reassure, or it could lead to further anxiety if the numbers are not adding up in terms of how they are seeing this story transpire, in terms of the demand picture that's coming through for high bandwidth memory and what they see around pricing, as we discussed at the top of the show.
But it's that forward-looking bit. The numbers are expected to be sensational. Is it the numbers that move, or is it actually the outlook that is likely to change the narrative? How much they build, what capacity they're putting into the market, what comes next in terms of the demand picture relative to that picture. OK, anyway, we're 5 minutes away from the market open. Futures are a little negative. We'll be back in a moment with all the details. The opening trade is next.
It's a multi-trillion-dollar industry. We'll show you what's happening in ETFs like no one else. ETF IQ, only on Bloomberg.
Making money isn't about drowning in emotions. It's about understanding what's actually happening. Markets are the best way to glean signal from noise, and that is what we try to do every morning. This is Bloomberg Surveillance.
Middle East and Africa. Vibrant resources and high-yield investment opportunities abound. Join me on Horizons Middle East and Africa for the stories, newsmakers, and insight from this exciting region. Now weekdays, only on Bloomberg.
Hey
Technology is embedded in every aspect of our lives, and that revolution is playing out in real time. From finance to defense tech, AI to entertainment, from the road to the stars. Bloomberg is bringing you the stories of companies and people that are pushing tech to new frontiers, and the politics reshaping global tech markets. I'm Ed Ludlow, live in San Francisco, and this is Bloomberg Tech.
Every weekday, only on Bloomberg Television.
Join me each week on Wall Street Week for stories of capitalism from business, markets, economics, tech, and climate. More than what you need to know, it's what you need to think about.
Asia is at the forefront of some of the world's biggest stories. I'm Sherrian in Tokyo.
And I'm Heidi Stroud-Watts here in Sydney, where the trading day begins. We're here in the centre of all the action to get you set up with the numbers, news and knowledge you need for the day ahead.
The demand is indeed recovering. We've been waiting for this moment.
The opportunity of a century.
Join us on Bloomberg The Asia Trade. Weekdays only on Bloomberg TV. Context changes everything.
A couple of minutes to go until we get into the Wednesday session. This chart looks fairly normal, doesn't it? What it doesn't show you is the gap lower at the beginning of the session yesterday, as we priced in what was a near 10% drop out of the Kospi. Tech took a bad turn in Asia. That continued into the United States. But we drifted kind of sideways after that initial pricing story. This morning, actually, US futures look fairly positive. The Stock 600 was down yesterday. Looks like it's actually improving a little bit right now in terms of the futures picture that we're watching. US futures are positive. Nasdaq futures certainly are positive. We get Micron later on, and that's really the moment that we are going to all watch out for. So we sit and we wait for that. Eurostoxx 50 futures absolutely becalmed. FTSE's down by 0.2%, but it has improved. DAX futures are down by 0.1%, have improved. I think I saw the CAC a couple of minutes ago, just kind of tipping into positive territory. So it looks like, Tom, we are going to see a fairly flat open here in Europe this morning.
Yeah, and in terms of the stocks to watch, we will, of course, be watching what's happening in the tech space in Europe, because that was not immune to the sell-off yesterday. Certainly the big names like ST Micro and ASML. So they'll be back in focus for us today. Will there be any recovery at all, given that the Kospi did end up in positive territory today, but not making up for the losses of yesterday? Segra in the housing space, or at least in the logistics and warehousing space, rejecting a takeover offer. So that UK firm is in focus for us. And defence as well, on the back of the news that KNDS, the tank maker, has kicked off its IPO process for an IPO in Frankfurt and Paris. Let's see if that has an impact on the broader defence space in Europe. Guy.
OK, here we go. We've got 20 seconds to go until we get to the market open here in Europe. Indications are that at a headline level, we're not going to see very much. Very choppy start to the week. That was the narrative, particularly driven out of Asia. But we're getting big data, macro points coming up. Micron is one of them. Obviously, inflation data out of the United States is the other one. Do we just wait for those two key moments to come? That appears to be the narrative we're getting out of Europe this morning. Yes, there's a little bit of churn below the surface, but as you can see, we are anticipating at some point a market open. I'm not entirely sure that this is the board that's going to tell us what that looks like. There you go. That's the right one. Here you go. Let me show it to you and give you an idea of what is going on. The Stock 600 is absolutely flat. The FTSE 100 is absolutely flat. I have no news at an index level to really bring you. The reason for that is that we've seen huge volatility for the last couple of sessions. Today feels like it's going to be the day we pause and maybe kind of assess what comes next. The CAC is up by 0.2%. Luxury's had a really tough week this week out of the French market. The AEX is up a little bit. Maybe we're seeing some better days for the ASML story. The IBEX is absolutely flat. Nothing to see here. Germany hasn't even woken up yet. We'll get the German market open in a couple of moments. But we're just pausing maybe to see what happens next. PCE data coming, Micron's coming. Two key events that we need to watch out for. But the volatility that we've seen out of Asia on an intraday basis is just absolutely extraordinary. Europe feels like a sort of calm pond at this point in terms of what we're watching with this market open, Tom.
OK, a bucolic image there with the calm pond of Europe. Right now, at the top of the list in your sectors, real estate is gaining 1%. You are seeing tech in positive territory, but only by 0.3%, that sector. Consumer products gaining 0.7%. Food and beverage, which actually saw some upside yesterday as well, up 0.4%. Basic resources, which got hammered yesterday on lower gold and silver prices is just about in positive territory. On the downside, you're seeing the biggest losses right now for insurance, down 0.4%. Utilities also a little weaker by 0.4%. And on that tech story then, just breaking it down for you, Infineon is in positive territory, but only by around 0.4%. There's ASML up 0.6 to your point, Guy. 0.6% again for ASML, but again, not making up for the losses of yesterday.
No, and it's interesting. SAP is lower. You are seeing the chips coming back. ASML is the biggest points gain. It was the biggest points drag yesterday. But in terms of making up for the losses that we have seen, it's not there yet. Luxury's coming back a little bit. Richemont's having a better day. LVMH is having a slightly better day. But none of these moves feel convincing. The chop in the US session and the Asia session in particular, is massive at the moment. The daily volatility is huge, kind of 4 or 5% moves. Are these becoming the normal kind of story that we should watch out for? As Mark was mentioning, it feels like kind of a casino. Like that's great if you're a retail trader. That kind of chop is fantastic. Europe feels like a calmer sea.
Single name leveraged ETFs may be playing that role over in Korea. Maybe a calmer sea in Europe. Let's get the view now from Jerry Fowler of UBS, of course, head of global derivatives and European equity strategy at UBS Investment Bank. Jerry, thank you for joining us around the desk.
Thank you.
We're singularly focused right now on what's been happening in the tech and chip story, and maybe that shifts towards the end of the week with inflation out of the US and PCE. But for now, what is your take on what we've seen? Is this a healthy correction? Is it a correction around valuations rather than fundamentals? Where are we in this journey? What does it signal to you right now?
Yeah, I mean, in terms of what's driving the market, there's fundamentals, there's investor behavior, but nowadays we've got to worry about market structure as well. And so this is almost entirely an artifice of market structure. The fundamentals haven't changed. I don't even think investor behavior has changed materially. But clearly, as you mentioned, levered ETFs, the significant amount of call option buying, the margin usage and the concentration of investors in certain securities means that you're going to get volatility. This isn't the first time we've seen this. The Kospi about a month ago was down 8% 2 days in a row and then up 8% on the third day and then rallied to new highs.
So that is the new normal?
Yeah, volatility within single stock securities is at record highs, especially relative to the index, and it's an artifice of market structure that I suspect is not going away.
How do you invest with that?
It makes it a lot more difficult, yeah. So, first of all, if you're holding for the medium term, you need to focus more on the fundamentals. The fundamentals are still that CapEx estimates for the hyperscalers continue to not just grow, but also be revised higher. And that means the entire supply chain can be revised higher on earnings expectations as well. So it's still a very structural story of data center growth. We can actually add to that a US domestic acceleration, which we can talk about as well. So, you know, if you're a longer-term investor, these are your options. You can continue to invest in AI CapEx, where you're looking at the supply chain beneficiaries that are making a huge amount of money and continuing to see those revisions higher. There are opportunities to broaden now that there weren't for a long while.
Explain.
So you can broaden into other cyclicals in the US because there's been a significant destocking phase. For the last 3 years, new orders have basically been neutral. Now we're seeing factory orders that are growing quite substantially. Manufacturing new orders that are up at about 57, whereas they've been at about 50 or below for the last 3 years. So there is just a broader cyclical acceleration in the US, which means you can buy other cyclical value companies in the US. You can buy European companies exposed to the US, which have been real dogs. They've been flat for the last year on average in our basket of stocks. The euro weaker is going to help those. In addition to that, finally, pharma is worth buying. You know, it has cheapened. It is not well invested. The GLP-1s have been a major driver of that, including Novo, with just consistent downgrades taking you down into low double-digit PEs. Finally, we're now getting upgrades. You've got the Medicare system in the US confirming that they will be buying GLP-1s at a rate of $50 per month. You've got the oral version of GLP-1s coming through as well. So investors are just looking around going, I wish I didn't have so much AI because I'm pretty concentrated. I know everyone else is as well. What else can I buy? And we're getting a little bit of that rotation. You saw that yesterday with pharma being the best performing sector.
Should we just briefly mention what's happening with Rheinmetall? Because you had actually flagged this for us, that the defence sector could see some volatility, talking of volatility, on the back of the plans around KNDS. So Rheinmetall is dropping, currently down around 9%. Rheinmetall, that major, of course, defence contractor in Germany, likely then on the news that KNDS is going to be pursuing that IPO in both Frankfurt and in Paris as well.
So there could be a portfolio effect.
Yeah.
There is a factor behind that. It's also, I just want to flag as well that Germany is said to be pulling out of a major frigate contract, which I think could be a factor here as well. There's been this kind of expectation on German spending. The two may be coming together and sort of compounding each other.
Jerry, on Europe. It was really interesting, I think, your views on pharma, but also European stocks exposed to the US. Just on the defence piece, it's been almost an easy trade about 12 months ago, but has since stalled.
Yes.
Why? Why?
Yeah.
How much exposure do you want to European defence?
Yeah, we downgraded to neutral last summer. We maybe should have gone further. And it was controversial at the time because a bit like other themes like luxury when China reopens and lots of these themes that get very crowded and very expensive, there's a lot of enthusiasm. But usually that positioning is reinforced by a consistency of upgrades. And what we got to last year was that NATO spending targets got to 5%. Every country had said we're going to be at 5% of GDP in the next 10 years. So every analyst had factored in that defence spending would, provide revenue to the defence spending companies that would match 5% of GDP over the next 10 years. At that point, you get no more upgrades. So you can be very fast growth, but the fast growth is in the price. What you need is a revision to that growth to continue to drive it, and we lost that. So since then, we've seen defence spending either neutrally performing or underperforming, or at least variably performing, and that hasn't changed. It's still the most expensive set of stocks in Europe. They're still not completely washed out, although they're less crowded than they were, but they just can't sustain new upgrade momentum. I think to get that, what we're going to need to see is some delivery and some accelerated money coming in and perhaps a faster trajectory of that defence spending money getting out to defence spending beneficiaries to generate some more upgrades to drive momentum.
Where do we... You laid out a few minutes ago, just, I'm sure, very sensible kind of strategies for doing this, that and the other and getting into cyclicals and looking at what is happening here. But the market at the moment feels like it has a mentality of just chasing the next shiny thing. It was defence stocks, it was GLP-1s, it's AI, it's whatever. Is that the world we're in?
Yeah, momentum-oriented.
Precisely, the momentum trade. And how do I, as an investor, outperform in a world where that is the narrative?
Yeah,
and how do I figure out what comes next?
Yeah, so it's a matter of understanding market structure, and it's different around the world. The US is a more complicated market than most others, so it's harder to actually find some factors that work particularly well at doing what you're talking about there. But in Europe, you've got a lot of institutional investors who move to some extent slowly and adjust their positions on a month-by-month or multi-month basis. The marginal price setter on a daily basis are the pods in hedge funds, because they have a huge amount of money. And they're trying to make money pretty consistently over shorter horizons, typically, than your typical family office institution. And so they will generally chase the new news. And the new news is ultimately reflected in earnings momentum. So if you get those revisions in Europe, if you follow the revisions in Europe, upgrades versus downgrades, you get a one-sharp ratio strategy. If you follow a machine learning model relative to consensus, when the machine learning model is above consensus, you buy, and when it's below consensus, you sell. You also separately get a one-sharp ratio strategy. Both of those are better than investing in the market, and it just shows that the earnings momentum is a key driver of the short-term performance in European markets. Then, in order to just make sure you're beating, I guess, that as much as possible, you've got to be cognizant of positioning and to some extent valuations. Valuations matter a lot less than they used to because of the market's become inelastic. There's a research that backs that. But you need to keep a very close eye on crowding. Being crowded doesn't matter, but being crowded and losing earnings momentum is a real problem. So we have particularly good crowding data. We buy it from an external provider, clean it, source it, and we have a reasonably good handle about where positioning is extended.
And your sense at the moment is that pharma is at the bottom of the upgrade cycle. It's starting to see upgrades, and it's not crowded. So those are the kind of trades you look for.
Yeah, far less crowded and a lot cheaper than it was. Very similar to the renewables trade about a year ago. So we upgraded renewables in April last year. It troughed in March. And that was after 3 years of just diabolical negative earnings revisions. Through COVID, it was interest rates, it was supply chain problems, it was a whole range of things that kept those earnings under significant pressure. They troughed, and then they started getting revisions because they'd been cutting capex. So finally, their free cash flow was growing. And then obviously they caught the AI data center wave. But basically, since April last year, that sector has been, it was until about late last year, not very expensive and not particularly well owned, but continually getting upward revisions to earnings. So that's a real key in Europe, is just making sure that you follow the revisions, follow the earnings momentum, but be very aware of when you have vulnerable valuations and positioning. The AI capex trade, for example, is in a situation where it is vulnerable because of its positioning and valuation, but at the moment there's still momentum. The hyperscalers continue to revise up their capex every quarter.
Just to kind of very simplistically summarise, can we still get that given the earnings strength that's coming through from the AI and the hyperscalers and the CapEx story, can we still get upside in terms of equity moves within that space whilst, and you're seeing some hedge fund money moving into the new trades? Can the two things happen at the same time, or are we cycling out of one into another?
Yeah, it depends where you look, and I guess to some extent how much volatility comes into the trade.
Yeah.
Our view is that Europe is going sideways. Now, in that sideways move, we're expecting that sort of half the market will do quite well, and that does include the AI capex beneficiaries, but now also things like pharma and perhaps some of the US exporters, while the other half of the market is stagnating and doing more poorly, and actually that's a lot of the domestic exposures. We downgraded banks to neutral, for example, quite controversial recently. So I think in Europe, it's a lot more about rotation, and a lot of that is because global investors just aren't interested in Europe anymore. You know, back in January and February, the proportion of market cap that was allocated to Europe through ETFs was larger than the US. So the absolute flow was obviously less, but as a proportion of market cap, Europe got more flows than the US got in January and February in new ETFs. Yeah. That's disintegrated since the war started. There is just no appetite for any allocation outside of the US since March.
Wow.
And so without that, it's very hard to push up
End of war, lower energy prices doesn't change that.
So we've definitely seen a bit of a tactical bounce, and I think that's perhaps covering some shorts and especially pricing out the tail in some of the consumer cyclicals and energy-related things. I think that's a bit of a level shift. I think that at the moment, Europe is still just insufficiently exciting in comparison to what's happening in the rest of the world to get enough attention, but it's less bad.
Jerry, that was really interesting. Thanks very much indeed for joining us this morning. Jerry Fowler, Head of Global Derivatives and European Equity Strategy over at UBS's Investment Bank. Core 6 looks a little bit like this. Let me just give you some numbers quickly and then we'll get to Charlie. You've got luxury coming back up a little bit, but the real standout story on that board is Rheinmetall, which is down and down hard. And fortunately, that is where Charlie is starting. Charlie Wells, over to you.
Look at that defense sector, Guy, because we're seeing a lot of red this morning. I don't think a lot of people were expecting this morning. Rheinmetall down, Hensoldt down. We heard about some shorting on Hensoldt. Leonardo down as well. Now, what's going on here, right? We know big picture, that war in Iran. We know that is kind of weighing on some of these defensive companies, but it's more than just that. We've got that German-French tank maker, KNDS. They are kicking off an IPO. So that's adding more competition to the space. We know this. We also know that in Germany this morning, announcing that they're going to shelve that delayed frigate program. So that is weighing on the defense space this morning. Really one to watch as well. What we had going into this morning was watching European tech. Let's bring that up as well, right? Because we had a really bad day yesterday. They led the Eurostock 600 as far as losers yesterday. Seeing a little bit of a mixed picture here, right? We're seeing a little bit of an uptick for the likes of ST Micro, ASM though down, ASM, down a little bit. So again, mixed picture as that tech space tries to find its footing. I want to take a look at Europe's largest warehouse landlord, that is Segro. They're up some 16%. Now, they rejected an offer from Prologis, a U.S. competitor. Now, what was interesting about this offer is they gave a significant premium, about a quarter of a premium to their price when you add all the numbers up. So again, the market reacting to that, up 16%, seeming to like that premium. Let's stay in the real estate space, go to Berkeley. They had earnings out today. They were better than expected, and we're seeing that reflected here, up over 5%. Berkeley, interesting, talking about how they want to maintain their portfolio as opposed to searching for new sites. So again, positivity around Berkeley. I want to flip and talk about this deal, this Subsea 7 and Saipem deal. What we're seeing here is a lot of green as well. Why is this happening? We'll take a look at Brazil. Really interesting. A regulator there approved this merger. This has been a merger that we've been talking about for a long time. Now, Brazil is a key geography for these companies as they try to create a large energy services firm. So again, deal not done yet, but this was a key hurdle, and we're seeing the market react positively to that news.
Charlie Wells, thank you very much indeed on some of the stocks on the move this Wednesday. Coming up, tank maker KNDS takes the first step towards a European IPO. We will have the details of that story.
weekday, Bloomberg puts the spotlight on a different aspect of global finance. Flows, funds, and the forces shaping markets on ETF IQ. The future of money with Bloomberg Crypto. The players behind major transactions on Bloomberg Deals. Rates, risk, and the cost of capital on Bloomberg Real Yield. And personal finance, retirement, and wealth management on Bloomberg Money. A different topic every weekday, only on Bloomberg Television.
Bringing you up to the minute news whenever and wherever it happens. I'm Sherian in Seoul, and this is Bloomberg.
When news breaks,
a redhead across the Bloomberg terminal.
Bloomberg has you covered.
Trump's global tariffs are struck down by the U.S. Supreme Court.
For all the context and clarity you need.
There's going to be now tons of tariff headlines until midterm elections.
Hear it first on Bloomberg.
Welcome to Bloomberg This Weekend. I'm David Durrett.
I'm Lisa Mateo.
And I'm Christina Ruffini. We're tracking breaking news today from Wall Street to Washington.
Let's start overseas. The sector is really propelling this deal forward.
Yeah, the hope is this will open up new markets and provide some additional liquidity.
Of course, now they're going to have competitors. We got a big week coming up in politics.
Earnings season is underway. We're going to get some key reports.
Everything you need to know before the markets open on Monday.
Introducing Bloomberg This Weekend, bringing a little Bloomberg into your weekend routine.
Guys, buckle up.
From the world of politics to the world of business, Joe Matthew and Kaylee Lines deliver news, insight, and analysis live 2 times a day, every trading day. Balance of Power at 1 and 5 Eastern, only on Bloomberg.
Know how the market day started.
Find out how it finishes.
Public markets to private markets.
From the micro to the macro.
Covering retail, entertainment, the business of sports.
The supply chains, trade policy, how it all is impacting the U.S. equity market as we drive to the closing bell at 4 p.m.
A holistic approach to covering financial markets.
If it matters to your life, we're covering it. I'm Katie Greifeld.
And I'm Romaine Bostic, and this is The Close.
Live every weekday.
Only on Bloomberg. Context changes everything.
Bringing you up to the minute geopolitical news whenever and wherever it happens. I'm Anne-Marie Hodern in Beijing, China, and this is Bloomberg.
Defence stocks are interesting this morning. 19 minutes into the session, and most of them are under heavy pressure. Certainly Rheinmetall is under heavy pressure. There's a bunch of reasons for this, potentially. Trying to pin them down is quite hard. But one of the big pieces of news we've already learnt this morning is that the tank maker KNDS, which produces the Leopard, is starting the process for a Frankfurt and a Paris IPO. Once public, the company will be based in the Netherlands and jointly owned by the French and German governments with a 20% free float on the 2 European exchanges. Charles Capel, Bloomberg's European Equity Capital Markets editor, joining us around the table. Any surprises? Any new news? What are we learning this week? There's a call going on right now.
Yeah, there's a media call going on right now. The executives are speaking and explaining the rationale for the move. In terms of surprises, nothing blowing us out of the water. You know, this is the formal start of the IPO process. They do some pre-deal investor education, speak to analysts, get the industry familiar with the company. I think in terms of the market move, that is a bit of a surprise. You know, we're still trying to track that down. There's a case for maybe saying people are trying to make a bit of space in their portfolios, but you wouldn't expect maybe something of that magnitude. In terms of IPOs, market conditions are really, really important. And a move like this isn't necessarily great mood music to be launching an IPO
This is the Rheinmetall move you're talking about.
Exactly, the Rheinmetall move. There's also a bit of a sell-off in other European defence companies as well. TKMS, which is, also an industrial sort of a marine company as well. So that's setting the mood music a little bit negative. A couple of interesting facts we did learn about the French and the German stake. There are incentives for them to remain long-term shareholders. They have a limit of about 30% of a lockup on most of their stakes, so they can't bring it below that. And then also if they hold their stake for 2 years, then the voting rights associated with that they actually double. That applies to all shareholders, but is going to be particularly important for France and Germany, and is going to give them the control that they wanted over this key company.
So let's dig a bit deeper into that then. The French and German governments working closely on this. What does that tell us? How important is that? What does it tell us more broadly about the cooperation between France and Germany when it comes to defence? Do we see other deals like this? Are there other ways in which France and Germany are working to consolidate some of their military assets? What do we take from the way that the two countries are working together on this?
Yeah, look, I think this is the latest in a long line of collaboration between the two companies. Between the two countries. It has been a collaboration that has been successful at times and less successful at times. Yeah. Recently, they scrapped a fighter jet program because they ran into difficulties around intellectual property and other details associated with that. I think this is really their efforts to make a land system player and to collaborate on that front. But also, I think it's really an indication that they're putting their money where their mouth is. You know, if any of their allies, if the US comes to them and says you're not putting enough money into European defence, you know, Germany can point and say we've just put billions of euros into this European defence company and we have taken a material economic stake in it, and that is really significant in terms of showing the world, allies and not allies, that they are serious about their defence.
I'm going to leave it there. Thanks very much indeed, Charles. Interesting times to be watching what is happening here. There's kind of other things happening within the space right now, and it's, as you say, it's hard to pin down some of the moves this morning, but I think we're beginning to get a bit of a better handle on what is happening here. So it looks like in Germany, so Pistorius, the defence minister, has made a very big decision, it seems, today. Rheinmetall was due to build, I think it's 6 F-126 anti-submarine warships for the German Navy. Instead, and Rheinmetall was going to build those, it now seems as if he's decided to buy 8 MEKO 200 frigates from TKMS, and that is why you're getting the moves that you're seeing on the board in front of you. Rheinmetall is down hard because it's not going to be building these frigates, and TKMS is up because it is going to be building these frigates. So in some ways you've got that news, but it just highlights, I guess, in terms of the IPO that we're talking about, the kind of volatility we're seeing in terms of these big defence contracts that are coming through and the volatility that
and how closely we need to continue to monitor these deals at the government level as that German fiscal stimulus continues to come through, even if it's not as quick and fast and voluminous as some would hope. Let's switch focus from defence to tech right now because, of course, Micron faces a massive earnings day later. Let's get a take and a preview and bring in Rahel Amin from our Bloomberg Market Strategist team. What are you and the team... Good morning, Rahel. What are you and the team going to be watching for when it comes to Micron? We've been obsessing about this as to whether or not it validates the sell-off or indeed gives some reassurance that demand picture around, particularly the memory piece, is still there when it comes to the AI story.
Yeah, it's a really important catalyst for the market, and particularly after yesterday's sell-off. We saw a report come out of Korea yesterday that AI memory demand is plateauing. Yeah. And that is what's, AI memory demand is what's driven a large portion of the rally year to date. So any comments from management around tightness around supply, pricing, margins, going to be very closely watched by the market.
How do they, we were talking about this earlier on in the programme, how do they communicate on capacity in terms of the build-out that they're going to be pushing forward? And this, I guess, goes for many of these kinds of companies. Samsung is another one, obviously, that we watch very carefully. If you say I'm going to build a lot, the market's going to punish you because you're going to build a lot and the market's worried about cyclicality here. But if you don't build enough, you're not taking advantage of the high demand and taking advantage of the high prices. That's really difficult to navigate.
Yeah, it's a good question. I think historically these companies have been very good at managing expectations with the market. Yep. It's partly why you see, beats and raises. And I think that's also why the market won't be obsessed about what happens this quarter, because they are going to beat and they are probably going to raise. Yeah. But it's just that the magnitude of the guidance and what they say around, pricing and tightness of supply, that's what the market's going to be focusing on.
Because the market's pricing to the moon at the moment, isn't it?
The market's pricing to the moon. So you do think we're going to get a beat and raise from Micron, but whether or not the markets will be happy with that, or whether that will be enough for the markets in an environment where you're going to seeing that kind of increased angst about how far this has all run up, whether it's run too far, too fast.
Correct, yeah. I think the setup going into earnings is obviously, I'd say, probably skewed more towards the downside. It's up about 100% over the last 2 to 3 months. Yeah. So asymmetric risk-reward. Valuation's obviously quite frothy. But the big question for Micron and these memory names more broadly is, are they still going to be priced as cyclical stocks, or are margins going to be more durable? Yeah. And if you look at the way the street has modelled gross margin over the next 3 years, 80% plus, there's a lot of good news that's been priced in. So any slight
deviation
is going to be going to be...
Yeah, we just continue to extrapolate further forward from where we are now. Ruhel, great stuff. Thank you very much indeed for setting us up, Ruhel Ahmed, ahead of the Micron earnings. Coming up next, we are going to be joined by the European Commissioner for Competition, Teresa Ribera, is going to be joining us. Lots to discuss there. That's next.
My old mentor, Roger Staubach, who told me when I transitioned, football will never leave you, but you need to leave it.
Wow.
Everyone has a dream, and a lot of dreams are, you know, my dream is to play football and play professional football, and you get the dream comes true, but it is going to end. And the day it ends, the day before it ends, you're one of the best in the world. Great. The next day you wake up, that's gone. What are you great at? And the truth is, nothing, right? I'm not great at anything else.
I talk about it all the time, Steve, is this whole idea of it's not from penthouse to penthouse. And what I mean by that is you played for 15, 20 years and you're in the penthouse. That doesn't mean that you come to the business world and you're going to be in the penthouse. You don't start on the third floor or the lobby. You actually have to start in the basement.
Trading day is about to start.
And you're already looking for that edge.
The opening trade brings you everything you need to know as markets open across Europe.
Let's talk about the significant risk transfers to find space in their balance sheet.
Hedging some of that risk.
You could look at it the other way. Obviously, this stuff is risk-weighted.
I would much rather be long than be short.
We're in a kind of sweet spot.
Very, very strong alignment.
3 revolutions in one.
I'm Guy Johnson.
I'm Anna Edwards.
And I'm Tom McKenzie.
This is your opening trade.
Every trading day, only on Bloomberg.
It's the world's second largest economy with a growing influence in global affairs. Bloomberg The China Show brings you the unmatched expertise you need to keep track of breaking news, in-depth market analysis, and the most influential newsmakers in and around China.
We need to do more to engage the market more.
We're risk on. I think we caught a little sweet spot.
Massive savings right now.
It's already a different game.
Bloomberg The China Show. Weekdays around the world, right here on Bloomberg. Context changes everything.
Key investors, top executives, global innovators. Join me for in-depth conversations with the biggest newsmakers on the day's top stories. Insight with Haslinda Anim, only on Bloomberg.
This is the opening trade. We're 30 minutes into the Wednesday session. Happy Wednesday. Currently looking across the benchmark of losses of about 0.1%. So relative to what we've seen in the Asian markets and, of course, the heavy sell-off overnight in the US, particularly on the Nasdaq with losses of more than 3%, some relative calm. Maybe waiting for the next catalyst, and maybe that is the earnings coming through from Micron, possibly also the inflation print out of the US with PCE, of course, coming through on Thursday. The DAX is currently down 0.6%. Slightly brighter picture over in France with the CAC current adding 10, close to 11 points. And you're flat here with the FTSE 100 at 10,430. Guy, what are you seeing?
OK, a market that actually is going nowhere in a hurry, and that really is borne out by the internals. 258 up, 327 down. That's a reasonably balanced market. Volume looks a little light. We're not getting the choppiness, certainly here in Europe, that we've seen over in Asia. The intraday swings are not happening here in the same way. Single stocks are a bit different, so let's dig into the single stock story and work out what is happening there. Segro, we've got an offer being made for the UK warehouse company. It is up on the back of that offer is coming out of the United States. Potentially another company falling prey to a US takeover. That is the narrative, and it continues with Segro this morning. Barclays out with numbers here in the UK. That stock is up by 5.34%. But I think the real story is in the German defence narrative this morning. You have got a big switch when it comes to the future of the German Navy. TKMS makes frigates, and it's about to make 6 more for the German Navy. It is up on the back of that. The German Defence Ministry has decided not to go with the frigates that were going to be made by Rheinmetall. It is down hard on that. So a real switch in terms of the defence narrative. This, of course, on a day when we get the KNDS IPO confirmation coming through. We'll talk about that in just a moment. The CSG is down by 4.3% in the Netherlands. And we've got Volks. I think these are 2010 lows for Volkswagen. The German auto giant that is Volkswagen is at 2010 lows. We're down by another 1.2% this morning, Tom.
OK, here's what else you need to know this morning. KNDS, then, to your point, Guy, says an IPO is expected in the next few weeks in Frankfurt and in Paris. Its current shareholders, the French state and Wegmann, a holding company for its family owners, will offer a 20% stake in the tank maker. KNDS is one of Europe's most strategically important defence firms. President Donald Trump says Iran can use funds released from frozen accounts only to purchase food and medical supplies from the US. However, Iran says they will be used freely in whatever manner is deemed appropriate. Meanwhile, the Republican-led Senate voted to end the US war with Iran in a rare symbolic rebuke of Trump. Brent futures are holding on to losses with more tankers openly crossing the Strait of Hormuz, and on signals of progress from the US and Iran towards ending the war, vessels are transiting the waterway with satellite signals switched on, indicating growing confidence among ship owners. Guy.
Okay. All the stories we're watching. Let me fold in another one that we are certainly paying a great deal of attention to. There's a heat wave, if you haven't noticed, gripping Western Europe, and we are anticipating more dangerously hot and humid conditions. We're breaking records across the continent. We're expecting records to go today in France, the UK, Spain and Germany. The excessive heat is, of course, putting pressure, unsurprisingly, on Europe's power grids. Energy markets are literally on fire today as we see huge volatility. This is cooling demand that we're looking for here, particularly as we see things like French nuclear going offline. So let's talk about the impact of all of this. Joe Wirtz, Bloomberg weather and climate reporter, joining us around the table. How bad is it?
Well, in France, especially, it's this heat wave has been going on for a week now, and this is reaching unprecedented historic levels here. We've got the hottest day ever recorded in France yesterday. We've got the hottest night, average night recorded in France, so both hot days and hot nights. It's upending daily life there. They've having to close museums, close the Eiffel Tower early to get guests out of there before the heat really sets in at the end of the day. And we're starting to see some grid problems, too. We just put up a story about some transformer problems and disruptions, cutting power for nearly 70,000 people in France, and really feeling the strain there. Yesterday, like you said, we saw really high cooling demand and some restrictions on supply for power, both from the nuclear curtailments due to the hot river conditions there, and also low wind output. The same heat dome that's creating these temperatures is keeping the wind speeds down, and we're seeing some supply issues there. So French day-ahead power prices yesterday hit the highest levels we've seen since the energy crisis. So really starting to ripple through markets.
Absolutely. It feels like we're not ready for this once again.
Well, I'm not ready.
No, certainly not here in London. We don't do air conditioning, apparently. Joe Wirtz, thank you very much indeed. OK. This takes us perfectly on to our next guest. Teresa Ribera is the European Commissioner for Competition, and she joins us around the table here in London. You're here for Climate Week.
Yes.
Thank you very much indeed for being here.
My great pleasure.
Is Europe decarbonising fast enough?
I think that we all should decarbonise much faster. And we also need to develop our adaptation and resilience strategies. We are not ready. It is stress in our households, stress in the energy system, stress in the transportation railway system. Yes, we need to prepare for a different climate.
If we decarbonised faster, would energy prices be higher or lower?
Well, it depends, but normally, and that's something that we repeat once and again, and yesterday the Secretary General Guterres made his point in this Electrification Day, if we rely on low carbon, homegrown solutions, clean energy, renewable energy. That would help the economy and that would lower the bill, and that's decarbonization.
So you think decarbonisation will lower the bill? Because at the moment, Europe is really struggling. Our economies are struggling because we have higher energy prices than other places. And some point the finger and say the reason for that is because we're decarbonising too fast.
Which, in fact, it's absolutely fake. Look at the Europe's map and to what extent it is the Scandinavian countries, the Iberian Peninsula, the ones that are providing much lower prices in the electricity markets due to the different electricity capacity that they have been developing in these recent years. It is the other way around. It is when operational costs to produce electricity are lower that the final energy bills are also lower. Of course, there are many other elements that we reflect that we find reflected in our energy bills, but that's much more secure, affordable and stable than counting on something that we do not produce and that needs to be imported from elsewhere.
Commissioner, we also need to import arguably a lot of the supply chain around renewables from China. On a cost basis and on a speed and efficiency basis of moving forward on that transition, there's a case to be made for importing more solar panels, turbines from China. Would you back that?
I think that the main point is that around this energy transformation, we can develop a whole industry, and that's also very important, and that's part of our efforts, how we can build this clean industry in Europe. But of course, we will never be isolated towards the rest of the world, as no other country will be. So the important thing is not to increase the weakness, the dependencies, or to substitute some dependencies from some other dependencies. I think that the conversation in that field is very complex, but of course we need to bear in mind, to keep in mind that we cannot substitute this dependency on fossil fuels towards something that it is connected to devices or critical raw materials that are important to decarbonize our economy.
On wind turbines in particular, do we need consolidation in Europe to be able to compete with China?
I think that there are couple of things that we need to do. One of them, and we are in the middle of this investigation, is to be sure that what we import is not being subsidized somewhere else, so that we can track what it is happening and whether there may be subsidies that do create an unlevel playing field in our market. The other thing is how we can ensure that the companies, the innovation, the next generation of wind turbines that we will be requiring are also being developed in Europe. And there may be projects to consolidate some of the 16 industries in Europe to come up with bigger proposals, and that's part of what we are assessing and waiting to see what type of concrete programs, projects they may be pushing for.
Okay, so would you be in favour of consolidation? So you put Vestas together with another firm.
I think that consolidations that do help to innovation and resilience are part of what we need. Of course, it cannot be at the cost of killing other possibilities or getting trapped in a kind of monopoly. But of course, I think that that's part of the exercise right now.
That feels like a shift in Europe, because over the last few years, it's always been about competition. Competition has been the driving narrative. And I wonder whether we've had a tone shift now because we live in this new, more fragmented, competitive world. Is Europe changing the way that it perceives the competition mandate and looking differently maybe at the way that we need to build champions?
We know that competition drives innovation and is beneficial for the consumers. It brings prices down and it allows these incentives to keep on improving. But we also know that in many cases, innovation, resilience requires longer time frames, or maybe happening in a different context where this sophisticated manner to invest.
Innovation and scale are two different things.
Yes.
You need innovation and you need scale. You need innovation to start and then you need to scale it.
In certain cases, you may need, in order to innovate, bigger scale. So the issue is whether we are speaking about European markets, global markets, or to what extent we are talking about different timeframes. And that's what we are trying to come up to the bigger public and, of course, the corporates. Please do think in these terms. And these are the type of criteria that we will be taking into consideration. Let's work on that and let's engage in an earlier stage on how you foresee your innovative approach thanks to a consolidation, and in the absence of this consolidation process, to what extent it could not be possible.
We need to fund the renewable shift, and to fund it we need banks, and we need arguably banks that can play on the global stage. We need consolidation in the banking sector. We're not getting that. Germany pushing back on UniCredit's bid for Commerzbank. That's a problem for Europe, isn't it? Does that aggravate you? What are you saying to the German government? We need consolidation. Europe needs consolidation. Does it frustrate you when you see what happens with Commerzbank?
I think that there are three things that we need. We need a capitals union. We need integration of markets. I think that this is very obvious that some of the gaps in terms of competitiveness for the European economy, and I am a convinced person in terms of how strong is our economy, is connected to the lack of integration in certain key markets or the lack of development in certain other markets. And that applies mainly to banking sector, to digital, to energy. So we need to work that from the perspective of the single market's developments.
But what can Brussels do to pressure national governments?
So I think that we need this regulation, this pressure, and I think that it is a moment where national governments should remind themselves that being alone together requires much more further development of the single markets if we want to keep on being relevant and creating wealth in our continent. But at the very same time, it is also true that in certain cases we may find operations that can help into this consolidation process to facilitate the understanding that single market is a good thing. But look at this concrete example, consolidation across the border. And I think that in this case, these operations should be welcome. The third thing is that, yes, of course, there may be a need to identify when, for security reasons, national governments may be commenting on certain operations. Our invitation from the Commission is, please, to take a narrow interpretation of these security clauses. We cannot use security clauses to prevent whatever operation that could make sense and help the European economy and the European interests as such.
So if we had a better financial markets, would we have things like SpaceX here? Would we have those kinds of events taking place? If we had a consolidated market, would we have the scale? And would that drive the innovation? Does everything start in Europe at the fact that we don't have an integrated financial market? How big a block is that?
One of the elements that we identify is that it is not creativity, startups, research that is missing in Europe. Things happen in Europe, are innovative, are promising, and the problem is when these small companies want to scale up and how they can find the means to support this growing a scenario that they want to build. So it is connected on the possibilities to count on different financial opportunities or different products that may help into this exercise. And the fact that we still count on 27 fragmented banking systems, even if there has been, of course, quite Basel II and lots of sectoral regulation, is something that we would like to smooth down and to facilitate.
Less regulation?
That's mainly regulation, but there may be issues dealing with competition cases that can help.
Okay. On the question of competition in the media space, we're potentially about to see one of the largest media companies in the world, if Paramount and Warner do combine as part of that proposal. What would the Commission have to see to be satisfied that proposed merger, does not negatively impact competition and the consumer?
Working on that. I will come back to tell you once we come up.
What are you looking for? What is top of mind? What are the metrics?
I think that there are a couple of things that are important. To what extent there is a reduction of the capacity of creators, producers, to come up with their ideas to a market that is quite important in terms of profits, and that turns back into households, theatric cinema, and so on. And that's one of the key aspects. Is there other alternatives? Are there other alternatives that producers and filmmakers can find? The other element could be connected to what extent, and that's not so much on the competition side, there could be limitations in terms of creativity, recognition of cultural heritage, languages, and so on. And that's much more connected to other aspects of sectoral regulation, but that are important, are quite emotional. So we will have to pay attention and to check to the market the eventual solutions and remedies.
Very briefly, are you concerned with what you've heard so far from the two sides?
Sorry?
Are you concerned about what you've heard from the two sides so far? Very briefly.
We have been paying attention to everything that we have heard, and we have heard a lot.
Okay. It's a reasonably bad up. Thank you very much indeed, European Commissioner for Competition. Really appreciate your time. Thank you very much for coming to the studio this morning. Coming up, back to the energy markets. Oil dips as more tankers openly cross the Strait of Hormuz, while the US and Iran signal progress towards ending that war. That is next. This is Bloomberg.
Everybody has a moment where they put into action all they've practiced, where they step up to a challenge and either succeed or fail. But what are those moments for some of the world's most influential leaders?
It was a rough and tumble world, and I thought, okay, I can rise up, I can play this game, and I did play the game.
It was great, and it was depressing, and it was disappointing.
My chair at the time sat down with me and said, "Succession starts now."
I'm Francine Lacqua, an award-winning journalist. For the last 25 years, I've interviewed world leaders, bank bosses, even fashion icons. I'm often asking about the news of the moment. But I've always been curious, who are these people as leaders? Join me for the podcast version of Leaders with Francine Lacqua. I'll start your week with conversations that explore what drives the world's most influential people, how today's leaders got to where they are, where they're going next, and how they've transformed their organization in the process.
Make decisions. A poor decision is always better than no decision.
You have to have truth tellers around you, and you have to be willing to listen.
You don't want to be setting strategy in the middle of a transaction, that's for sure.
Do it for the right reasons. Don't do it because of FOMO.
We'll also learn lessons which we can apply to our work and daily lives. Tune into the podcast version of Leaders with Francine Lacqua. Listen and watch on Bloomberg Television or wherever you get your podcasts.
What is going to be the consequence for U.S. markets? We are seeing modest gains across European equity markets.
Take a look at how we're faring when it comes to Asian markets.
U.S. jobs numbers are released. Bloomberg has the report under surveillance with crucial data and expert analysis at terminal speed. Nobody covers jobs day like Bloomberg.
Oil extending declines as more tankers openly cross the Strait of Hormuz. Brent currently trading at $76 a barrel. This comes as the US and Iran both signal progress towards ending the war. Joining us now is Bloomberg's Abir Abu Omar in Dubai. Abir, what is the current status of flow through the Strait?
Good morning, Tom. We're seeing more and more ships making their way through the waterway. Now, there are some challenges that continue to persist. Some of those are freight rates, for example, that have been surging over the past few days, and this is because of shortages in empty vessels. But still, nothing compared to the levels that we've been seeing over the past 2 months when the Strait of Hormuz was facing this double blockade. We're seeing more and more shipments of crude and condensate and crude products making their way through the Strait of Hormuz. A big thing here to point out is that as of June 22nd, our energy teams have pointed out that there were 68 million barrels making their way through the Strait of Hormuz, both back and forth. Now, 80% of that volume, Tom, did not have a specific destination. We think a lot of those shipments are headed somewhere to Asia. But again, the trickle of movement is accelerating. It's increasing by the minute. Nothing compared to the pre-war levels, but definitely much warranted. And as President Donald Trump has alluded to a couple of days ago, he's seeing oil gushing through the Strait of Hormuz as these negotiations between Iran and the U.S. continue to take shape in Switzerland. With the technical talks having ended, we still have lower level negotiators from both sides continuing to negotiate the concessions. A big one of those concessions is the Strait of Hormuz and whether it'll go back to the shape that it was at before the war. According to the Iranian side, that's not going to happen. According to the Iranian side, it will be free of tolls for 60 days. But then we might start seeing a mechanism that will toll shipments through the Strait of Hormuz.
Okay, Bloomberg's Abir Abu Omar with that update out of Dubai. Thank you. Let's look ahead at what else we are watching throughout the day. NATO Secretary General Mark Rutte will be meeting President Donald Trump in D.C. We'll keep across that for you, of course. 9 a.m. UK time. German IFO Business Climate Survey comes out. US economic data, including MBA mortgage applications and new home sales, with a pulse then on the housing market of the US. And on the earnings front, arguably potentially a catalyst for these markets, Micron earnings after the market. And at 5 p.m. UK time, it is Nvidia's AGM.
So presumably you'll hear from Jensen Huang on that. So he's going
You would assume so.
Yeah, we'll get a
leather
further
jacket or not.
It's always important which leather jacket. Okay, Scarlett's here to talk us through the rest of the session and what we're going to be looking forward to. The last 24 hours have been really interesting. I've yet to figure out why the Cosby sold off. I've yet to figure out why it's bounced. I've yet to figure out a lot of things that are going on in this market. In some ways, Micron and Nvidia provide us actually with a more firm catalyst for going forward from here. What do you make of the price action this week?
I think because you can't figure out why it's kind of moving around, that to me is a signal that it's more likely froth coming out of the market than something more concerning. I think for something very concerning, you need a fundamental change in the macro backdrop. And there are still quite a lot of positive catalysts, right? We still have IPOs incoming. Those are typically quite positive because they bring in inflows, they boost sentiment.
Yep.
You get lockup periods automatically. SpaceX, for example, lockups don't start to roll off until a month from now, and the majority of them aren't for a year still. And then I think, with Korea in particular, there's concern over leverage. I think the fact that you've only had 13% downside after a 100% rally year to date means that that's quite a conservative move, especially when you think about average corrections in the S&P tend to be around 15%, peak to trough. So it feels like a very more normal market. And if you look at the last few months,
10% is a more normal market, is it, on a day?
Maybe not on a day, but when you think about leverage positioning within Korea, and the fact that in recent months we've had 3 of such corrections in Korea without getting rid of the general uptrend, it's not as concerning as the headline number tells you.
Skylar's just built up scar tissue on the back of this. Skylar, is Micron now more important to the markets than Nvidia on the earnings front?
I think it's definitely something to watch. I think the issue is you have tech names that are quite small that can hint at an overall trend that can move markets quite considerably. I think we know this is important because Micron is the 3rd largest stock in the NASDAQ, so there will be global repercussions. The question is, to what extent that's sustainable, in that we know there's a high bar from tech earnings to push prices up higher. So, maybe it's not a positive catalyst today, but unless you get a big rollover in earnings expectations, I wouldn't expect the tech trend overall to have a harder time.
We're getting inflation? More inflation?
Yeah, more concerning inflation. So US PCE data, that's another one to watch. More for broader markets, I'd say, because PCE on the headline basis is expected to come in at 4%. Core month-on-month 0.3%. That's certainly not in line with the Fed's target. And I think what you can see in the asymmetry of consensus forecasts is the risk is that you should actually get a higher reading, so 0.4%. Now, that means that the bias is still for higher yields, I think, in the U.S., and that's a more challenging backdrop for valuations. And so it can certainly shake markets. I think generally, though, unless you see a very hawkish repricing, so much more than the kind of 1 to 2 hikes that are certainly expected now, it's still growth positive. It's still an environment that you can see equities uptrend.
Thank you very much. Skylar, on the markets, 10%. I get 10% move on the day. It's nothing. Talking of 10% moves, let me show you what is happening. We don't often talk about shipbuilding on this show, but we're going to right now. So the German Navy, the German Defense Ministry has decided it's going to go not with some slightly troubled frigates that were going to be built by Rheinmetall, Instead, they're going to go with some other frigates that are built by TKMS. And as you can see, TKMS is up by 10% today, and Rheinmetall is down by 10%. Shipbuilding, so that feels quite fundamental, doesn't it?
But it's also a reminder of how complicated it is. We can issue these contracts and then actually building
these things,
actually getting them built in time. So there've been issues with one of the Dutch builders that's involved in this, and then that moved to Rheinmetall, and now obviously the contract's been taken away from them.
You want to get it right. Look at the Royal Navy. You want to get this stuff right. If you don't get it right, you have ships that aren't capable of leaving port.
If you don't get it right, you get ships that are criticised by President Trump as being tin pot ships.
Yes. Anyway, on that note, we will leave it. The opening trade is behind us. The European markets are open. We've ticked that box. We're waiting for Micron. We're waiting for the inflation data now out of the United States, as you can see by the board in front of you. Anyway, the Pulse is up next. Enjoy the rest of the day. This is Bloomberg.
Get your fixed income fix. Watch Bloomberg Real Yield around the world right here on Bloomberg. Context changes everything.
Good morning. This is Bloomberg Surveillance.
Welcome back to the opening trade.
It's Bloomberg Money.
This is the Asia Trade.
This is Wall Street Week. Welcome to Balance of Power.
You're watching Bloomberg Deals. Welcome to Bloomberg This Weekend.
This is Bloomberg Television.
Technology is embedded in every aspect of our lives, and that revolution is playing out in real time. From finance to defense tech, AI to entertainment, from the road to the stars. Bloomberg is bringing you the stories of companies and people that are pushing tech to new frontiers, and the politics reshaping global tech markets. I'm Ed Ludlow, live in San Francisco, and this is Bloomberg Tech.
Every weekday, only on Bloomberg Television. We're at the epicenter of a global realignment on a scale not seen for decades. At the intersection between markets, economics, and geopolitics, a forum for sophisticated conversation. This is Bloomberg Surveillance.
Asia is at the forefront of some of the world's biggest stories. I'm Sherrian in Tokyo.
And I'm Heidi Stroud-Watts here in Sydney, where the trading day begins. We're here in the center of all the action to get you set up with the numbers, news, and knowledge you need for the day ahead.
The demand is indeed recovering. We've been waiting for this moment.
The opportunity of a century.
Join us on Bloomberg The Asia Trade. Weekdays only on Bloomberg TV. Context changes everything.
Newsmakers and market movers. This is The Pulse.
Good morning, everybody. Welcome to The Pulse. I'm Anna Edwards, live in Frankfurt, and these are your top stories this morning. Stocks steady after a tech-led sell-off. Attention now turns to Micron's highly anticipated earnings report. Bloomberg understands Andy Burnham will make a speech on the economy next week as pressure grows on the man seen as the UK's next Prime Minister to set out his vision. Plus, oil falls as more tankers cross the Strait of Hormuz. But the United States and Iran make conflicting claims over whether Tehran has agreed to inspections of its nuclear sites. Welcome to the programme, everybody. This is The Pulse. I'm Anna Edwards, in for Francine Lacroix, just today, live from Frankfurt. Let's have a look at where we are across the markets right now. And we'll start with the picture on S&P futures. Given the heavy selling that we saw yesterday in Asia and in the US on tech-related AI themes, then we are seeing a bit of stability today. S&P futures pretty flat. Also stability on the UK 10-year gilt yield. Interesting to look at that in the context of the pressure that's building on Andy Burnham to name his top team, including, probably, it seems, a new chancellor. And the euro pretty stable, actually, but a bit of dollar upside. 113.52 is where we trade as the dollar continues to make some gains. Is that all Kevin Walsh and Fed related from last week? And Brent is trading at 75.79, as we said, falling a little bit this morning, down by 1.7%. Let's have a look at the European equities map to see how that is playing out. European equity markets, then, we see them a little bit negative this morning, but just down 0.1%. We're seeing some of the selling coming through in Germany, in fact, down by 0.7%, so real underperformance on the German market. Elsewhere, we see the CAC is pretty flat, the FTSE 100 just down 0.1%. In terms of the sectors that are on the move, real estate is providing quite a lot of upside, actually. So the real estate sector up by 2.3%. We've had an offer for Segro, which is one of the real estate investment trusts listed in the UK, and that is lifting that whole sector. That has prompted, that offer has been rejected, but that is prompting a lot of M&A talk within that sector. To the downside, we see construction and materials is weaker, banks are weaker, media companies are weaker, down by more than 1%. But as I say, some weakness in the German market, and elsewhere we see some divergence. So the AEX and the CAC actually pretty flat to positive. Let's go to some of the numbers and some of the macro indicators coming out of the German economy right now. Let's get to the German IFO number for the month of June. So the Business Confidence Index, the red headline across my Bloomberg terminal, tells me that has come in pretty much in line with expectations. So 85.6 is the number we have there, and that is against an estimate of 85.5. And that business confidence number, of course, is a combination of the current assessment and, crucially, the expectations. So the current assessment number has come in at 87. That is just above the estimate, and expectations at 84.1, and that is just a shade below the estimate, which is interesting in itself because we are thinking about what difference it makes if we've seen an end to the conflict in the Middle East. But we'll get back to the German story in a moment. The euro, you can see, pretty stable, or at least as it was before we got that data print out of Germany. We will return to that German story shortly. Now, thinking about the global stock picture, global stocks have found a measure of stability then this morning following yesterday's sharp tech-led sell-off. Amid volatile market sentiment on the AI infrastructure rally, investors now await memory chip maker Micron's earnings. We're joined now by Joyce Chang, Chair of Global Research at JP Morgan. And Joyce, it is a real pleasure to have you on the programme. Thank you very much for coming to speak to us. Can I start with getting your take on the tech sell-off then? Are you expecting the AI-related tech names to push higher from here? Is this a buying opportunity, or do you think we've seen a peak? What's your broad assessment?
I think the business sentiment and the AI CapEx story still has further to go. As we look to 2027, we're looking at CapEx investment in hyperscalers this year that was $730 billion, but probably headed to $1 trillion last year. And when you add in the data center financing needs, you also look at what is needed for cybersecurity. I mean, we're looking at numbers that are still going to be stronger next year. So the volatility doesn't surprise me. But I think the AI CapEx story remains one that's very much intact. Also, looking at the U.S. equity market, we have a number of other factors, the buybacks, which are supportive, as well as the retail flows. So I think that you will see that still on retail, there is still a sentiment to buy the dips here. The volatility doesn't surprise me because we've seen some pretty big moves here. But I'd also say the non-tech sector has held in very well as well. I mean, the earnings were stronger across the board than we had forecast in a number of different sectors.
Which parts of the AI trade are you leaning into then, Joyce, at JP Morgan? Because, of course, we saw hyperscalers actually giving some ground to chip makers in recent months, and then just in the last couple of days, just almost indiscriminate selling across the space. Where in the AI build-out looked most attractive to you?
Well, I think the data center build out is still enormous here, and that's affecting not just the equity market but also the debt market. I mean, we've seen debt issuance numbers that are topping $300 billion. We've seen inflows going into U.S. high-grade corporate bonds that are 3 times what they were last year. So you've got the upstream story, you have the data center story, you also still have semiconductors as well. So the volatility, just given the moves that we have seen and just given the earnings revisions that we've seen, doesn't surprise me on a daily basis. But I think the trend is still going to be higher on the AI story. And I would characterize the U.S. cycle as more mid-cycle. I don't think it is actually that advanced. We still look at the needs until the end of the decade being in the order of $5 trillion for what you could need all in, looking across data center financing and CapEx needs.
Yes. Thinking about other asset classes, Joyce, we've seen a lot of demand for the SpaceX debt issuance. And just thinking about what that tells us about financial conditions, I mean, if the market is happy to take that kind of risk right now and to buy into the SpaceX broader story with all of the hopes and dreams that perhaps are attached to it, what does that tell us about financial conditions, do you think, in the US?
Well, look, I have been in this market now for going on 4 decades, and it's hard for me to think of a time when we've had such easy financial conditions. I mean, capital is not only available, it's been customizable and available in public markets and private markets. You've got the growth of digital assets as well. So you've just had this tremendous amount of wealth creation and liquidity where it seems like some markets are not even big enough to absorb this. So,
so a lot of wealth creation.
I do think that is. Yeah, I do think that is going to continue to be a challenge when we talk about Fed policy and where that's going as well.
That's going to continue to be a challenge, yes, and that's where I wanted to get to next, Joyce, was around the Fed and what your expectations there. I mean, do you think we have fully repriced then, based on what we heard last week from Kevin Walsh? Do you think we've repriced technology based on a higher interest rate? Or what's your expectation for how long that process will take?
Well, look, I think that you could still have, interest rates, go higher here. I mean, we think looking at our fair value models, our rate strategists think we're still about 20 basis points higher that we could go on 10-year Treasury yields. And I do think that we're in for a structural period of just higher term premium that's going to stay with us here. And that is because of the fiscal deficit, the rise in the debt to GDP ratios, as well. And also that we see that the ownership of the market has changed, as well, that many of the more price insensitive buyers, are leaving this, and that there could be more volatility here. So I still think that higher for longer, somewhat higher term premium is still something that could be on the cards for a number of the developed countries going forward.
And are we looking at a lot more volatility around data points, Joyce? Are we looking at a lot more volatility around data points? For example, the PCE number that we're going to get this week, just coming a week after Kevin Walsh has tried to recondition the market into thinking more about the data and less about the forward guidance.
Well, look, core PCE has not been below 2% since, February of 2021. So there is going to be more attention on that number. But I think that Walsh's message, was a hawkish tilt. The dots were hawkish as well. And all of the things that he talked about before he became the Fed chair, the mission creep, the wanting to reduce the forward guidance, the criticism of the larger balance sheet. So we're going to continue to look at the data very closely. And it is not in our forecast that you see hikes this year, but it's certainly something that could be on the table depending on what the data, says. Now, labor markets are also going to be very important here because we've seen labor growth actually not that strong, but we've also seen stronger numbers in the labor market on the overall, job creation. So I think the data will be scrutinized very much for when the next central bank's moves will occur. We have the ECB, in September. We think Bank of England will take longer to wait on the fiscal budget, and the Fed's still something that is more of a next year call, but it's not out of the question that it's this year. It will depend on the data.
Okay, and Joyce, you expect the oil price to continue falling from here. What gives you that confidence?
Well, I think one thing that is a surprise compared to what we thought a few weeks ago is that the drawdown in OECD inventories has not been as strong as we expected. We've also seen in Asia that consumers adjusted more quickly than we would have thought as well. So you have oil prices, I think, that are going to remain higher than they were pre-Iran. But you also see in the negotiations on the memorandum of understanding that even though there is a lot of noise around that, both sides still seem to want to de-escalate on this one. So I think you could see some more downward pressure as we go into the second half of the year.
OK, both sides want to de-escalate. Joyce, thank you very much. Thanks for giving us your thoughts this morning. We appreciate it. Joyce Chang, Global Research Chair at JP Morgan. I was talking earlier, I'm in Germany. I was talking about the data out of Germany a moment ago, the IFO survey. Let's return to that now. It shows that German business confidence is rising just a little bit. We're joined now by Clemens Fuest, who's president of the IFO Institute. And it's a pleasure, Clemens, to speak to you on the programme today. So we do see a small brightening of the outlook, perhaps, for business in June. If you look at the expectations index, maybe that's what I'm seeing. Would you expect that to brighten substantially from here, given the latest developments in the Middle East?
Well, there is certainly hope that this will happen. If we look at manufacturing, companies are telling us, yes, the current situation hasn't really improved very much. Even some indicators have gone down. For instance, more companies, not less, more companies are telling us they're experiencing bottlenecks with products they buy, especially from the Middle East. And nevertheless, their expectations are positive for the next 6 months. Their expectations have improved. So it seems to be the scenario that companies expect, yes, this situation in the Strait of Hormuz will take some time to improve. But the hope is, at the moment, the expectation is it will improve. And if it does, if there's no backlash, we would expect the situation to improve in the coming months for the German economy.
OK, so there is some expectation then that if things hold, we could see some improvement. How improved could things be, Clemens? Because if I look at some of these IFO numbers going back to the COVID era, we haven't bounced all that far, actually, since the post-COVID time. Of course, there was the invasion, the full-scale invasion of Ukraine to factor in and everything that did to energy prices. What explains this extremely prolonged period of subdued readings, perhaps, from these numbers?
Yes, I mean, we are at a very low level. We are even significantly below the February, so the pre-Iran war level at the moment. So it's been a prolonged period of shocks, one following the other. And then we have structural issues in the German economy. German companies have lost competitiveness because energy prices are high in Germany. There's a lot of red tape. Taxes are high. So there is increased Chinese competition that is hitting the German economy. So there's this combination of structural factors and macroeconomic shocks hitting the German economy, meaning it will take time to recover. Current forecasts are revised upwards, are being revised upwards, but very slowly and not by very much. So for this year, for instance, we are now expecting 0.8% growth for the German economy. This is really not a strong recovery, although you would think after this long downturn there would be room to improve, but it will take time.
Yes, indeed. I mean, before the war in Iran started, Clemens, we heard from Chancellor Merz. He was describing 2026. He hoped, at least, that it would be a year of growth. We're halfway through now. How would you characterise this year in the German economic growth story?
So the first half of the year has been lost due to the Iran war. And overall, growth is really carried by public spending. So there are these large public spending programs on infrastructure, on defense. And that's what prevented the German economy from shrinking again in 2026. So it's very much a government spending-driven growth. It's not coming from private investment. It's not coming from construction. It's not coming from consumption, really. And as long as the private sector doesn't respond, doesn't grow, the potential for recovery is limited. So this, will not work before there is more optimism and confidence among consumers and companies.
Yes. And Clemens, what is the scale and scope of the transformation that the German economy is undergoing right now. You mentioned competition from China. That makes me think of the auto sector, of course, where we've got competition and to some extent a shifting relationship with Chinese manufacturers. We have engineering giants going out of their way to pivot to become tech companies. We've got the challenges still lingering, of course, from higher energy prices, and given another a reminder of that with the Iran war. What is the scale and scope of this transformation in Germany?
It's really a huge transformation. And as you say, we have these two sectors, automotive, very much affected by Chinese competition, by technological change. We have the machinery sector, the sort of traditional sectors in the German economy that are affected. And on top of that, what we are facing is a declining labor force due to demographic reasons. So in the coming years, there are headwinds for growth anyway. And this is combined with the transformation of manufacturing. It is also combined with concerns about tariff wars. There's more protectionism. At the same time, of course, new trade agreements like Mercosur and India. But the German companies will have to adjust significantly. At the same time, there is still a strong industrial core in Germany. 3/4 basically of German manufacturing firms are still expanding. So there is some substance here and a basis for recovery, but the transformation will be large. It will affect a quarter, maybe even a third of the German manufacturing sector. So it's really huge.
Clemens, thank you so much. Thanks for your time. Clemens Fuest, president of the IFO Institute. Coming up on the programme, NATO's Secretary General Mark Rutte will visit President Donald Trump at the White House ahead of a crucial NATO summit next month in Turkey. More on that next. This is Bloomberg.
Bringing you up-to-the-minute geopolitical news whenever and wherever it happens. I'm Stephen Engel at Japan's Akasaka Palace in Tokyo, and this is Bloomberg.
Every weekday, Bloomberg puts the spotlight on a different aspect of global finance. Flows, funds, and the forces shaping markets on ETF IQ. The future of money with Bloomberg Crypto. The players behind major transactions on Bloomberg Deals. Rates, risk, and the cost of capital on Bloomberg Real Yield. And personal finance, retirement, and wealth management on Bloomberg Money. A different topic every weekday, only on Bloomberg Television.
Welcome to Bloomberg This Weekend. I'm David Gura.
I'm Lisa Mateo.
And I'm Christina Ruffini. We're tracking breaking news today from Wall Street to Washington.
Let's start overseas. The sector is really propelling this yield forward.
Yeah, the hope is this will open up new markets and provide some additional liquidity.
Of course, now they're going to have competitors. We got a big week coming up in politics.
Earnings season is underway. We're going to get some key reports.
Everything you need to know before the markets open on Monday.
Introducing Bloomberg This Weekend, bringing a little Bloomberg into your weekend routine.
Guys, buckle up.
Making money isn't about drowning in emotions. It's about understanding what's actually happening. Markets are the best way to glean signal from noise, and that is what we try to do every morning. This is Bloomberg Surveillance.
Welcome back to The Pulse. Let's talk about the defence sector and meetings that are taking place with regards to NATO in just a moment. But first, we'll get to the oil story. President Trump says that Iran will only be able to use funds released from frozen accounts to buy food and medical supplies from the United States. But Tehran has disputed President Trump's comments, including his claims about Iran's military capabilities.
Our missile program was not included in the MOU, and it shall not be.
I would like to say that if it was not for Iran's missile capabilities to defend ourselves, our country would have been plundered and destroyed by the Zionist regime and the U.S. like Gaza, and they wouldn't have mercy on the young and old.
Let's bring in Bloomberg Horizons Middle East and Africa anchor Abir Abu Omar. And Abir, again, mixed messaging. We seem to get this frequently, don't we? Different takes being given by both sides to the big issues or to the technical negotiations. What are we hearing then at the moment? What are we? Both sides claim that they're making progress. There are technical conversations still taking place, I think.
Good morning, Anna. Yeah, I mean, the theme over the past couple of days, or since those MOU discussions have taken place late last week, has been conflicting statements from both sides. I think it's important that going forward, we just keep in mind that there is tangible progress that is happening in the Strait of Hormuz, for example. That is something that can be tracked. We can track the movement of ships across the waterway and how they compare when the war was taking place. But when it comes to the conflict and the discrepancies, you alluded to it in your intro. For example, one of the things that we're hearing from President Trump saying that the IAEA is going to be inspecting the nuclear facilities in Iran. Iran says no progress has been made on that. And as a matter of fact, there has been no discussions on nuclear yet. On the frozen on the frozen assets that the U.S. is going to give Iran, the U.S. says that Iran will use the money to purchase agricultural goods from the United States. The Foreign Ministry spokesperson Baqai said actually the U.S. cannot dictate what Iran can purchase with those frozen funds, and that Iran chooses to do as it pleases. On the Strait of Hormuz itself, which is at the heart of this energy crisis, Anna, Iran says, yes, it will be toll-free for the next 60 days, but then it will develop a mechanism with Oman to start charging tolls. Baqai himself saying a couple of days ago that the Strait is never going to go back to the way that it was at pre-war. And so, yes, we're seeing a lot of discrepancies. We're seeing a lot of conflict. That seems to be the name of the game when it comes to those negotiations. The technical negotiations have taken place yesterday, but now we're going to see lower level negotiators carrying those discussions in Switzerland, with the main negotiators headed back home. And so something to keep an eye on. But over the next 60 days or so, that is the extension of the ceasefire, that is the duration that the two sides are going to be discussing those concessions, and we're probably going to see a lot more of those discrepancies. So it's just important to keep in mind that for those watching, we should bear in mind the tangible progress on the ground.
Abir, thank you. Bloomberg Horizons Middle East and Africa anchor Abir Abu Omar. Let's continue to think about things that are perhaps preoccupying President Donald Trump right now. The NATO Secretary General, Mark Rutte, will meet with US President Donald Trump at the White House this evening. Speaking to Fox News, Rutte defended European support for US actions in Iran, pushing back against criticism from President Trump that allies weren't doing enough.
Planes taking off from European bases to support Epic Fury, and therefore Europe being this let's say, platform of power projection for the United States. So there's more to this than the isolated cases, and sometimes that gets a bit lost now, I think, in the discussion.
Meanwhile, the leaders of the E5 countries, that's Germany, the UK, France, Italy and Poland, are also set to hold a meeting today. That takes place here in Germany, in Berlin. Mark Rutte will join them remotely for that meeting. So joining us now is Richard Bravo, who leads Bloomberg's coverage of Western European governments. Richard, let's put some of these themes together then. What is on the agenda for Mark Rutte and President Trump, and what might this mean for the European leaders' discussions?
Hi, Anna. Yes, I mean, Mark Rutte and President Trump have two very different priorities in this meeting. Mark Rutte really wants to try and make sure that the transatlantic relationship is as smooth as possible, and that there isn't going to be a dust-up at the coming NATO summit just next month. And as you mentioned, the E5 leaders will be meeting in Berlin, really to try and strategize what they can do to make sure that this relationship is going well. And as you remember, coming out of the G7 meeting just last week, Donald Trump had a big dust-up with Giorgia Meloni from Italy, even though everything at the G7 went unusually well. So from the European perspective and from Mark Rutte's perspective, he's just going to try and see what he can do to make sure that Donald Trump goes into that summit as calm and clear-minded as possible, and what he can bring to the table to make sure that Trump enters that summit happy. Now, obviously, Donald Trump is going to enter that summit trying to make sure that the European side of NATO is really backing up their words and are willing to spend more on defense, because Trump and Defense Secretary Pete Hegseth have made it clear that they want the European allies in NATO to spend more and the U.S. to spend less.
Yes, indeed. So defence spending will be in focus at that meeting, that NATO meeting next month. I guess a focus on Ukraine. Will that be the intention of the European leaders as well?
Yes, for sure. Ukraine is obviously always at the forefront of their minds, and they're really bolstered coming out of the G7 meeting, because for the first time Donald Trump signed on to a G7 summit declaration, which really hewed very closely to the European position on Ukraine. So at that E5 meeting, they will discuss the way moving forward on Ukraine and how to best support Kyiv.
Richard, thank you very much. Bloomberg's Richard Bravo with some context to that meeting that we're seeing taking place between the NATO Secretary General and the US President today, and indeed the meeting of the E5, and how that's all building towards the same end goal, that NATO meeting that takes place in July. Coming up then on this programme, how the industrial sector is decarbonising. A very timely conversation, given the hot weather that we're seeing across many parts of Europe this week. We'll be hearing from the CEO of Holcim next. Are customers willing to spend money on the often more expensive, lower carbon options? We'll get to that conversation next. This is Bloomberg.
We should not deny that change is coming. And change is not coming just in data centers and AI. As a world, we are building infrastructure, we're building energy, we're doing energy transmission, we're building next-gen manufacturing, we're ramping defense, and we're doing this thing called AI and data.
Yes.
We will see the largest need for capital ever. And that's what we've seen so far this year. And so now to your specific question, it's about underwriting. There are a number of very strong US tech companies who run diversified businesses, Amazon, Google, Microsoft, who are interested in seeing these centers built and are interested in not consolidating the debt on their balance sheet. And to the extent they are prepared to lend their credit, one can lend against those types of things and make sensible underwriting decisions.
Know how the market day started.
Find out how it finishes.
Public markets to private markets.
From the micro to the macro.
Covering retail, entertainment, the business of sports.
The supply chains, trade policy, how it all is impacting the U.S. equity market as we drive to the closing bell at 4 p.m.
A holistic approach to covering financial markets.
If it matters to your life, we're covering it. I'm Katie Greifeld.
And I'm Romaine Bostic, and this is The Close.
Live every weekday.
Only on Bloomberg. Context changes everything.
Middle East and Africa. Vibrant resources and high-yield investment opportunities abound. Join me on Horizons Middle East and Africa for the stories, newsmakers, and insight from this exciting region. Now weekdays, only on Bloomberg.
Bringing you the most important news and financial information whenever and wherever it happens. I'm Michael McKee on the Mexican border, and this is Bloomberg.
Good morning. Welcome to the Pulse. I'm Anna Edwards in Frankfurt, and these are your top stories. Stocks steady after a tech-led sell-off. Attention now turns to Micron's highly anticipated earnings report. Oil falls as more tankers cross the Strait of Hormuz, but the US and Iran are making conflicting claims over whether Tehran has agreed to inspections of its nuclear sites. Plus, Bloomberg understands Andy Burnham will make a speech on the economy next week as pressure grows on the man seen as the UK's next Prime Minister to set out his vision. Welcome back to the programme. Let's stick with that last story on UK politics and bring in Bloomberg opinion columnist Rosa Prince, who is with us now. What might we expect then from Andy Burnham's economic plans, Rosa? Interesting that we've heard quite a bit from his advisers. We don't hear much detail from Andy Burnham himself yet. He says the word change a lot, and he has previously, of course, committed to the fiscal rules. But what should our expectations for next week be?
Well, I think everyone really wants to hear from Burnham with a bit of clarification on that, because when he, in the last couple of years, has made very clear that he wanted to be the Labour leader, he was thinking about a Labour leadership contest where he would be pitching to perhaps Labour MPs, Labour members. He's kind of sounded like he was on the soft left. But if you dig a bit deeper and go back into his past, when he was formerly an MP, he was quite a Blairite figure. When he ran the city of Manchester, he was very much involved with business, a lot of private investment. And so people are really considering here, you know, which Burnham is going to show up once he's become Prime Minister. Now, we had a big hint overnight. It was made clear that he would be appointing James Purnell as his Chief of Staff in Downing Street. Purnell is another retread. He was in the Blair governments of the 2000s, very much on the centre of the Labour Party, almost, you know, veering towards the centre. And he would be a figure who would be much more aligned with a programme of perhaps cutting welfare benefits. He was a former welfare secretary. Even those big benefits that electorally are difficult, like he's advocated for some pensioner benefits to be cut. So perhaps that's a little clue to what we'll be seeing next week.
Yes, and let's go to the question circling around who's going to be Chancellor then, because I guess the market was ready to hear that it probably wouldn't be Rachel Reeves. That a year or two ago would have caused a lot of drama in gilt markets, but this seems to have been priced in. The FT reporting overnight that Andy Burnham plans to demote Chancellor Rachel Reeves to another, or offer her another cabinet position. Talk us through who's in the running to replace her and what gilt markets will be watching for, because they haven't really moved on this particular news story.
Yeah, as you say, I think this was expected. I think Reeves was so tied to Keir Starmer that it would have been a problem if Andy Burnham wanted to present himself, which he does, as a fresh start. So no surprise there. Who are the contenders? Again, everyone really is on tenterhooks to find that out. Now, previously, you might have thought it would be Ed Miliband. This is the Energy Secretary, yet another retread from those governments of Tony Blair and Gordon Brown. He definitely is on the sort of soft left of the party. And he's not that popular with investors. Now, he is popular in the Labour Party. So as I said, when he was running for office, when it looked like he might have to be in a contest, those were those signals that Burnham was giving. Now that he's sort of free from those restraints, and when he's seen the market reaction, I wonder if he will be a bit wary of Ed Miliband. Other possible candidates, could he reward someone like Darren Jones or Wes Streeting, two figures who had once thought about standing against him but haven't? Shabana Mahmood, who is the Home Secretary, also on the centre-right of the party. Perhaps she might be given a run out. Or Pat McFadden, the Welfare Secretary, who, again, is seen as quite hawkish, quite sort of reliable, another figure who might be popular among investors, among those bond markets.
OK, yeah, investors also interested, of course, in his climate policy, which takes us on to our next conversation. Rosa, thank you very much. Bloomberg opinion columnist Rosa Prince. So, yes, a lot of focus on all those policies then from Andy Burnham and what he would bring into being. That takes us on to the heat wave that is, of course, intensifying across Europe this week. European Competition Commissioner Teresa Ribera has told Bloomberg that Europe needs to accelerate its push to decarbonise. She also said infrastructure must adapt to a warming climate. Let's take a listen.
I think that we all should decarbonise much faster, and we also need to develop our adaptation and resilience strategies. We are not ready. It is stress, in our households, stress in the energy system, stress in the transportation, railway system. Yes, we need to prepare for a different climate. And yesterday, the Secretary General Guterres made his point in this Electrification Day. If we rely on low-carbon, homegrown solutions, clean energy, renewable energy, that would help the economy and that would lower the bill.
The view there from the Commission. Sticking with the climate theme, the building materials company Holcim has been exploring how it can reduce the industry's carbon emissions with low-carbon cement and concrete and a carbon capture project here in Germany. Joining us now is Miljan Gutovic, who is the CEO of Holcim. Miljan, nice to speak to you this morning. Thank you for joining us here on The Pulse. So let's start with the decarbonisation agenda. I know that you produce products such as EcoPact and EcoPlanet that are often sold as a premium, and I wonder if clients are as willing to pay for those kinds of products as they are willing to talk about the demand for those kinds of products. How easy is it to sell more climate neutral, perhaps more expensive products to customers at this time?
Good morning and pleasure to be here. Yes, sustainability is at the core of everything what we do at Holcim. And we did develop a full range of low carbon and circular products that we are selling today across the whole geographical footprint. And the customers are indeed willing to pay a modest price premium for these products. And this is evident not only in Europe, but across the whole our footprint. For instance, I'll give you a few examples, live examples. I just came back a few months ago from Egypt, where we have supplied low-carbon products to build the National Museum in Cairo. And the government and the specifiers and the construction companies have been demanding these products. So the need for these products is increasing, not only in Europe, but in other parts of the world.
Okay. And Miljan, we just heard there from a European Commissioner who gave us some reassurance about the industrial decarbonisation agenda in Europe. But we do see in other areas of the political and business landscape some scepticism about whether Europe will stick to its goals around climate. What kind of risk is that for your strategy?
Look, for us, it doesn't move the needle, but we are confident that Europe will stick to the initial plans, and the new ETS EU benchmark has been set up. Now it's going through consultation process. So as a Holcim, we will continue to invest in decarbonization and circular construction because for us, we believe it's the right thing to do, and we also believe it makes perfect business sense. Because with the investments in decarbonization and also in circular construction, we are actually driving profitable growth at Holcim.
And the refurbishment market in Europe has arguably been a beneficiary of that move into more energy efficiency concerns for construction, and it's perhaps the driving force behind some of the M&A that you have been doing. Do you expect the refurbishment market to continue to be buoyant? Miljan, what do you see?
Definitely. This is the market that will continue to grow. According to some statistics, 80% of the buildings that we use today will be used by 2050. So just logically, we need to invest in these buildings. We need to extend the life expectancy of these buildings. And that's why repair and refurbishment will play the key role for us in the future. And that's why one of the last few acquisitions we have done with the purpose to expand our market share in highly attractive repair and refurbishment market.
Yes.
So what does it mean? Basically, we want to build the next generation of the homes, so repair them with the low-carbon circular products. We want to improve energy efficiency. We want to build more durable buildings. And of course, we want to build smart buildings.
Yes, but then if I look at the European residential sector, Miljan, the construction sector for residential buildings in Europe, that seems to have been fairly depressed for the last couple of years. I'm here in Germany right now, and some analysis would point in that direction here in Germany, certainly. So what is your expectation of any recovery within the residential construction sector?
And I can assure you change is coming. We have actually started seeing it from since Q3 last year. You are correct. In the last few years, residential market across Europe, but also across the world, has been really depressed. Now we are already seeing some positive signs. There is a shortage of nearly 10 million homes in Europe. We need to reduce this. And last couple of months in Germany, since you're talking about Germany, we have seen number of permits increasing significantly. So I am expecting, and I'm also predicting, recovery in residential sector, probably starting as early as of H2 this year.
Miljan, I know you have a lot of experience of running parts of the construction construction materials space in the Middle East, and with the news out of the Middle East of late, what is your assessment of the potential for resilience in that construction environment? How much weakness did you see, and how much of a rebound do you anticipate?
So, look, for us, Middle East presence is relatively small, represents less than 2% of the net sales. However, peace talks, peace agreement will definitely help, will preserve further damages that has been caused in the last few months. So, markets have been okay in this part of the world. We are seeing strong momentum, at least in the last 6 weeks. So I expect these markets will recover in due course fully in Middle East.
Miljan, thank you very much. Thank you for joining us. Miljan Gutovic, the CEO of Holcim. We started our conversation with Miljan there talking about climate-related activities, and that takes us on to the dangerously hot and humid conditions and more record-breaking temperatures that we are seeing and expected to see in Germany, where I am, in France, in the UK and in Spain. The high heat is putting pressure on Europe's power grid and energy markets, and record demand for cooling is being reported in some places. Joining us now is Joe Wirtz, Bloomberg's weather and climate reporter, who can give us some insight into the scale of what we're seeing here. What are the main concerns then, Joe, in particular around power supply? Talk to us about that dynamic.
Yeah, that's right. Like you mentioned, just soaring demand for energy right now in Europe due to the heat wave and demand for cooling. Demand is really surging right now. And at the same time, we're seeing constraints to energy production. First, in France, we're seeing some of the nuclear plants there that rely on these rivers for cooling have to curb their production and take some of that generation offline due to concerns that the water discharge from the plant would be too warm and some environmental regulations kicking in there. So that's constraining some of the power supply. Also, the same high-pressure heat dome that's creating the warm temperatures, the exceptionally hot temperatures across Europe, is also smothering the wind production. So we're seeing wind generation fall. That's led to some day-ahead price increases. Yesterday, we saw those tick up to the highest levels we've seen since the energy crisis. And now we're starting to see parts of the grid start to buckle under the heat. We're seeing some transformers that are giving way and leading to power outages. This has hit the UK, too. UK grid operators have warned about energy shortfalls, issued a rare warning about that today. So starting to see real ripple effects across both grids and energy markets.
OK, Joe, thank you very much. Thanks for the update. Bloomberg's Joe Wirtz with some of the dynamics we're watching around these high temperatures. And we'll stick with that theme coming up on the programme, how the construction industry is adapting to the way the climate is changing right now. We'll be speaking with the CEO of the French industrial giant Saint-Gobain. That conversation coming up shortly. This is Bloomberg.
Trading day is about to start.
And you're already looking for that edge.
The opening trade brings you everything you need to know as markets open across Europe.
Let's talk about the significant risk transfers to find space in their balance sheet.
Hedging some of that risk.
You could look at it the other way. Obviously, this stuff is risk-weighted.
I would much rather be long than be short.
We're in a kind of sweet spot.
Very, very strong alignment.
3 revolutions in one.
I'm Guy Johnson.
I'm Anna Edwards.
And I'm Tom McKenzie.
This is your opening trade.
Every trading day, only on Bloomberg.
When news breaks,
a redhead across the Bloomberg terminal.
Bloomberg has you covered.
Trump's global tariffs are struck down by the U.S. Supreme Court.
For all the context and clarity you need.
There's going to be now tons of tariff headlines until midterm elections.
Hear it first on Bloomberg. It's the world's second largest economy with a growing influence in global affairs. Bloomberg The China Show brings you the unmatched expertise you need to keep track of breaking news, in-depth market analysis, and the most influential newsmakers in and around China.
We need to do more to engage the market more.
We're risk on. I think we caught a little sweet spot.
Massive savings right now.
It's already a different game.
Bloomberg The China Show. Weekdays around the world, right here on Bloomberg. Context changes everything.
Welcome back to The Pulse, everybody. Now, the German industrial giant Siemens is making a push into the AI space, betting that the new technology is moving beyond chatbots and onto the factory floor. The CEO, Roland Busch, told Bloomberg more about the AI strategy.
We call it industrial AI. Why? You need a couple of things. Number one is you need a technology stack, and the stack includes hardware and software. Both is super relevant. Number two is domain know-how. We know how to build things. We are on the shop floor. The next one is data. We have a lot of data, our own data shared with our customers and partners. And we have the trust of our customers, because when the AI hits the real world, hallucination is not an option. So you need hardcore results. They should work. So we have all this, and we can bring it now to the real world. And last but not least, we have great partners like NVIDIA, like some others, who are with us in making this transformation for our customers.
I asked you at CES in January, give me a case study, an example, some evidence of AI in a factory anywhere in the world. Fast forward to June, is it real now? Is there a deployment that you can point to? Please.
It's real now. And we can talk about the design phase, the manufacturing phase, and the operation phase when your assets are in the field. But you talked about an example on the shop floor. Actually, we now launched our Eigenengineering agent. What is it? It is an agent which programs an industrial PC for you. So if you have a cutting shop on the shop floor, and the cutting is not precise anymore, now an engineer has to go there, reprogram your PLC, and so on. Eigenengineering agent does it for you. You say, I mean, my cutting machine is not working precisely. Eigenengineering agent analyzes the problem, breaks the problem down, looks for all the data, the machines, the job which has to be done, analyzes it, develops a code, runs it, compiles it. If it doesn't work, it compiles it over again, fixes it until you can say, now go. And you push a button, and then PLC is running with the same precision as before. So we are talking about 50% higher productivity, while the quality of your programming is increasing by 80%.
That was the Siemens CEO, Roland Busch, speaking with Bloomberg Tech's Ed Ludlow. Now, the French construction giant Saint-Gobain has called for an overhaul of the way buildings are designed to help them adapt to climate change. It says existing buildings must be retrofitted and new buildings fundamentally rethought. Joining us now is Benoit Bazin, the CEO of Saint-Gobain. And I know that you're in London, Benoit, and the timing of London Climate Action Week, of course, coming amidst this heat wave is quite incredible. So what is the message that you're keen to put across when it comes to the way we design residential buildings in Europe?
The key theme is that sustainable construction brings value. It does extend the life of the asset. It does lower the operating cost in terms of, let's say, energy efficiency or air conditioning during the heat wave, and it brings social benefits. So accelerating on sustainable construction being retrofit. We have to retrofit more than 80% of the buildings in Europe, or new build. If you think of Asia, urbanization, population growth, we need to build better and faster. All this brings a lot of value for the planet and the people.
Yes, I'm sure, Benoit, that many customers will have had the choice between the more carbon neutral products and the more carbon intensive products, and sometimes the latter is cheaper. How much ability do you have to price your products to encourage people to make more sustainable choices? Is that something that is easy to do?
Actually, Saint-Gobain brings solutions. So it's not just one product, it's a full set of solutions for hospitals, for single-family renovation, for schools. So when you value the performance of what you bring to the customers, it makes a lot of sense, and we have this pricing power to do that. So you have to look at the cost across the lifetime of the buildings, not only the upfront construction cost, but how much you can save during the life of the buildings, again, in terms of maintenance, in terms of insurance premium against climate change, flooding, fire, tornadoes. So you have to think holistically across the full life cycle of the buildings and capture also the benefits for the people.
The temperatures at the moment keeping climate change very much front of mind, Benoit, but also we've seen a lot of volatility around investments in the AI space at this time. A lot of enthusiasm, of course, but people asking whether that sector and expectations there are moving too quickly. I know that you're involved in the build-out of data centres, Benoit. Is there any slowdown in demand? I think you're involved in more than 600 projects. Any slowdown at all in demand for these data centres?
Well, it's moving fast. One of the bottlenecks is actually the labor force. So our solutions bring productivity on how fast you can spec and build a data center. They are also very important to make them low carbon, energy efficient, because we know data centers take a lot of energy. So all this is part of the drive of Saint-Gobain on lead and grow. This is our strategy on how we value those solutions to the customers. But coming back to energy efficiency, you can save so much energy in buildings. We spend 45% of the energy in any given country within buildings. So let's save this energy for mobility, for industry, or for data centers.
How limiting is that shortage of labour or shortage of the labour with the right skills, Benoit?
Well, we see that notably in North America, we see that coming in Europe. So truly, we have to bring more labor to train more skills and make, again, the time to build faster, shorter. So it's part of the equation on how you can build better and faster. It's true in the Western world. It's true also in India. We double our sales in India every 5 years. And it is thanks to not only the sustainable product and offer that we deliver, but also the productivity it brings to the job site for fast urbanization and fast building across India, across Southeast Asia, across Latin America as well.
Benoit, I spoke to the CEO of Holcim just minutes ago, and he was telling us that EU residential, that he expects to see a recovery in EU residential demand as soon as the second half of this year. Do you go along with that kind of forecast?
Absolutely, and we have seen it actually in the second half last year for Saint-Gobain. We were up 1% across Western Europe. It's not big, but it's moving to the right direction. Up in France in the fourth quarter. As we speak, we have 15% housing start being up in France and double-digit permits in Germany. So yes, we see ongoing move in terms of recovery in Europe. Across the board, Saint-Gobain will be on a like-for-like positive growth, organic growth in the second quarter. So definitely we see an improvement in Europe. We see very strong growth in Asia. We were up 9% in Asia, 7% in Latin America, like-for-like last year. It's only in North America that it has been a bit soft, but definitely a recovery in Europe, and it's going to accelerate in the second half indeed.
OK, and do interest rates have an impact on that? We've seen one interest rate hike and possibly more to come.
It's still quite low overall in Europe in terms of financing, in terms of mortgages. So yes, we are not going to see a 1% mortgage rate back, but it's in the 3.5%, so it's still very reasonable. I think what can improve the affordability of construction is the time it takes for permitting, the labor force, so solutions of Saint-Gobain, multi-products, and how fast you can build a partition, a facade, can help also gain productivity on the job site. So the question of affordability is important, but I think in Europe, at least, mortgage rates are still very reasonable, and there is a huge need for housing everywhere. It's true in the UK, it's true across all Europe, it's true also in the US, so big structural needs on new build, plus, of course, as we discussed, big needs for retrofit, notably on climate adaptation and resilience.
Benoit, thank you very much. Yes, retrofit and climate adaptation, a theme of the programme then this morning. Benoit Bazin, the Saint-Gobain CEO, thank you very much for joining us. And speaking of French business, coming up later, the CEO of Veolia joins Bloomberg Deals for an exclusive conversation. That's at 5 p.m. London time. European equity markets then putting in something of a stability picture this morning. We are entirely flat on the stock 600. US futures pointing a little bit higher this morning. Nasdaq futures up by 0.5%. Up next, Bloomberg Brief. This is Bloomberg.
From the world of politics to the world of business, Joe Matthew and Kaylee Lines deliver news, insight, and analysis live 2 times a day, every trading day. Balance of Power at 1 and 5 Eastern, only on Bloomberg.
AI, some people would say that there's maybe a little bit of a bubble in AI. When you have companies with market caps of $5 trillion, you don't see any bubble there at all?
Whenever we have an acceleration in technology and people get excited about it, you have significant capital formation around new companies that are trying to capitalize on that opportunity. And, you know, we've seen this before through history, and you're seeing it now. It won't be a straight line. The opportunity set with AI is enormous. There will be winners and losers. And it's hard to pick the winners and losers now. And certainly a lot of the capital that's being deployed will not produce adequate returns. And a bunch of the capital that's being deployed will actually not produce any returns. But it's hard, it's hard to call the timing on these things. And the thing I'd point to just from a historical lens is in the fall of 1996, Alan Greenspan talked about irrational exuberance in stock markets, and the NASDAQ was at 1,300. And the NASDAQ peaked 3.5 years later at over 5,000. So, these things can go on for a long time, but ultimately, there are adjustments, there will be drawdowns, there'll be rebalancing, and just, it's hard to call it because the technology trend and the investment is real.
Investors, top executives, global innovators. Join me for in-depth conversations with the biggest newsmakers on the day's top stories. Insight with Haslinda Amin, only on Bloomberg.
It's 5 a.m. in New York City, 10 a.m. in London. Good morning, I'm Bonnie Quinn with your Bloomberg Brief. Let's get you set up for the day. U.S. stocks bounce back from a tech-driven sell-off ahead of Micron earnings. Washington and Tehran offering conflicting accounts of the deal as the Senate presses President Trump. And U.S. diesel falling below $5 a gallon for the first time since March. Let's get a check on markets around the world now. After the massive sell-off that we saw on Tuesday, what's been happening in the latest session, Winnie Su in Hong Kong?
Good morning, Bonnie. It's another volatile day in Asia with all eyes on the upcoming earnings from Micron. So you are looking at the MSCI Asia here under a bit of pressure, down slightly, but headed for its two-day decline, the biggest in about 2 weeks. Now we have technology shares leading the decline, and hence we are seeing Taiwan's TAIEX index closing 2% lower. But with that, we also have Indonesian stocks leading declines down more than 3% after the MSCI delay delayed its market status review, citing that it requires more time to assess the sustainability of the reform. Now, flip over, we take a look at the Korean market because it, in fact, was the best performing gauge in Asia today, up about 3.6%. And that is being led by some positive news that Samsung is considering potentially a share buyback. But also after market, we've got SK Hynix saying that they are seeking a $26 billion listing on the NASDAQ as well.
All right, Winnie, thank you so much. So a bounce back in Korea, if not to the same extent that we saw last time there was a massive sell-off. In Europe, of course, we were a little bit more insulated, the European complex being a little more insulated from those chip stocks. And as you can see, the Stocks Europe 600 is just a little bit higher. We also just got business confidence data out of Germany that was a little better than expected. A little bit of relief for Germany that's been battered by weak economic data. And of course, there's the story in Britain. The Labour Party seems to be coalescing around Andy Burnham, which is at least giving some incremental clarity to this market. We've seen 2 days of gains for gilts, and as you can see, another 2 basis points lower on the 10-year yield today for 73 and change. We also have a little bit of weakness for the British pound for another day. JP Morgan, though, still bullish on the British pound, particularly now that there is at least the removal of some murkiness in terms of the political situation. Also, the potential for Andy Burnham to be backtracking a little bit on some of the fiscal expansion that he had been proposing originally. We'll get more of an idea of what his economic proposals are next week. Here in the United States, S&P futures look to be bouncing back. NASDAQ 100 futures, though, more particularly up more than that. Of course, we did see a bit of a sell-off in the NASDAQ. Was it a response to Korea? Was it a little bit of fear that the AI narrative is cracking? We should know more after Micron earnings and how investors react. Though bear in mind, with beats and raises recently, we have been seeing a sell-off, but overall it hasn't really meant that much for the AI trade. The Philly Stocks Index, after all, after yesterday's 7.9% sell-off, was at a record. As you can see, Brent crude continues its trajectory lower, and the 2-year yield also at 4.19, not much movement there. The dollar index continues to gain, and gold continues to sell off. It's below $4,100 an ounce now. All right, let's get to some of those individual pre-market movers. Over to London and Chloe Melly.
Good morning, Bonnie. The chip maker Cerebras Systems is down almost 15% this morning after providing an outlook that disappointed investors. So this is really this classic story that we have seen of AI-related companies actually delivering fairly solid results and outlooks, but really disappointing investors because of those elevated expectations. So we are down quite significantly there. We are also in the red for FedEx, which has warned about the impact of rising costs and those ever-shifting, ever-changing trade policies. And so we are down about 8% this morning. The margin in particular disappointed for that company. And finally, let's go over to Wendy's, which is up in pre-market trading this morning after announcing a new CFO. And so this is seen as a sign that the new CEO is really trying to shake up the management team at Wendy's. And that is seen very positively, it seems, by the market. And we're up about 13% for that company.
All right, Chloe Melly, she'll be back with us later in the hour. Also coming up this hour, more on this market rebound with Max Kettner of HSBC. Stock futures rebounding then after a tech-led slump, with the Nasdaq 100 closing down more than 3% and the Philly Semiconductor Index down almost 8%. That's as markets await the next indicator for the AI trade. Micron earnings, of course, coming this afternoon. Bloomberg Tech Europe host Tom McKenzie joins us now for a preview. So, Tom, what does Micron have to do in order to buoy this market that's had just a little bit of a wobble?
Yeah, and that's why there is so much focus, and there's some debate amongst the analyst community as to whether or not Micron is the new Nvidia in terms of the potential broader impact across the equity markets, given its focus, of course, and its exposure to high bandwidth memory and the demand that we've seen and the huge increase in pricing and the point to which that has propelled the stock to be Micron, of course, the biggest points contributor to the S&P 500's 7% plus gain year to date. So what they need to do, they need to probably come through with a beat and raise. The forecasts are they're going to come through with revenue in the quarter of about $24 billion US. But it will be the guidance around how much demand there is going forward for that high bandwidth memory, if they're seeing any indications of that slowing. And of course, question marks about what they're going to do around the capacity constraints as well that they face. How much capex are they going to be putting to play to build out the facilities needed to continue to supply that demand? And so that is going to be in focus for Micron. Again, the stock is up significantly year to date, about 270%. And it has become now something of a bellwether as we look at the volatility in the chip space, particularly when it comes to the high bandwidth memory place and the ripple effects that we're seeing across South Korea.
And of course, it is a DRAM maker, and investors are surely going to want to know how it's going to hold on to its territory now that SK Hynix is planning to make some more DRAM. It's also now planning to raise more money, $29 billion in a US listing to fund the AI boom. What will the reaction be to that, Tom?
Yeah, which would be one of the top five, almost top five listings ever in the US, so kind of comparable to Saudi Aramco's IPO in 2019 in terms of the amount that they're looking to raise, close to $30 billion US as they look for additional funding, SK Hynix, to build out their own capacity. That is part of the rationale for tapping the US markets at a time, of course, of volatility that we've spoken about. And you're right to point out that there has been this reporting that they are maybe slowing expansion of their production of high bandwidth memory, and that has caused, at least was one of the factors that's been pointed to as to the downside pressure that came through for that stock yesterday. A little bit of repair to the damage today, but not making up for the losses. But it is that IPO expected then in July. July the 10th is when that trading is expected, so it would give US investors that additional opportunity to get exposure to another major player with about 60% of that market share when it comes to the memory space that goes into the data centers alongside those GPUs from the likes of NVIDIA and AMD.
Tom, the other big story that we've been keeping an eye on for the past several days is obviously SpaceX and its movements, right? Up 50%, back to below its first sprint price. Then it had this debt sale. How did investors react?
They did. They reacted well. They absorbed this, and it was bid, and it was well received, and it meant that actually Musk and the team then at SpaceX are able to refinance with lower rates, and so they can have that liquidity as they continue, of course, to build out what is needed around the infrastructure for example, data centers in space, and continue, of course, to build out the satellite proposition as well as the rockets part of that story. So they managed to go to the markets, having just IPO'd, of course, raising more than $75 billion US, tapping the debt markets, well received, investment grade, more than $25 billion, and it means that SpaceX has refinanced again at a lower rate. So good news, at least on that level, for Elon Musk.
All right, Tom, he's going to be back with us later on in the hour. Meanwhile, in Iran, more conflicting claims on the MOU between Tehran and the United States.
Our missile program was not included in the MOU, and it shall not be. I would like to say that if it was not for Iran's missile capabilities to defend ourselves, our country would have been plundered and destroyed by the Zionist regime and the U.S., like Gaza. And they wouldn't have mercy on the young and old.
It all comes as President Trump writes on social media that the country had agreed to allow the highest level nuclear inspections long into the future. Joining us now from Dubai is Bloomberg's Abir Abu Omar. We've had conflicting accounts for the last 3 months, right, Abir? But what is sort of the crux of this particular disagreement?
Good morning, Vonnie. We're expecting to see more of these conflicting statements that you just had mentioned. So at the crux of this is essentially both sides wanting to come out with their own perspectives on this MOU, or this agreement that is supposed to be temporary, leading us into the next 60 days. At the heart of this is the Strait of Hormuz, for example. Yes, it is open. A trickle of movement is going through the waterway, more so than what we had seen over the past 2-3 weeks. And this is continuing to accelerate. But one thing that has come out over the past couple of days is that Baqai, who is the foreign ministry spokesperson, said that the Strait of Hormuz will be free of tolls over the next 60 days, but then they will work with Oman to establish some kind of mechanism to start tolling it. He also said that the waterway will never go back to the state it was in before the war. President Trump and the U.S. administration has refused this narrative and says that no tolling is going to be allowed in the Strait of Hormuz unless it is for the U.S. And so this is one of the disagreements. Another disagreement is the nuclear talks. The Iranian side maintains that no nuclear talks have taken place. The U.S. side actually says that the IAEA is going to Iran to inspect those facilities. The Associated Press just reported that Grossi will be going to Iran. Iran has maintained that no talks on the nuclear issue have been discussed and that no one is going going to inspect the facilities there. And then lastly, those frozen assets, $24 billion of frozen assets, Vonnie. Iran maintains that it's free to do with those unlocked assets as it wishes. The U.S. says no, Iran has to buy agricultural products from the United States with those unblocked assets. Now, the two sides continue to have those discrepancies. I think at the heart of this remains the Strait of Hormuz. And again, it's caused all this big energy crisis over the past couple of months or so, Vonnie. So it's important to note the tangible progress that is happening on the ground.
Yes.
And we're seeing tangible progress there. Up until June 22nd, our energy teams have noted that there are 68 million barrels of crude making their way through the Strait of Hormuz. So that is tangible progress that we're seeing there.
Huge relief for the oil markets, no doubt. Abir, thank you so much. Abir Abu Omar. In Washington, D.C., President Trump defending the unfreezing of Iranian funds. In a Truth Social post, he wrote that the money will be, quote, controlled by the USA and will be used for the purchase of food and medical supplies exclusively from the United States. The Senate voting to end the war in a rare rebuke to the president, with 4 Republicans voting yes on the measure. Joining us now is Mika Zollner of Bloomberg Government. Mika, that horse has bolted. What was the point of this rebuke?
Yeah, I think that there is a growing frustration on Capitol Hill, as we can see in this war in Iran that just seems never ending at this point. Obviously, peace negotiations are continuing, but this is not the way that the White House wants this to go. They wanted this to swiftly end and are still continuing to work through diplomatic matters to try and end this conflict. But there are a lot of lawmakers, both in the House and the Senate, as we saw yesterday, really frustrated at this, saying that they're really not getting a lot of information, that they should have the authority. This has gone on too long. And of course, this is going to likely impact the midterms in November as the American public grows frustrated too. But it also comes on the heels of President Trump's visit today to Senate Republicans. So we'll see a lot more expected this afternoon.
Sure. I mean, the war is basically over, though. I'm not sure that it timing-wise necessarily means anything. Diesel prices falling under $5, though, do mean something. President Trump saying the Justice Department is looking into gasoline prices. What can the DOJ, quote-unquote, find in this investigation, Mika?
Yeah, I think that there's a lot of questions there, and this also shows how much the administration really wants, those prices to come down swiftly. As we saw, and you just mentioned, these prices are starting to fall, but the affordability and cost of living issues are still a thorn for the administration. So it just goes to show they really want to make it seen that they're taking these actions very seriously and that they want to swiftly make sure that these can fall back to pre-war levels. So we're going to see what happens here. I think we're going to get some more information on that on this week as well.
Mika, thank you so much. That is Mika Zollner of Bloomberg Government. Now to other top stories trending on the terminal this morning. Leveraged Korea ETFs tied to Samsung and SK Hynix sold an estimated $6 billion worth of shares during Tuesday's rout. Data compiled by Bloomberg show those leveraged single-stock ETFs accounted for about 14% of turnover in Samsung and SK Hynix shares. The funds must rebalance daily to maintain fixed leverage ratios. Tencent is preparing to launch an AI agent for the enterprise version of its WeChat app. The agent is built on DeepSeek's latest V4 model and lets users interact with it in natural language. Tencent shares rose as much as 6% in Hong Kong on Wednesday, their biggest intraday rise in 3 weeks. And SoftBank founder Masayoshi Son is brushing aside concerns about an AI bubble. Speaking at a shareholder meeting, Son said that characterization is inappropriate for a revolution he says is only just beginning. He also said he plans to remain at the helm of SoftBank for another 10 or 15 years to see the company through the AI boom. Coming up, European power prices jumping as a searing heatwave breaks temperature records. More on that next. This is Bloomberg.
weekday, Bloomberg puts the spotlight on a different aspect of global finance. Flows, funds, and the forces shaping markets on ETF IQ. The future of money with Bloomberg Crypto. The players behind major transactions on Bloomberg Deals. Rates, risk, and the cost of capital on Bloomberg Real Yield. And personal finance, retirement, and wealth management on Bloomberg Money. A different topic every weekday, only on Bloomberg Television.
From the world of politics to the world of business, Joe Matthew and Kaylee Lines deliver news, insight, and analysis live 2 times a day, every trading day. Balance of Power at 1 and 5 Eastern, only on Bloomberg.
Bringing you up-to-the-minute global news whenever and wherever it happens. I'm Joanna Bersecci in El Ola, Saudi Arabia, and this is Bloomberg.
Good morning. This is Bloomberg Daybreak Europe. I'm Lizzie Burden in London, and these are the stories that set your agenda.
Taking you from the U.S. market's close to the overnight session in Asia, we'll walk you through what you need to know to kickstart Europe's trading day. Live from our European headquarters, we bring you the day's top market-moving stories, unmatched expert analysis, and on-the-ground reporting from across the continent. Tune in to Daybreak Europe, only on Bloomberg Television. Context changes everything.
This is Bloomberg Brief. I'm Bonnie Quinn in New York. Europe is bracing for another day of unprecedented heat that has smashed records. Temperature is expected to hit 40 degrees Celsius. That's 104 Fahrenheit in parts of the UK. Red heat warnings have been issued in several countries, including France and Germany, with health authorities warning of life-threatening temperatures. Joining me now is Joe Wirtz, Bloomberg's weather and climate reporter. Joe, 40 degrees, I mean, Britain is not prepared for that. It doesn't even have an AC system for the most part. But what about the power grid? Are we going to see massive outages? Is the power grid able for this?
Yeah, we're already starting to see the power grid buckle in some areas. We've seen in France, transformers are starting to blow and leading to power outages affecting, 70,000 people there. And we're also starting to see power prices jump as supply problems pop up. The French nuclear fleet, a lot of those reactors are cooled with river water, and those rivers are getting warm. That kicks in these environmental regulations that limit the amount of water these plants can discharge. And so several of these plants have had to curtail output. In the UK, the grid operator here put out a notice, a rare notice, saying that they about energy supply, potential energy supply shortfalls there. So we're really seeing a tightening of the market and prices increase as supply drops and demand increases across the continent.
I mean, the terrifying thing is that floods are also expected, right, Joe? Because you get one, then you also get the other. And we're anticipating an El Nino season. Is this just going to get worse, these weather fluctuations?
Yeah, look, it's important to notice we're just in June, right? The hottest months are still ahead of us, and we're already seeing these types of disruptions. It's London Climate Week right now in London, and we've had events at London Climate Week get postponed and canceled due to the extreme temperatures here. And like you said, a lot of the built environment here is not ready for the heat, not prepared for the heat from the energy grid to just people's day-to-day lives, transport here, trains, subways, and things like that. We're seeing train cancellations and delays really across the continent. Here in the UK, France, Netherlands, it's just not built, wasn't built for these types of temperatures and not these temperatures this early.
Particularly the northern countries, right, Joe? I assume it's going to be even worse in the southern countries, though they are maybe a little more used to extreme heat. Where are authorities most worried? Where are the very vulnerable spots across Europe?
Well, really, the heat wave right now is this high-pressure heat dome that's been centered over Europe, and really the epicenter of that has been France. They are now, just today, in a full week of having heat wave conditions there. Day-to-day life in France has really been disrupted. They've had to close early, close down tourist spots like the Louvre and the Eiffel Tower. Close tours there early before the afternoon temperatures start getting too hot. And suspend a lot of activities, festivals, other events throughout the city. And it's really put day-to-day life at a standstill. It's been particularly pernicious there in France. But now we're starting to see that heat dome spread, and the hotter temperatures move up north into London and spread across the continent. Probably won't get the same extremes that we've seen in France and in Paris here in London, but 37 degrees forecast here in London today and on Friday, and like you said, potentially even higher temperatures elsewhere in the UK. Potentially disruptive and historic event.
Joe, thank you so much. Bloomberg's Joe Wirtz. Coming up, New York City Mayor Mamdani as kingmaker. More on New York City primary results. And look what else is making headlines in your front page news.
Anything we do in Africa is going to be more risky than the US. I think the approach we want to take is how are we being compensated for that risk? And one of those is obviously going to be a valuation question. In our minds, valuation was a lot more attractive in Africa, even if we adjust for some of those Africa risks that a lot of Western investors see. So yes, in a lot of ways, you take some of those models that, as I said, might be more asset medium or asset heavy. There might be some more inherent risks. However, if we're saying we're adding some risk because of that kind of model, but we're now solving a core problem as opposed to maybe a nice to have solution in Africa, that might actually offset it. Where if you're solving something that people really absolutely need and can't live without, in a way that then that's a lot less risky. So again, we'd encourage investors to have a less binary view. In other words, the US isn't risky, Africa is risky. That's going to lead to a lot of complications down the road.
Trading day is about to start.
And you're already looking for that edge.
The opening trade brings you everything you need to know as markets open across Europe. I'm Guy Johnson.
I'm Anna Edwards.
And I'm Tom McKenzie. This is your opening trade.
Only on Bloomberg.
Tune in to Bloomberg Business Week Daily.
We got to talk crypto.
From the magazine that helps global leaders stay ahead.
What's the conversation around your company?
Bringing you insight on the people, companies, and trends shaping today's complex economy.
Planning very big things.
A new level of premium.
Plus global business, finance, and tech news as it happens.
The floodgates of innovation are going to open up.
You can't fake passion. You either are or you aren't.
Bloomberg Business Week Daily, only on Bloomberg.
This is Bloomberg Brief. I'm Bonnie Quinn in New York. Time now for your front page news. First up on the New York Times, 3 progressive candidates backed by New York City Mayor Zohran Mamdani winning congressional primaries in New York City. The Times says the results sent shockwaves through the Democratic Party as incumbents backed by the city's political establishment, including major labor unions, lost. The winners all share Mamdani's economic platform. Next up, the Financial Times reporting Venezuela's plan to reveal a debt pile of $240 billion is on the way. Now, that's a figure much larger than market estimates as the country embarks on the biggest sovereign restructuring in history. The interim leader, Delcy Rodriguez, aiming to reach a deal with creditors by the end of the year that would pave the way for the country's return to international markets. It's been frozen out for nearly a decade. And finally, on the Wall Street Journal's front page, Russia's pressure campaign on Belarus. Moscow looking to strengthen its military union with the country in the hopes of potentially using it as a new front. Coming up, we're going to speak with Max Kettner.
Do you mind being called an ideological lunatic or a bunch of left-wing nut jobs?
You know, I've been called worse things than that.
Oh! You'd think she owned the place.
23andMe, I think, is so incredibly valuable. We're coming back.
It had that kind of detective story feel to it. You know, when you're hot on the trail of something, you know that it's very exciting.
What magazines were you reading as a kid?
I don't think I was reading magazines until I was in them.
You are on the cover of all of these.
Oh, and there's many, many more, but we just don't have time.
Why should people trust you?
I don't think anybody should trust any company or entity completely with any of this.
It's very uncomfortable. Artificial intelligence is this force that is far bigger than we are.
I want to build better businesses around these brands.
The shock will never wear off.
So you're a brother and sister running one of the most powerful companies in the world. When you argue, who wins?
No one. The way I could see AI being banned or blocked is if something really went wrong. And if something really went wrong, then maybe it deserves to be.
So is it Paradise ahead or Gattaca?
Maybe somewhere in the middle.
Good morning. This is Bloomberg Surveillance.
Welcome back to the opening trade.
It's Bloomberg Money.
This is the Asia Trade.
This is Wall Street Week. Welcome to Balance of Power.
You're watching Bloomberg Deals. Welcome to Bloomberg This Weekend.
This is Bloomberg Television.
Join me each week on Wall Street Week for stories of capitalism from business, markets, economics, tech, and climate. More than what you need to know, it's what you need to think about.
It's 5:30 a.m. in New York City, 10:30 a.m. in London. Good morning, I'm Bonnie Quinn with your Bloomberg Brief. Let's get you set up for the day. U.S. stocks look for a bounce from a tech-driven sell-off. This all ahead of Micron earnings. Washington and Tehran offer conflicting accounts of the deal as the Senate presses President Trump. And U.S. diesel falls below $5 a gallon for the first time since March. All right, markets-wise, we did see Korea bounce back. The Kospi was back up at just about 3.25%, and we did see a little bit of a sell-off in Taiwan. So jitters spreading, but again, we did see a comeback in Korea to a certain extent, and that may be cheering the U.S. because we have NASDAQ 100 futures pointed to a gain of 0.5% at the open. We'll see if we can gain back all that we lost yesterday. The SOX index, for example, was down 7.9%. We might have to wait until after Micron earnings, of course, after the bell, in order to see how this really plays out and whether there really is a crack in the AI narrative or this is just as investors perhaps looking to take some profit and move elsewhere where there might be more upside to come. Brent crude continues its trajectory lower, down more than 2%. And then if we look at the dollar index, it continues to strengthen. Bonds also continue to strengthen, but just a little bit, with the 2-year yield down less than a basis point. Gold selling off still. It is below $4,100 an ounce. Let's get to some individual movers now this pre-market session. Here's Chloe Melly in London.
Good morning, Bonnie. The chipmaker Cerebras Systems is plunging this morning after its outlook disappointed investors. This is yet another case of an AI-related company failing to meet those really elevated investor expectations. And that is something that is perhaps worth keeping in mind as we wait for those Micron results as well later today. Moving on to FedEx, which is also in the red this morning after warning of the negative impact of inflation and ever-changing trade policies. We had profit beating expectations, but then margin disappointing, and this cautious outlook from the company hitting those shares this morning. And finally, let's go over to Rheinmetall over in Germany, which is also down this. Oh, actually, we'll do Wendy's instead. Wendy's, which has appointed a new chief financial officer, and so the new CEO, is currently really trying to shake up the management team, and that is something that is being received quite positively by the market. And we're up actually now more than 15% for Wendy's in pre-market trading.
Okay, a lovely move for Wendy's. And just in case anyone was really wondering, Rheinmetall is down 14%. Chloe, thank you so much. Chloe Melly. Joining us now, though, is Max Kettner, Chief Multi-Asset Strategist at HSBC. Max, a big crack in the AI narrative, or just Korea being Korea?
Yeah, it's just Korea being Korea, really. I think, look, I think when we talk about the cracks in the AI narrative, that's literally one day. So I am waking up this morning, I'm like, wow, have I missed anything? I mean, in reality, the S&P is a couple % off the all-time highs. You know, spreads have barely moved. I think one of the things that we're missing as well is when we look at semis, yes, let's assume the trade in semis and chips is over, right? Let's assume, let's hypothetically go through that. But actually, haven't we sold the hyperscalers? Haven't we been downbeat on the hyperscalers really for the best part of the last year? If you look at the hyperscalers at a group in the US, they're now flat year over year. They're down 7% since the start of the year, despite earnings still growing. If you look at their PEs as a group, they're down 20% relative to their respective 5-year average. Actually, wouldn't we then be saying, you know what, those kind of ROI assumptions, those kind of assumptions that we made on profitability for those capex to be paid off that we thought are going to be really, really difficult to achieve, actually now they're easier to achieve because we've got actually lower chip prices, lower token prices. So now, instead of selling the hyperscalers, I'm actually buying the hyperscalers and I'm selling the semis. Now, both of those groups are roughly equally sized in terms of their market cap weight in the S&P. That means overall on the headline index, I don't think that's much of a deal, really.
So just a rotation, but within the AI trade almost, Max, which is, you know, quite something to think about. I do want to ask you, though, with the war, quote unquote, out of the way, I mean, basically it's not happening anymore unless it restarts, which, you know, seems unlikely. Are investors starting to think about what they may have been not worried about while the war was on?
Yeah, no, I think it's actually a bit more broadening that can happen, particularly in the US, but also globally. I think when you look at Europe, for example, Europe perhaps has been a little bit forgotten. You know, we look at the last 3-4 months, activity surprises really have been dismal in Europe compared to the likes of the US. US exceptionalism really, really making a strong comeback. But then when you look at the equity market, you look at, for example, earnings revisions in Germany, they have continued to be pretty strong. Look at what just happened with the banks. Right, in Europe, we've seen a bit of steepening in the Bund curve, and the banks are rock and roll. So I do think really some of that broadening, not even only within the US, but really globally does make sense. I would single out really the European banks because they don't just have that Iran narrative that you were just describing. If I go into things like construction and materials in Europe, that is really, really just very exposed to that one Middle East narrative. I think when you have the banks, there is a bit more things to get going for, particularly when you look at earnings revisions. The worst that we've seen in earnings revisions in European banks was that they were just flat to the overall market at some point in the last four months. So the worst that happened wasn't that they underperformed. They were just performing in line with the market. Now they're up again against the market. And of course, overall, I think what should happen, what should help that broadening theme as well, is lower oil prices. Oil prices, if they really, the new ranges, let's say $70 to $75, sure, We're not back to the 60 to 65, but who cares? Like, that's good enough. That's really good enough for a lot of that growth narrative and re-acceleration narrative to come back, the narrative that we had in January and February, for us to start re-engaging with those sorts of narratives.
And interestingly, Max, you mentioned US exceptionalism. In fact, you think there's an expiration date and that it's pretty soon. In fact, it's going to be this summer. This is a quote from your notes. You reckon around the mid to the end of the third quarter, but you say it needn't be bad, and I presume that's because of some of what you just said. There are opportunities elsewhere. You also halved your underweight in treasuries, for example. Where else? What other asset classes might you be expressing this through?
Yeah, look, I think there is a bit of broadening in US equity markets, right? Perhaps consumer stocks, stuff like that. So really the broadening in the US equity market, that can continue. That's number one. I am grappling with when do we go back into Europe, right? Is that really something where perhaps people have given up a little bit too much on and are reading too much into that US exceptionalism thing? Bonnie, just to give you an example, in our Q2 outlook 3 months ago, we wrote second quarter will be all about US exceptionalism. We'll talk way too much about geopolitics. We talk way too little about how strong the data is. Now, everyone's talking about the strong US data. Everyone agrees that US exceptionalism is back. Everyone wants to be paying US rates and everyone's dismal on Europe. I think there is an expiration date around August, by August, because in June and July last year, remember, activity surprises took a little bit of a dive because we had a bit of a payback from that front-loaded demand, that inventory buildup after Liberation Day. What we feared was perhaps some sort of tariff-related jump in prices. And then June and July data surprised a little bit to the downside. So we have very low base effects now in June and July data for the US. That means, I think, for the next month and a half, 2 months, probably still pretty good activity surprises. In August, I think then you want to take a couple of chips on the table, both on the rate side and that US versus European duration call, but also perhaps really leaning a bit more into that European story.
Sure, and all of this has to partially do with the fact that we have a new Fed chair as well, who you don't think is potentially as hawkish as the market thought after the first FOMC meeting. But you're closing on the basis of that. You're double overweight in EM rates and also gold. Might be a little bit late for that because gold is now below $4,100 an ounce. But explain rate differentials and how you think they're going to work over the next couple of quarters.
Yeah, I think gold has some further ways to go down, number one, because I think that de-dollarization story is really put to bed, at least for a couple of months. Now, on the EMD side, I think that's mostly really an FX story. When you look at rate differentials, we probably should actually be at sub 110 on euro dollar, right? So again, there is a bit more space to go. As I said, there is an expiration date. What we're doing right now is we're trading narratives. We're not really trading the facts. Right? If I say to you, look, the US is really re-accelerating, US growth is really re-accelerating, US inflation is kind of stuck, that's not new. That was the same 2 months ago. It was the same 3 months ago. That's really been the case since December last year. It was just that no one wanted to listen. It was, oh no, Kevin Walsh is coming in. And you know what? Kevin Walsh is going to be dovish because that's his job. And, when I then said, well, he's 1 out of 12, are we really sure the committee is going to be swayed that easily? No. That was the Kevin Walsh is dovish narrative. Now it's the complete opposite. So I think the next narrative change that we need to try to time is, when is the point where the dollar is too extended, where perhaps then we start to increase emerging market debt again, where we can also then buy gold again? Because let's face it, when you look at the 5 task forces of Kevin Walsh, things like inflation framework, AI, and productivity, right? So those sorts of things, they look pretty dovish to me, these potential outcomes from these task forces. So again, that hawkish narrative around the Fed, that also has an expiration date. You don't want to lean against that right now, but I think in 2-3 months' time, that's the time when you start to lean against that.
Next meeting, July 29th. Can't wait to hear your thoughts after that. Max, thank you so much. As always, Max Kettner of HSBC. Now to other top stories trending on the terminal this morning. SoftBank founder Masayoshi Son is brushing aside concerns about an AI bubble. Speaking at a shareholder meeting, Son said that characterization is inappropriate for a revolution he says is only just beginning. He also said he plans to remain at the helm of SoftBank for another 10 or 15 years to see the company through the AI boom. Amazon's annual Prime Day sale is off to a slow start, according to a survey conducted by market research firm Numerator. The survey found the average household had spent $89 as of 4 p.m. New York time Tuesday, down 16% from the same point during last year's event. Shoppers are looking for deeper discounts that brands and merchants are struggling to offer. A $7 billion private credit fund run by Morgan Stanley is capping investor withdrawals at 5%. The fund is allowing less than half the redemptions shareholders requested in Q2. Withdrawal requests across the $1.8 trillion private credit market have generally risen this quarter after many funds limited full exits in the prior period. Coming up, some Republican senators break from President Trump with votes to end the war in Iran. More on that next. This is Bloomberg.
Asia is at the forefront of some of the world's biggest stories. I'm Sherrian in Tokyo.
And I'm Heidi Stroud-Watts here in Sydney, where the trading day begins. We're here in the centre of all the action to get you set up with the numbers, news and knowledge you need for the day ahead.
The demand is indeed recovering.
We've been waiting for this moment.
The opportunity of a century.
Join us on Bloomberg The Asia Trade. Weekdays only on Bloomberg TV. Context changes everything.
My old mentor, Roger Staubach, who told me when I transitioned, football will never leave you, but you need to leave it.
Wow.
Everyone has a dream. And a lot of dreams are, you know, my dream is to play football and play professional football. And you get the dream comes true, but it is going to end. And the day it ends, the day before it ends, you're one of the best in the world. Great. The next day you wake up, that's gone. What are you great at? And the truth is, nothing, right? I'm not great at anything else.
I talk about it all the time, Steve, is this whole idea of it's not from penthouse to penthouse. And what I mean by that is you played for 15, 20 years and you're in the penthouse. That doesn't mean that you come to the business world and you're going to be in the penthouse. You don't start on the third floor or the lobby. You actually have to start in the basement.
Welcome to Bloomberg This Weekend. I'm David Gura.
I'm Lisa Mateo.
And I'm Christina Ruffini. We're tracking breaking news today from Wall Street to Washington.
Let's start overseas.
The sector is really propelling this deal forward.
Yeah, the hope is this will open up new markets and provide some additional liquidity.
Of course, now they're going to have competitors.
We got a big week coming up in politics.
Earnings season is underway. We're going to get some key reports.
Everything you need to know before the markets open on Monday.
Introducing Bloomberg This Weekend, bringing a little Bloomberg into your weekend routine.
Guys, buckle up. Sorry.
The average price of gasoline nationwide is down 60 cents a gallon just from a short while ago. And remember this. We had to make this detour. We had to go to Iran. You can't let them blow up the Middle East and then us, if that's possible. We would have gotten them before, but they would have blown up Israel. They would have blown up the entire Middle East. You can't let that. You want to see a bad economy? That's a bad economy. So, but remember that our oil in the middle of this conflict was less than it was for sleepy Joe Biden. And we're putting out a fire.
The cost of diesel in the U.S. dropping below $5 a gallon for the first time since mid-March. This as President Trump ordered the Department of Justice to look into gasoline prices ahead of the midterm elections. Joining us now from Washington is Mika Sullner. Mika, what on earth can the DOJ do? It doesn't set the price of oil. All right, I think we're going to return to Mika in a moment. We'll just get her unmuted or fix her audio in some way. In the meantime, let me give you a market check because it has been a fascinating night. Korea bounced back to the tune of about 3.25%. That said, we did actually see some losses elsewhere in Asia, specifically Taiwan, where some of the semiconductor makers there dropped. In the US, it does look like we might be in for a positive day so far in the early going. All right, I think we have Mika back now. Mika, how is the Department of Justice going to come to any findings that placate the president or send prices lower?
Yeah, I think that we're going to see more action on that this week. This is a huge sign that the administration is largely worried about gas prices, even as they're falling in the wake of them trying to end and negotiate this ongoing peace deal with the ending the conflict in Iran. I think that we're going to get more answers. President Trump's also likely going to speak about this today when he comes to talk to Senate Republicans on the Hill. And so this is one step I think that the president is taking in terms to make it seem like the administration is taking these high gas prices and cost of living very seriously.
In other domestic news, the Senate rebuked President Trump 3 months after the war started and essentially as the war really is over. What is the use of this rebuke? What message does it send anyone?
Yeah, I think the message is that there is a growing frustration on Capitol Hill on the Iran war. I mean, if you look at the senators that did rebuke President Trump, it's no surprise. It's some of the moderate coalition that often defies the president. But I think that the president is also getting frustrated with the Senate as well. And he said that in his Truth Social post last night, saying that this was poorly timed and that these senators are making essentially his life harder right now at the moment. And we're going to see the president come speak to senators in a closed-door meeting later today. We'll see if we can get any information on what comes out of it. But it comes at a very tumultuous time between Capitol Hill and the White House as the president really tries to push for his priorities that many in the upper chamber are resistant to.
And then briefly, Mika, Congress did pass that housing bill. It was a rare bipartisan accord. Does it help the affordability narrative? Will people start to be able to actually buy homes again?
Yes, I mean, that's the goal of the bill, and that's going to be another issue that Republicans are hopeful that they can run on in the midterms as they kind of lack some of the legislative victories outside of these tax cuts.
All right, Mika Sollner, thank you so much. That is Mika Sollner in Washington. Let's move to Micron now, because that is indeed the story of the day. We're waiting for those earnings after the bell. Let's bring in Peter Elstrom, who's going to tell us what the market needs to hear from Micron. So, Peter, thanks so much for joining. I mean, essentially, the world doesn't change overnight, no matter what Micron tells us. So what is the thing that Micron could say that actually would crack this AI narrative in a bit more of a permanent way?
Well, just to set the scene a little bit, Vonnie, it's an important question. We've had quite a 24 hours in tech stocks broadly, and especially the chip stocks that we've seen. Yesterday, we saw this selling begin in South Korea, where Samsung and SK Hynix were both down quite hard. That spilled into the U.S. We saw the Philly chip index drop about 8% yesterday. Micron was one of the hardest hit there. The stock fell 13%. One of the analysts at BTIG called it a chip wreck, which was quite a term. And as you say, it really sets up Micron's earnings. Now, it's important to remember that Micron stock is still way up this year, more than 200%. At this point. So after the bell, investors really want to see what the company is saying about future demand, not just the results for the past quarter, but what is future demand for AI. There's some questions about how quickly this build out of AI capacity is happening at this point. Are they seeing demand continue? The numbers from Micron should be pretty strong in any case. Revenues are supposed to more than triple at this point. Profit should go up 10x, something like that. So these are very robust numbers for Micron. But the question is really that guidance going forward. How strong is the AI build out? Is this continuing at the same kind of pace that we've seen in past quarters?
And I mean, even that, will it be enough? Even, Micron's expansion of its gross margin to like even the mid 80s, this idea that we're going to get, a massive uptick in revenue and that maybe the capital spend will increase as well. Will that be enough to keep this SOX index, for example, continuing to attain records? At what point, is enough enough?
Well, I'd say memory chip stocks are particularly sensitive to this because the memory chips that they're selling at this point are commodities. Prices are really skyrocketing because of this shortage in the memory chips that they're trying to use in this build out. So Micron, Samsung, SK Hynix are all sort of caught in this vortex where profits are going up very, very rapidly. We've seen this at SK Hynix in particular, which has been the leader in the memory chips used for the AI build-out, the HBM chips in particular. So their shares have been soaring at this point. Their market cap was just a fifth of Samsung's a few years ago, and now it's essentially tied with Samsung with a market cap of about $1.2 trillion. Micron is the third player in that market, and because these are commodity chips, if they can price, say, 4 or 5 times higher than it was before, the margins are incredible for them. But what investors really want to know is whether that's a short-term blip. The memory chip industry is known for being supremely cyclical. You know, you get a lot of big profits at one point, but if they're going to crash the next year, that's difficult for them. So they want to hear from Micron whether this is sustainable, whether the AI build-out is going to continue for another quarter, another years, what they really anticipate the build-out is going to be for the next few years.
And interestingly about SK Hynix announcing today that it's going to list in the US, a $29 billion listing. So if you didn't have enough of the memory chip stocks and various other AI-related stocks in your portfolio, are you going to have another chance to add to them? But it is a good point, though, right, Peter, what you say. The only thing I would push back on is if you need memory chips, you need to renew them in a couple of years, right? So once you gain the business, assuming the switching costs aren't too high, then you keep the business.
Yeah, the numbers in these fundraisings are getting pretty amazing. I mean, it's $29 billion that SK Hynix is talking about. You know, in past years, we talk about what a stunning record that is. This may actually get lost this year because we've had the SpaceX IPO, we've had Google's fundraising for tens of billions of dollars too. But for SK Hynix, this is a big deal. So one of the key constraints in the memory chip industry right now is capacity. SK Hynix has talked about this. Samsung has, certainly Micron will after the bell today. SK Hynix wants to be able to raise this $29 billion to be able to build additional capacity. They're building in South Korea. They're also building some facilities in the United States. So they want to be able to add that capacity. This is something, of course, that their customers really want because they don't want to see these soaring prices anymore. But it is a bit of a question mark for the rest of the industry because if you add too much capacity and if you end up overbuilding from what the demand is, then you're looking at a future where maybe that cycle starts to go down. Maybe prices go down, profits go down, revenue go down. That's bad for everybody in the industry.
Peter, cannot wait to go through those Micron earnings and see your take on them. Executive Editor for Global Technology, Peter Elstrom, thank you. Coming up, we're going to set you up for your trading day. This is Bloomberg.
Get your fixed income fix. Watch Bloomberg Real Yield around the world right here on Bloomberg. Context changes everything.
The Middle East and Africa. Vibrant resources and high-yield investment opportunities abound. Join me on Horizon's Middle East and Africa for the stories, newsmakers, and insight from this exciting region. Now weekdays, only on Bloomberg.
World's most powerful investors don't ring a bell. They quietly reshape entire industries. This is the money shaping the world. The Dealmaker Playbook, where power and billions of dollars change hands every day. From private equity and credit to venture capital and M&A, we bring you the inside scoop on the biggest deals and debates, plus exclusive conversations with finance's ultimate insiders. I'm Danny Berger, and this is Bloomberg Deals. Every week, only on Bloomberg Television.
Bringing you up-to-the-minute geopolitical news whenever and wherever it happens. I'm Jennifer Zabasadja in the Lesotho Highlands, and this is Bloomberg.
Now, look at what's ahead today with President Trump heading to Capitol Hill for a lunch meeting with Senate Republicans. We also have the Fed releasing its latest bank stress tests at 4 p.m. and the latest read on the AI rally with those Micron earnings after the bell. Speaking of Micron, it is ahead of those earnings higher today, but that is a bounce back from a 13% drop yesterday. A really tough session for a stock that's up 270% year to date. Cerebras, wow, down 14%. The sales outlook disappointed. It's trading around the 200 mark. Its first print after its IPO was 350. FedEx also getting punished. Let's take a look at your macro picture as we head into Wednesday.
At any point in your tennis career, did you say, I've had enough and I'm just going to retire at the top? You ever worry about that problem, staying too long?
It's a great question, and it's one that I think every athlete finds a different answer to. Mine came a little bit later than when I would have liked. I think stubbornness was a great quality that shaped a lot of my victories, but in the end of my career, I think it became a flaw because I was so stubborn to get healthy, for my shoulder to recover. I was also at an age where just my body didn't recover as quickly. And so for a year or two, that stubbornness got in the way of other great things in my life.
What would you say is the thing you're most proud of having done as a tennis player? Was it winning Wimbledon? What was the highlight of your tennis career?
I'd say consistency. I think consistency is, you can have results and they could, come at various times in your career, but I was consistent for many years, and you have to show up. You don't just show up to play first round of the finals, but you have to show up for press conferences before every match, before every tournament, and just the consistency and the mental wear and tear of showing up week in, week out. So I felt like I consistently showed up for my team, for my sponsors. As I look back, I'm proud of that.
Key investors, top executives, global innovators. Join me for in-depth conversations with the biggest newsmakers on the day's top stories. Insight with Haslinda Amin, only on Bloomberg.
Bringing you up-to-the-minute space news whenever and wherever it happens. I'm Ed Ludlow at NASA's Kennedy Space Center in Florida, and this is Bloomberg.
In 2 months,
We've seen a historic melt up.
We still believe that most of what's powering the market is going to be earnings.
It's kind of the opposite of a bubble.
The near-term outlook for all the tech space is actually looking very, very good. The issue really is sentiment.
Volatility works both to the upside and the downside.
This is Bloomberg Surveillance with Jonathan Farrow, Lisa Abramowitz, and Anne-Marie Hordern.
Live from New York City this morning. Good morning, good morning. For our audience worldwide, Bloomberg Surveillance starts right now. Coming into Wednesday, finding a firmer footing. The global tech trade stabilizing, heading into earnings from Micron. As South Korea's SK Hynix is looking to raise almost $30 billion. Debt investors taking a cautious view of SpaceX's debut bond offering. A little pushback slowly emerging.
The pricing a little bit cautious, maybe treating this not quite as the BBB rated company that some of the rating agencies were talking about, at least because investors demanded a premium over benchmark rates to own this debt. The short end of the maturity is fine. 30-year space debt, people not so excited. It just is interesting because everybody has their hand out. SK Hynix lining up next, and frankly, other IPOs coming down the line probably will get followed on by more debt offerings.
Yeah, I'm tracking the same thing. You're seeing these signs of pushback here, there, and everywhere against companies issuing more supply, debt or equity. You're seeing signs of pushback against additional spending. Look at the stock price of, say, Meta or Microsoft right now. Where you're not seeing any reaction, though, companies are still looking to raise capital. Companies are still looking to spend. How much longer can that tension brew in this market?
Right now, when you talk to people in the market, they say quite a bit longer because a lot of these borrowers are agnostic to price to an extent. I mean, rate hikes, we don't care. The idea of a little extra premium, we can handle it because right now it is an idea of amassing a war chest of money that is going to potentially power them into an existential future that to them is either you are a winner or you are non-existent. And right now, because it is still an existential race, people seem willing to keep on borrowing.
We've got a race for capital, not just yet a competition for capital. The Treasury market in mind when I'm thinking of that. 10-year yields this morning down about 2 basis points. The 10-year around 450. Here in New York yesterday evening, Scott Bessent, the Treasury Secretary. Here's the quote. Bond markets have taken out more governments than howitzers. I believe the president has complete confidence in the Fed chair to do the right thing.
He's basically saying Trump understands this and is going to make sure that the Fed is independent. And he alluded to the fact that Trump had already said this when he was swearing in during the swearing-in ceremony of Kevin Warsh. Basically, what Scott Bessent came out and said is what we have been talking about this administration since Trump walked back into the Oval Office for his second term, that the bond market is going to be the greatest almost control and pushback on any policies that potentially are not market friendly.
Scott Bessent, again, was the market whisperer, saying that right now I endorse what is happening in the hawkish turn that has allowed long-term yields to come down. So bugger off. President Trump isn't going to push back because this is the way we got to work. And ultimately, it is the bond market that we have to respect.
And he did it here in New York, which is notable. We'll spend some time on that a little bit later. Big gut check coming later this afternoon. Micron earnings on deck. Coming up on the programme, we'll catch up with Aaron Cannon of Clear Harbor Asset Management. As equities bounce coming into that, Tobin Marcus of Wolfe Research as the Mamdani effect sweeps New York primaries. And Dan Ives of Wedbush looking ahead to those Micron earnings. We begin this hour with stocks gaining some ground following a two-day tech rout. Aaron Cannon of Clear Harbor Asset Management writing, we're still in the early innings of the AI build-out. History suggests that transformative technology cycles are rarely linear. Aaron joins us now for more. Aaron, good morning. Good morning. What do you think's upending this tech trade right now? If I can use that word, just introducing some jitters into the trade.
Yeah, I mean, certainly we've had equity supply enter the market. We have earnings season for Q1 that's come to an end, was super strong, 26% annualized growth rate. And now we have a little bit of a lull after Micron this afternoon, that is, in earnings. So I think the rate of change is going to be challenging for the market to sort of parse through and to contemplate on earnings for Q2. You know, can they really keep pace with this sort of 20+% earnings growth rate or not? And then you have overbought conditions. You have a lot of momentum out there. And you've had, the SOX index, the semiconductor index, up, 90% this year, up 150% over the last 12 months, up 300% over the last 5 years. So, huge moves there that are just sort of forcing some investors to take some pause.
Elisa, myself, many others have called this a great wealth transfer from the hyperscalers to the semis. Those hyperscalers, some of those major spenders are under pressure in the equity market, not performing well right now for a variety of reasons, but that is one. If they're underperforming, should the semis too?
Yeah, it's a good question, Jonathan. I think, you're right. Hyperscalers, I think, over the last 12 months are sort of unchanged now. But you take a look at what's going on there, and I think there's a question around, are we going to have a little bit of a lull in free cash flow growth coming out of the hyperscalers? A lot of debt issuance, some equity issuance. But this is early innings, in my opinion. And I would argue that, one of the concerns around hyperscalers is the semi-bottleneck. Look at high bandwidth memory, for example. The three largest contributors there to the manufacturing of that: Samsung, SK Hynix, so Korea, and then Micron. And you have growth there on the memory side, on the demand side, that is, of like 30 to 50% annualized, but there isn't a lot of incremental new supply, and they're sold out this year, they're sold out next year. So could we have sort of demand exist, but really the bottleneck will be the supply side, and that could constrain some of the hyperscalers. And then lastly, to what extent is some of this build out within the LLM world and within the co-agentic world going to become more commoditized, more of a utility, or is there going to be true differentiation? A lot of experts are on both sides of that debate right now.
And as we're all in that debate, nobody really wants to get out, but also people are feeling a little bit squirmish about what exactly is happening, which is the reason why you see sort of a rolling ball of cash through different sectors of the market. Yesterday, we saw the S&P down more than 1%, but the majority of constituents were actually up on the day. Yeah. Is that healthy?
Well, it was interesting. I think the equal weight was was down only about 35 basis points yesterday. To your point, about a little less than 60% of the constituents within the S&P 500 were up yesterday. So it was a positive sign. The attribution of performance year to date, Lisa, 9 out of the 10 stocks that are contributing the most to S&P 500 performance are semiconductor companies. Some may be a little bit of a hyperscaler smell to them, like Amazon, for example, or Alphabet, but they're all semiconductor companies. And so, yes, I mean, I think if we see a broadening, that would be a healthy sign in this market.
Could you see a broadening with rate hikes?
I think so. I'm not calling for rate hikes anytime soon. I don't think we see 25 and done if there are rate hikes. Usually it's a 75 basis point move or more. And my view is that Fed Chair Warsh is taking a very cautious, yes, incrementally hawkish approach to the rate hike cycle. But it also gives him wiggle room. He's being tested by the bond market. Twos are at 420. The upper bound of Fed funds is at 375. So the market's sort of saying, okay, Fed Chair Warsh, you're probably going to have to raise rates between now and year end. We'll have to see. Employment is strong. And the end of hostilities in the Strait of Hormuz, we could see inflationary pressures actually disinflate over the next couple of months. That could give him some wiggle room to stay on hold. And perhaps if we actually see employment weaken further, although it's accelerated recently, maybe he ends up pivoting to the other side and become a little more dovish. That's not our base case right now. We think the on hold makes sense.
On hold for this year, and then what about for next year?
Well, I think what we've heard from Fed Chair Warsh is let's look at the data. Let's look at the data. Where is inflation? Does AI go from an inflationary force to a disinflationary force over what period of time? Do we start to see the disinflationary pieces? Fed Chair Warsh has talked about this. He anticipates this. I suspect it's going to take several quarters before we get to AI becoming disinflationary, because if you look at AI's penetration into the enterprise, it's less than 1%. So that S-curve suggests that we have a lot of room for AI to penetrate corporate America and the world.
Even if we were to have Fed hikes, would that slow down the AI momentum build out and trade?
Probably not, but I think the challenge the Fed has is what areas of the economy would Fed hikes actually hinder? People who want to buy homes, people who need a loan for their car purchase.
It's part of the market already suffering right now.
Yeah.
Right.
Which begs the question, what's the point?
Yeah.
And Chair Warsh basically addressed that in the news conference. If you ask me the question, do I think we are restrictive right now? If I look at housing, yes. If I look everywhere else, probably not. And if you look everywhere else, and you've basically answered the question when Anne-Marie asked it, what's going to happen to hyperscaler spending or the capex if they do raise rates, and it's not going to make a difference. Right. So why are we thinking about hiking rates?
Well, the market is testing Fed Chair Warsh. I would argue where the hawkishness will probably be seen will be on the Fed's balance sheet, that we could see an acceleration of QT. And that's where I think Fed Warsh probably wants to go with this before he starts putting, the hawkish gear in place. I think we're going to see more hawkishness on the rolling off of the balance sheet.
It sounds like you like bonds, and right now this is a good bet given some of the uncertainties and valuation around stocks.
Bonds haven't done a thing in 6 years. Since June of 2020, bonds are unchanged. Total return since June of 2020, unchanged. However, where were 10-year yields in 2020? They were at 70 basis points. Today, they're almost at 450. They were yielding negative real rates. Today, they're about 225 basis points. Yes, we have challenges with deficits to GDP. We're very concerned about that. Net buying of our trading partners has been incrementally going towards the gold trade rather than the Treasury trade. And so we're aware of that. But if you look at the real rate with break-evens at 222 this morning and 10s at, like I say, about 450, there's some interesting sort of what I'd like to call, maybe refer to as like a margin of safety there, so that if you wanted to dip into the market right now, you at least could do it based on historical norms. There would suggest there's a little bit of opportunity for.
Can I ask you though,
return.
Aaron, as we talk about the additional debt supply coming from corporate America, does that compete now with the Treasury supply? We had a Treasury problem even when we didn't have all this supply. Now we have additional supply. Are they competing with each other?
I think so. I mean, I think that the safe play has been to own the front end of the market, whether that's short-dated high-yield credit, which looks very attractive here. You have the curve that's reasonably flat, 420 in 2s, 450 in 10s, and you have investment-grade credit spreads, which are tight, but also, providing a little more of a cushion, and default rates seem to be, quite healthy right now. So, I do think investors, institutional investors, are going to be looking across treasuries into investment grade. I think central banks, and large institutions will still be dabbling within the treasury market, and certainly will not be, making a risk-reward decision on high yield versus treasuries.
Lisa, to your point, you saw that as some of the short-dated SpaceX debt in the last 24 hours.
Yeah, people were okay with that. That was actually the best bid space because, again, you can count on some of the promises holding true for the next 2 years. 30 years, I don't know.
Further out along the curve.
I want to point something out. I just took a look at how long the railroads in the United States took to pay for themselves. 20 to 30 years. At what point are we talking about the disinflationary kinds of ramifications of some of the hyperscaler debt and some of the semiconductor build-out? Something to think about. I mean, I know it's different scope than 20 to 30 years, but there is a payback period of time.
It's very different in more ways than one. That's a defined railroad to somewhere.
Correct.
Right. If you ask someone what we're doing with this, what's the destination?
Mars.
They struggle to describe it. That's very different.
No, it's true. The people actually say this is completely different because we don't know what the ultimate goal is or what the world looks like when it is more efficient on the heels of AI.
Aaron, it's good to see you. Thank you, sir. Aaron Cannon there of Clear Harbor Asset Management. Futures right now in the S&P just about positive. Going into earnings from Micron later on this afternoon. Let's get you an update on stories worldwide with your Bloomberg Brief. Vonnie Quinn has more. Hey, Vonnie.
Hey, John. Good morning. We start with earnings as well, with FedEx trading lower in the pre-market. The company reported fourth quarter results that beat expectations but warned of inflation and trade headwinds. FedEx forecasting higher adjusted earnings this year as its turnaround effort continues. SK Hynix filing for a U.S. IPO, the company looking to raise more than $29 billion to meet memory chip demand. SK Hynix expects to start trading on July 10th. Now, shares are up more than 300% in South Korea this year. President Donald Trump ordering the DOJ to look into gas prices. The president posting on Truth Social, the big oil companies are not dropping their price at the pump commensurate with the sharply lower prices they are paying for oil. In other words, customers are being gouged. And that is your Bloomberg Brief. John.
Vonnie, thank you. More from Vonnie in about 30 minutes' time. Up next on the programme, the Mamdani effect.
Over a year ago, the odds were stacked against another young Muslim socialist.
We need a good neighbor. We need someone who will always have our back.
Our team of progressive champions is growing tonight.
Up next, we'll catch up with Tobin Marcus of Wolf Research, live from New York City this morning. Good morning.
a time when policy in Washington is driving Wall Street, we draw a distinction between the rhetoric and the action, bringing you market-moving guests and original reporting. This is Bloomberg Surveillance.
Technology is embedded in every aspect of our lives, and that revolution is playing out in real time. From finance to defense tech, AI to entertainment, from the road to the stars. Bloomberg is bringing you the stories of companies and people that are pushing tech to new frontiers, and the politics reshaping global tech markets. I'm Ed Ludlow, live in San Francisco, and this is Bloomberg Tech. Every weekday, only on Bloomberg Television.
The countdown is on. Everything you need to get the edge at the end of the market day. Get ahead of tomorrow's trading with The Close. Weekdays on Bloomberg. Context changes everything.
Stocks positive by about 0.1% on the S&P, coming off the back of 2 days of losses on the S&P 500. On the Nasdaq this morning, up by 0.5. Ugly session yesterday for the semis. The Philadelphia Semiconductor Index down by close to 8% at the close. Heading into a gut check for this trade. Micron after the closing bell.
Yeah, a lot of people saying that this is a particularly high bar, considering that 5 of the 6 earnings reports that previously have come out from Micron have led to down days on the shares. So even when they beat expectations, their shares tend to go down, just simply because when you're on a moonshot in terms of the stock performance, it is very hard to deliver in reality.
That's the equity story. Let's get to the bond market picture. 2s, 10s, 30s. Yields this morning stable. 2s around 420. 10s around 450. An endorsement again coming from the Treasury Secretary here in New York City at the Economic Club in New York for the Fed Chair, Kevin Walsh.
For the Fed Chair, and also saying that Trump understands bond markets have taken out more governments than howitzers, basically saying we are going to let the Fed Chair be independent. To Lisa's point, he's almost whispering we're on board with what Kevin Walsh is doing, even though he came out very hawkish and interviewed as a dove.
I think he understands, Besson certainly understands, that if this Fed Chair is overly dovish at this point, Treasuries don't rally. They sell off, and we have a different problem. You need to have a commitment to getting inflation back towards target to stabilize the bond market. There is an appreciation of that, at least in the Treasury, for now.
Right now, if you're just looking at the market and you take a look at the most important benchmark yield, which is the 10-year, it has gone down since the Fed has come out with a more hawkish statement. So from this particular perspective, in some ways, they've eased monetary policy, at least when it comes to things like mortgages.
The move in crude has helped as well. WTI 71 this morning on WTI crude. We're down another 2%. Brent crude at 75. Under surveillance this morning, need to talk about New York politics. The Mamdani effect.
Over a year ago, the odds were stacked against another young Muslim socialist. I see a New York that we can all afford.
It's been thrilling as he has been showing us what it looks like to fight for a New York City everyone can afford.
We need a good neighbor. We need someone who will always have our back.
Our team of progressive champions is growing tonight.
So here's the latest this morning. New York City Mayor Zohran Mamdani flexing some political muscle. 3 candidates backed by the Democratic Socialists winning their congressional primaries last night and ousting 2 incumbents. Bloomberg's Tyler Kendall has the latest. Good morning, Tyler.
Hey, John, good morning. Well, these results could double the number of Democratic Socialists in Congress because in the predominantly blue city, the winners of these primaries are heavily favored when it comes to the general election. Voters advanced 2 members of the Democratic Socialists of America who were endorsed by Mamdani in New York's 7th and 13th congressional districts, which included unseating one Democratic incumbent who currently serves as the chair of the Congressional Hispanic Caucus. He wasn't the only incumbent to fall, as we saw Dan Goldman, who represents New York's 10th district, which includes Wall Street, and who, by the way, has one of the most liberal voting records in Congress. He lost his bid for re-election to former mayoral candidate Brad Lander, who had Mamdani's backing. Now, these contexts expose both the ideological tensions, but also the generational tensions within the Democratic Party right now, because we saw some party leaders like Hakeem Jeffries see his endorsed candidates not advance after last night. Now, John, attention is likely going to focus more on the more contested races in New York State next. That includes the district held by Republican Congressman Mike Lawler, who after last night is now set to face a former Army officer, Kate Conley, in the election come November. I bring up that seat because it is one of those districts in New York that Kamala Harris actually won. It is going to be a race all about affordability. In fact, I got quite literally flashbacks to the SALT cap debate from last summer, which Mike Lawler put himself in the center of, all in a bid to get to this point heading into November.
Tyler Kenner with the latest in Washington. Tyler, thank you. Let's go with the words of Mamdani here in New York City. We need a good neighbour. Let's talk about one of our neighbours. One of the candidates that won last night, their own words on social media reportedly, that they reached for the American flag to wipe their hands because they didn't have a napkin. They're the kind of candidates getting support here in New York City.
Also things like we should abolish borders completely, individuals who, whether you agree with it or not, but led protests that were anti-Israeli protests that many viewed as maybe anti-Semitic here in New York City. Yes, these are very left-wing of this party. And they are, even to Tyler's point, beating out individuals who were liberal. But this is left of those liberals that New York has been sending to Congress.
Well, let's talk about the national stage. This is what Tobin Marcus of Wolf Research has to say. These wins were uniquely rooted in actual organising by NYC DSA, which does not exist anywhere else. And the personality of Mamdani doesn't exist elsewhere either. Tobin joins us now for more. Tobin, good morning. Is there a takeaway then for the national platform?
Good morning. Certainly, I think there's some read across here. Obviously, this is a striking set of wins with Avila Chevalier in particular beating Espaillat. A very big surprise, big upset. And as you were just alluding to, some very extreme views from her that voters were able to get their heads around. But this is a very unique electorate. I think when you look at, talking to people in the DSA, their ambition is maybe this can translate to other big cities. But I don't think anyone, even within the wing of the party that made this happen last night, is really expecting this to translate to your kind of typical district, which is in the suburbs where most people in America live. So, there's going to be a really vocal, interesting, new, very far left contingent of people in Congress as a result of this. But it's only so far that that's a bellwether for the entire party.
How does Hakeem Jeffries deal with this? Not just in New York, but of course in his leadership role in Congress.
Yeah, assuming he wins the speaker's gavel, as most people expect, he's going to have a real challenge on his hand. It's going to be a very fractious caucus. It already has been. In the opposition, he's done a good job keeping Democrats together, but that's sort of running the House on easy mode, where all you really need to do is get people to align in opposition to the president. When it comes to actually doing something affirmative, there's a real challenge about what it is that they're even trying to do, particularly given how policy light the Democratic campaign is this year, as they really want to stay laser focused on Trump. And he does not have the kind of track record and stature that somebody like Pelosi had as an untested new leader. So, yeah, he has a real challenge ahead of him.
Playbook this morning says the new king of New York, and it's talking about Zohran Mamdani, given his backing of these candidates that won. I think the writing was on the wall, if you've been paying attention to New York City politics, that this is where it was going. Is this awkward, given how close we've actually seen the relationship between the New York mayor and the president of the United States?
Yeah, it was really, really, really striking how well that first meeting between Mamdani and Trump went, and certainly they seem simpatico in certain ways. But they're obviously not actual political allies. There's been some tension over foreign policy since then. I certainly think that President Trump is going to have no compunction in teeing off on the extreme views of some of these candidates who just won primaries, and he'll be happy to make them the face of the party to the extent that he can, since he really wants to run a midterm campaign against Democrats being extreme and out of touch on issues like immigration and crime in the first place. So, I think these are very much the kinds of targets he'll be happy to have in Washington.
Tobin, are you surprised that turnout wasn't higher?
No, not really. I think that there were some comparisons going around to turnout last year in the mayoral primary, but that obviously was, highly contested at the entire citywide level. Here there were relatively high pockets of turnout in some of these contested primaries. Including both the big socialist wins, but also NY12, where it looks like Michael Asher will win. But typically it was only about 10% turnout in 2024 in the congressional primaries then, and I think we're going to be north of that here. I mean, ultimately, these are their party primaries. The turnout for them is not all that high, even with a lot of organizing around them in New York.
Tobin, appreciate your time, as always, and your perspective, sir. Thank you. Tobin Marcus there of Wolf Research. In some ways, you might argue that this exposes the difficulty this party will have finding a candidate through the primary process that can actually succeed on the national stage in the general in a few years' time.
This is going to be the big challenge. And you can see that in places like Pennsylvania, where moderate candidates won the Democratic primaries. But you can see in local pockets, very much you see a more extremist push. Then how do you win a cohort of people who skew a certain direction? And this is really the question and the reason why we're asking how much this can represent the mainstream.
And to Tobin's point, this is why he thinks this is a New York issue and it's not going to go mainstream across the nation.
Coming up on the program, we'll catch up with Dan Ives. We'll talk about the tech trade, Wedbush. Dan Ives is going to join us to talk about Micron as they face a crucial earnings test later on this afternoon.
We should not deny that change is coming. And change is not coming just in data centers and AI. As a world, we are building infrastructure, we're building energy, we're doing energy transmission, we're building next-gen manufacturing, we're ramping defense, and we're doing this thing called AI and data.
Yes.
We will see the largest need for capital ever. And that's what we've seen so far this year. And so now to your specific question, it's about underwriting. There are a number of very strong US tech companies who run diversified businesses, Amazon, Google, Microsoft, who are interested in seeing these centers built and are interested in not consolidating the debt on their balance sheet. And to the extent they are prepared to lend their credit, one can lend against those types of things and make sensible underwriting decisions.
Every weekday, Bloomberg puts the spotlight on a different aspect of global finance. Flows, funds, and the forces shaping markets on ETF IQ. The future of money with Bloomberg Crypto. The players behind major transactions on Bloomberg Deals. Rates, risk, and the cost of capital on Bloomberg Real Yield. And personal finance, retirement, and wealth management on Bloomberg Money. A different topic every weekday, only on Bloomberg Television.
Equity futures bouncing back by a little more than 0.1% on the S&P 500. Weakness yesterday for technology stocks worldwide, including the high-flying chip stocks as well. Semis, the semi-index down by close to 8% at the close. the biggest losing day we've seen in about 2 weeks for that index, going into earnings from Micron a little bit later. We'll spend some time on that in just a moment. Let's turn to the bond market board, switch at the board and get to 2s, 10s and 30s. 2s just hanging in around 419.70. We've talked lots about the Federal Reserve. Let's talk about the data. PMIs at the headline level, pretty decent just yesterday.
This is the reason why people actually see the likelihood of rate hikes, even with oil prices coming down, because there is this increasing momentum in the underlying economy. And frankly, core PCE is going to give you a sense of that tomorrow. If we do get the headline level of 4% that a lot of people are expecting, this PMI boom that we're seeing in terms of manufacturing and services as well just feeds into the idea that this can continue.
We've said this a number of times, I know, but it's worth repeating. This conversation is still going on even with this move in crude. This move in crude is not leading to fading rate hike bets. In fact, rate hike bets have firmed up, if anything, over the last week. Brent crude at 75. Bear in mind where WTI was at the end of February, high 60s. So we're really close, a few dollars away from wiping out the post-war rally on crude this morning.
Yeah, what's interesting is you're hearing a different tone from Christine Lagarde over at the ECB, who seems to be backing away from the potential for more rate hikes and saying, well, you know, this might actually change
ECB's a basket case and has been for a number of decades.
But what's interesting is in the United States, it's the opposite. It's saying, look, this is something we can manage, even as we hear a different tone from the White House.
Well, it's because we have inflation elsewhere. And that's really the AI build-out, even though they are going to be able to look through the rise of energy prices when it comes to oil. Maybe not enough for the president to be able to look through at this moment politically, but right now it looks like the Fed could potentially look through this.
Brent crude right now 75.81. As we count you down to the open about 3 hours away, let's get you some single names, some morning movers. Yahara has more. Hey, Yahara.
Hi, John. We start with the AI chip maker Cerebra. Shares are falling nearly 13% in the pre-market after its first earnings report as a public company, and the results were solid. Its revenue topped expectations, and its full-year sales forecast came in above Wall Street estimates. But after a blockbuster IPO, the biggest in chip history, and a solid run-up in the stock since then, it failed to live up to Wall Street's high expectations. Another casualty of high expectations is FedEx. Those shares falling 7% in the pre-market despite a profit beat and a solid sales outlook. But with the shares up a 30% year to date heading into the report, also failing to live up to high expectations. And on top of that, management warning that tariffs and inflation continue to be a headwind for the business. And we end on Micron. Those shares are rebounding 3.8% today after a 13% sell-off yesterday. Made it one of the worst performers in the S&P, but that's now behind us, and all eyes turn to earnings after the bell, with revenue expected to nearly quadruple from a year ago, while profits are forecast to be more than 10 times higher than a year ago. So expectations, no doubt, sky high for this name, which is the biggest contributor to the S&P's rally this year.
Massive move here today, Yahara. Thank you. Thank you for the update. More on that stock in just a moment. On our radar this morning, SpaceX raising $25 billion in debt after drawing nearly $90 billion in demand. The bond's priced wider than similar debt offerings, with investors demanding a premium for the company's heavy spending ambitions. Elsewhere, Morgan Stanley becoming the latest firm to cap redemptions for its $7 billion private credit fund. The company limiting withdrawals to 5% after investors sought to cash out over 11% of units outstanding. And finally, the Treasury Secretary, Scott Bessent, signaling confidence in Fed Chair Kevin Warsh.
I am confident that the Fed Chair will optimize the path for both inflation and economic growth. And the President said that at the Chair Warsh's swearing in that he would be independent, that he should do what he wants.
Bessent going on to echo Warsh's belief in the Fed getting inflation back down to its 2% target.
Yeah, perhaps implying, though, that there's a little less pain required in terms of rate hikes in the process. Well, he did say, yes, bond markets you've got to respect. They've taken out more governments than howitzers, a fantastic quote. He went on to say, now that we are, I believe, on the other side of this conflict, talking about Iran and the United States, gas prices will come back down, inflation will come back down to target. So are these completely the same messages, which is rate hikes will bring inflation to target, or is it that inflation will go back down to target and then we can reassess the message?
What also I find interesting is that he wants to see inflation back down to target, but then is he going to, which he has in the past, brought up the idea that maybe the Fed needs to change how they target inflation. It shouldn't be straight 2%. In the past, he's talked about obviously you have to hit the goal first before you move the posts, but talking about maybe it is appropriate for the Fed to target a range of maybe 2 to 3%.
I said this yesterday, and I'll repeat it. I've got the luxury of not making a call. I don't need to make one, so I have this luxury. I understand that. I'm trying to stay really open-minded about this Federal Reserve. I believe this will be a very different institution, which might introduce a bit of volatility between now and through the rest of the summer. But let's see where we end up by the time we get to the end of August. Kevin Walsh has just got in the seat. There's a number of task forces. I know there's a number of jokes around those task forces, but there's a bit of work to be done to work out what the future of this institution will actually look like. And I'm not going to fill in the gaps with rate hike, rate hike, rate hike, just because we have a chair right now that's not offering us much guidance.
At the same time, we are hearing from other Fed officials who are saying rate hike and are offering plenty of guidance. And you've talked about this plenty, talking about how that's filling the vacuum. I agree with you. I also think that it is not controversial on Wall Street and in markets more broadly that some of these things should be reassessed, like exactly what inflation target we're going to be looking at, what the role of the balance sheet is going to be. All of these things are actually really key questions. The biggest one, AI and its ramifications on the labor market and on inflation. These are really key questions. I welcome the task forces.
Ditto.
Please deliver the reports to my inbox.
I feel like you want to run one. You bring it up all the time. It's like you're throwing your name in the ring.
If you want
to think about it, we're criticising the new guy. So many people are. Let's think about the old Fed. Why was the Fed in a position where it needed to go through all these different things before they actually started hiking interest rates? That you needed several sequences to go through to move guidance, to end QE, and then to think about hiking interest rates once inflation was already a problem. Why do you have an easing bias in the statement that you can't remove straight away? What was it there to begin with when you have a situation emerging in the Middle East that totally upended the outlook for inflation for a lot of people? That's the mess we need to address here. The hand-holding coming out of GFC's done, it's over. The communication apparatus that came out of GFC, it's done, it's over. You need to address all those things.
I think just on a broader level, just to zoom out, it's a good time to do that because this is a new economic era with a lot of different factors overlaid on top of each other. And a lot of people have said with a lot of different cycles kind of overlaid on top of each other, it's very difficult to get clean signals. A good time to reassess.
Let's talk about the new era. Let's talk about tech, the tech trade. Steadying ahead of Micron earnings due out after the close today. Shares up more than 250% so far this year. Dan Ives of Wedbush writing, there is some added nervousness on the important memory chip trade. We continue to believe that in this market, we will continue to go through a number of gut check moments. Dan Ives of Wedbush joins us now for more. Dan, good morning.
Great to be here.
Is this one of those gut check moments?
It is. Look, and I think you saw it with the Kospi down 10%. Look, the golden child of this tech boom, a lot of it's in Korea in terms of memory chips. When you think about what's happened with SK and obviously Samsung, and SK overtaking Samsung, Micron, such an important quarter relative to what we see in terms of demand. Ripple, what does that mean for NVIDIA, hyperscalers? But I continue, look, our checks in Taiwan, in Korea, no cracks in the armor. And that's why I just continue to believe third inning, one out in terms of the AI game.
Further downstream, though, you're starting to see some pushback to price. Increasingly. Does that upend some of the story?
Look, I think on the edges that could, but look, right now, demand supply, call it 12, 15 to 1. In terms of where we are relative to chips. So my view is like, you still, even if you had some events to even take some demand off, you don't have an equilibrium probably for another year and a half, 2 years, which in my view just continues to believe like the chip trade is what you continue to own. Look, hyperscalers, obviously right now those were kind of in the penalty box to some extent, but you will see some push against price. But it's our view, like over time, price comes down. It's all part of what we're seeing with tokens.
Profit margins, though, kind of a key point here because profit margins have been just going to the moon. They've been incredibly robust at some of these semiconductors, in part because they can charge whatever they want. And that's changing. You are seeing some competition with Google and with Amazon coming into the fore. At what point do you start to see those margins really compress?
Look, I think right now, if there's a pressure point, you probably don't see that for another 9, 12 months. But just like you said, like competition's coming across the board. It's an arms race, you know, really when you think from what Meta's doing to Amazon to Microsoft. You have software companies that now they'll start to produce chips. Look what's happened even on the Intel side with Apple. So that will definitely start to pressurize the situation. But in my view, it just continues to be like, we are still so early relative to the build out. And that's also why you're going to have these gut check moments. You'll have these white knuckle periods. But we continue to view these as opportunities where you own the AI winners.
Well, the AI winners, though, is the key point here. How do you know who they are when they're shifting around so quickly? And I say this, I thought one of the most interesting stories was when Microsoft came out and they said that they were going to be using DeepSeek to lower the cost of deploying some of their large language models. I mean, is this indicating that cost is now a much higher factor on the list for a lot of these big tech companies when it comes to who they're going to go with?
Yeah, I think it's obviously technology, scale, but cost clearly plays in. There's also the models. Over time, the models are going to get cheaper and cheaper. I mean, the value, if you actually start to think about it, it's in the data, it's in the chips, less about the models, which is why ultimately Anthropic, OpenAI, they're so focused on enterprise, compute. They're focused on all these partnerships because essentially what's happening is everyone's building out their own moat or their own fort. And that's why it's a game of musical chairs, because eventually someone's left without a chair. Now, who are those losers? Look, that's our job, that's other people's job in terms of trying to understand who the winners are. Because you are starting to see a separation in terms of you can't just own the space. You can't just own, it speaks to our view. You have to be selective relative to owning the winners and making sure that you're not sitting owning a loser.
When it comes to enterprise, though, isn't Anthropic way ahead of OpenAI?
Look, I think Anthropic clearly, from a model perspective, I mean, it's their world. Everyone's paying rent relative to what they've done, but that gap could be narrowed quickly. I mean, OpenAI is just not going to sit there on a treadmill. So OpenAI, they had their bullseye on their back, Anthropic, but you see what's happening with Anthropic, like, in terms of going after talent from Google. It's this arm, because a lot of it is going to be, it's about the engineers. It's about compute power. And that's going to drive more and more debt raises, equity raises, and that will be also tests for the market in terms of how it handles it.
I haven't seen you since the president briefed me and a few reporters looking into, maybe doing something, public-private partnerships in these companies. What do you make of that, government taking a stake?
Look, I think selectively, it's important if it's done the right way. Because you could argue, if you think Intel now, I mean, they're obviously in a glorious situation. Look where they were a year and a half ago. If government doesn't take a stake there, which ultimately led to NVIDIA and more. Now you look at Lip and Intel, they're core in terms of the trade. When it comes to quantum, I think that's really important in terms of some of the government initiatives. And I think IBM and Arvin have been kind of front and center there because what's happening in China because of this arms race.
Can we finish on two losers, Meta, Microsoft? What do I do with those names now? They're in bear markets. Yeah. Everyone's getting all bulled up on the tech story. Two of the biggest tech names on the planet are in a bear market. Yeah. What do you do with those names now?
I think you have to separate them out. Microsoft, I think, is the most oversold large cap name. Just my view. Have they made stumbles on Copilot and some other areas? Yeah, but in terms of enterprise, their backyard, Azure growth, compute, supply issues, I think that's ultimately a stock that, $550 stock. So I actually think that continues. Just like a year ago, the narrative on Google was so negative. Look where we are now. From Meta, look, it's a prove me. Right now, they're going up Mount Everest without, oxygen or whatever. What they're trying to do, that will be the prove it moment for Zuck as he ultimately tries to go and change the model. I think they're going to be successful doing it. But you can't just spend on CapEx and not show any results.
Dan Ives at Wedbush. That stock is a struggle, that's for sure. Dan, thank you. Meta, a struggle. Microsoft, a struggle. The equity market doing OK more broadly. Equity futures this morning up by 0.25% on the S&P. With an update on stories worldwide this morning with your Bloomberg brief, Vonnie Quinn has more. Hey, Vonnie.
Hey, John. Thank you. President Trump trying to ease concerns about Iran's use of its unfrozen assets, saying they can only be spent on food and medical supplies from the United States. Iran's foreign ministry saying Tehran can use the money in whatever way it wants. Alibaba suing the Department of Defense, seeking to be removed from a blacklist that identifies it as a supporter of the Chinese military. The e-commerce giant argues it was added to the list without substantial evidence, violating due constitutional process. In sports, Cristiano Ronaldo becoming the first player to score goals in 6 different World Cup tournaments. Ronaldo ending his scoring drought with 2 goals in Portugal's 5-0 win over Uzbekistan, giving him 10 career goals now in the World Cup. A long way to go. That's your Bloomberg Brief. John.
Bonnie, thank you. Thank you very much. I'm really trying to bite my tongue around the World Cup.
Yeah, but?
I'm enjoying it.
Yes.
I'm enjoying it.
But?
There was a social media post from Tom Brady yesterday, and it said, best World Cup ever. And I was like, yeah, you know what, I'm enjoying it, but let's be very open about what's happening here. We've got 4 quarters now, which isn't just about ad revenue. I think it's about maintaining intensity of the game. You've got an expanded tournament, which means you have lower-ranked teams playing higher-ranked teams almost all the time in the group stage, which means you get this total mismatch that generates drama in either direction. If the minnow manages to eke out a draw, fantastic entertainment. If you get 5-0 Portugal-Uzbekistan, fantastic entertainment, right? So the core football viewer, myself and others, are going to watch the World Cup, going to enjoy the World Cup. This is about expanding the game and breaking into the US, and I think they're having success. People like Tom get to enjoy watching Portugal beat Uzbekistan 5-0.
Are you not entertained?
Right? You see what I mean?
Are you not entertained?
Right?
Look, and also it's hard to, I mean, like when you go back to some of those Brazil, like 1970, it's hard. When we put, I mean, Pharaoh's taught me.
They're going to expand the tournament again,
World
by the way.
Cup. It's also.
It's going to be like across 7 continents.
When Ronaldo came out and said, I'm back after the game, and I was like, dude, you were playing Uzbekistan. No offense to Uzbekistan, but like
41.
the bar was not there.
I'm enjoying it, but it's about the product, right? And the product. It's about getting the product palatable for a different viewer, the non-core audience.
The one who wants Gladiator.
Precisely, and you're getting a bit of that. But I'm enjoying it. Up next on the program, supply beginning to pick up.
Yesterday, 19 million barrels of oil flowed out of the Strait of Hormuz. It's called an oil gush. Oil is going to come charging down.
We'll catch up with Dan Stuyver next of Goldman Sachs from New York City. You're watching Bloomberg TV.
Look at the more successful economies in the region. The key to their success is continuity. But the way our Constitution is written, it actually encourages a lack of continuity. And that's a problem. The term for local government is 3 years. When I first became a congressman, it takes you a few months to learn the business and to make your connections, to network, etc. If, for example, you are not particularly favored in the majority, passing a law in a year and a half is not that easy to do. After about a year and a half, you already hear that there's somebody in your district beginning to campaign and is going to oppose you in the next election. So you have to go back to your district to take care of that. And how much work do you get done?
Good morning. This is Bloomberg Daybreak Europe. I'm Lizzie Burden in London, and these are the stories that set your agenda.
Taking you from the U.S. market's close to the overnight session in Asia, we'll walk you through what you need to know to kickstart Europe's trading day. Live from our European headquarters, we bring you the day's top market-moving stories, unmatched expert analysis, and on-the-ground reporting from across the continent. Tune in to Daybreak Europe, only on Bloomberg Television. Context changes everything. When news breaks,
A redhead across the Bloomberg terminal.
Bloomberg has you covered.
Trump's global tariffs are struck down by the U.S. Supreme Court.
For all the context and clarity you need,
There's going to be now tons of tariff headlines until midterm elections.
hear it first on Bloomberg.
Bringing you the most important news and financial information whenever and wherever it happens. I'm Michael McKee on the Mexican border, and this is Bloomberg.
Check out crude this morning, pulling back once again. We're down by close to 2%. 75 on Brent, WTI around 72. Under surveillance this morning, supply beginning to pick up.
Yesterday, 19 million barrels of oil flowed out of the Strait of Hormuz. It's called an oil gush. Oil, for the first time in months, hit, think of it, $70 a barrel. So we got it 70. That equates to a very low price. Oil is going to come charging down.
Oil continued to fall, off more than 40% from its high during the peak of the war. Dan Stroyven of Goldman Sachs writing, we now assume that Persian Gulf exports normalise the pre-war levels by the end of July. We're reducing our 26 fourth quarter Brent forecast to $80. Dan joins us now for more. Dan, good morning.
Morning.
What happened to the post-war premium that so many people thought would stay in this price?
Yeah, I think markets are increasingly challenging that premium because the sharpest oil supply shock in history has somewhat ambiguous effects. Yes, I think we're learning that supply disruption risk is higher than widely believed. On the other hand, I think we're also discovering that there's potentially more flexibility in the system on the demand side, in the Middle Eastern supply picture from a pipeline perspective. And so maybe this idea that you need a very large sticky security premium is being challenged by markets right now.
So right now, do you see it continuing to rapidly decline because of the demand destruction that will stick in China, because of the increased barrels, because of the increased production from the UAE? What exactly are the factors that you see at play?
Yeah, I think oil prices are coming down pretty quickly for three reasons. One, reopening is going well and quickly. We estimate that total oil exports from the Gulf are already back at 60% of pre-war levels over the last week. Second, I think markets are challenging this idea that you need a sticky, large security premium for the reasons we discussed. And third, I think markets are putting some probability on the possibility that oil demand will be structurally weaker as a result of the shock. Our base case is that 90% of the 5% global demand oil losses that we saw in the spring bounce back, as has happened in the past, in 2022, 2011. But with the rise of EVs and EV sales are surging, it's a fair question to ask, how confident can we be that most of the demand comes back?
Is that China? Is that Europe? Is that also in the United States in terms of the structural demand destruction that's at play?
Mostly China and then Europe. If you look at the 15 largest EV markets, 13 out of the 15 EV markets saw big increases in the share of EVs in sales since the start of the war. With a global average increase in EV sales of about 3.5 percentage points. But look at China. We had an 11 percentage points increase in the EV share of sales. It just seems that China is responding more quickly to the largest oil supply shock ever, and China crude imports remain down 40%. Our assumption is that if prices moderate, China will go back to the crude markets, start refilling inventories, but we can't be sure, and I think the market is testing that assumption.
Dan, on the heels of the OFAC waiver, where's the Iranian crude going? Still China, or do you think more customers will be willing to buy?
Mostly China, and I think that India is likely going to be the second most important buyer.
What do you make of the president basically saying oil companies are price gouging? It was in the middle of the night. You might have missed it, but he was up, looking at oil prices and saying this is where Brent and WTI are. Why are not gasoline prices across the United States falling as quickly?
Yeah, I think it has to do with the seasonality of gasoline prices, which tend to be higher in the summer. And in general, there tends to be a lag of about 10 days or so between wholesale prices on Wall Street and retail prices at the pump. And then third, structurally, we think that refined product markets are tighter than crude markets.
What did the bulls get wrong in the last 3 months? I feel like the industry scarred a little bit. And by industry, I mean strategists who are looking at this situation, not necessarily yourself. What did everyone get wrong?
I think we, as a community of analysts, and I think also most investors, I mean, at some point oil was at 120, have underappreciated the flexibility in the system, whether it's China oil demand, whether it is storage facilities and pipelines allowing the Middle East to reduce production losses, or third, the strength of supply outside of the Middle East. We estimate that global oil supply as of May was up 3 million barrels per day year over year, with very strong growth in places like Brazil and the US.
How powerful was the China pivot? How important has that been in the last 3 months or so?
Critical.
Yeah.
Chinese crude imports dropped from about 10 million barrels per day to 6. So that's 4 million barrels per day of less demand for crude. And you see it especially in the Middle Eastern grade prices. The so-called Dubai oil price is now in contango, meaning that you actually get a discount to buy a barrel now versus a barrel tomorrow because of the weakness in the Asian pull on Middle Eastern grades.
It's kind of crazy when you think about it, and you don't have to respond to this, but from a political perspective, China actually bailed out the situation for the president. Now, I'm not saying that was their objective. I'm saying that was the outcome, the consequence of their pivot.
Yeah, China helped actually the global consumer as well throughout all of this. A lot of things had to go right. Think about Bab el-Mandeb Strait. The Houthis didn't get involved. The fact that we had a glut, the fact that we are seeing oil in other places, we were able to run off inventories. But then, of course, the biggest, of course, was going to be China. They really have their thumb on the scale when it comes to the oil market.
It made a lot of people turn their focus away from the oil market to other critical minerals, rare earths in particular, because that is not something that can be replaced so easily. And one thing that Scott Bessent, Treasury Secretary Scott Bessent, said last night was, in today's economy, supply chains are the domain in which that leadership is tested. And ultimately, that, to me, is the stockpiling that we're now watching, not just oil.
Has the phone gone quiet? You're getting some nice rest now? Because I'm sure it was off the hook.
Time to look at other commodities, finally,
Right.
including rare earths, metals. I'm excited. Resources are freed up.
It was bored of talking about crude as well.
Well, yeah, because this is where the actual action's going to be.
Dan, thank you. It's
Thanks
good to
so
see
much.
it, sir. Appreciate it. Dan Stroyford there of Goldman Sachs, with crude in the low 70s and threatening to break into the 60s. We've got PCE data about 24 hours away. Equity futures this morning positive by 0.1% on the S&P 500. The second hour of Bloomberg surveillance up next.
Tune in to Bloomberg Business Week Daily.
We got to talk crypto.
From the magazine that helps global leaders stay ahead.
What's the conversation around your company?
Bringing you insight on the people, companies, and trends shaping today's complex economy.
Planning very big things.
A new level of premium.
Plus global business, finance, and tech news as it happens.
The floodgates of innovation are going to open up.
You can't fake passion. You either are or you aren't.
Bloomberg Business Week Daily, only on Bloomberg.
Anytime you have an industry that grows like that, there will be pockets where things are more difficult. So if they're smaller companies, it's harder to deal with tariffs, it's harder to deal with labor and with rising interest rates. So there you may see some poor performance. That doesn't necessarily mean that lenders will lose money, but it may be more difficult. And then pockets of software, everybody's been worried about how will that play out. I think there was a lot of capital that was put in from very smart private equity and very smart institutional investors into software really in the 21-22 vintage that was pretty highly priced. And that, as that works its way through the system now 4 or 5 years in, you may see pockets there. But I also think that the need for income, people want income in their portfolio, and they can get that in many ways. You can get that from the treasury market. You can get that from a bank. You can get that from high yield right now is pretty good. High yield has very little exposure to software. And then you can get it from private credit, where you maybe get more return and a little less liquidity. And so that, I don't see that going away. In fact, I see investors wanting more of that and wanting it from real estate, wanting it from real assets.
Asia is at the forefront of some of the world's biggest stories. I'm Sherrian in Tokyo.
And I'm Heidi Stradwatts here in Sydney, where the trading day begins. We're here in the center of all the action to get you set up with the numbers, news, and knowledge you need for the day ahead.
The demand is indeed recovering. We've been waiting for this moment.
The opportunity of a century.
Join us on Bloomberg The Asia Trade. Weekdays only on Bloomberg TV. Context changes everything.
From the world of politics to the world of business, Joe Matthew and Kaylee Lines deliver news, insight, and analysis live 2 times a day, every trading day. Balance of Power at 1 and 5 Eastern, only on Bloomberg.
Welcome to Bloomberg This Weekend. I'm David Gura.
I'm Lisa Mateo. And I'm Christina Ruffini. We're tracking breaking news today from Wall Street to Washington. Let's start overseas. The sector is really propelling this deal forward.
Yeah, the hope is this will open up new markets and provide some additional liquidity.
Of course, now they're going to have competitors. We got a big week coming up in politics.
Earnings season is underway. We're going to get some key reports.
Everything you need to know before the markets open on Monday.
Introducing Bloomberg This Weekend, bringing a little Bloomberg into your weekend routine.
Guys, buckle up.
The hawks are squawking.
There tends to be this glass half empty view of where the Fed is going.
Markets are now pricing close to 2 hikes, followed by some easing next year.
It's more of a Fed on hold.
It makes sense to shift to a tighter hiking bias.
This is Bloomberg Surveillance with Jonathan Farrow, Lisa Abramowitz, and Anne-Marie Hordern.
Our next guest accusing Anne-Marie of being a part-time Knicks fan.
Yeah.
So this started well.
Yeah.
This started very well.
I think I should go take a break.
Live from New York City this morning. Good morning, good morning. For our audience worldwide, the second hour of Bloomberg Surveillance starts right now with equity futures on the S&P 500 slightly firmer by 0.2%, following 2 days of losses on the Nasdaq up by 0.5. In the bond market, stability this morning, but anchored around 420 at the front end of the curve, 419.49. This from Neil Dutta of Renmark just moments ago. On the Fed, I heard a green light to hike from Secretary Bessent. Bessent, the Treasury Secretary, speaking in New York yesterday evening. We'll get to those comments in just a moment. Happening later this afternoon, this is the one to watch, the earnings story, Micron. As many people have called it, a gut check for the tech trade.
Yeah, because we've seen so much volatility, particularly when it comes to semiconductors. Micron has been one of the single best performers in U.S. equity markets so far this year, has delivered one of the biggest percentage points to that increase so far. And you start to wonder, what can they deliver that will actually give people confidence that this can continue? Ultimately, what we've seen is when they deliver earnings, their shares typically over the past couple of quarters have tended to go down regardless of what they put out there. Does it sort of signal the next leg after what we saw in SK Hynix?
Or if they don't do well, is it potentially going to be more worries in this market? What's so interesting is we're talking about Micron, the way we would talk about NVIDIA earnings, setting the tone for basically this entire trade. The way we normally do it in NVIDIA, it's now Micron's world. We're living in it.
It's a race for capital, and these companies are benefiting from all that capital that is being raised. SK Hynix, high-flying South Korean name, looking to raise equity here in the United States, $30 billion worth. SpaceX into the debt market in the last 24 hours. Just subtle signs of pushback. Major signs of pushback that are leading these companies to change their strategy, but certainly the market raising an eyebrow or two at some of these offerings.
The first time someone says, brother, can you spare $25 billion? You say, okay, sure, here you go. The second time, I don't know. And the third time when you start saying, oh, what are you going to buy it? What are you going to use it on? I don't know, go into space for 30 years. All of a sudden people say, wait a second, maybe we're going to make you pay a little bit more. This isn't pushback that is a deal breaker, but you did see investors start to demand a bit of extra premium, particularly for 30-year debt tied to space exploration. And I think that you really felt a sense that maybe people weren't as enthusiastic. The short end, a little bit more excitement.
So let's take the long end debt. Trading wider by almost half a point relative to other similar rated debt. I found that interesting because I found that as evidence of the market questioning the rating that came from the debt agencies themselves in the last week. Maybe I'm taking it too far, but that's what I was thinking.
A lot of people actually were saying that verbally and articulating that. People in the market saying there was some skepticism about just how investment grade this company actually is. It is a lot of promise. It is a lot of hope. And hope tends to be more of the high yield regime, more than the investment grade regime. So you see it being priced more like a top tier high yield company, at least in the longer end. And right now, a lot of people are saying that's probably a little bit more in line with
reality. But for the bubble crew, that's the market that actually is discriminating, right? That's a market that's discriminating. We're seeing that at the equity level, too, for the hyperscalers, the likes of Meta, Microsoft. You're seeing that discrimination in equity and in debt.
This isn't a beer goggles moment. And that, I'm going harkening back to that one Fed
in some
speech.
places it might be.
But maybe, but right, we can get into, no, we're not going to get into that later. But what I will say that right now, this definitely is a discerning investor base because people are clearly picking things apart and trying to see what exactly is backing each tranche and then saying, am I getting compensated
Have
for
you
it?
recovered? Are you willing to park your bias over the New York Knicks for our next guest when we start this conversation?
I'm ready.
It's going to be okay.
Ready
All
for
right.
Tom.
Coming up, Tom Becker of BlackRock with Micron earnings. Coming up a little bit later, Libby Cantrell of PIMCO with Bessent expressing confidence in Walsh, and John Cervadea of JP Morgan on SpaceX's debut bond sale. We begin this hour with stocks looking for stability following a bruising two-day run for equity markets. Tom Becker of BlackRock warning of some immediate obstacles facing investors, writing rising stock and bond supply poses a medium-term challenge for asset markets given high valuations. Tom joins us now for more. Tom, good morning.
Hey, John.
Where are you seeing the pushback right now?
I don't think you're seeing the pushback necessarily, just like you were talking about. It's in aggregate. I think the IPO window's open. They're clearly taking advantage of that. I think in general, that is supportive of equities. It means sentiment's good. It means financial conditions are loose. I think the dereg agenda is sort of playing out where banks have more capital. They're facilitating this. On the debt side, it's a little trickier because each incremental debt issuance means interest cost that's going to eat into earnings. So we're a little more, bullish directional equities on kind of the equity offerings, but it's the kind of upping of the debt offering is a little more concerning.
I don't want to bury the lead here because you're looking for high yields on treasuries.
Yeah.
Are the two stories connected? Do they compete with one another?
That's crowding out. So I think that's the big question, which is, will there be a point when government debt issuance and corporate debt issuance compete and drive aggregate yields higher? I think the big story of the last 2 months is the surprising strength of the U.S. labor market. That's when U.S. real yields started to take off, was the beginning of last month with the labor market report. People were like, oh, it's not just about kind of high inflation. It's actually an economy that's accelerating and maybe overheating or closer to overheating than we thought. And so as real yields go up, it makes sense that you have higher productivity. It makes sense that you have more corporate investment opportunities. And so higher real yields are associated with an economy that's really booming. And I think that's sort of, that's where it looks like the economy is heading now.
Just to crystallize this, something that you said was you've taken down overall portfolio risk as the risk of an overheated economy rises. Are you seeing that risk as being in the bond market right now, not the stock market?
I think it's both. So I think, if you look at 2022 as an example, which is just higher real yields kind of weighing on all assets, I think that's what you've seen a little bit, some glimmers of these days when the data is a little too hot. The equity and bond market get worried about it. It's that persistent high stock bond correlation. And I think the labor market and the growth side is what's caught the market offsides. I think the U.S. outperforming to this degree post-Hormuz is not where people thought it was going to be at the end of Q1. And so it's sort of that stronger dollar, higher real yields. That's a bit of a pain trade for markets. And so I think we're just being a little cautious given multiples and valuations and positioning.
Does it make you more comfortable that the Fed had something of a hawkish tone, or at least was perceived as such?
I thought the Fed was actually pretty orthodox. I thought they went back to basics. There wasn't a lot of forward guidance. I think the forward guidance has proven itself over the last 2 years to have, missed the mark a couple times. The Fed took out too much insurance last year, it appears, because, there was a bit of a false, concern about the labor market. And so I think that's back to basics. It does seem when you look at the dots, which, I don't know how much longer we'll have them, that there is now, a plurality that think that policy rates should be higher. The big question is, what's the mix going to be? And I think Warsh really laid this out, which is he's got his task force. The committee one is going to be less. The balance sheet one, the answer is going to be less. The inflation one, less. We want less of all these things. So it's this narrowing of kind of the scope. But the question is, how do they, if the economy really is strong and nominal growth is accelerating here, you're going to have to tighten some way. Which lever do you choose? Do you choose balance sheet first? Do you go with policy rates first?
Can I jump in?
Do you do dereg?
What would be less disruptive for risk?
I think given what's priced into front-end rates, if they delivered the two, the market would kind of be happy with that. I think the balance sheet is a big open question because a steeper curve, that's what weighs on kind of the long-end multiples for equities. So if 30-year bonds, took a leg up to, 530, 540, it's really hard to support these valuations with that terminal rate. So I think the balance sheet, I don't think it's going to be decided in the next month or two. It's going to be more about front-end policy rates because the task force has to work on it. So, but I think the sequencing of how the task force versus kind of every 6 weeks they have the policy rate, and so how are those two going to intersect? If we keep getting strong PMIs, strong labor market, strong retail sales, you've got the whole economy kind of performing well.
Do you think they'll be a touch less hawkish given where oil prices are now?
I mean, that would be a forecast, is to say, yeah, inflation, that was the high mark. Inflation is going to come down from here. I think the challenge with that is if you just look at services inflation, you look at core goods inflation, you look at kind of the core measures, they're stuck above 3. So, I mean, you're going to get some give back on headline from.
I guess yesterday basically said that that's a high-end consumer problem.
Yeah, I mean, oil prices or services?
Services.
Yeah, I mean, so I mean, Nickflation is a thing, right? Like New York, it seems like everyone has bought a new hat and is walking around in it.
Are you calling them
I
part-time
had this,
supporters?
by the way, I had this
Part-time
mug.
fans?
I used this mug last year as well, and I go in between Knicks and Yankees for the record.
I don't think he's convinced, but carry on, Tom, please.
But I mean, walk around New York, World Cup is a real thing. You've got people out and about in bars. They're flying into America to watch games. They're flying to America to watch games in bars rather than at the stadium. And so I do think there's a consumer element to this, which is surprising given where retail sales was in Q1. It looks like consumption is sort of picking up.
Earlier this year, people said that the growth would move away from the United States, and that became a diversifying trade.
Exactly.
Is this the violent reversal of that as everyone piles back into U.S. assets?
It looks like that may be. Well, so U.S. U.S. equities outperformed post-Hormuz. And so the S&P is an outperformer since kind of, the invasion. I think it's more the dollar that is catching people out. So I think the U.S. real rate move is pretty large, and I think that's related more to growth. And so, yeah, I think that is, if it becomes another U.S. exceptionalism for multiple quarters, I don't think that markets are positioned for that.
Just a final word, Tom. Where have you got the Fed through the summer? Doing nothing, unchanged?
So our biggest shorts in the bond portfolios are in U.S. Treasuries. So we think Treasuries here, the path still looks too low relative to the rest of the world. So we've bought foreign bonds. We've actually stepped into gilts. We've bought Australian bonds. We bought foreign bonds and sold Treasuries because the growth, the inflation, and the positioning all make it look a little cleaner.
And do you think the Fed validates that pricing right now?
I think that's the big question is how he works the committee. And so I think just that there was one proposal and everybody got behind it.
Yeah.
But as you go through a couple more meetings, if the data are so strong, the tensions are gonna build, and that's how he's gonna have to manage it.
Tom, it's good to see you. Thank you,
too.
sir. You can make up in a commercial break. Tom Becker of BlackRock. Tom, thank you. Thank you very much, sir. There's some people who believe that the core of the Fed, Jefferson, Powell, Williams, did Walsh a favour by not putting their dots up and implying hikes. Bank of America wrote that note, I think, in the last couple of days, implying that they were doing him a favour because he just arrived at the Federal Reserve, and that maybe they won't be offering that favour further down the line in the next few meetings. And perhaps that's something to watch. Now, they're not going to reveal their dot. Of course they're not. They're not those kind of individuals, because Powell's never going to speak, and Williams is not going to tell you. And Jefferson's hardly ever speaks anyway. But that's the one to watch, I think, through the summer.
What I'm watching is the fact that the market's giving a green light. And just what we heard from Tom is that essentially this market has already baked in 2 rate hikes. If the Fed delivers on that, will it be disruptive, considering the fact that a lot of people have already priced it?
Might be less disruptive relative to adjusting the balance sheet. Let's give you an update on stories elsewhere this morning with your Bloomberg brief. Vonnie Quinn has more. Hey, Vonnie.
Hey, John, thank you. In a symbolic rebuke of President Trump, the Republican-led Senate voting for the first time to end the war with Iran. The move signals disapproval of the conflict, although it's unlikely to force any change in the administration's strategy. Meta and Microsoft leading an $850 billion boon in data center leases, each company committing tens of billions of dollars in the most recent quarters. The future costs won't appear on the company's balance sheets until they begin making payment on them. France recording its hottest day on record as a heatwave grips Europe. Red alerts are in place across parts of Spain, the UK and France, with extreme temperatures disrupting transportation, schools and major tourist sites. And that is your Bloomberg Brief. John.
Hey, Vonnie, thank you. Thank you for the update. Up next on the programme, growing confidence in the Hawks.
I am confident that the Fed chair will optimize the path for both inflation and economic growth.
A diplomatic Treasury Secretary. Up next, Libby Cantrell of PIMCO.
trading day is about to start.
And you're already looking for that edge.
The opening trade brings you everything you need to know as markets open across Europe.
I'm Guy Johnson.
I'm Anna Edwards.
And I'm Tom McKenzie.
This is your opening trade.
Only on Bloomberg.
Good morning. This is Bloomberg Surveillance.
Welcome back to the opening trade.
It's Bloomberg Money.
This is the Asia Trade.
This is Wall Street Week. Welcome to Balance of Power.
You're watching Bloomberg Deals. Welcome to Bloomberg This Weekend.
This is Bloomberg Television.
Futures positive by a tenth of 1% on the S&P 500. On the Nasdaq up by a third, bouncing back from 2 days of losses. Big tech rolling over in the last 24 hours. Just some signs of stability going into a big earnings report later on this afternoon. Under surveillance this morning, some growing confidence in the hawks.
I am confident that the Fed chair will optimize the path for both inflation and economic growth. We are, I believe, on the other side of this conflict. Gas prices will come back down. Inflation will come back to target.
Here's the latest this morning. The Treasury Secretary Scott Bessent backing Fed Chair Kevin Warsh, predicting he'll get inflation back down to the central bank's 2% target as the US and Iran negotiate an end to the war. Bloomberg's Tyler Kendall has the latest from Washington. Hey, Tyler.
Hey, John. Well, an endorsement from the U.S. Treasury Secretary Scott Bessent of Fed Chair Kevin Warsh after the FOMC last week held rates steady despite the long-standing calls from President Trump for rate cuts. Bessent went on to say that the president does understand the need for independence for the central bank and added, as you've mentioned on this program earlier, that, quote, bond markets have taken out more governments than howitzers, an apparent reference to the economic and political consequences of inflation getting beyond the Fed's control. We are waiting for the PCE inflation reading this Thursday, which is expected to show the year-over-year rate at 4.1%, which is double the Fed's 2% goal and target. Bessent did, though, as you heard, predict that inflation will come down now that the U.S. and Iran are, quote, on the other side of this conflict, but it still has the administration working overtime. Just yesterday, President Trump announced that the Department of Justice would be looking into gasoline prices, which he says aren't falling fast enough. John, the Treasury Secretary also defended his department's move to issue that temporary 60-day waiver to allow Iranian crude to market, as new data analyzed by Bloomberg News and out this morning shows a record number of ships are transiting through the strait with their transponders on, in a apparent sign that there is growing confidence among commercial shippers.
That is some good news, some better news. Tyler, thank you. Tyler Kendall there with the latest from Washington. Neil Dutta of Ranmac was in the room yesterday evening, as many of you were, listening to the Treasury Secretary Scott Bessent on the Fed. I heard a green light to hike. It's interesting how many different people are getting different opinions of this new Fed chair.
One thing that we're not getting is pushback, and I think that is speaking volumes, because in previous iterations of Fed speak, particularly Fed Chair Jerome Powell, there was a lot of pushback. He sort of timed it, looked at Truth Social, said, wait for it, here we go, too late, Powell, et cetera. But this time there really hasn't been that, and, you know, the sort of market whisperer isn't leaning into that either.
Wait a few months.
Maybe.
Right, maybe.
Maybe, but right now, whatever. That's what we heard from the president.
Libby Cantrell of PIMCO. We haven't heard much. Libby, good morning. Good to see you.
Good morning. Good to see you.
Are things going to change at this institution, the Federal Reserve?
Well, look, I think this is, I'm not sure that was newsworthy. I think it would have been more newsworthy if he had undermined the President Trump's Fed chair. I think, what, of course, the hope is that with gas prices coming down, with inflation expectations remaining relatively anchored, at least, medium, long-term inflation expectations remaining relatively anchored, that the Fed will be able to at least stay on hold, if not at some point cut. And I think that the Secretary Bessent is understanding the power of his own kind of jawboning, if you will, reiterating the importance of the independence of the Fed, also projecting optimism that they will be able to keep inflation in check. And then I think with all of the hope that all of that kind of leads to a rate cut at some point. That is our view at PIMCO. We still think that we think the Fed will be on hold this year, but we do believe still that the first move of the Fed will be a cut, not necessarily a hike.
So do you think basically he's setting deterrence, anchoring inflation expectations, and likely this would have been communicated before he went out, didn't give a dot to this administration about maybe not exactly what he would do, but how he would like to present himself?
Yeah, I think you have to understand, kind of taking a step back, I mean, the pathology of Kevin Warsh, if you will. So I worked with him at Morgan Stanley. I think, this is as part of my job. I mean, what has he been, what sort of animated him for the past, 15, 20 years? And he has been talking about honestly, a more hawkish bent to the Fed. One that is going to sort of first and foremost be focused on keeping inflation in check. And so in some ways, now that he is confirmed, as you very much know, he is a little bit protected. And now, of course, the president will jawbone. I'm sure he will. That has been, I think, people forget that this is a more modern norm, that we have better relationships between the Fed chair and the president. If you go back to, of course, the 1970s, 1960s, you had a lot of tension between the White House and the Fed. So in some ways, I think that's inevitable. But I think that, the bigger kind of picture here is that now he can, look at the data and he can adjust the Fed accordingly. I think the last thing I'll just say, sort of John's earlier point, is that we were expecting that, at least in style, he would make changes. On substance, though, he's just really beholden to that FOMC. Of course, he needs the majority of the FOMC, 7 votes out of the 12. 1 vote, important, but obviously not all powerful.
Task force, style or substance?
We'll see. I think, I think that's an open question, clearly. But again, many of the real substantive changes take either a vote of the governors or take, in most cases, a vote of the FOMC. So it's not just a question of, again, Warsh kind of jawboning or hamstringing the folks. He really needs to persuade, the rest of the committee. And so I think it's an open question.
One thing that Treasury Secretary Scott Bessent said was that he expects oil prices to come down. And as a result, he expects there to be some sort of natural disinflation that should right things as well. So it's not just necessarily the rate hikes. What do you make of the vote in Congress rebuking President Trump and sort of voting against the war powers after it was already over?
Yeah, I mean, this is obviously, largely symbolic. A resolution needs 50 votes. Of course, though, to overcome a presidential veto, it needs 67 in the Senate. And of course, we're a very long way from that. But I do think that it sort of symbolizes the growing impatience among Republicans in particular of this conflict, and also just of the general relationship between the White House and Republicans in the Senate. Of course, President Trump, in an unprecedented way, campaigned against Republican incumbents in these primaries. He's also really made it much more difficult for Majority Leader Thune to get some really important things through, whether it's sort of the spy powers and what have you. And so I think it's sort of, emblematic of just a general tension, but again, doesn't really mean very much because it is symbolic, because they don't have the votes.
Markets can really focus on one thing at a time. And right now they want to do tech and they don't want to do Hormuz. They don't want to do politics. They don't want to do sort of gaming out what's going to happen with the midterms. Frankly, it's noise, primaries. Okay, tell me what the big takeaway is. Is there anything that has been developing when it comes to heading into the midterm elections, the elections that we just saw in a number of different primary districts that you think are really instructive for markets, that people have to be watching and taking a greater note of?
Well, I would just say legislatively there is. I mean, we should be talking about the housing bill that's about to get signed into law today. And it's interesting that the president's tweeting about gas prices and not tweeting about that, because this is an accomplishment for basically a do-nothing Congress. This is something I think that, again, incrementally may help supply. On the primary side, I'm actually I'm thankful for you didn't lead with the New York City primaries, because my social media is making lots of predictions about what this means, not only for 2026 but also for 2028 and 2032. But I do think it's really important to contextualize these primaries. Obviously, here in New York City from last night, Mayor Mamdani did very well, kind of went three for three, if you will. But politics are local, as we know. And this is the city that elected Alexandria Ocasio-Cortez, also elected Mayor Mamdani. So it is a liberal city. It also shows, though, that folks are angry with incumbents. And I think this is maybe the broader theme, kind of the signal from the noise. And this I think we'll probably see this play out in 2026 and in 2028. People are angry. Democrats were the casualty of that in 2024. I think Republicans will be the casualty of that in the midterms. People are angry about gas and groceries and housing and healthcare and now AI. So people do not think that the political class is working. And as a result, you have seen incumbents not do well in this primary season. But I think it's more of that than it is about socialists necessarily taking over
Libby,
America.
you say politics is local, and this is slightly uncomfortable to answer. Why is Israel such a big issue if politics are so local? Why is that such a big issue?
Yeah, and it's interesting because it's an issue in the most Jewish the most Jewish congressional district in America. Was, of course, when Dan Goldman was unseated yesterday, also replaced by somebody who has sort of been sympathetic with Israel, obviously has sort of tacked against it. I mean, I think, people, again, they're upset about the U.S.'s role in the kind of the world. And also, I think that Gaza continues to be a real lightning rod for Democrats, and then is exacerbated by the fact that, of course, we're in this conflict with Iran. So, I mean, sure, touche in terms of obviously some of these issues are more global, but the ability for these democratic socialists here in New York City to organize, to do these sort of real grassroots outreach, I think was part of the reason why they did so well last night.
Libby, Clinic, as always, good to see you. Thank you. Thank you. Libby Cantrell there of PIMCO. Up next, John Cervedea of JP Morgan on SpaceX's $25 billion debut bond sale.
World's most powerful investors don't ring a bell. They quietly reshape entire industries. This is the money shaping the world. The Dealmaker Playbook, where power and billions of dollars change hands every day. From private equity and credit to venture capital and M&A, we bring you the inside scoop on the biggest deals and debates, plus exclusive conversations with finance's ultimate insiders. I'm Danny Berger, and this is Bloomberg Deals. Every week, only on Bloomberg Television.
Middle East and Africa. Vibrant resources and high-yield investment opportunities abound. Join me on Horizons Middle East and Africa for the stories, newsmakers, and insight from this exciting region. Now weekdays, only on Bloomberg.
It's a multi-trillion-dollar industry. We'll show you what's happening in ETFs like no one else. ETF IQ, only on Bloomberg.
Technology is embedded in every aspect of our lives, and that revolution is playing out in real time.
From finance to defense tech, AI to entertainment, from the road to the stars. Bloomberg is bringing you the stories of companies and people that are pushing tech to new frontiers and the politics reshaping global tech markets. I'm Ed Ludlow, live in San Francisco, and this is Bloomberg Tech.
Every weekday, only on Bloomberg Television.
Equity futures right now bouncing back by just 0.1%. Not a strong bounce of 2 days of losses on the S&P 500. The epicenter of those losses in tech, in chips. The Philadelphia Semiconductor Index dropping yesterday by close to 8%. Biggest one-day loss in around 2 weeks or so, going into earnings a little bit later. We'll talk about that in a moment. In the bond market, switch at the board, 2s, 10s and 30s. 2s anchored around 420 this morning. Yields unchanged at 419.90. We've talked about this repeatedly. The Treasury Secretary, Scott Bessent, speaking in New York yesterday evening, raising questions about whether they've just given a green light for Kevin Walsh of the Federal Reserve to raise interest rates or not. Libby Cantrell of PIMCO was on a programme just moments ago, and she talked about the difference between style and substance. And I think they're the two camps right now following this Federal Reserve. Are we seeing a change in style or a change in substance with new leadership?
Right now, people are taking a look at the style and saying, yes, that. But clearly, on the substance side, it wasn't just the new Fed chair. It was also the members that are newly emboldened, not just to remove the easing bias, oh my, but also to bake in a couple rate hikes. And the idea that 9 of those members voted for that as the next move indicates where the mainstream on the Federal Reserve Committee is. I will say, though, the respect for the bond market coming from Treasury Secretary Scott Bessent gave people a sense that he's not going to push back. He doesn't want the howitzer on him.
He gets it. He knows what's going to happen. You get too dovish too quickly, bonds are selling off at the long end of the curve. They're not rallying.
This is a delicate dance. Right now, the market's giving a green light to hikes.
Let's turn to the bond market and then to the commodity market. To the commodity market, crude this morning backing off again, lower, 75 on Brent, 71 on WTI. We're almost wiping out the post-war rally. Diesel prices stateside dropping below $5 a gallon for the first time since mid-March. You see more of that, some better news going into the midterms for a White House shaken by a cost of living problem.
Absolutely, and it's why a lot of people think that if you do think there was the regime or the United States that blinked, it was the United States going into this. They didn't get all their red lines. They're only getting a willingness to talk about nuclear, and yet they were able to do this deal, which is why I think it's funny. To your point earlier, Lisa, the Senate coming out with this vote. Well, I'd hope the Iran war would be over, given the fact that the President of the United States has decided to no longer have sanctions on Iranian crude. So is that really a rebuke? Is that just getting in line with what this White House is doing?
I liked how Lisa asked the question while simultaneously telling us what she thought about the situation.
It was great. Pure Lisa.
Honestly, I was just stating facts. Just the facts, ma'am.
The facts down in D.C. right now. Let's get you some facts ahead of the opening bell. 2 hours away from the cash open. Some single names, some morning movers. Yahara has more. Hey, Yahara.
Hi, John. We start with Micron rebounding 3.3% in the pre-market after a more than 13% sell-off yesterday. Made it one of the worst performers in the S&P, but that's now behind us, and all eyes turn to earnings after the bell, where revenue is expected to quadruple, while profits are forecast to be more than 10 times what they were a year ago. So expectations are sky high for this name, which has been the biggest contributor to the S&P's rally this year. Speaking of high expectations, FedEx, a casualty of that this morning. Shares are falling 6.7% in the pre-market, even though profit beat and it issued a solid sales outlook. But after rallying over 30% heading into this report year to date, investors were expecting more. On top of that, management is warning that tariffs and inflation continue to be a headwind. And we end on a fun one, and that is the fast food chain Wendy's. Shares are rallying more than 28% in the pre-market. Yes, they announced a shakeup at the top with a new CFO, but that's only part of the story. This name is gaining traction on Reddit's Wall Street Bets, with traders zeroing in on a 23% short interest and a possibility of a short squeeze. Wendy's down 25% year to date. So we have erased all those losses, and it is now positive for the year. John?
Massive bounce this morning. Yahara, thank you. Appreciate it. On our radar this morning, some of our top stories. 3 candidates backed by New York City Mayor Zohran Mamdani winning Democratic congressional primaries, defeating some of the city's most established political figures in a broad anti-establishment push. Elsewhere, SK Hynix seeking to raise nearly $30 billion by listing its ADRs on the Nasdaq. If successful, the deal would rank among the top 5 share sales of all time. The South Korean chipmaker expecting US listing trading to begin on July 10th. And finally, the president, Donald Trump, calling for a DOJ probe into gas prices, accusing oil companies of gouging consumers. Trump posting on Truth Social the following: gasoline prices better start going down a lot faster. Prices at the pump are up over 30% since the start of the war in Iran.
This is clearly the point, right? I mean, ultimately, this is hard for me to sort of not necessarily say so delicately. The point being, this was the whole point, right? Look, the oil prices are coming down. This is a stimulus. Here you go. And it sort of shifts the focus onto the oil majors, say, bring it down further. It doesn't really go to the question of Iran and Strait of Hormuz and barrels going through. And this is pretty textbook, especially heading into the midterm election.
Whose textbook? The senator of Massachusetts?
It's every
Biden,
midterm election.
textbook?
It's every midterm election. But this was the one stimulus that people could imagine going into the midterm elections. It's lower oil prices. And clearly they want that to go down more.
Price gouging, straight out of the textbook of the last 4 years, the previous administration.
So Truth Social is one of the places I do have to check every time I wake up in the middle of the night. And I saw this and I refreshed and I was like, is that a Donald Trump truth? Because price gouging against oil companies was the exact language the Biden administration used during their administration anytime prices went higher and after Russia invaded Ukraine, and then they tapped the Strategic Petroleum Reserve, which you call the Strategic Midterm Election Reserve. It was the exact same language of the Democratic Party that now Trump is using.
And it didn't work with the consumer then.
Nope.
And you've got to ask the question whether it works for the consumer this time around.
Well, oil prices are going down, regardless of whether it's any oil major or whether it's just simply that more barrels are going through the Strait of Hormuz. Can it go down quickly enough? Ultimately, that's what we
Which is why I don't understand why he wants to pick a fight with the oil industry now. Gasoline is below $4 a gallon going into peak driving season. We are pretty much erasing the oil price spike we saw when the conflict started in February.
Yeah.
So I'm just confused why this morning, I think it was 12:30 a.m., he decided to pick a fight with Chevron, ExxonMobil, Marathon, etc.
Crude this morning down to 71, Brent at 75. Let's talk about the debt deluge. Facing some pushback, SpaceX selling $25 billion of investment-grade bonds and paying up to get it done. The company's bond maturing in 2036, pricing at a premium of 1.4 percentage points above Treasuries, roughly half a percentage point wider than the average spread on other BBB-rated debt. To discuss, a man in the know, joining us now is JP Morgan's global co-head of IG Financing, John Cervedea. John, good morning, sir. It's good to see you.
Good to see you.
That's a bit of a gut check, I think, for investment-grade debt. How do you think things went in the last 24 hours?
I think it was another positive signal of the availability of capital. If you just take a step back, so far this year, we've seen 6 transactions of $25 billion or greater. In all of 2025, there were 2. So the scale of the capital needs continues to grow. Everybody knows that. What we're really encouraged by is that the market is available and understands that and is positioning themselves on the investor side to make thoughtful investment decisions to help finance this secular trend that is, not going anywhere.
For obvious reasons, we won't spend too much time on this one single issue. Don't want to get you in too much trouble. But further out along the curve, the longer dated maturity, just how much wider that was trading relative to other BBB-rated debt, other BBB-rated peers. What's the takeaway from that? Doubts about the credit rating agencies? How were you thinking about that?
The way that we're thinking about the market generally, and specifically to your question, if you take a big step back, and this is no surprise, but credit spreads are at historic tights. And so in our view, across the investment grade credit spectrum, there should be differentiation based on different ratings and credit profiles. So one of the things that I take great comfort in is the fact that investors are not blindly buying everything, right? Yes, there's a tremendous amount of capital being deployed here, but investors are taking the time to do credit work, to understand the stories, and to figure out relative value and pricing. So to me, it's a healthy sign for the market.
How nervous are investors getting about the concentration risk that's developing, given that so much of this debt is tied to the AI story?
Yeah, it's something we're clearly watching very closely. We're still at a point where there's a lot of capital available and investors are figuring out how they want to play this theme. Again, as I just said, this is arguably the biggest secular theme in any of our professional lifetimes. So as an investor, you have to be a part of it. The question is how. And so I don't think we're at a point yet where concentration limits are a huge concern, But it is part of the dialogue because you're absolutely right. As a proportion of the overall market, it is growing and growing very quickly.
This is a reason why you're seeing a lot of companies look to tap every single corner, picking up, quarters in the couch cushions of Canada and the couch cushions of Japan. Yeah. And at what point is this capital coming from other bond portfolios versus new pools of capital, whether it be cash, whether it be equities, whether it be private equity? I mean, how much are you seeing that really unleashed?
Yeah. Well, as a debt person, the really exciting part of this for me has been there have been a lot more coins in the couch cushions, right? And so if you look across the global markets, we've led the biggest Canadian dollar deal ever done, the biggest euro deal, sterling deal. So these other global markets, which have always been there, have grown in relevance in a very material way, such that the available capital is much larger, which helps the overall ecosystem in terms of how we finance these massive CapEx numbers.
What's most attractive if you're going to do one of these offerings outside the United States, out of all of these countries you're talking about?
It is a combination of diversifying funding sources and demonstrating that as an issuer, you won't be solely reliant on the U.S. corporate bond market, which remains the largest, deepest, most liquid by a lot. In certain cases, there's a pricing benefit to it. In certain cases, it's just establishing a new investor base so that in the future, you can go back there. So it really is, again, helpful in the context of we're still in the early or mid innings of this.
Does it worry you when a company doesn't have cash flows that really compensate over the debt and over the expenses that they have? And yes, I'm talking about SpaceX, but there are a number of them that are probably going to be coming to market. I'm thinking if this is a model, we could see something similar from OpenAI and Anthropic. Once they IPO, then there's going to be a follow-on debt offering. How important is it for people to see the show me, the money, the sort of the cash flows that can continue in perpetuity to overcome some of these huge debt piles?
Yeah, it's going to be interesting to see as the story plays out. And you're absolutely right that the cash flow profile of many of these companies is very different from what your average investment grade investor is used to seeing. The reality is our investor base is getting so up to speed on all of these stories in and around the IPO that I think they're prepared to deploy capital as needed pretty quickly. Again, it will play out over time in terms of cash flow profile or what the CapEx curve looks like relative to servicing the debt. We're not there yet.
John, you've been in the market a long time. How would you frame this moment historically? Have you ever seen anything like this?
No. This is, again, to me, this is the biggest theme we've seen in a very long time. What's particularly exciting for me as well is the level of creativity that is required to finance all of this, right? If you go back 1 year, there was a very predominant market narrative that the hyperscalers would finance a lot of this through free cash flow. From there to several hundred billions of dollars of debt issuance around the world, a lot of asset level project financing, equity issuance in 12 months, that's an incredible journey as a capital markets person. And so for us, thinking about how to raise this capital in the most efficient way requires a lot more creativity, a lot more product agnosticism. It's not just if your capital need looks like X, then go to this market.
They're getting creative, and I wonder if there's something on your dashboard that would trigger concern. I don't think we're there yet, listening to you right now, but what would come up on your dashboard that would say, think things have gone too far? When would the red lights start flashing?
The red lights would start flashing if it felt like there was blind euphoria. And again, it does not feel that way. Whether it's underlying credit work or in project financing where it's looking at the actual contract terms, investors are doing the work and understanding what's actually happening here. If you move it away from the AI ecosystem theme, what we're all watching is, and I said this at the outset, is credit spreads are just historically tight. If you buy a generic investment grade bond today, 85% of your coupon is a treasury yield. And so effectively it's an enhanced treasury, right? And so I think about what that means in a rockier economic environment.
Well, the question we've been asking is why are people so much more comfortable taking the credit risk when the additional yield is so small? And they seem to be more concerned about the treasury than they are the corporate credit.
Yeah.
Are you hearing the same thing?
Yeah, and it's interesting. Part of it is corporate credit fundamentals in general remain very strong, and so there's a comfort level with that. But there is also just a tremendous amount of capital that has to be deployed. But I do think, again, even within the investment grade universe, there is differentiation. But you're absolutely right. It is, to me, that's what we're watching. It's a historically tight spread.
John, it's good to see you.
Great.
Clinic, you're a guy that does the work, and it's great to hear from you. John Servader there of JP Morgan. 85% of the all-in yield is coming from the Treasury. Now, we would typically say the risk-free component. Now, how risk-free that is part of the debate at the moment.
This is why people say when you start talking about all-in yield, you're talking about the Treasury yield more than anything. So at what point does that become an issue where people start to demand a greater coupon and you start to see some spread widening? I just think it's interesting that all the IPOs, they know that there's going to be a follow-on debt offering. I mean, everyone knows
Inevitable.
that and that sort of agnostic perception of markets. It's like you've got to be comfortable in every aspect and you need to be analyzing everything. It's a reason why no one's getting sleep.
No, Anne-Marie included. Just why she's so fired up when anyone questions her support of the New York Knicks.
I've been watching the Knicks even when I should have been sleeping.
Almost throwing the market.
Well, I did go to Game 3 and I did go to Game 5. I'm just saying it. I didn't see Tom Becker at any of these Knicks games. Actually, didn't go to any of them.
Write him a note. All right. Let's get you an update on stories elsewhere this morning with your Bloomberg brief. Bonnie Quinn has more. Hey, Bonnie.
Hey, John. Thank you. Goldman Sachs equities traders are on track to generate record revenue of more than $5 billion in the second quarter. Sources telling us here at Bloomberg the unit has been bolstered by a boom in activity in Asia. Goldman also benefited from the record SpaceX IPO. SoftBank's Masayoshi Son says the AI revolution has only just begun and is calling it a bubble, and saying that calling it a bubble is an insult. 68-year-old Son now delaying plans for his retirement, saying he'd hold on to the top spot at the tech company he founded for at least another decade. U.S. Treasury Secretary Scott Bessent expressing confidence in newly installed Federal Reserve Chairman Kevin Warsh.
I am confident that the Fed chair will optimize the path for both inflation and economic growth. And the president said that at the Chair Warsh's swearing in that he would be independent, that he should do what he wants.
Bessent predicting prices will slow now that U.S. and Iranian negotiators are working to bring an end to the war. And that is your Bloomberg Brief. John.
Hey, Bonnie, thank you. Appreciate it. Up next on the programme, waning AI optimism.
You have to have AI, hyperscalers, and OpenAI be able to build the revenues. And two, you need to build productivity in the economy enough for the capital markets to overlook all the disruption.
Up next, Jay Goldberg of Seaport, live from New York City. You're watching Bloomberg TV.
Anything we do in Africa is going to be more risky than the US. I think the approach we want to take is how are we being compensated for that risk? And one of those is obviously going to be a valuation question. In our minds, valuation is a lot more attractive in Africa, even if we adjust for some of those Africa risks that a lot of Western investors see. So yes, in a lot of ways, you take some of those models that, as I said, might be more asset medium or asset heavy. There might be some more inherent risks. However, if we're saying we're adding some risk because of that kind of model, but we're now solving a core problem as opposed to maybe a nice to have solution in Africa, that might actually offset it. Where if you're solving something that people really absolutely need and can't live without, in a way that then that's a lot less risky. So again, we'd encourage investors to have a less binary view. In other words, the US isn't risky, Africa is risky. That's going to lead to a lot of complications down the road.
Every weekday, Bloomberg puts the spotlight on a different aspect of global finance. Flows, funds, and the forces shaping markets on ETF IQ. The future of money with Bloomberg Crypto. the players behind major transactions on Bloomberg Deals, rates, risk, and the cost of capital on Bloomberg Real Yield, and personal finance, retirement, and wealth management on Bloomberg Money. A different topic every weekday, only on Bloomberg Television.
Key investors, top executives, global innovators. Join me for in-depth conversations with the biggest newsmakers on the day's top stories. Insight with Haslinda Amin, only on Bloomberg.
Bringing you up-to-the-minute global news whenever and wherever it happens. I'm Joanna Bersecci in El Ola, Saudi Arabia, and this is Bloomberg.
Equities right now, the S&P bouncing back by a third of 1%. On the S&P up by a third. On the Nasdaq up by 0.6. Check out crude. Headline just crossing the Bloomberg terminal. A break of 75 on Brent crude for the first time since the war with Iran began. We are taking out the post-war rally on crude this morning.
I think it's pretty incredible given the fact that the Strait of Hormuz just recently reopened, and it goes to show really a lot of work that was done during this conflict. There was a lot of doomsayers saying, you know, it's going to be incredibly challenging. We were living on inventories, but now, Jonathan, we are back to where the conflict started.
And everyone else has moved on very quickly, just to focus on tech and the trade a little bit later. Micron earnings coming after the closing bell. Many investors hoping the results will reignite the tech trade. Mandeep Singh of Bloomberg Intelligence joins us now for more. Mandeep, welcome in. What are you focused on a little bit later this afternoon?
I mean, look, pricing is what everyone is focused on simply because we have seen the demand really take off, and all these companies have been slow with adding capacity. In fact, we're talking about, 35 to 40% quarter-over-quarter increase in pricing, not just for HBM, but also for DRAM. And I would say, Apple talking about raising prices of their phone was another testament to how the supply-demand mismatch is really percolating across the board when it comes to consumer devices.
Mandeep, this massive raise to raise capital, we've been talking about it throughout the whole of this morning. Now SK Hynix looking to come to the US to do it on the equity side. We saw it from SpaceX on the debt side. We're laser focused on this, Mandeep, their ability to raise capital. Are you seeing any pushback?
Well, I think everyone went in with the assumption that, input costs will come down, especially for, commoditized chips and things that have been a commodity for the past 2 decades. That hasn't seemed to happen. And, that's where some of the assumptions are being tested is, will the input costs of basic chips, whether it's power chips or memory or networking, because AI is very demand memory and storage and all these chips, AI needs a lot of that. So when will the prices actually come down for the commoditized chips? That's what's being tested. And because of the compute intensity, it feels like it won't happen anytime soon because AI needs 10 to 100 times more of memory and networking than it used to in the past. And I think that's where the assumptions went wrong.
Mandeep, good to see you, as always. Mandeep Singh there of Bloomberg Intelligence, heading into these numbers a little bit later. The semis, the chip trade, in a bit of trouble in the last 24 hours. The Philadelphia Semiconductor Index down by close to 8%. NVIDIA, AMD among those leading this sell-off. Jay Goldberg of Seaport is the lone NVIDIA bear on the street, 180 price target. Jay, welcome back to the program, sir. It's good to see you. Are you seeing the story around this begin to shift, and what's behind that shift?
I think what we're seeing is a little bit of reality catching up with fundamentals. I think the overwhelming trade this year has been sentiment has been driving everything. Everyone wants to get in on the AI trade. I think there's been a lot of retail participation chasing the returns that investors have seen around some of these incredible runs that these stocks have had. And I'm a believer that AI is real. It's not a bubble exactly. The technology itself is very powerful and will yield benefits for the long term. In the near term, though, I think we could see some corrections just because things have gotten so far ahead of it.
Jay, what's the catalyst for that? Is it just the pricing pushback from some of the biggest buyers of these semiconductors, namely the hyperscalers?
I think what we're going to see is a lot of companies have gotten ahead of fundamentals, and we're going to see some of those correct this earnings season more than anything else, right? I mean, I look at some of the optical names. Like, we all know that there's a giant build out in optical coming for the AI data center. right? A huge increase in the size of the market, orders of magnitude increase. The problem is it's not coming until 2028, really. That's when the build out really starts. And optical technology is very difficult. In my career, I've been disappointed by optical many, many times. So the build is real, but the timing is going to be a little bit variable. And I think little imperfections like that will spook investors. And I think that will cause some form of reset to a little bit more reasonable trajectory.
To crystallize this, Jay, have we already seen the peak acceleration in earnings growth?
I think we're gonna. I think things will plateau a little bit, and some names will reaccelerate later. But I do think that there are. I think that's the prime concern around NVIDIA is what the question I get from investors most is what will the rate of decline in growth be next year?
That's the money question, Bramo, without a doubt.
Yeah. Right. And sorry, go ahead.
No, I mean, to me, this is the key question, and that's part of the reason why people have anxiety. And right now, that's the sense that people have, is that it can't go forever. And at a certain point, we're reaching peak saturation where suddenly people are thinking about price again.
Hey, Jay, it's good to see you, sir. Thank you. Jay Goldberg there of Seaport on the chip players, heading into Micron a little bit later after the closing bout. Some price sensitivity coming into the supply chain. Bit of pushback here, there, and everywhere, further downstream away from these players.
Yeah, if you take a look at the token prices and how it's gone down in tandem with some of the names that you mentioned, like Microsoft and Meta, it starts to highlight how people are starting to rationalize their use of some of these AI tools. At the same time, people said this would have to happen. The price of tokens would go down, that it would be democratized, everyone would be using it. So these are some of the uncertainties people need to hash out, just the rate of change and whether we already have seen the peak in that.
How close are we to some of these hyperscalers pulling back on CapEx? Some deceleration there, so to speak.
This is why people were seeing some of the layoffs at the likes of that we had seen from some of these companies. Maybe headcount in favor of CapEx.
Interesting. That's the story we don't want right
No.
on the labour market side at all. Coming up next on the programme, Joe Amato of Neuberger, Gil Luria of D.A. Davidson, Francis Donald of RBC, Daryl Kronk of Wells Fargo. The third hour of Bloomberg Surveillance up next.
Everybody has a moment where they put into action all they've practiced, where they step up to a challenge and either succeed or fail. But what are those moments for some of the world's most influential leaders?
It was a rough and tumble world, and I thought, okay, I can rise up, I can play this game, and I did play the game.
It was great, and it was depressing, and it was disappointing.
My chair at the time sat down with me and said, "Succession starts now."
I'm Francine Lacroix, an award-winning journalist. For the last 25 years, I've interviewed world leaders, bank bosses, even fashion icons. I'm often asking about the news of the moment. But I've always been curious, who are these people as leaders? Join me for the podcast version of Leaders with Francine Lacroix. I'll start your week with conversations that explore what drives the world's most influential people, how today's leaders got to where they are, where they're going next, and how they've transformed their organization in the process.
Make decisions. A poor decision is always better than no decision.
You have to have truth tellers around you, and you have to be willing to listen.
You don't want to be setting strategy in the middle of a transaction, that's for sure.
Do it for the right reasons. Don't do it because of FOMO.
We'll also learn lessons which we can apply to our work and daily lives. Tune into the podcast version of Leaders with Francine Lacroix. Listen and watch on Bloomberg Television or wherever you get your podcasts.
Good morning. This is Bloomberg Daybreak Europe. I'm Lizzie Burden in London, and these are the stories that set your agenda.
Taking you from the U.S. market's close to the overnight session in Asia, we'll walk you through what you need to know to kickstart Europe's trading day. Live from our European headquarters, we bring you the day's top market-moving stories, unmatched expert analysis, and on-the-ground reporting from across the continent. Tune in to Daybreak Europe, only on Bloomberg Television. Context changes everything.
My old mentor, Roger Staubach, who told me when I transitioned, football will never leave you, but you need to leave it.
Wow.
Everyone has a dream. And a lot of dreams are, my dream is to play football and play professional football, and you get the dream comes true, but it is going to end. And the day it ends, the day before it ends, you're one of the best in the world. Great. The next day you wake up, that's gone. What are you great at? And the truth is, nothing, right? I'm not great at anything else.
I talk about it all the time, Steve, is this whole idea of it's not from penthouse to penthouse. And what I mean by that is you played for 15, 20 years and you're in the penthouse. That doesn't mean that you come to the business world and you're going to be in the penthouse. You don't start on the third floor or the lobby. You actually have to start in the basement.
Tune in to Bloomberg Business Week Daily.
We got to talk crypto.
From the magazine that helps global leaders stay ahead.
What's the conversation around your company?
Bringing you insight on the people, companies, and trends shaping today's complex economy.
Planning very big things.
A new level of premium.
Plus global business, finance, and tech news as it happens.
The floodgates of innovation are going to open up.
You can't fake passion. You either are or you aren't.
Bloomberg Business Week Daily, only on Bloomberg.
Join me each week on Wall Street Week for stories of capitalism from business, markets, economics, tech, and climate. More than what you need to know, it's what you need to think about.
In 2 months, we've seen a historic melt up.
We still believe that most of what's powering the market is going to be earnings.
It's kind of the opposite of a bubble.
The near-term outlook for all the tech space is actually looking very, very good. The issue really is sentiment.
Volatility works both to the upside and the downside.
This is Bloomberg Surveillance with Jonathan Farrow, Lisa Abramowitz, and Anne-Marie Hordern.
Live from New York City this morning. Good morning for our audience worldwide. The third hour of Bloomberg Surveillance starts right now, and your price action looks like this. Futures bouncing back by a third of 1% on the S&P. On the Nasdaq, up by 0.6. On the Russell this morning, up by 0.4. Later on, earnings from Micron, the main event for this equity market after the closing bell. The main event right now, just check out crude. Oil dropping below $75 a barrel on Brent, down 3% this morning, wiping out the post-war rally of the last few months.
Yeah, a couple of things here. First of all, tankers are getting through the Strait of Hormuz again, and people are watching the tankers, not the rhetoric as much, and they're seeing something that they like. I want to bring back, though, what Dan Stryfen of Goldman Sachs said. I thought it was a really important point that they have seen a disproportionate amount of demand destruction coming from, in particular, China, but also in Europe, where people are buying electric vehicles. And the demand destruction is structural and is going to persist. And that, I think, is underpinning bullish calls, not just in the near term, but also 6-12 months out.
And even if you were going to look at the rhetoric and not the barrels, which are the most important to the oil market, and not just normal barrels that have been stuck, these vessels that have been stuck that are now being able to traverse the strait, but actually this administration allowing Iranian crude to sell on the open market at market prices, the rhetoric coming from this administration as well, talking about the fact that the president just this morning saying there are no tolls, that they're supportive of what's going on in the Strait of Hormuz. That also signals that they want to see this continuing, because the president also earlier this morning, 12:30 in the morning, annoyed with the oil companies because he wants to see what we're seeing on our screens in oil quickly move to the gasoline market.
He might be annoyed with the Federal Reserve a little bit later this year. Let's compare two things. Check out crude right now, the break below 75. So Brent at the end of February was trading in the low 70s. Big rally, big U-turn, all the way back to where we were. Got it. Turn to the bond market board and look at twos. The 2-year at the end of February was trading at 337. The 2-year this morning is trading at 418.26. We've had a massive repricing at the front end of the curve that has not done a U-turn in the same way crude has. It's more than just about oil. And this is going to be a problem for this institution, this White House, who's looking not just for lower prices, but also looking for lower rates, because that's not the debate in the bond market.
Core PC is going to really underscore that when we get that tomorrow. The expectation is for it to come in at 4.1%, an increase from 3.8%. People are looking at some of the hottest components of that stemming from the AI trade and some of the components that people are buying that are feeding into that. At what point is this market endorsing the idea of rate hikes? And I say that because you are seeing the long end of the yield curve coming in. You're seeing risk assets, yes, having some wobbles and some concerns, particularly some of the high-flying names. Nonetheless, not exactly a wholesale rebuke of what we heard from the Federal Reserve.
Bit of curve flattening this morning. 10's down by 3, 2's down by 2. The 2-year at 418. Coming up this hour, we'll catch up with Joe Amato of Neuberger with stocks finding a firmer footing. Gil Luria of D.A. Davidson on the next big test for chip stocks, and Francis Donald of RBC as Besson is back in wash. We begin this hour with stocks bouncing back following a tech-fueled sell-off, heading into earnings from Micron. Joe Amato of Neuberger writing, markets have priced in relief. They have not yet priced in the complexity of what comes next. Joe joins us for more. Joe, good morning. Good to see you.
Good morning.
Let's get to the what comes next. $1 trillion question. What comes next?
Well, in a whole range of ways. I think you've got, the Iran-U.S. situation, which I think is a fragile ceasefire right now. And I think people have put it in the rearview mirror a bit and moved on. You commented on oil prices, how significantly they've moved down. So, in the short term, that's good. I think we got to watch that because there's still a long way to go before a durable agreement is reached on that. Away from that, the economy is chugging along in a pretty good clip. And we're certainly seeing the continued investment. We're in the midst of a CapEx super cycle, which is massive, and that's going to continue for a while. Oil has done that. It's gone up, it's come back down. Yields have done this. Gone up, have not come back down. They've hung out up there. What gives? I think that's an indication of the strength of the economy, and certainly a sense that the Fed is a bit more hawkish than might have been expected, right? With Chair Walsh's comments last week. So. Right now, if you look at the range of economists, there's a bunch thinking there's going to be cuts, there's a bunch thinking there's going to be hikes, and there's some that are like we are, which is you're going to see rates stay reasonably stable from the Fed fund standpoint over the course of into 2027.
How much does that impact the CapEx story at all, tied to AI?
Well, when you look at the companies that are spending all this money on CapEx, their margins are so massive, a modest increase, whether you're doing financing at investment grade rates at 150 basis points or 200 or 125 doesn't really matter that much in the scheme of things. So, I think there's a bigger issue driving that build out, and the marginal cost of financing, I don't think it's going to slow that down.
If you're an investor, why wouldn't you invest in the equity of some of these AI names and then treasuries? Because ultimately, you're going to get the upside then from equities, but you have the ballast of the income from the treasuries, and you're not taking the credit risk that comes if, say, we don't get to Mars by 2066.
Well, there's a whole spectrum of risk and return that you can invest in, and different strategies have a mandate around.
Ramo, why do you want to buy SpaceX debt? Is that what you're getting at? Is half a point wide with another BBB rated debt enough compensation?
Is it?
Look, the market is pretty smart, right? So the supply-demand prices those financings. It was an interesting financing, certainly in the context of the amount of capital that was raised. And I think the broader picture is there is a massive amount of capital that's going to be needed over the course of the next number of years. When you think about the hyperscaler CapEx at $1 trillion plus going out a few years, you've got the defense build out in Europe. I mean, there's lots of capital demand. So I think that's also probably keeping rates a bit higher.
I remember some Tesla debt that was issued, 8 years ago? Do you remember that debt that was issued? And everyone was like, that's so tight, it's crazy. Look at Tesla and look at how things turned out.
Look, I've been skeptical with Tesla. I've been skeptical with Netflix. I've been wrong. I have been completely wrong. And these names have totally performed well. I guess, at what point do people start to get nervous when the demand to borrow is outstripping a lot of people's appetite to lend? And when there's so much competition, you start to wonder when people get nervous about that. And right now, it's evidently just me.
So the question you're asking is an important one. So right now we have a race for capital.
Right.
When does it become a competition for capital? Are you seeing signs of that showing up between, say, treasuries and elsewhere in fixed income and credit? Are we at that moment?
I think we're going to be at that moment over the course of the next several years as this CapEx build out continues to drive forward. So. There is a lot of liquidity in the system for sure, right? So I think that right now is keeping, the bond market reasonably stable as much as the short end is repriced, as you talked about. Long end has been surprisingly stable in the scheme of things. So, I think right now the market's receptive to that capital raising. These are companies that have incredible business models, unique business models, big moats around their business, but, that doesn't continue forever.
Well, in this kind of environment, though, how do you see inflation easing, even if we are seeing a significant drop in oil prices?
Well, I think you've got a few things going on with inflation. Our sense is that we've seen peak inflation, that it's going to grind lower as we move into the second half of the year and into 27, right? We've thrown a lot of things at this inflation calculation, right? We've seen tariffs, we've seen higher oil prices. We're starting to anniversary that stuff. So I think that's going to push, inflation back down closer to the Fed target, but it's a longer road than what we might have assumed going back 18 months ago.
What's your read on the Walsh Fed? We had a range of views. Change in style or change in substance?
I think it's an important philosophical shift, and I think Chair Walsh is the right person for the job.
Yeah.
I think he is going to be more forward-thinking, and I termed it more forward-thinking than forward guidance.
Okay.
So looking more out the front of the windshield, not just in the rearview mirror about what the data is showing, and being more responsive to what's going on in markets. I think, if we think back to Alan Greenspan, rest in peace, right? He never had a press conference. He was in Fed chair for 20 years, never had a press conference, right? There was no forward guidance. So the Fed can function without forward guidance, and I think you want to get into a dynamic where the markets are not responding to what they think the Fed may do in the context of how their guidance may change, but more reactive to what actually is going on in the real economy. And I think that's what Chair Walsh is going to push.
Can you achieve that transition without substantial volatility in between? Toothpaste back in tubes will be something people are talking about.
I think look, every new Fed chair is tested in some way or another. We can go back over many transitions in the context of the market environments. But we have in Chair Walsh a very experienced Fed executive, right? He was in the midst of the biggest crisis we've had in markets in a long, long time, going back to GFC. So we have a lot of confidence. Like the market has a lot of confidence in him to manage that process. I think we're watching the balance sheet. The balance sheet is an important element, right? He's made clear that the balance sheet has gotten too big. So the process of rationalizing that, I think, is going to take a while. But I think there's a pathway there that's important for the market to appreciate.
To simplify that, you buying the dip? I mean, when people get some volatility here, you buying the dip, or are you thinking that ultimately we're heading into a more volatile period with Fed policy, with inflation?
What dip, right? We've seen an interesting last couple of days in segments of the technology market, particularly the memory space and the semiconductor space, where you had a lot of froth, you had a lot of piling on, you have a lot of leverage in that system. So rationalization of prices, I think, is a bit overdue. We'll see how markets respond to Micron's earnings this afternoon. But, we've been on this broadening out theme for a long time, right? Which is as the economy broadens out in its economic development, take advantage of that. As companies adopt this AI technology away from the enabling companies, that's where the opportunities are going to be, not just in those companies that are producing chips or memory or things that are directly related to the AI build-out.
The 1.8% sell-off in the last 2 days on the S&P, that dip.
There have been big dips underneath there. I've been a skeptic about everything. But yesterday, my son graduated from high school, and there was a speech.
Congrats to him.
Thank you. That someone gave about how you know what to do when you want to get grades, when you want to get to college, then when you want to get into a certain career. But you don't learn how to take risk. And that actually taking risk with asymmetric upside is incredibly important. And that ultimately understanding how to take those risks, key. And I was thinking, I was really listening. Okay. I was really...
This is terrifying again. Are you getting bullish again?
No, I'm not getting... No, that happened. I've already got enough hate mail for that one. It was really refreshing to hear about that. So it's important. And it's exciting and encouraging to see people
Congrats to him, by the way.
Thank you.
And I've known him for a number of years, and he was ready to graduate like 10 years ago.
Well, I don't know about that. But it was interesting to hear some of the words of wisdom, and I was really internalizing them.
And best of luck for college to him and everybody else.
Thank you.
Joe, thank you. It's good to see you, buddy. Thank you. Joe Marta there of Neuberger. Let's get you an update on stories worldwide this morning with your Bloomberg brief. Here's Vonnie Quinn. Hey, Vonnie.
Hey, John. Thank you. President Donald Trump ordering the DOJ to look into gas prices. The president posting on Truth Social, the big oil companies are not dropping their price at the pump commensurate with the sharply lower prices they're paying for oil. Those prices are dropping like a rock. In other words, customers are being gouged. Meta is developing a prediction markets app called Arena. The New York Times is reporting the app would put Meta in direct competition with Polymarket and Kalshi. Now, users wouldn't wager money. Instead, they'd rely on a video game-like points system. Amazon Prime Day sales off to a slow start. According to a survey by market research firm Numerator, the average household spent about $89 as of yesterday afternoon, down about 16% from the same time during last year's event. And that is your Bloomberg Brief. John.
Hey, Vonnie, thank you. Thank you for the update. Up next on the programme, the morning calls, plus Gil Luria of D.A. Davidson with Micron earnings on deck in the next test for chip stocks. From New York City this morning, good morning.
At a time when policy in Washington is driving Wall Street, we draw a distinction between the rhetoric and the action, bringing you market-moving guests and original reporting. This is Bloomberg Surveillance.
Asia is at the forefront of some of the world's biggest stories. I'm Sherrian in Tokyo.
And I'm Heidi Stroud-Watts here in Sydney, where the trading day begins. We're here in the center of all the action to get you set up with the numbers, news, and knowledge you need for the day ahead.
The demand is indeed recovering. We've been waiting for this moment.
The opportunity of a century.
Join us on Bloomberg The Asia Trade. Weekdays only on Bloomberg TV. Context changes everything.
The countdown is on. Everything you need to get the edge at the end of the market day. Get ahead of tomorrow's trading with The Close. Weekdays on Bloomberg. Context changes everything.
Micron, such an important quarter relative to what we see in terms of demand. Ripple, what does that mean for NVIDIA, hyperscalers? Right now, demand and supply, call it 12, 15 to 1, which in my view just continues to believe like the chip trade is what you continue to own. You will see some push against price, but it's our view like over time, price comes down.
You're seeing that push right now. That was Dan Ives of Wedbush. Still bullish, of course. But we're raising concerns about the AI narrative as things starting to change. Equity futures at the moment bouncing back by 1/3% on the S&P 500, on the Nasdaq higher by 0.6. If we turn to fixed income briefly, 2s, 10s and 30s, your 2-year yield this morning at 417.85, down 2 basis points. Longer end of the curve coming in, we're down 4 on 10s. We're down by a little bit more than that on 30s, back down to 490 after breaching 5% a few times in the last few months. Helped out by this move. Crude down by close to 3% this morning on WTI, 71. And Brent, a break of 75, 74. 75 this morning.
Yeah, and we've seen that in terms of diesel come below 5%, $5 a gallon for the first time since the war started. At what point is this accelerating enough to give a further boost to the U.S. economy versus disinflation? And tomorrow when we get core PCE, that's going to be the key question. Are we seeing the peak in the rate of change of inflation, or are there other components that are now taking the charge?
This is pretty incredible that we're basically wiping away all the highs we saw and the significant increase in oil prices and energy prices right ahead of peak driving season and also travel season in the United States and around the world. And you can thank China for that.
Yep.
You can thank the jawboning, honestly, of this administration for that. On top of that, countries like the UAE that were able to still get some product out, probably with the help of CENTCOM. There was a lot more oil flowing than maybe we even realized during the height of this crisis.
Look, it's early days, things can change.
Definitely.
Admittedly, but the bulls had this view that we would have this post-war premium in the crude price. Maybe it's built in over time here. You don't see it this morning. Let's get you some morning calls. First up, Stifel lowering its price target on FedEx, seeing a lot of moving parts for the company after spinning off its freight division. Your second call from Morgan Stanley raising its price target on Cerebras, saying the company had a strong first quarter following its IPO. That stock is a struggle. We're down 8% again this morning. And finally, UBS boosting its price target on AMD, saying the outlook is becoming more positive for agentic AI use cases. That stock is up by 1.4%. Elsewhere, Micron trading higher in the pre-market ahead of its earnings this afternoon. The stock is up by close to 5%. Gil Luria of D.A. Davidson has a buy rating and $1,500 price target on the shares, writing Micron should be able to exceed consensus estimates easily, considering the increased demand for memory. Gil joins us now for more. Gil, welcome. It's such an odd story. The name is up by more than 250%. Now, typically after a move like that, I wouldn't ask a question like this. But Gil, is this stock still cheap?
Very much so. So to just put it in perspective, just 3 years ago, Micron generated $1 of earnings per share. By next quarter, they're probably going to be in a $100 of earnings per share run rate. And the simple reason is memory is not what it used to be. The importance of memory in AI is completely different than what it was before AI. Before AI, memory was just storage. It was a commodity component that was sold on an invoice-by-invoice basis. Now, memory is an important part of how AI models are delivered. The GPU needs memory at all levels in order to deliver the AI results that we're asking it to do, which is why there is such a shortage. there's really only 3 companies that make the high-end memory, Micron, SK Hynix, and Samsung. And it takes them a long time to bring capacity on board. So as Micron approaches $100 of earnings per share, and the shares are still trading at 11 times that number, that's not very expensive.
Gil, the nervousness comes after 269% gains so far this year. And as people take a look at how quickly things have risen and the fact that you can't see this pace of growth forever, what are you looking for to disprove the skeptics that, yes, this pace of growth isn't just ending, but is still accelerating?
They don't need to grow this fast. They don't need to grow 100 times over 3 years anymore. 11 times earnings is a very undemanding valuation. As long as they can keep this earnings power, they can justify this valuation. And there's much reason to believe that they can actually increase the earnings power from $100. Again, because the demand for memory continues to outstrip supply by a significant margin. And that's not going to change for at least the next year or two. So there's reason to believe they can continue to grow earnings from $100. They don't need to grow them very fast. As long as they're growing earnings over time, over the cycle from the current rate, they can justify a multiple that's twice as high.
Gil, how did you understand the story coming out of South Korea having to do with SK Hynix, the idea that they were de-emphasizing or decelerating some of their more expensive AI-related memory components in favor of accelerating their DRAM, which is used in pretty much all consumer products?
I think the right way to understand that is they benefit from there being a lot of supply at the high end. They understand that the high end, they're in an oligopoly with Micron and Samsung, and so scarcity there helps them raise prices. On the other hand, they have the threat of the Chinese coming in and providing memory for handsets and PCs, and they don't want that to happen because they know that it is always still a cycle, and when this cycle turns, they still want to have the biggest presence in the low end of the market. They don't want to cede that to the Chinese, which is why they want to make sure that handset makers and PC makers still have access to their chips, and that's why they need to increase supply there. So this isn't an indication of weakness of demand for high bandwidth memory, the high end, not at all. It's an indication of them strategically trying to keep Chinese manufacturers out of this market, even while there's scarcity, because they know at some point they want to go back to that market.
Well, what about the fact that we see Apple, though, having to raise prices because of just how difficult this market is becoming in terms of expense and also the ability to get a hold of these chips?
That's actually the best news we've heard from memory in a while. Up until now, Apple has said, don't worry about it. We get the insider price for memory. We're fine. It's not a problem. That's what they said the last couple of quarters. The fact that they're saying, no, we actually have to raise our handset prices, that's a permanent thing. That means they understand that memory prices have gone up and they're not coming back down. That is a very positive indication about the fact that memory prices where they are now and as they continue to rise are actually locked in for the next few years. Memory is no longer sold on an invoice by invoice basis. It's sold in long-term deals with the biggest companies, with Apple, Microsoft, Amazon, Google, Meta, et cetera. And that means that these higher prices are being locked in. That's actually very positive for these memory stocks.
Do you think that potentially is going to hurt Apple sales if they're going to have to raise prices of iPhones?
Absolutely. There has to be some demand destruction when prices go up. So that is a challenge that Apple's going to have to deal with. The good news for Apple is a $50 or $100 increase to the iPhone is a much smaller percentage than a $50 or $100 price increase on a lower end Android phone, which is their alternative. And so all other phones, all other handsets price is going to go up a lot more than the iPhone price is going to go. So from a competitive standpoint, memory prices going up is actually good news for Apple because it's going to make all the other products look a lot more expensive than Apple products.
Gil, just to put a finer point on it, though, if we've reached the point of demand destruction, how is that not bearish?
Because that's at the low end. Because that's at the very low end. Again, the demand destruction is mostly going to happen with the inexpensive commodity memory chips, where the high end, the high bandwidth memory, the chips that AI is running on, that's where the demand is headed. That's where the supply is headed, because these companies can generate far higher prices and far higher margins making and selling those chips. And again, that market looks to continue to grow. As long as the AI cycle continues to grow as it is, we're going to need a lot more memory proportionally, not just for the rate of growth that we're seeing in AI, not the rate of growth we're seeing in video. We're going to need to see a lot more memory growth than that, because models are currently constrained by memory. They don't have enough memory to provide us with the optimal results. They can't get enough memory, and therefore that high-end market's really where the value is at.
Gil, appreciate it, buddy. Thanks for clarifying. Gil Luria there of D.A. Davidson on the more constructive view here. It is amazing to sit here and talk about a stock that's up by more than 250% year to date. And we've got an analyst talking about why it's still too cheap. Kind of crazy. Difficult to get your head around.
This is a structural change where suddenly the concept of memory is shifting, and it's very difficult for people to keep up, which you've seen that in a lot of the tech space so far this year.
Up next on the programme, we'll talk about interest rates with Francis Donald of RBC as the Fed and the Treasury appear to align on a 2% inflation target and getting inflation lower over the next year.
Welcome to Bloomberg This Weekend. I'm David Gura.
I'm Lisa Mateo.
And I'm Christina Ruffini. We're tracking breaking news today from Wall Street to Washington.
Let's start overseas. The sector is really propelling this deal forward.
Yeah, the hope is this will open up new markets and provide some additional liquidity.
Of course, now they're going to have competitors. We got a big week coming up in politics.
Earnings season is underway. We're going to get some key reports.
Everything you need to know before the markets open on Monday.
Introducing Bloomberg This Weekend, bringing a little Bloomberg into your weekend routine.
Guys, buckle up.
When news breaks,
a redhead across the Bloomberg terminal.
Bloomberg has you covered.
Trump's global tariffs are struck down by the U.S. Supreme Court.
For all the context and clarity you need.
There's going to be now tons of tariff headlines until midterm elections.
Hear it first on Bloomberg. Get your fixed income fix. Watch Bloomberg Real Yield around the world right here on Bloomberg. Context changes everything.
Equity futures positive this morning by 0.4% on the S&P 500. On the Nasdaq, higher by 0.6. On the Russell, up by 0.4. In the bond market, more on interest rates in just a moment. Twos fairly well anchored around 420, but yields declining this morning. More at the long end of the curve. We're down 5 on 10s, down 5 on 30s. And Lisa, we noted this last week, some curve flattening. Seeing it again this morning.
Yeah, we're back down to close to the lowest levels going back more than a year. A question if this is a good sign, given the fact that people were concerned about the long end coming unmoored, or whether this is taking away longer-term growth in the U.S. by tightening policy at the front end. Right now, we're not there yet. We're not flat. We're not through that. We're not inverted. Nonetheless, that conversation, I'm sure, will come up.
On the margin, happy to drive some of this move. This morning, at least, is this move in crude. WTI and Brent down 3%. WTI at 71. Brent crude, a break of 75.
Break of 75, which means that we're erasing all the gains we saw since the start of the conflict. The Strait of Hormuz is open, and more vessels that were trapped are getting through. And not only that, Iranian crude is legally, basically, allowed to hit the market now. So to what you guys have been saying, we've been saying all week, don't look at what everyone's saying, look at what's happening.
Yeah.
And it's more barrels on the market.
The barrels are moving. I've noted this a few times, we all have. It's very notable that we've had this round trip in crude and you've not had a round trip in rates. That the 2-year is still, what, 80 basis points higher than it was since the start of the war?
And we'll see that more clearly tomorrow when we get core PCE, because really that is the one that's been driven higher, not by oil prices, but really what we've seen in some of the components when it comes to hyperscalers and the CapEx build out. I will just note that, yes, you are seeing right now the tightest 2s10s yield curve going back more than a year, as people expect the Fed to still have a reason to hike, even without necessarily that inflationary push from the oil prices.
2s10s at 27 this morning. 1 hour away from the cash open. Let's get you some morning moves, some single names. Yahara has more. Hey, Yahara.
Hi, John. We start with the main event today, and that is Micron. Shares are rebounding today, up 4.25% after a 13% sell-off yesterday made it the worst performer in the S&P. But all eyes now turn to its earnings after the bell, where revenue is expected to nearly quadruple from a year ago. So expectations are sky high for this name, which has been the biggest contributor to the S&P's rally this year. Turning to the AI chip maker, and that is Cerebra. Shares are falling 8.8% in the pre-market after it had its first earnings report as a public company. Revenue topped expectations, and its forecast came in above Wall Street estimates, but that not enough for investors after a blockbuster IPO, the biggest in chip history. And we end on Hertz, the rental car company. Shares are plunging nearly 20% in the pre-market after it issued preliminary second quarter results that came in below estimates. They say that rental demand is healthy, no surprise with the World Cup in full swing, but that losses on the sale of vehicles from its rental fleet will lead to lower earnings. John?
Is this all Freddie?
Maybe, yes.
Is it all Freddie making this happen? You've been tracking Freddie?
Yeah, I have, but he's not buying cars.
No, I'm talking about Hertz.
Oh, that Hertz. Their bookings are all good. No, but that's the problem with Hertz. I was actually looking at it. Like,
I was just talking about...
Yeah, transportation, renting. No, I know. You were taking it one place. I just
people,
totally undermined you.
If Freddie is real, I love people willing to, give him a lift or buy his airplane ticket.
Freddie was going to miss his game.
I know.
And then everyone jumps in and starts offering him a flight.
How much PTO does this guy have? I mean, seriously.
Well, he is German.
Independently wealthy.
You know, these
European, Bramwell. You get the whole summer off.
Yeah.
June to August.
June, July, August.
Why are we all?
June, July, August.
If you're not following Freddie, German football fan, apparently, because we still haven't seen his face, traveling America, loving everything about it and posting excessively on social media, and now everyone is gifting him things everywhere he goes.
Well, I love the excitement about things like gas stations and how big they are, especially in the Midwest or Michigan, and suddenly people got very excited.
Just discover Buc-ee's in
did you?
In Texas, and honestly, I also was very excited about stopping at gas stations after learning about that.
I said this the other day, I love this country, and I love that the other Europeans are coming out and finding out what this country is all about.
It's all about Buc-ee's.
Not Buc-ee's, but you know my point.
No, it's true. All of the little quirks.
Let's talk about interest rates. The Treasury Secretary, Scott Bessent, backing Fed Chair Kevin Walsh.
I am confident that the Fed Chair will optimize the path for both inflation and economic growth. And the president said that at the Chair Warsh's swearing in that he would be independent, that he should do what he wants.
The next read on inflation 24 hours away with PCE data just around the corner. Francis Donald of RBC writing, the new wrinkle in our outlook is Walsh positioning the Fed as keen to return inflation back to 2%. Should the Fed begin hiking, the heat under inflation may be more contained. Francis joins us now for more. Francis, good morning. Good to see you. Debate we've had so far this morning and over the last week is whether this is a change in style or substance, a change in policy or how we communicate policy. How would you describe it?
Certainly a change in style, and we'll wait to see whether it's a change in substance. But John, our take has always been follow the data. The data will tell us where central banks are going to go, give or take a little bias to one side or the other, 25, 50 basis points. And right now, the problem is inflation, which finally we have a chair of the Federal Reserve, which is calling it out. 30% of the CPI basket is running above, 40% of the CPI basket is running above 3% right now, including food, daycare, healthcare, even pet services are running above 3%, way away from that Fed's target. And there is more inflation in the system outside of energy. This is a central bank that is going to have to contend with that. But more importantly, this is an American people that is going to have to contend with ongoing inflationary pressures in core services all the way to food. And this is a central bank that is finally acknowledging there is a problem here and something needs to be done about it.
Can they address the problem, Francis? How rate sensitive is that demand that's leading to this price pressure?
Well, this is the challenge. There is a lot of breadth under inflation. And who's bearing the challenges of that? Well, it's low and middle income Americans. And while our take has been that the inflation issue is not really an energy issue, that has been one compounding factor. What's happening under the surface is there are cracks starting to form amongst low and middle income Americans. That savings rate has dropped pretty precipitously since the start of the energy crash. We've seen an uptick in credit usage. Real wages have gone more negative. And so there are signs, yellow flags, I would say, for low and middle income Americans that are struggling. Now, if we raise interest rates, it's a catch-22. And this is a central bank that hasn't really had to deal with this challenge of the K-shaped economy, which is being divided by demographics and also by income uses. So this, I think, will be Warsh's biggest challenge, not inflation. If it was straightforward inflation and the regular pre-pandemic economy, you could hike interest rates, bring down. But now, with a very weak bottom 90% of American consumers, you hike interest rates just too far, you risk a much bigger slowdown in the consumer.
What's a bigger hit on the income of lower income consumers, Francis? Interest rates going higher or the way that inflation has ticked up in a number of different components?
I'm continuously worried about food price inflation, and a lot of our leading indicators tell us there is still some impact coming from that, from the conflict in the Middle East that will be more lagged. Food inflation is one of those pieces of inflation that Americans see every single day, and they cannot substitute away from it. Sometimes we see some moves from beef to chicken to peanut butter, but everybody has to eat. So keeping your eye on food price inflation is going to be critical. And here's the big challenge: is that part of my job is to talk to everyone from hedge funds who are looking at headline inflation and how rates are pricing that in, but all the way over to CEOs. Now, markets are going to be very relieved because inflation has probably peaked in headline terms. And by Q2 of 2027, once we get to the summer of 2027, our call is that headline inflation will be sub 2%. But if you're a CEO running a business, particularly one that's exposed to consumers are still going to be struggling with price pain that isn't going backwards. So you're going to get a dichotomy here between headline inflation that maybe soothes the Fed, maybe soothes markets, but doesn't impact real America. And navigating that transition is going to be challenging through the rest of 2026 and into 2027.
Are you seeing any, for lack of a better phrase, trickle down from the hyperscaler investment, the CapEx, et cetera, to middle and lower income, just average consumers, given the fact that so much of the growth has really come from there? And if you strip that out, the U.S. would probably be in a shrinking type of condition.
Well, we wouldn't be shrinking, but we certainly wouldn't be close to 2%, which is about where we see the trend economy going right now. That 2% is coming, of course, from this massive infrastructure build out. It's also coming from big government and, of course, the savior of the headline consumer, which is that top 10%. What's going to continue to matter for consumers and why we think that the U.S. economy can persist at 2% is because the labor market is very, very tight. That will continue to be the most important thing. And the labor market is going to stay tight and has nothing to do, or almost little to do, with what's happening in AI. It has to do with mass retirements, a shrinking labor force participation rate, and a consumer that now is not going to be judged on whether they have a job or not, but are they making enough money and working enough hours in order to pay for life? So you've got many structural themes that are happening under the surface, and the core message I have for clients is don't use the pre-pandemic way of thinking about a cycle as a good element or a good way to think about where the economy is going to go next. These structural trends from AI to labor force participation rate declining are changing the way we have to think about the American economy, and it means that markets are going to react differently, and businesses are going to operate differently.
Well, when it comes to the Federal Reserve, I mean, Kevin Moore said the monetary policy is somewhat restrictive in some sectors. Them raising interest rates is not going to hurt the AI build-out, but might continuously restrict those certain sectors like housing.
That's exactly right. Monetary policy is a poor tool for an economy that is fragmented by sector, by income group. And we've seen this. We've seen central banks across the entire world who are struggling with what do you do when your regions look very different? What do you do when your incomes look very different? For now, the mandate of this central bank is price stability, and labor, but Fed Chair Warsh should maybe put that to the side for a little bit. And if your mandate is inflation, then that's what you got to target. So the biggest risk moving forward to me is not a huge move in the bond market. It's not a collapse of the U.S. economy. It's what happens to middle and low income Americans in a hiking environment. In our view, it's probably going to take a lowercase k economy and move it to an uppercase k economy.
Interesting. Thank you. As always, Francis Donald there of RBC, framing this situation for this Federal Reserve, very focused on above target inflation. We're having this conversation about higher interest rates against the backdrop of higher targets on the S&P 500. This time yesterday, we were talking about Barclays going from 7,650 to 7,800 on the S&P year end. JP Morgan, earlier this morning, going to 7,800 from 76.
That is a 6% upside from where we are currently. So it's not exactly a runaway gangbusters type of forecast. Nonetheless, they said that year-to-date consensus on earnings growth has increased. They go back to earnings, which is what we hear again and again and again. And they go on to say, look, this is nonlinear. And I look at SK Hynix and I say, that's nonlinear. That's all over the place. But this is something that people keep coming out with. This isn't just sort of a runaway bullish call. This is, things could get choppy. But if you take a look at the earnings, it seems to be delivering.
More nuanced view on earnings for next year coming from JP Morgan. Below current consensus, they say reflecting the risk of diminishing AI-related pricing power. That's a story potentially for next year.
Yeah, but people are saying that's not this year. But this is what people are seeing in terms of the fear. And this is what was underpinning some of the volatility, particularly with semiconductors. Are they starting to see the hyperscalers push back on price? Are some of the consumers that are borrowing bandwidth and large language models from the hyperscalers, are they pushing back on some of their token usage? And this is the story that's getting a little bit of anxiety, not for this year, but maybe 2020.
Dubravka, Lekos Bujas and the team over at JP Morgan at 7,800 from 7,600 on the S&P 500. Let's give you an update on stories worldwide this morning with your Bloomberg Brief. Vonnie Quinn has more. Hey, Vonnie.
Hey, John, thank you. A big win for New York City Mayor Zoran Mamdani. 3 of the Democratic Socialist mayor's favoured House candidates swept to victory, including former City Comptroller Brad Lander. He unseated 2-term Congressman Dan Goldman in the 10th district with almost 66% of the vote. SpaceX closing a $25 billion bond sale after raking in $90 billion in investor orders. The company's bonds maturing in 2036, pricing at a premium of 1.4 percentage points above Treasuries, roughly 0.4 percentage points wider than the average spread on other BBB-rated debt. In sports, Cristiano Ronaldo becoming the first player to score goals in 6 different World Cup tournaments. Ronaldo ended his scoring drought with 2 goals in Portugal's 5-0 win over Uzbekistan, giving him 10 career goals in the World Cup. And that is your Bloomberg Brief, John.
Tons of games later on today. Scotland, Brazil, 6 p.m. Eastern Time.
Are you going to be watching?
I'll be watching that.
Who are you rooting for?
We know.
We know.
We know. So why are you asking?
It's exciting. I think that it's really exciting. I mean, honestly.
It's a delicate story.
Yeah.
Okay.
Who's going to win?
Brazil.
He's voting for Scotland.
You'll get in trouble.
What do you think happens if you marry a Brazilian, Bramo?
I know, it's
you
true.
support the other team.
I mean, you could just for fireworks, you know?
Hey.
Are you not entertained?
Happy wife, happy life.
It's true.
Peaceful home.
Go Brazil.
Brazil winning.
Yeah, he even has Brazil jerseys.
Come on.
I know he does. Everyone has Brazil jerseys. In Brazil, it's like a uniform.
Just ready to go. Okay. Up next on the programme, setting you up for the day ahead, plus Darryl Cronk of Wells Fargo expecting a slowdown in economic growth.
We should not deny that change is coming. And change is not coming just in data centers and AI. As a world, we are building infrastructure, we're building energy, we're doing energy transmission, we're building next-gen manufacturing, we're ramping defense, and we're doing this thing called AI and data.
Yes.
We will see the largest need for capital ever. And that's what we've seen so far this year. And so now to your specific question, it's about underwriting. There are a number of very strong US tech companies who run diversified businesses, Amazon, Google, Microsoft, who are interested in seeing these centers built and are interested in not consolidating the debt on their balance sheet. And to the extent they are prepared to lend their credit, one can lend against those types of things and make sensible underwriting decisions.
The world's most powerful investors don't ring a bell. They quietly reshape entire industries. This is the money shaping the world. The Dealmaker playbook, where power and billions of dollars change hands every day. From private equity and credit to venture capital and M&A, we bring you the inside scoop on the biggest deals and debates, plus exclusive conversations with finance's ultimate insiders. I'm Danny Berger, and this is Bloomberg Deals. Every week, only on Bloomberg Television.
From the world of politics to the world of business, Joe Matthew and Kaylee Lines deliver news, insight, and analysis live 2 times a day, every trading day. Balance of Power at 1 and 5 Eastern, only on Bloomberg.
Bringing you up-to-the-minute geopolitical news whenever and wherever it happens. I'm Jennifer Zabasaja in the Lesotho Highlands, and this is Bloomberg.
The rate of change is going to be challenging for the market to sort of parse through and to contemplate on earnings for Q2. You know, can they really keep pace with this sort of 20+% earnings growth rate or not? And then you have overbought conditions. You have a lot of momentum out there.
That was Aaron Kennard of Clear Harbor Asset Management joining us on the program a little bit earlier. In the equity market at the moment, positive by about 1/4% on the S&P 500. The opening bell 42 minutes away. Your trading diary stacking up as follows. A few things, notable things to look out for. At 3:30 Eastern Time, you'll hear from the President. He's meeting with the NATO Secretary General Mark Rutte. After the closing bell, the main event for a lot of you in this equity market, earnings from Micron. You'll hear from the President again later this evening at 8:30. Tomorrow morning, very heavy program on inflation. PCE data just around the corner. Inflation is too high. It's why consumer sentiment is so low. You'll get UMich consumer sentiment going into the weekend. You'll get that data on Friday. Darryl Cronk of Wells Fargo expecting the S&P 500 to reach 7,900 by year end, writing our targets expect somewhat slower economic growth globally and a steeper yield curve through 27. Daryl joins us now for more. Daryl, good morning. Good to see you.
Good morning, John.
Where's that steeper yield curve coming from?
It actually, we think, probably comes from the short side coming down, the 2-year at 421, because we don't think the Fed and Chair Walsh are going to be able to raise interest rates like the bond market is priced in now, right? So we took out, obviously, from earlier this year, the 25 basis point cut that was priced in later this year. We put in 40 basis points of hikes. We took the 2 to 10 year spread from 73 basis points down to 28 this morning, right? It's too flat. It's too much of a flattener. We think the yield curve steepens back out, and we think long rates are too low. I mean, if you take the term premium, inflation premium, and growth premium and stack them, I get to a 5 number pretty easily on the long side of the curve.
OK, let's deal with the individual parts of the curve independently. Okay. So that's the long end call. I want to deal with the front end. You said, I don't think they're going to be able to. What do you mean by being able to?
Well, $70 oil this morning, right? Inflation is going to come down, right? I don't think they're going to get to the 2.5% number that everybody else wants to. It's ironic that you watched oil come all the way down, which should put downward pressure on inflation, and yet yields have just stayed right where they are, right? They haven't budged a bit, right? Let's call the 10-year 4.5 and 421 on the 2-year, right? All else equal, those things should have been coming down as you reprice inflation expectations down, and they're simply not, right? Which is why the long end, we think, is going to stay higher. But eventually, can the Fed increase rates one time later this year, or maybe 2? One time is just symbolic. It doesn't do anything really for monetary policy.
What do you think the communication of the last week is just symbolic?
Yes. I think it's part of Chair Walsh establishing his independence, new sheriff in town, right? And wanted that message to come through. Obviously, it's been well discussed, all about price stability. Didn't hardly utter a word about the labor market, right, or anything associated with it. I do think the interesting thing, though, as we get into the second half of this year, is this kind of juxtaposition between economic growth, which has been really pretty soft, right? I mean, remember, fourth quarter was 0.5% for the U.S., 1.6% in Q1, and then you got this earnings growth that's 20, 25, 30% parabolic, right? You usually don't have that environment. It's a really unique environment.
How predicated is your 7,900 target on the S&P on the idea that the Fed will not be able to hike rates?
It's priced in there, yeah. I mean, I think we have 0 hikes for this year. So we have Fed funds staying exactly where it is. And part of getting to 7,900, in fairness, is that 0 hike. So if they hike the 40 basis points that's priced into the Fed funds futures curve this morning, then I think that number has to probably be lower for 12/31.
Do you think right now the equity market is saying we don't believe that the Fed is going to hike rates, and the bond market is saying, oh no, they're going to hike twice?
Yes, but that's always the case, right? I mean, and look,
so who's the smart money?
Everybody is so wound up, this week, this morning, yesterday, about this tech sell-off, and it's not a sell-off, right? I mean, if it was a true sell-off, banks wouldn't be breaking out, REITs wouldn't be breaking out, small caps wouldn't still be doing well, credit spreads would be more.
You think it's a rotation within equities?
It's a rotation within equities, and that's all it is, right? And you shouldn't play it for more than that.
Is it a buy the dip moment for these names?
Yes, but we think there's probably more weakness coming through the summer months, right? I mean, I do think when you get into Q2 earnings season, the bar is so incredibly high, particularly in the tech sector, that I think there's some disappointment there in price. You get into some seasonal period of time. So I think you'll get a cheaper moment to put that next marginal dollar to work in the tech sector than today, as we're sitting here. But we still like that sector overall as part of what we don't like is small cap. And what's interesting is, so Friday we're going to rebalance the Russell indices. The top 10 names in the Russell 2000 small cap all don't justify being there anymore. They're all above the high water mark for what they should be, right? So they should all graduate to mid cap or large cap or whatever. And that's 47% of your small cap return, right? So if you let that go, and they won't do that all at once, but if you let that go, you're just continuing to dilute the integrity and the quality of that index.
Well, let's finish with what you do like. I know what you like. It's financials. It's one of your core calls for this year. At times this year, it hasn't really worked.
It hasn't worked.
Why do you think it's going to start working?
All the fundamentals are there. Part of it is predicated exactly on what we were just talking about, the steepening of the yield curve, right? Because financials do very well on the steep yield curve. Obviously, when you look at the big banks that benefit from sales and trading and investment banking activity, that's hitting on all cylinders. We know what M&A is doing. We know the IPO environment.
Morgan Stanley, Goldman, those names doing great.
They're doing great. I think what's not doing great, it's ironic as you start unpacking, the financial sector at the lower levels. What's not doing great are the payment processors like Visa, MasterCard. What's not doing great is Berkshire Hathaway. What's obviously not doing great is some of the alternative asset managers. So it's a very bifurcated world. If I look at the large and regional banks right now, they're actually sitting close to highs and breaking out from here, right? But in fairness, it's still one of the few GIC sectors. As we came into this morning, there's 4 GIC sectors that are now negative year to date so far, right? Most people wouldn't realize that when the market's been as strong as it has been.
It's true. Darryl, it's good to see you.
Thank you.
Thoughtful stuff. Darryl Cronk there of Wells Fargo. It's been really odd. You've seen big gains for the likes of Morgan Stanley, Goldman through much of this year. Up until recently, you had several big names in the sector trading negative on the year. Only just recently, Bank of America, JP Morgan now up by 4 to 5%, I think, for 26. Things starting to move, but big divide between those names within that index.
And they've been punished for actually spending more on CapEx and on technology, even as they see potentially investors talk about this as being something that is helpful in the long term. At what point are they starting to be rewarded? And ultimately, how much is that predicated on the idea of the steepening yield curve as well?
The World Cup later on this afternoon on Micron. I can offer you Bosnia versus Qatar at 3 p.m. Eastern time.
I mean, you know where I'm going to be focusing on.
Switzerland versus Canada.
Oh, I'd be interested.
Might be fun.
Yeah, that would be good.
You guys are trying to take any kind of heat away from Micron. This is going to be front row kind of box office
stuff.
You're making it the new NVIDIA.
Good stuff.
It is right now.
You're doing a watch party, Bramo?
I absolutely am doing a watch party.
Okay.
I think it'll be fantastic. We'll have little chip hats.
Nice. We'll be watching the World Cup. And then I'll read through the Micron earnings a little bit later.
What do you think? Like little black.
In one of those hydration breaks, so I'll read the Micron earnings.
Love it.
Okay. Coming up tomorrow, Sebastian Page of T. Rowe Price, Osen Kwan of Wells Fargo, Liz Ann Saunders of Charles Schwab, Stephanie Roth of Wolf Research from New York City this morning. Good morning. Thank you for choosing Bloomberg TV. This was Bloomberg Surveillance.
Technology is embedded in every aspect of our lives, and that revolution is playing out in real time. From finance to defense tech, AI to entertainment, from the road to the stars. Bloomberg is bringing you the stories of companies and people that are pushing tech to new frontiers and the politics reshaping global tech markets. I'm Ed Ludlow, live in San Francisco, and this is Bloomberg Tech.
Every weekday, only on Bloomberg Television.
Do you mind being called an ideological lunatic or a bunch of left-wing nut jobs?
I've been called worse things than that.
Oh! You'd think she owned the place.
23andMe, I think, is so incredibly valuable. We're coming back.
It had that kind of detective story feel to it. When you're hot on the trail of something, you know that it's very exciting.
What magazines were you reading as a kid?
I don't think I was reading magazines until I was in them.
You are on the cover of all of these.
Oh, and there's many, many more, but we just don't have time.
Why should people trust you?
I don't think anybody should trust any company or entity completely with any of this.
It's very uncomfortable. Artificial intelligence is this force that is far bigger than we are.
I want to build better businesses around these brands.
The shock will never wear off.
So you're a brother and sister running one of the most powerful companies in the world. When you argue, who wins?
No one. The way I could see AI being banned or blocked is if something really went wrong. And if something really went wrong, then maybe it deserves to be.
So is it Paradise Ahead or Gattaca?
Maybe somewhere in the middle.
Look at the more successful economies in the region. The key to their success is continuity. But the way our Constitution is written, it actually encourages a lack of continuity. And that's a problem. The terms for local government is 3 years. When I first became a congressman, it takes you a few months to learn the business and to make your connections, to network, etc. If, for example, you are not particularly favored in the majority, passing a law in a year and a half is not that easy to do. After about a year and a half, you already hear that there's somebody in your district beginning to campaign and is going to oppose you in the next election. So you have to go back to your district to take care of that. And how much work do you get done?
Bringing you up-to-the-minute space news whenever and wherever it happens. I'm Ed Ludlow at NASA's Kennedy Space Center in Florida, and this is Bloomberg.
Welcome to Wednesday. 30 minutes till the start of the cash trade. I'm Matt Miller.
And I'm Danny Berger. Bloomberg Open Interest starts right now.
Trade, Micron takes the earnings spotlight after the bell.
In the meantime, South Korea's SK Hynix plans a landmark U.S. listing to fund its AI expansion.
And oil extends its decline while President Trump demands a DOJ investigation into gasoline prices.
A painful day yesterday with most of those chip stocks selling off. It was pretty much the only thing that dragged down this index yesterday. Micron is rallying this morning, Matt. It's going to give earnings today. It's up 3.7%. Maybe some sell the rumor, buy the news. I mean, it will depend on what the earnings do. But this has somehow become the pillar of the stock market. We've gone from like waking up every morning asking what NVIDIA is doing to asking what is Micron doing.
This is buy the rumor, and then sell the news happens at the earning.
But we sold the rumor yesterday, you know?
Okay. We'll get it straight. OpenAI just announced its first custom artificial intelligence chip developed in partnership with Broadcom, which shows up to 50% more processing cost savings in stores now.
Exciting.
Get yours while supplies last.
Sure, I cannot afford one. Let's discuss with Bloomberg Tech host Ed Ludlow. Ed, a variety of things to discuss. Maybe we start with just that breaking news there. It feels like everyone is trying to look to lower their costs. Companies are pushing back. Is this just Broadcom trying to solve that riddle?
All of the above, but from OpenAI's perspective, the point of having Jalapeno, that's what it's called, is to diversify. OpenAI, just like everyone else, is still very dependent on NVIDIA compute, but everyone is also in an environment where they are compute constrained. They need more, and so seeking alternative sources, including custom silicon or ASICs, is a good route. The pitch of working with Broadcom on ASICs is that, you know, on the measures that matter, $1 per kilowatt basis or $1 per token basis, it is a better performing system than what is out there from the market, i.e. NVIDIA right now. But that's all on paper. So the plan is for OpenAI to deploy these chips in time in existing Microsoft data centers. But like, as you guys know, the economics require scale. So like, this is something they've moved very fast on, faster probably than anyone has taken an accelerator from design through to deployment on. But it's just a diversifying strategy rather than a put your eggs in one basket strategy.
The key, I guess, is that the cost of compute continues to move lower. SK Hynix is out raising or seeking to raise $29 billion. This cash grab just continues, right? I mean, for the AI build out, we're going to need trillions of dollars. And you just saw SpaceX come to market for, I guess, in total, about $100 billion. Now SK Hynix wants to gather another 30.
So SK Hynix pursuing a US listing is kind of multifaceted. Yes, there is the sheer need for capital, which they will use to increase fab capacity for high bandwidth memory. SK Hynix has a 57% share of the market for high bandwidth memory. It really matters. But there are other strategic reasons for doing ADRs on the NASDAQ, which is what we're reporting they'll do as early as the second week of July, close the valuation gap with Micron and Samsung. Even though SK has that greater market share, Micron and Samsung, for one reason or another, have been able to command a greater valuation premium to SK. And so it gives exposure to American investors who, we cover this on the program all the time, right, guys? Like the AI trade in the US is probably a bigger thing and has been a longer story than how it's played out in the Korean market, at least, which, yes, the Kospi was the best performing index of the year so far prior to the correction of yesterday or Tuesday's Asia session. But there is still some catching up to do in this sort of PR around it. And so exposure to the American investors is a big play here.
Well, yesterday's session also took down Micron with it. Ed, just how important are today's earnings going to be?
Yeah, this is the AI trade in these earnings. You know, the numbers almost don't really matter because the same high bar is applied to Micron as it has been with NVIDIA. But memory is still the bottleneck. And so, you know, like there is a little bit of crystal ball here where Micron's bullishness in outlook and guidance gives the broader market sort of some comfort or lack of comfort about the trajectory of where capital expenditures are going. And it really is right now a split between capital expenditure deployers and capital expenditure receivers. And Micron being you know, a really big capital expenditure receiver because HBM directly correlates the amount of compute installed.
All right, Ed, looking forward to your program. Ed Ludlow hosts Bloomberg Tech every day at 11. We're going to check back in with him, though, at the top of the next hour because there is so much tech news to talk through today. Let's get back to the old economy, though. FedEx shares are slumping this morning after reporting a drop in profit margins and warning of inflation and trade headwinds. Bloomberg Intelligence senior logistics analyst Lee Klaskow joins us. And Lee, why do we see margins dropping? What's the shipping story in America or globally?
Yeah, I mean, you know, if you were just talking about the demand outlook, you know, they painted a pretty decent demand outlook. You know, they mentioned on their call last night that they weren't seeing much demand destruction from the rising oil prices globally, which is a bit of good news because they were a bit cautious about, you know, the impact 3 months ago. And so, you know, they feel like, you know, they've weathered the storm in terms of demand destruction, so that's a very good news. And there's, you know, some bright spots when it comes to B2B, business-to-business volumes, as the build-out, bringing into your technology discussion earlier, the build-out of data centers, you know, they're seeing a benefit from that of moving all the important components that go into those around the world. So, you know, I think the demand outlook is relatively okay. I think the knee-jerk reaction that we saw in the aftermarket last night and this morning is really based on, you know, the company provided its first calendar year guidance for the full year. At the high end, it was about $18.10. I think the whisper numbers on the street was slightly higher than that. And also, you take that into consideration, coupled with the fact that the stock has really outperformed the broader S&P this year. It outperformed by at least 30 percentage points. So it's had a strong year to date. So maybe people are just taking some profits, you know, off of the news. You know, looking forward, you know, I think FedEx is really well positioned for a number of things. First and foremost, you know, they just recently spun out their less than truckload business. They were the largest less than truckload carrier, FedEx Freight. Now that that's a standalone company, the management can really focus on you know, building and growing and making more productive its core business, which is obviously the global parcel business. And I think that's good news for investors. But like nearer term, there's, you know, probably going to be a little bit confusion with people's models because we're waiting for some of the older calendar year data, which management and the company is going to provide in August. And you're going to see a lot of sell side analysts kind of adjusting their numbers. But, you know, net, if you look at the second half, they're really, you know, if you look at their full year guidance, it's around a 17 to 20% EPS growth for the second half, and that's going to be more weighted in the fourth quarter because of obviously peak season demand.
All right, Lee, thank you very much for that roundup. Lee Klaskow from Bloomberg Intelligence post FedEx earnings. President Trump has ordered the Justice Department to look into gasoline prices, saying that they aren't falling fast enough. In a Truth Social post, he said gas prices better start going down a lot faster than what I'm seeing. Trump spoke yesterday at a rally in Pennsylvania, saying traffic through the Strait of Hormuz is picking up and described it as an oil gusher.
Yesterday, 19 million barrels of oil flowed out of the Strait of Hormuz. The average price of gasoline nationwide is down 60 cents a gallon just from a short while ago. And remember that our oil in the middle of this conflict was less than it was for sleepy Joe Biden. And we're putting out a fire.
Joining us now is Bloomberg Washington correspondent Tyler Kendall at the White House. Tyler, does the pressure just ramp up on President Trump to try to figure something out, especially as the Senate did a symbolic vote, but a vote nonetheless to end this war?
That's a really good point, Danny. At this point, we do know that the political pressure has been mounting on this White House when it comes to costs. And we see the administration take these moves, including President Trump instructing the Department of Justice to look into retail gasoline prices, as he says that they're not falling as quickly as he would like to see, appearing to accuse big oil companies of engaging in alleged price gouging. Now, I believe that WTI is down about 25% so far this month, compared to 14% for retail gasoline. The national average is now hovering just below $4 a gallon, according to AAA. But we should say that gasoline prices don't adjust immediately to crude oil changes because the effect has to move through with the supply chain. It can actually take weeks to get from the pipelines to the processing to the distribution. Plus, gas station operators see their margins shrink when there are quick climbs in wholesale costs, so they tend to lower prices more gradually after a shock because they have to think about those margins when they're setting their final price at the pump. But it does underscore that the administration is trying to find some ways here to bring relief to the American consumer, as a new poll out from Fox News shows that only 12% of U.S. voters feel that they are getting ahead financially at the moment. Matt and Danny, affordability was the focus before the conflict in Iran, but it is even ramping up more so now that the two sides are negotiating on this memorandum of understanding.
Yeah, I mean, to that note, we saw the House pass a bill, a bipartisan vote on affordability around, I guess it focuses around housing, Tyler. And even in the Senate, you had some Republicans, I think only 4, but enough, cross the aisle to support a War Resolutions Act.
Yeah, and plus, Matt, you have President Trump going to Capitol Hill today, where he's going to face those Republicans in person for this closed-door meeting, though he is expected to sign this housing bill into law. There's a few different threads that we could pull on here. One, this housing bill is something that both sides of the aisle are looking to stake their claim to as we head into November, and this is, of course, a top issue for voters, though experts do tell us that it may have a more muted or at least a delayed impact because it does take time to increase housing supply, and it's also shown us some of the limits that the federal government has when it comes to perhaps streamlining some of those regulations at the local level. Plus, it doesn't include any new funding, which some housing advocates have said could ultimately delay the process. But it was considered to be a very substantial and long-awaited win. In fact, the most significant piece of legislation related to housing in decades. So you'll probably hear President Trump today tout this as a major success. But you're right, he's also dealing with this mounting pressure from Republicans in the party. 4 of them did cross party lines and vote in favor of this resolution. It's non-binding, so it's really unclear if it would really have an impact, but 2 very symbolic moves from Congress in the last 24 hours.
Tyler, thank you very much for that. Bloomberg's Tyler Kendall at the White House. Let's get a check on your equity markets this morning. 20 minutes until the start of your cash trade. We declined yesterday, again led by semiconductor stocks. In fact, it was the first time we had a decline by more than 1%, where the majority of stocks actually gained yesterday, just to show you how narrow that downside was. But we rallied this morning. The NASDAQ bounces back slightly, up 0.1% as we wait for Micron earnings. 10-year yields, those go lower by nearly 7 basis points as oil keeps falling, down 4%.
Yeah, NASDAQ 100 down 3.3% at the close yesterday. Let's get a look at some of the individual stock stories we're following for you. Chipmaker Cerebras.
Feldman, they needed so much data center storage back that they had rented some out, and then they rebought it back from that client because they're like, oops, we actually need that. So they ended up paying a lot. Elsewhere, Alphabet will replace Verizon in the Dow Jones Industrial Average, which actually gained yesterday in that sell-off. The Dow did.
And the delicious Ohio-based burger chain Wendy's appointed a new CFO, and the company is getting plenty of attention on Reddit, as well as stock twits as a result. In almost a meme stock move, the shares, I think it is actually a meme stock move, the shares rally 30% in the pre-market.
Delicious. Coming up, AI spending heats up. We discussed the 2 companies leading the $850 billion boom on future data center leases. That's coming up next. You're watching Bloomberg Open Interest.
Welcome to Bloomberg This Weekend. I'm David Gura.
I'm Lisa Mateo.
And I'm Christina Raffiti. We're tracking breaking news today from Wall Street to Washington.
Let's start overseas. The sector is really propelling this deal forward.
Yeah, the hope is this will open up new markets and provide some additional liquidity.
Of course, now they're going to have competitors. We got a big week coming up in politics.
Earnings season is underway. We're going to get some key reports.
Everything you need to know before the markets open on Monday.
Introducing Bloomberg This Weekend, bringing a little Bloomberg into your weekend routine.
Guys, buckle up.
We are dealing with supply issues, and so therefore fertilizer, the planting season, food security is high up there, but so too is fuel and energy. So yet again, as we had with Ukraine, the energy crisis, the food crisis, the cost of living, and that kind of fiscal space needs to be created for countries that are going to be dealing with the debt crisis. They are still repaying their debts. Inflation will result in interest rates that will put many countries in jeopardy on the debt issue. So we're looking to find solutions here from the IMF, from the World Bank. There have been many offers of the windows and facilities that could be put at the disposal of countries. But I think at this stage we need scale. Many countries are still recovering from the previous shocks, and some of those crises are not over yet.
Up to the minute geopolitical news whenever and wherever it happens. I'm Jennifer Zabasaja in the Lesotho Highlands, and this is Bloomberg.
Key investors, top executives, global innovators. Join me for in-depth conversations with the biggest newsmakers on the day's top stories. Insight with Haslinda Amin, only on Bloomberg.
Let's get to high interest now. Look what's making headlines around the world. 3 candidates endorsed by New York City Mayor Zoran Mamdani won Democratic congressional primaries. Among them was former New York City Comptroller Brad Lander, who unseated 2-term Congressman Dan Goldman in the 10th district with nearly 66% of the vote. The wins underscore the growing influence of Mamdani's political movement. The investor who posted a 900% gain during the global financial crisis has a new big short. Lee Robinson is betting against insurers, including Lincoln and MetLife, because of their exposure to private credit. Robinson's firm, Altana, is launching a fund designed to protect against what he sees as an inevitable downturn in private credit, fading AI hype, and tightening liquidity. Lincoln didn't respond to a request for comment. MetLife pointed to recent comments by its CFO on the quality of its private debt portfolio. And Meta and Microsoft have committed tens of billions of dollars to data center leases, pushing total commitments by the largest cloud computing companies above $850 billion. As Danny was just saying, Meta added $79 billion in new commitments in its most recent quarter. Microsoft added $41 billion. These future costs, which include facilities such as offices or warehouses, won't appear on companies' balance sheets until they begin making payments on them. Danny?
Joining us now is Mandeep Singh, global head of technology research for Bloomberg Intelligence. And Mandeep, I combine this with the Cerebras earnings. I was talking to Matt about this before, that they had to rent back some of their capacity because they're like, oops, we actually don't have enough to fulfill our commitments. It feels like we are just still so far from having the infrastructure we need, and everyone's throwing money at this thing and scrambling.
Well, I mean, I look at this AI infrastructure build out in phases. I think so far the companies were really focused on training these models. Last 6 months with Anthropic and, OpenAI showing how much potential there is on the inferencing side in terms of generating revenue, things have changed in terms of just sheer demand that you need for inferencing workloads. And you don't need giant clusters like Colossus 1 and 2 that SpaceX built for training. Now it's about really latency, minimizing for latency, and making sure you can serve the inferencing workloads in a way where companies will start using it. So that's why these large hyperscalers are signing so many leases, because it's not just about getting the GPUs and setting up big clusters anymore.
By the way, would latency be an issue when inferencing data from space?
It will be an issue. I think that's where it's not feasible. I mean, we can talk about orbital compute.
Well, what was your take on Masayoshi Son yesterday, or I guess Tuesday in Asia, making a point that although it may be an amazing game changer 10 years from now, currently data centers on Earth are the most important for winning the AI race?
And I would agree with him. I think because AI is so compute intensive, and you probably have heard me say that multiple times, like no one is able to realize how much compute is required for, you know, even a basic chatbot query. And we're talking 10, 20 times. Jensen has been very vocal in highlighting that aspect. But that's where we are seeing so many shortages across the board, because no one planned for, you know, compute really going up 20, 30x. And the models are actually doing a lot of processing to serve an answer. And that's where, you know, a Cerebras-like company will say, if you use a lot more SRAM, it's a costly option, but it's going to optimize for latency. Whereas somebody else may be minimizing more for cost. So you serve the traffic different ways just to make sure, you know, you're optimizing for whatever goals you have.
By the way, my ChatGPT, Geppetto, yesterday estimated that I use about 200 million tokens a month.
Okay.
So that's a lot.
That is a lot, and you're not like doing codecs or coding things.
This is just like deep research on what car I should buy.
Maybe you should be using one of the lower tier models.
Tiers?
Yeah. I mean, speaking of that, OpenAI says that its new chip that it just unveiled this morning with Broadcom, a 50% cost savings. I don't know. What do you do with that? Does that make this chip more popular if it's not going to be as expensive, the compute that you get out of it?
Or is it just for OpenAI to use?
Oh, that too.
I mean, everyone wants to emulate the Google model with TPUs because CapEx efficiency is what will determine your gross margins and profitability when you are an LLM player like OpenAI or Google. And that's where Google has a great advantage. Even though they don't have the best models, they're the most CapEx efficient. So OpenAI is reliant on NVIDIA. They want to show that we can make our own chips with Broadcom. And it'll be 50. I mean, I just doubt it. The first version is going to be as good as, you know, the seventh version of GPUs.
Who gets access to this? Because, I mean, obviously, to Matt's point, it's a partnership with OpenAI. And then I was also thinking about this in the context of deals, because OpenAI has this partnership with a bunch of private equity funds. And part of the whole thing would be like, we'd give you first access to really good models. So maybe they get first access to the cheaper chip. So it's like they unveil this.
Jalapeno.
Does this really lower the cost of compute for that many OpenAI customers?
I think, again, you can tier your customers, the use cases, and that's what all of these, if you want frontier capabilities, you use NVIDIA GPUs because you want to minimize for latency. If it's a use case that can be done in background, you're willing to wait, maybe the cheaper option is to use OpenAI chips and, you know, you don't really optimize for latency.
All right, Mandeep, thank you very much for joining us. Mandeep Singh runs our tech coverage globally at Bloomberg Intelligence. Why were you thinking about that in the context of deals?
Well, it happens to be a Deals Wednesday. And we actually have the CEO of B Capital on, who's more of kind of like a VC fund, but they're part of this OpenAI deploy code. So I'm going to ask him about it.
I will look forward to your program. Danny's hour-long deals extravaganza kicks off at noon today. Coming up on the other side of this break, BlackRock's Gargi Chowdhury joins us as JP Morgan lifts its year-end S&P 500 price target again to 7,800. This is Bloomberg Open Interest. At 9:30 a.m., the market tells you what it's really thinking.
We beat the drum to the opening bell.
With deep analysis of the forces driving the price action.
Focusing investors on what really matters.
Where the money flows, which markets are changing.
Conversations with players shaping the narrative.
Innovative growth companies gravitate to NASDAQ.
It's not just like, let's buy the Mag 7 or AI.
That's a really compelling story.
This is where your trading day begins.
And this is Open Interest.
Only on Bloomberg.
Bringing you up to the minute news whenever and wherever it happens. I'm Sherian in Seoul, and this is Bloomberg.
From the world of politics to the world of business, Joe Matthew and Kaylee Lines deliver news, insight, and analysis live 2 times a day, every trading day. Balance of Power at 1 and 5 Eastern, only on Bloomberg.
Technology is embedded in every aspect of our lives, and that revolution is playing out in real time. From finance to defense tech, AI to entertainment, from the road to the stars. Bloomberg is bringing you the stories of companies and people that are pushing tech to new frontiers, and the politics reshaping global tech markets. I'm Ed Ludlow, live in San Francisco, and this is Bloomberg Tech. Every weekday, only on Bloomberg Television.
At a time when policy in Washington is driving Wall Street, we draw a distinction between the rhetoric and the action, bringing you market-moving guests and original reporting. This is Bloomberg Surveillance.
Check on the markets ahead of the opening bell after big drops yesterday. I mean, the S&P was only down 1 point.
Some people would say that there's maybe a little bit of a bubble in AI. When you have companies with market caps of $5 trillion, you don't see any bubble there at all?
Whenever we have an acceleration in technology and people get excited about it, you have significant capital formation around new companies that are trying to capitalize on that opportunity. And we've seen this before through history, and you're seeing it now. It won't be a straight line. The opportunity set with AI is enormous. There will be winners and losers. And it's hard to pick the winners and losers now. And certainly a lot of the capital that's being deployed will not produce adequate returns. And a bunch of the capital that's being deployed will actually not produce any returns. But it's hard, it's hard to call the timing on these things. And the thing I'd point to just from a historical lens is in the fall of 1996, Alan Greenspan talked about irrational exuberance in stock markets, and the NASDAQ was at 1,300. And the NASDAQ peaked 3.5 years later at over 5,000. So, these things can go on for a long time, but ultimately, there are adjustments, there will be drawdowns, there'll be rebalancing, and just, it's hard to call it because the technology trend and the investment is real.
Good morning. This is Bloomberg Surveillance.
Welcome back to the opening trade.
It's Bloomberg Money.
This is the Asia Trade.
This is Wall Street Week.
Welcome to Balance of Power.
You're watching Bloomberg Deals.
Welcome to Bloomberg This Weekend.
This is Bloomberg Television. It's a multi-trillion-dollar industry. We'll show you what's happening in ETFs like no one else. ETF IQ, only on Bloomberg.
We are moments away from the start of trading. This is Bloomberg Open Interest. I'm Matt Miller. After massive drops yesterday, again, 3.3% on the NASDAQ 100. We have futures peeking their heads up today. So S&P futures up 1/10 as our NASDAQ 100 futures. You hear the opening bell. You can see on the New York Stock Exchange. I believe it's a nonprofit, Roads to Success. They're empowering groups, a whole group of people, I'm guessing, for 25 years. Lynn Martin looks like she has the day off. Down at the NASDAQ, the Andersons celebrating 30 years of being a publicly listed company. This stock has doubled in the past 12 months. Over the past 30 years, Danny, if you invested $10,000 in the Andersons, you would have, I think, like $385,000 today. It's up 3,600%. Yeah. And I mean, that assumes that you reinvested your dividends, but it's an annualized 13% gain, so that's pretty good. That's like a very, very good hedge fund, right?
Right. I'm just thinking about how the name sounds like a 60s sitcom, The Andersons.
Yes.
Yeah. That's all I got for you. I'm looking at Micron at the open because you pointed out how the NASDAQ fell a lot yesterday. It was because of the stock tumbled 13% yesterday. It's going to give us a peek into its financials today. We'll get earnings. What does it mean for the demand for the chip world? If you look up SURP Go on your terminal, pulling up a stock, it gives you what the implied volatility is for this thing. 10%, which is child's play, considering it moved 13% yesterday.
All right, I'm watching. Obviously, I'm going to watch Micron as well. I will be glued to my screen at the close when these earnings come out. But back to the old economy. FedEx shares are actually turning around to a gain. They actually beat on profit expectations. The problem in the pre-market was that they reported a drop in profit margin expectations, warning of inflation and trade headwinds. But it looks like in the cash trade, at least for now, they're down. They were up for a second.
Good effort.
Let's bring in Gargi Chowdhury, BlackRock's chief investment and portfolio strategist for the Americas. And I do want to talk about the inflation issue because, President Trump said after this war is over, oil and gas prices are going to drop like a rock. And we have seen that now. Brent crude is under $75 a barrel. National average for gas prices down below $4. Are we going to see inflation come down? Is that a problem in the rearview mirror?
Matt and Danny, it's great to be here. So before we talk about the impact of gas prices, I do want to point out that even before we got the Memorandum of Understanding, we were already seeing some very positive signs in the CPI data that came out earlier this month. We already have seen the tariff impacts coming out of the data. We've already seen some very positive signs in shelter inflation. And our economics team in our global fixed income business are already talking about this PCE print that's going to come out later this week being the peak of core PCE and then eventually getting back closer to sort of that 3% level. Not the Fed's target, but some positive news already. So on top of that, on top of the deceleration in housing, on top of the negative print on core goods, we're also now going to probably have a headline print that, based on where gasoline prices are, is going to be quite negative. I think this is great news for the markets. I think it's great news for those investors that have been paying attention to sort of clipping coupon in the fixed income markets. And I think that's exactly what we're seeing, a lot of demand for fixed income and a lot of demand for risk assets.
When do front-end yields start paying attention to that? I mean, they were up 9.5 basis points yesterday after the FOMC.
But now's a good time to show my chart. Now's a good time to show my chart.
Please, Matt.
And it's actually not my chart. As I mentioned mentioned before the break, Torsten Slok put out a note in which he posted a chart of, you know, the oil price coming down and the 2-year yield going up, and you would expect that as we get relief on inflation, that rates come down at the front end as well. Here's the chart.
Yeah, absolutely. So we all know that there are many things that drive markets at any given point of time. Oil is just one variable. I would also argue that a big driver of rates market recently has been that FOMC meeting. Again, I don't want to call it Kevin Walsh specifically, but broadly a view of a hawkish FOMC meeting just based on the projections of rate hikes. And I think that's what has led to that repricing in the front end, which frankly we think is a tremendous opportunity to own fixed income in the front end and the belly of the curve. There's so much cushion there right now. Yields in the front end, and a ticker like SHY, which is really focuses on treasuries in the front end of the curve, can move up 230 basis points over the next year, and you have enough carry that you will not lose money. So this is an opportunity, and many things drive rates, not just the price of oil.
Well, I was listening to Max Kettner of HSBC this morning on Bloomberg Brief, who maybe was I've been listening to Matt Miller of Bloomberg Open Interest, because he said this idea that Matt's brought up. You have task force, and that ultimately is dovish, because you can kick until later this year, and the outcome of the task force end up looking something more dovish. I wonder if you have a similar thesis and what that timeline means for a bond market rally, for a treasury rally, and just how severe any of that could look.
Absolutely. So we've all been part of task forces in our careers, I'm sure. You are put in a task force. Task forces usually go and change something. You never keep things stable if you're a part of a task force. So let's all be clear that the inflation framework, the communication framework, balance sheet, we're going to get news. But the good news here is it buys him time. I do not like the market's pricing in a hike as early as July, and many people are out there talking about a hike in July. I think that's really hard to see if he has put these task forces in place. Maybe the risks of a hike have gone up, but I think that we've bought ourselves time till the task forces come back by the end of the year with some takeaways.
That's only good news, to be clear, if you think inflation is already on the right track. Because then it's not good news that you put a committee together to waste time and do nothing while you should be raising rates to fight inflation.
Assuming that the data we have today and the news that we have today remains on this path. So assuming that oil prices remain here or go lower, assuming that everything that we've learned about shelter inflation and tariff inflation remains the case, then that is true, that they shouldn't be raising rates immediately. On top of that, let's also recognize that, obviously the labor market has been very solid, but job growths have come from just one or two sectors of the economy. That is something that Chair Powell had certainly talked about. Chair Walsh has not yet, but I think that's something that market participants should pay attention to. The job market is fine, but it's not on every single engine, and inflation is decelerating. And I think that makes a case for a much longer pause at this juncture. Maybe at some point it leads to a hike, but I think at this point it very much points out how much opportunity there is, especially in clipping coupon, being in the front end of fixed income, in the belly of the curve, looking at active strategies like BlackRock Income, as well as SHY, which I just talked about. You have this tremendous amount of carry.
When it comes to opportunities in the equity market, just wait for fixed income for a moment. I was looking at the Citrini note that he put out just a couple moments ago, James Van Geelen and the team there, basically saying that there's this attention tax on AI, that investors care so much about it, money is flowing to it, that we've started to neglect other parts of this market and this economy, that there are these other small themes that might emerge that investors for the moment are overlooking. He points out things like airlines and I believe he has home builders on here as well, senior living. I just wonder if you see that too. With all the hype in AI, are there parts of this market that we're ignoring?
I think that the hype in AI is not just hype, but it's absolutely related to cash flow and earnings that are coming through. So I don't want to call it hype. I want to say that this is a real opportunity. Having said that, there is some truth to the fact that we absolutely are focused on one area, and that's why days like yesterday, when we have that memory pullback, there's so much focus on that, but no one looks at the fact that actually the S&P equal weight or 6 of the 11 sectors were up and majority of the stocks were up. So I do think there is For right reasons, clients are focusing on AI. That is a good thing. But at the same time, we think there's opportunities outside of just the AI or the memory or the semiconductor names as well. And we've been telling investors to stay up in quality. Large cap is the focus here, and really finding opportunities within large cap where there is positive earnings growth and that broadening earnings growth story coming through.
To that point, we were talking about JP Morgan raising its price target again, now to 7,800, which feels like not high enough compared to a lot of other people on the street. And I'm not asking you for a target, but it just seems like there's so many tailwinds. I mean, the one big beautiful bill, right? Scott Bessent was at the Economic Club last night talking about the fact that for national security reasons, we're trying to bring all of these industries back. The White House is getting seriously involved in it. Earnings estimates keep going higher and higher and higher. Like, isn't there so much reason to be bullish on this economy?
I think there is reason to be bullish, and where you being bullish selectively, I think, is really important. And obviously, we've talked a lot about the AI trade and the large cap trade.
Does it have to be selectively? Can't it just be like buy the
if rates stay higher for longer, which again, we're making the case that it does, then do you necessarily want to be in the parts of the market that are extremely interest rate sensitive? I would argue not. So it's not buy everything. It's certainly buy large cap. It's certainly focus on what we call the durable growers, that focuses on infrastructure, that focuses on energy security, that focuses on AI. It's not everything. It's certainly not parts of the economy that are more interest rate sensitive. And I'll also say that you made this point, but also to reiterate that NGDP right now is above 5%. That's incredible at a time when we are seeing, call it 20% by the end of the year, 20 or higher percent earnings growth. This is a great time to be in parts of the equity market, but also, like we saw yesterday, there are periods of pullback. So adding diversification is key. Fixed income is one, inflation hedging is one, but also looking at things that give you sort of absolute return without taking a lot of directional risk, like our IALT ETF ticker that has gathered a lot of interest.
What's the ticker?
IALT. So it's our systematic alternative ETF, IALT. Again, what you're doing here is really not taking that beta risk to the equity market, but getting returns. I think in moments like yesterday, when people look at the market and they get a little afraid of these massive pullbacks, having something that gives you non-correlated returns is more and more important.
Yeah, yesterday was remarkable to see such big declines, but the majority of stocks were actually higher.
Exactly.
To your point.
So there are opportunities. Stay large cap for sure, but add diversification into your portfolio.
This is why we have you in.
Yeah, this has
Thank
been
you so much.
Yeah. This has been so brilliant. So brilliant. Gargi, thank you for joining us. That's BlackRock's Gargi Chaudhuri. Let's get a quick check on your equity market at the moment. Is breath any better today? Let us see. It certainly is. 344 stocks are up, 157 are down for a gain of 0.2%. Broadcom, a big winner today after announcing a partnership with OpenAI to create what they say are chips that are 50% more efficient. Amazon Alphabet, some of the Mag 7 does well after struggling along. To the downside, Micron has now flipped to losses, down 1% after declining 13%. We'll get their earnings after the bell. A lot of the Philadelphia Semiconductor Index constituents are declining today alongside oil as oil prices fall. By the way, it's not on the S&P, so we don't have it. I think Wendy's was up like 37%.
Wendy's.
And then it hit a trading halt because of that volatility. And apparently we're back trading again.
As much as 42%. Crazy. Because have you had a Frosty? Have you had a chocolate Frosty?
I can't even dig into my mind the last time I had Wendy's. I don't even know if I've had Wendy's. I honestly cannot remember.
I'm going to get you a Baconator and a Frosty after the show.
Oh, I might not survive that. I think my cholesterol levels might go through the roof. Oh, by the way, energy is down, healthcare's up.
All right, good look there at the S&P. By the way, breadth wasn't bad yesterday, as you mentioned earlier.
I mean, like it was bad in that we declined only on a few stocks.
Yeah, no, I mean, that's to your point. Yesterday we had, I think, almost 300 stocks up and 200 down, and yet the S&P was off 1.4%. So really interesting look. Coming up, Bloomberg Intelligence sees Micron revenue and guidance beating expectations by more than 10% each. The analyst behind that call joins us next. This is Bloomberg Open Interest.
at the more successful economies in the region. The key to their success is continuity. But the way our Constitution is written, it actually encourages a lack of continuity. And that's a problem. The terms for local government is 3 years. When I first became a congressman, it takes you a few months to learn the business and to make your connections, to network, etc. If, for example, you are not particularly favored in the majority, passing a law in a year and a half is not that easy to do. After about a year and a half, you already hear that there's somebody in your district beginning to campaign and is going to oppose you in the next election. So you have to go back to your district to take care of that. And how much work do you get done?
Asia is at the forefront of some of the world's biggest stories. I'm Sherrian in Tokyo.
And I'm Heidi Stroud-Watts here in Sydney, where the trading day begins. We're here in the center of all the action to get you set up with the numbers, news, and knowledge you need for the day ahead.
The demand is indeed recovering. We've been waiting for this moment.
The opportunity of a century.
Join us on Bloomberg The Asia Trade. Weekdays only on Bloomberg TV. Context changes everything.
Join me each week on Wall Street Week for stories of capitalism from business, markets, economics, tech, and climate. More than what you need to know, it's what you need to think about.
When news breaks,
A redhead across the Bloomberg terminal.
Bloomberg has you covered.
Trump's global tariffs are struck down by the U.S. Supreme Court.
For all the context and clarity you need.
There's going to be now tons of tariff headlines until midterm elections.
Hear it first on Bloomberg.
The trading day is about to start.
And you're already looking for that edge.
The opening trade brings you everything you need to know as markets open across Europe.
Let's talk about significant risk transfers to find space in their balance sheet.
Hedging some of that risk.
You could look at it the other way. Obviously, this stuff is risk-weighted.
I would much rather be long than be short.
We're in a kind of sweet spot.
Very, very strong alignment.
3 revolutions in one.
I'm Guy Johnson.
I'm Anna Edwards.
And I'm Tom McKenzie.
This is your opening trade.
Every trading day, only on Bloomberg.
Time now for our top call. Some of the analyst action in focus this morning. First up, Mitsuho cuts Apogee Therapeutics to neutral from outperform after being acquired by AbbVie in an $11 billion deal. Analysts raised the price target to $135. So price target up, rating down, which is interesting. Next up, Goldman Sachs reinstates Twilio as a buy with a street high price target of $300 a share, citing AI improvements to customer service and software. Twilio, which just rang the bell, up 3.2%. Finally, Take-Two gets a buy rating from BTIG, citing optimism around Grand Theft Auto 6, which begins pre-orders tomorrow. Mark your calendar. Danny, are you a Grand Theft Auto? Are you a player?
I used to play video games a lot.
What's your gamer tag?
My gamer tag? I don't have a gamer tag because I would just play on my own. I wouldn't play with other people that I would be afraid would say abusive things.
No, you got to go on Xbox Live.
It's
find
a scary
me at
place.
Shower Fan.
Shower fan. Okay, great. Good to know. Let's talk about Micron. It has a high bar to meet earnings expectations and prove to investors that demand will hold up as rivals like SK Hynix slow expansion of AI memory chip production. Bloomberg Intelligence analyst Jake Silverman expects Micron revenue to beat consensus estimates by 13%. He's with us now. Jake, that's a pretty punchy number. What gets Micron there?
Yeah, I think it's entirely on pricing at this point. They're pretty limited in terms of the amount of supply that they can offer their customers. So pricing has just continued to go up based on the contract pricing that we've seen, based on conversations we've had. Just continues to increase, continues to go up and to the right. And a lot of this is really just AI demand driven.
So they're supply constrained. What does the demand curve look like? Does it just keep ramping up? Is the slope like that? Or at what point does it start to roll over?
Well, so it's interesting. So you have a couple of different factors going on. So you have the general demand for PCs, smartphones, consumer-related products. But you also have, I would say, accelerating AI demand. It's not just high bandwidth memory, although more high bandwidth memory reduces capacity for standard DRAM because it requires more wafers. But you're also starting to see demand for AI servers that require other types of memory like GDDR and LPDDR, which are not high high bandwidth memory. They're closer to the standard memory type. So really, we're starting to see demand accelerate. The question is really not does demand start to drop off necessarily, and that could happen based on, say, hyperscaler capex, but really it's more of a question of how much more supply comes online between, say, 2027 and 2030 maybe.
Can I ask about a different type of supply, and that is just of equity? SK Hynix saying that they are going to do a secondary listing in the U.S. At $29.4 billion, it would be a record secondary listing. What does that mean to just have more equity in this American stock market, especially a stock like SK Hynix, which has seen so much speculation in Korea?
Yeah, I think for SK Hynix, part of it is just a valuation gap. There's just historically for a lot of Korean and Asian stocks, there's just been a valuation gap, especially if you just compare SK Hynix and Micron, just price to book, price to earnings, there's just been a healthy gap. So I think for them, it's really an opportunity to increase their valuation in U.S. markets relative to a peer that has lower market share, actually.
That's exactly what Ed Ludlow was saying. I'm sure you watch Bloomberg Tech as well. Who's the king of the hill? Like, I wonder about the competition because there are all these high bandwidth memory chip makers. It's like DRAM is such a commodity I've never really paid attention to or haven't for like 20 years.
So for a while, it's been Samsung. They had the largest market share, but because of HBM, SK Hynix has really sort of taken that mantle. And now at Samsung, they recently got designed into NVIDIA's Vera Rubin server, so that's going to be HBM4. That's a really great opportunity for Samsung to regain some lost share. Micron is going to, I think, continue to be roughly around the 20 to 25% market share range. So I think it's really kind of a race between Samsung and SK Hynix on capacity, design capabilities, making sure that they're able to get into the next generation servers. And then Micron will also probably be there, but probably for the most part pretty stable, we think.
Jake, thank you very much for joining us. Jake Silverman from Bloomberg Intelligence teeing us up from Micron earnings. Coming up, we head to D.C. with Congress finding common ground to tackle America's housing crisis. What difference does this bill actually make? That's coming up next.
up-to-the-minute space news whenever and wherever it happens. I'm Ed Ludlow at NASA's Kennedy Space Center in Florida, and this is Bloomberg.
Making money isn't about drowning in emotions. It's about understanding what's actually happening. Markets are the best way to glean signal from noise, and that is what we try to do every morning. This is Bloomberg Surveillance.
Every weekday, Bloomberg puts the spotlight on a different aspect of global finance. Flows, funds, and the forces shaping markets on ETF IQ. The future of money with Bloomberg Crypto. The players behind major transactions on Bloomberg Deals. Rates, risk, and the cost of capital on Bloomberg Real Yield. And personal finance, retirement, and wealth management on Bloomberg Money. A different topic every weekday, only on Bloomberg Television.
Get your fixed income fix. Watch Bloomberg Real Yield around the world right here on Bloomberg. Context changes everything.
Congress is sending a bipartisan housing bill to President Trump's desk that aims to boost supply, lower costs, and expand homeownership. Let's discuss with Nathan Dean, senior policy analyst at Bloomberg Intelligence, author of the Washington Update newsletter. And Nathan, I wanted to start with these private equity concerns. President Trump initially said they wouldn't be able to participate as much in the U.S. home market. And I guess the legislation was laid out that way, but a lot of it has changed, hasn't it?
Yes, that's right. I mean, in particular, Blackstone took a headline risk hit when this first was announced. The stock dropped 4% and subsequently came back. What this bill does is actually prevents corporations from purchasing more than 350 single-family homes. And Blackstone in particular, their exposure to this is less than 0.04% assets under management. Now, that ban, however, has so many exemptions in here that if you're looking at it from the private equity angle or even the single-family REIT angle, like Invitation Homes or AMH, there's so many exemptions in here that we actually don't see this really having much of an impact on those entities. They should be able to go forth and purchase homes no matter what. This bill really isn't going to impact them all that much.
Are there any home builders or stocks that you are looking at, Nathan, that will see a big impact from this legislation? Because it looks like sweeping bipartisan law.
So not really in the short term. What this bill does is it's a long-term play here, because what this provision does, or what this bill includes, is it incentivizes banks to go forth and provide more lending for affordable housing. It also increases or decreases the regulations for manufactured housing. So if you're looking at a market like Austin, Texas, or maybe Birmingham, Alabama, incrementally over the next few years, you should see new construction. But if you're looking at like Washington, D.C. or New York City, it's not going to change all that much, nor is it really going to drive affordability concerns ahead of the midterm elections here. This is a multi-year bill, not something that you're going to see changes in the next 6 months.
All right, Nathan, great to get your take, and I look forward to your newsletter on Friday. Of course, always look forward to your interviews with Joe Matthew on Balance of Power. Nathan Dean, America's dad from Bloomberg Intelligence. Coming up in the next hour, Simplify's Paisley Nardini shares her investing strategy with rising stock headwinds. Carlyle's head of investment strategy, Jason Thomas, joins us, plus the CEO of Mountain, Mark Douglas, comes on the program to discuss AI and advertising. My buddy Philip Richter from Hollowbrook Wealth Management will talk to us about his view on markets as well as cars. This is Bloomberg Open Interest.
Do you mind being called an ideological lunatic or a bunch of left-wing nut jobs?
You know, I've been called worse things than that.
Oh! You'd think she owned the place.
23andMe, I think, is so incredibly valuable. We're coming back.
It had that kind of detective story feel to it. You know, when you're hot on the trail of something, you know that it's very exciting.
What magazines were you reading as a kid?
I don't think I was reading magazines until I was in them.
You are on the cover of all of these.
Oh, and there's many, many more, but we just don't have time.
Why should people trust you?
I don't think anybody should trust any company or entity completely with any of this.
It's very uncomfortable. Artificial intelligence is this force that is far bigger than we are.
I want to build better businesses around these brands.
The shock will never wear off.
So you're a brother and sister running one of the most powerful companies in the world. When you argue, who wins?
No one. The way I could see AI being banned or blocked is if something really went wrong. And if something really went wrong, then maybe it deserves to be.
So is it paradise ahead or Gattaca?
Maybe somewhere in the middle.
East and Africa. Vibrant resources and high-yield investment opportunities abound. Join me on Horizons Middle East and Africa for the stories, newsmakers, and insight from this exciting region. Now weekdays, only on Bloomberg.
Bringing you the most important news and financial information whenever and wherever it happens. I'm Michael McKee on the Mexican border, and this is Bloomberg.
ABC News. I'm Sherry Preston. As President Trump prepares to head to Capitol Hill for lunch with congressional Republicans, there's some confusion on where things stand in the Memorandum of Understanding with Iran. The head of Iran's nuclear watchdog, Rafael Grossi, said that his inspectors today would be going into the country. The regime says nothing will happen until a final deal has been signed. Grossi earlier today saying,
"There's a war of words here. Some say yes, the others say no."
Nick Mulroy is a security and military consultant for ABC News.
Iran can see the popularity or the unpopularity of the war. So they know that, and they know the economic consequences of their shutting down of the Strait of Hormuz. It was really the only leverage they had, but they played it, from their perspective very well. It's 21% of the world's energy supply, and it has dramatic impacts on the cost of everything.
Camp Mystic, the Texas Christian camp where 25 girls and 2 counselors died in flash flooding last summer, has filed for Chapter 11 bankruptcy. Families of the victims filed a lawsuit in November saying camp operators failed to take the steps necessary to protect the girls as floodwaters rose on the 4th of July. A wildfire east of the Utah-Nevada border has exploded in size over the past 24 hours. Here's ABC's Jim Ryan.
50 miles outside Salt Lake City, the Iron Fire has consumed more than 24,000 acres. South of that, the Cottonwood Fire is scorching the earth and darkening the sky.
We always knew going in that it was going to be a mess if we ever got a fire in this location.
Kaylee Guild of the Utah Division of Forestry, Fires, and State Land says an intense drought is depleting the lakes and reservoirs used by firefighting aircraft.
It sucks, but this is where we are at this point of the game.
Jim Ryan, ABC News.
The Eiffel Tower and the Louvre in Paris closing early. The changing of the guard in London canceled this week, all because of the intense heat wave in Europe. This is ABC News. Are mice getting smarter? Researchers at Rutgers University recently found that mice are genetically evolving to become resistant to the poisons designed to kill them. Up to 70% of the mice the scientists tested were indeed mutating. ABC's Elizabeth Worthington.
Experts say as the rodents evolve, we need to evolve as well, decreasing our usage of pesticides, focusing on prevention and sanitation, while chemists work to create stronger formulas, something that can take a long time and a lot of money.
A very big night for candidates endorsed by New York City Mayor Zohran Mamdani. A not-so-big night for candidates backed by establishment Democrats, says ABC's Phil Tate in New York.
In New York's 7th Congressional District, where Congresswoman Nydia Velázquez's seat was up for grabs, Brooklyn BP Antonio Reynoso fell short to Claire Valdez, a Democratic socialist and union organizer who picked up the endorsement of Mayor Mamdani. Here in the 10th Congressional District, former City Comptroller Brad Lander unseated Representative Dan Goldman. Lander was also endorsed by the mayor, while Goldman was endorsed by Democrats, including Governor Hochul.
Also from New York City, a chief of staff to former Mayor Eric Adams and several other people have been arrested as a part of an investigation into an alleged bribery scheme. There is also an ongoing investigation into members of the New York Police Department. That one involves current and former members of the police force, according to Commissioner Jessica Tisch. I'm Sherry Preston, ABC News.
This is Bloomberg Intelligence with Scarlett Fu and Paul Sweeney.
How do you think the Fed is looking at tariffs, the uncertainty of tariffs?
Let's take a look at the sectors and how they performed.
A lot of investors getting whipsawed every day by news events.
Breaking market headlines and corporate news from across the globe.
Could we see a market disruption, a market event?
Are people just too exuberant out there?
You see some so-called low-quality stocks driving this short-term rally.
Bloomberg Intelligence with Scarlett Fu and Paul Sweeney on Bloomberg Radio, Originals and the Bloomberg Business app.
Good Wednesday morning from the Bloomberg Interactive Broker Studio in New York City. We are streaming live on YouTube. We're streaming live on Bloomberg.com as well. We've got some green on the screen. We've got WTI crude oil below $70, a 69 handle. How about that? Getting back to where we were pre-war. It is Scarlett Fu, it's Paul Sweeney, and this is the Bloomberg Intelligence program coming up for you. We're going to start off with Tyler Kendall. She is the Bloomberg Washington correspondent. Get the latest reporting on the U.S.-Iran negotiations. Drew Redding, Bloomberg Intelligence U.S. home building analyst, to discuss new home sales, which came out this morning. Sylvia Jablonski, CEO of Defiance ETFs, to discuss her outlook for the markets. And then Jake Silverman, Bloomberg Intelligence semiconductor analyst. He's going to talk to us about Micron. That stock's been all over the place. They're reporting numbers after the close today. It's going to be very closely watched by global tech investors. So a lot coming up over the next couple of hours. Let's kick everything off here as we do with Alexis Christophers and a Bloomberg Business Flash. Alexis.
All right, thanks a lot, Paul. And this Bloomberg Business Flash is brought to you by IBKR. For the past 3 years, Interactive Brokers' individual clients averaged 24.3% annually, beating the S&P 500. Lower costs and access to 170-plus global markets matter. Visit ibkr.com/performance. Let's begin in the oil pits, because that's where the action is today. Brent oil now below $74 a barrel for the first time since the Iran war began, as more tankers openly cross the Strait of Hormuz. Brent down nearly 5%. West Texas Intermediate crude down 4.75%, below $70 a barrel. Oil prices are down about 40% from their high during the peak of the war. As for stocks, they're rallying as tech stocks make a rebound. The Dow Jones Industrial Average up 125 points. We've got the S&P 500 up about 20, and the NASDAQ Composite in the green by 58 points. Micron Technology in the spotlight, that stock down about 0.2% ahead of its earnings report on deck after the closing bell. Shares of Qualcomm down more than 4% as its investor conference gets underway, and shares of Cerebras slumping here, down now more than 13% after the newly public chip maker gave an annual sales forecast that disappointed investors. For on-demand news 24 hours a day, subscribe to Bloomberg News Now wherever you get your podcasts. I'm Alexis Christophers, and that's a Bloomberg Business Flash. Paul and Scarlett.
All right, Alexis, thank you so much. We appreciate that. Scarlett Fu and Paul Sweeney. We're live here in our Bloomberg Interactive Broker Studio in New York City, streaming live on YouTube as well. As Alexis was just reporting, we got a little bit of green on the screen here. We'll take that. Let's see where some of the stocks on the move and how they're trading today. We can do that with Judy LaGrue. She's a reporter for Bloomberg News, joining us live here in studio. Judy, what are you looking at?
Good morning. I'm looking at Sunrun, ticker RUN. Shares are rallying as much as 31% in trading today, and they are on track for the biggest jump since last August. And this is coming after the company announced an agreement with Tesla to supply power to utilities and data centers. And so this is really a view in terms of looking outside of residential use for solar panels. So there's really
panel company.
Yeah, absolutely. Okay. Solar energy. So really interesting movement there. Clear Street analysts wrote that this deal would create the largest distributed power plant in the U.S. by using battery storage and solar generation to support power grid supply. So really, really interesting stuff. They called it the most important milestone for Sunrun's ability to contribute to that cause. So really interesting move on that front.
Yeah, you're definitely seeing the Elon Musk touch in action
want to
there.
have solar panels on my house.
No?
Nah.
Even the beach house?
No.
Really?
The look doesn't. I just don't like the look. You got to
Maybe
figure out
you have it in
another
the
way.
back.
Oh, that's not very environmentally friendly of you.
I
there,
know.
Paul.
I know.
And the world, the Earth will need the Earth
know.
to be in
Yeah.
existence
Back of the
for
house,
longer than
Paul.
your house will be
Back
there.
of the house. All right.
Yeah.
You know, so it doesn't ruin the curb appeal.
All right.
Judy, what's up next?
Sure. Speaking of vacation,
Yep.
Hertz Car Rental, ticker HTZ, shares are plunging as much as 27% in intraday trading, and it's on track. In fact, right now it is the largest intraday drop on record, and the stock has hit its lowest price since April 2025. And this is coming after the company warned in a regulatory filing this morning that this quarter's profit is trending toward the low end of its estimates as a result of what they are calling, quote, unexpected softness in the used car market. And so in terms of specifics, I found this number to be quite interesting here. They projected an adjusted EBITDA at no more than $80 million, but comparing it to Bloomberg analysts, the estimates collectively for Hertz adjusted EBITDA is around 94 million. So right now they're telling us, and earnings are expected to come around in August. The date hasn't been confirmed yet, but around August. So they're telling us now, they're telling investors now, rather, that this is what's going on.
So they can't
I'm
move
a Hertz
on.
Gold member. Did
I
you know
am
that?
too. I am
okay,
too.
so you just walk onto the lot
Yes.
and just pick a car.
You don't have to talk to anyone.
You don't have to talk to anybody. There
Which
you go.
we both appreciate.
Yes.
It's a brilliant experience. I've had it. It's great. You just smooth.
So the idea here is that they can't sell off the fleet as profitably as they once were if there's softness in the used car market. I guess that's part of it.
That's right.
All right. Last stock on your list?
Sure. Big news today for Wendy's, ticker WEN. The shares of Wendy's are soaring. In fact, currently the shares are trading as around 26% up on the day, but they have been trading as high as 42% of a climb there. So it is on track for the largest intraday climb in over 6 years. Trading actually was halted earlier this morning, but has since resumed. I believe it resumed at 9:49 Eastern this morning. And the reason is really just it's a meme stock. Reddit's Wall Street Bets, the subreddit implored its members to, quote, save Wendy's before it's too late. The stock is also at the top of the trending page on Stock Twits. So just a lot of noise, not noise, but a lot of just
chatter,
energy around the meme stock this morning of Wendy's.
Baconator.
Frosty slushy.
All right, so we'll go. I'll get the Baconator, Frosty Slushy.
Alexis, what do you want?
We're making a run. We're making a Wendy's run.
Can I have onion rings, please?
Okay, here we go. I'll make the run.
This is what the morning show eats at 10 a.m.
Exactly.
We're always thinking about food on this shift, just so you know.
Yes. All right, Judy, thank you so much. We appreciate that. Judy LeGroux, reporter for Bloomberg News. And for more conversations like this, subscribe to our Stock Movers Reports. Listen for 5-minute audio reports on the biggest winners and losers in the stock market. Subscribe to Stock Movers on Apple Podcasts, Spotify, or anywhere you listen here. It's time we need to get an update on what is happening with the war in Iran. The ceasefire continues to hold. I think some negotiations are going on. I think they call it technical negotiations.
We don't know what that means.
I'm not sure, but we'll get the latest from Tyler Kendall. She's a Bloomberg Washington correspondent joining us from Washington. Tyler, what's the latest coming out of either the White House or the negotiating teams as it relates to Iran?
Well, Paul, we actually heard from Pakistani mediators earlier today who say that the initial round of discussions has been completed and that further talks are set to take place between the U.S. and Iran next week. We are waiting on some further details on exactly who will be involved in those negotiations as the two sides try to move forward with some sort of finalized deal when it comes to potential curbs on Iran's nuclear program. Because we've heard from President Trump at least twice this morning disputing some notions from Iran that maybe not everything that the U.S. says was agreed to. We're getting these conflicting reports when it comes to nuclear inspections. President Trump out with a new post on Truth Social saying that Iran has agreed to this, and if they hadn't, then he wouldn't be continuing the negotiations. He also came out with this post earlier today in regards to this joint statement that we got from Iran and Oman that seemed to indicate that they do have this intent to charge some sort of fees related to what is being called navigational services. President Trump saying in this post, in part, quote, Iran has informed the U.S. that there are, quote, no tolls, no insurance costs, and no other charges of any kind being sought or received by Iran on ships traveling through the Strait of Hormuz. This is false information, and negotiations would end immediately.
it very much feels like both sides are saying things and then trying to manifest them. And we'll see how it all plays out. Tyler, the Senate voted to end the U.S. war with Iran. I wanted to ask you about that because is this merely symbolic or does this have any teeth?
At this point, it's symbolic, Scarlett, especially because the Senate and the House pursued what's known as a concurrent resolution instead of a joint resolution, which means that this won't even end up on President Trump's desk for him to veto it either way. Whichever way they went, it was going to be largely symbolic. But it does mark a very rare rebuke that we're seeing from U.S. lawmakers as the conflict does continue and weighs on voters as we head into November, but the White House is really trying to brush it aside. They're saying this is ultimately non-binding, and President Trump, in a post earlier today, said that it's just going to make his job more difficult, but he's still going to get these negotiations done. They're also blaming it on some key absences that happened in the Senate. We saw 4 Republicans cross party lines that weren't necessarily surprising. Susan Collins, who's in a tough re-election race, Bill Cassidy, who lost his re-election race, Lisa Murkowski, who has this independent streak, and then Rand Paul, who's been voting against this war from the very beginning. But there were 2 notable absences in Mitch McConnell and Dave McCormick, who were not there and ultimately flipped that vote to 50-48, which put it over the finish line. I will point out this was the 10th time that the Senate had voted and finally got this done. But Paul and Scarlett does, of course, reference what is this growing discontent, I think it's fair to say, among voters when it comes to the conflict in Iran.
Yeah, we know that the polling is quite negative on the war. I guess on the good news front, Tyler, we have WTI crude oil traded, below $70 a barrel earlier here this morning. So, and the International Maritime Organization said it had received safety guarantees allowing hundreds of ships to exit the Persian Gulf, and the UAE is exporting oil at nearly 85% of pre-war levels. So that has to be some welcome news for the White House.
It definitely is. Did you see that report? It also says that they're going to help transit out 11,000 seafarers that have been stranded. So I'm sure this is very welcome news for them as well. Now, the administration, of course, has been watching this very closely. President Trump has touted that the strait is open. He said 19 million barrels per day transited through yesterday. That is in line with pre-conflict levels around 20 million barrels. And new data analyzed by Bloomberg News does show that the most amount of ships with their transponders on are currently transiting through, and a sign that commercial shippers are growing much more comfortable with the strait. But Paul, I'll point out that we heard from President Trump saying that he's instructing the Department of Justice to look into why retail gasoline isn't falling as fast as oil prices, seeming to allege that price gouging is going on. We can say that it often takes longer for retail gasoline to come down, in part because it has to make its way through the supply chain. It can take weeks when it comes to going from pipelines to processing to distribution. Plus, gas station operators have to think about their margins, which can also impact that final price at the pump.
Come down to Route 35 in Wall Township, New Jersey. These 2 dudes are having a price war, these 2 stations, and it's incredibly cheap relative to every other station around the area. That's my go-to guy.
For example, how much is it?
Wherever it is in my area, within 10 miles, these guys are like 10 or 15 cents cheaper. It's crazy. So it's
New Jersey, so it's full service.
We're the benefits. Yeah, but I put my own gas. Tyler Kendall, Bloomberg Washington correspondent. Thank you so much. We appreciate it. Joining us from the White House here. Some progress being made there. This Independence Day, join Bloomberg this weekend for a special live show from the intrepid David Gura, Christina Ruffini, and Lisa Mateo. We'll be celebrating America's 250th birthday all morning on the dock of the Intrepid, right on the Hudson River. Watch and listen live on Bloomberg Television, Bloomberg Radio, and the Bloomberg Business app. Saturday, July 4th, starting at 7 a.m. Eastern. How cool is that? This is Bloomberg.
markets, headlines, and breaking news 24 hours a day at Bloomberg.com, Bloomberg Television, and the Bloomberg Business app. This is a Bloomberg Business Flash.
Coming up on 1022 on Wall Street, I'm Alexis Christoforous from the Bloomberg Interactive Broker Studio. Sales of new homes in the U.S. fell again in May to the lowest level since the start of the year as heavy discounts failed to offset high mortgage rates. On Wall Street at this hour, stocks are higher as oil slides to its lowest level since the beginning of the Iran war. The S&P 500 up 21 points. Dow Jones Industrial Average rallying 184 points, or about 1/3%. The NASDAQ Composite coming back a bit from yesterday's big sell-off, now gaining about 63 points. Brent crude is at $73.67 a barrel, down nearly 4.5%, while West Texas Intermediate crude falls more than 4% to $70 a barrel. This is as more ships successfully cross the Strait of Hormuz. As for stock news, we've got shares of FedEx down nearly 1.5% after the company posted its first earnings report since completing the spinoff of its freight unit earlier this month. Results seem to have fallen short of investor expectations after a strong run-up in the first half of the year. We've got shares of Alphabet up 1% on news the parent of Google will be added to the Dow Jones Industrial Average come Monday. Alphabet will be replacing Verizon. And SpaceX stock is down about, well, actually, it just turned green as I speak. It's up about 0.5% right now. Yesterday, it was able to snap a 3-day losing streak. We'll see if it can hold on to that thin gain here today. For on-demand news 24 hours a day, subscribe to Bloomberg News Now wherever you get your podcasts. I'm Alexis Christoforous, and that's a Bloomberg Business Flash. All in Scarlet.
All right. Thank you so much, Alexis. We're also keeping an eye on economic data, and we did get some numbers on new home sales. They fell unexpectedly in May for a second month, down 7.3%, and the annual rate is now 580,000 for the month of May versus the expected 640,000. So what does this all mean? Drew Redding is our U.S. homebuilding analyst joining us from Princeton, New Jersey. Drew, this unexpected decline of new home sales comes even as we've seen a lot of home builders provide discounts and do their best to keep prices from climbing too high. What does that say about this housing market?
Yes, Scarlett. So, you're right. The spring selling season, which is the most important period of demand for the new home market, has been somewhat of a dud. You've probably heard us say in the past that the census data on new home sales is a historically very volatile data set. We actually have some data on the new home market from our friends over at Zonda, which show new home sales up about 2.5% in May and 1% for the year. So that being said, it really doesn't change the whole story. To your point, sales are relatively flat, but builders are having to work harder for each sale. The hope coming into the year was that the group would be able to kind of take their foot off the gas pedal in their use of incentives if rates came down, but that just hasn't been the case yet.
So I'm looking at the 30-year mortgage rate, Mortgage Bankers Association, just about 6.6%. That's not where buyers would like to see. But at the same time, Drew, I'm kind of coming to the conclusion begrudgingly that this is the new normal. I need to go out there and shop, assuming I'm paying 6.5% on a mortgage.
Yeah, I think you're right, Paul. And I think, consumers are coming into the market understanding that rates have kind of held in this range from the low 6 to mid 6% range for a while, and that's probably what they're looking at. That being said, builders continue to buy down mortgage rates. They're getting their buyers a 5 handle, which is something that you typically don't see in the existing home market. The other thing you have to keep in mind is that when we talk about demand, it's bifurcated depending on what customer segment you're talking about. If you look at the low end of the market where buyers are extremely price sensitive, focused on that monthly payment, you're seeing relative weakness. But if you look at the higher end of the market and you think of, builders like Toll Brothers, that's where you're seeing the relative strength. These are buyers who have equity from an existing home that they could roll over into a new purchase. They're benefiting from strong equity markets. So we're really seeing that K-shaped economy play out in housing as well.
Yeah, that's been the case. And I like how you point out that certain home builders cater to certain segments of the market. In terms of supply of new homes, for so long, especially after the financial crisis, there hasn't been enough inventory, either of existing homes or new construction. What does the supply of new construction look like right now?
Sure. So in the new home market, supply is elevated. And when we look at what supply really matters for the new home market, it's completed inventory. because this is the inventory that builders typically will have to discount more to get off their books. So completed inventory is still very elevated, and it's the reason why you're seeing such weakness in building permits and single-family housing starts, because builders need to draw down that inventory in order to put new production into the ground. So this is why we think that you continue to see an elevated use of incentives. But to your point, one of the key dynamics for the builders over the last couple of years has been a lack of supply in the resale market. But that dynamic has shifted as well. And in a lot of the key markets, supply is back over 2019 levels. So it's a much more competitive environment for the group.
So as I hear from housing folks about a shortage here of homes in the U.S., I don't know, it's 4 million, 5 million. I'm not, somewhere in that range. Is there a viable, practical solution to that, Drew?
Yeah, so I think the only consensus on a housing shortage is that there is no consensus. Those estimates are all over the place. We tend to lean towards the lower end of the spectrum. In terms of a solution that could solve it, I mean, we just saw the Road to Housing bill pass in both the House and the Senate, and it's awaiting sign-off from the president. And really, that's a focus on long-term supply-side solutions, which I think is the right place to focus rather than providing demand-side stimulants. It looks to remove some regulatory barriers, zoning impediments, land use policy. So I think over the long term, the focus is in the right place. It's just not something that can be solved overnight.
And I'm so glad you mentioned that housing bill that it now awaits the president's signature. We have some headlines here from the president saying that the news conference for the signing of that housing bill is canceled. And he says that it is canceled until Congress passes the Save America Act. So the latest there in the ever and never-ending negotiating between the congressional branch and the executive branch. All right, Drew, thank you so much for joining us today. Drew Redding is our U.S. homebuilding analyst for Bloomberg Intelligence, joining us from Princeton, New Jersey, on the new home sales that unexpectedly fell.
It's in the month of May. Just in my town, I noticed in the last several months, they raised a big parcel of land. They just kind of tore down everything that was there, including some trees and stuff like that, getting ready to build something. I didn't know what they were going to build. They could have built multi-million-dollar homes down there on the shore, but what I've seen gone up is low-cost housing.
Oh,
yeah, very interesting.
Housing,
cranking it up, and they're putting up very quickly. So I was glad to see that, just because that's the part of the market that is really undersupplied. Yeah. So interesting.
Absolutely. All right, we have more, of course, on economic data throughout the next hour or so. But in the meantime, we want to talk a little bit more about the markets because, as Paul had mentioned, everyone is focused on Micron's results later on today. They will be reporting earnings after the market close, and Micron has been a star performer this year. So let's bring in Sylvia Jablonski. She is CIO of Defiance ETFs. Sylvia, when you look to Micron's results later today, how much of a catalyst is this going to be for the memory chip maker rally that we've seen so far this year? It's been an incredible run, but it very much feels like we're kind of at an inflection point.
Right, it does. Yeah, yes. Yesterday's pullback, I think, spooked investors a little bit about the AI trade. But, if you think about this is very much a long-term story. And if you think about, how much power and electricity and memory is required for this AI to work and to come to fruition. And
Sylvia, I'm going to just interrupt you for a moment. We got to go to the mayor of New York City right now. He is taking questions on yesterday's primary election. Let's listen in.
Some sort of realignment for the Democratic Party across the country. And I do have another question, if I may.
Yeah, I'll be speaking with Congressman Jeffries later today, and I'm looking forward to working with Congressman Jeffries on delivering for the people of our city. And what I see these results as a reflection of are the fact that New Yorkers are hungry for a new kind of politics. They are hungry for a politics that understands working people should be at the heart of it. And they're hungry for a politics that looks at the wealthiest city in the wealthiest country in the history of the world and understands that it's unacceptable that 1 in 4 are living in poverty. It's unacceptable that too many New Yorkers are spending all of their day trying to figure out how they're going to make their rent check or pay for their groceries or pay their Con Ed bill. And what we saw last night was a hunger for leaders who will be there on the front lines looking to make it easier for working people to afford life in the greatest city in the world.
We now have 3 potential DSA-aligned members of Congress. What do you think we should expect from those members? Is it single-payer funded health care? Is it abolishing borders? Or do you think they should be singularly focused on cutting off aid, military aid to Israel?
What we're going to see from the 3 congressional candidates that I was so proud to endorse and who all won yesterday in Darialisa Avila Chevalier, Claire Valdez, Brad Lander, as well as what we're going to see from the 5 state legislative candidates that I endorsed that won yesterday evening, Iapa Saira Tupac, Eli Northrup, Samantha Katan, Abir Kawas, and Brian Romero, is a singular focus on the fight of the working person. The working person is struggling in our city to afford basic needs. And what you will see, whether it's a vision on making healthcare more affordable, on making housing more affordable, or on a vision, as Darialisa often talks about, of investing in babies, not bombs, is the kind of conscience, the kind of clarity, the kind of conviction that has been missing in our politics for far too long. And I cannot wait to work with them on accomplishing that.
Go to Melissa and then Jeff. Sorry, Melissa, the microphone.
Gloria touched on a little bit of what I was going to ask, but your chosen candidates will now likely cause the number of socialists in the House to rise to double from 2 to 4 at least, I believe the number is. But what are 2 specific examples of federal policies that they could change with their votes, given that we're talking about 4 socialists?
I think what we can see in their candidacies and what we will see in their leadership is a commitment to humanity. And when it comes to domestic policy, I know that for many of them, one clear area of concern is the cruelty of ICE. You've heard from a number of not just the candidates who became congresspeople last night, but rather candidates across the country, the need to abolish ICE. It's something that I've echoed myself. And when I think about, Darialisa's campaign, one part of her track record that stuck out for so many in that district and stuck out for me was a track record of speaking up for New Yorkers who had been unjustly detained by ICE and starting to create an immigration policy in this country that has humanity at the heart of it instead of the cruelty. And then when she speaks about babies, not bombs, when Claire Valdez speaks about a foreign policy that understands human rights for all, when Brad Lander commits to co-sponsoring Block the Bombs, all of that is reflective also of a commitment to a new approach to ensuring that we're fighting for working people and that we're ensuring that every dollar that we're paying into our taxes is a dollar that also reflects our values in the way it's being spent.
Responding to President Trump, responding to last night's election results, President Trump said that America the Beautiful will never become a communist country. We know you have said you're not a communist. However, do you hope that is it your goal to make America a socialist country?
My goal is to make America a place that every American can afford. And frankly, what we see is, while that is an especially challenging goal here in New York City, the nation's most expensive city, I know it's an issue that every working person across the country is facing. And what we need is a politics that puts working people back at the heart of what we focus on and what we fight for, as opposed to making them a footnote.
Jeff, go ahead.
Hey, Mayor, how you doing?
How's it going?
Good. 2 questions for you about the races last night. I'm wondering if, the victories show that, communities are open to DSA's messaging. But I'm wondering that we've already seen from some Republican candidates how they plan to message the victories last night, sort of going out and saying that, Democrats are interested in these severe sort of stances such as incarceration and no deportation. So I'm wondering if you're concerned about whether that victory, how that will play in November as Democrats try to win back the House. And I have a second question.
Every time the fight for working people takes a step forward, you will hear Republicans say that this is actually going to jeopardize the existence of that very fight. A year ago, when I won the Democratic nomination to be the mayor of our city, we heard ad nauseum from Republicans, not just across our city, but across the country, of how this was going to make it more difficult for working people to live a life that they could afford. And what we found time and time again is no matter what attempts there are at mischaracterizing any one position or policy, what is shining through for New Yorkers and for Americans is a focus on the working person. And when I walked the streets with Claire, with Brad, with Darialisa, what we spoke to New Yorkers about was how we could make it easier for them to afford childcare, for them to afford their rent check, for them to afford to live in the district that they grew up in. The other night I was walking with Darialisa in Harlem. A man came out of a bodega and in his hand
looks like we lost the pickup there from the mayor, but that was the mayor of New York, Mr. Mamdani, speaking to reporters and making some comments about some of the races in New York City primaries yesterday, where some of the Democratic Socialist Party did quite well, particularly with his endorsement here. Let's get back to these markets. Again, we've got a little bit of green on the screen. The S&P's up 27 points. Sylvia Jablonski is with us. Thank you, Sylvia, for sticking with us. She's the Chief Investment Officer at Defiance ETFs. Sylvia, what did you make of the SpaceX IPO and then maybe some of the subsequent trading down of the stock? How did you guys think about that?
Yeah, so I think the SpaceX IPO was probably one of the most exciting IPOs of certainly my time in this field. It just shows, how much retail investors have been interested in the commercialization and, ability to trade of all of these new disruptive themes that we've seen come into the market. So whether it's AI, quantum computing, or space, you really see retail investors just clamoring for access to the stocks that are going to lead the path and these themes forward. And so with SpaceX, you saw just that, right? You saw retail investors, institutional investors, everyone clamoring for access for it. And it was everything from the SpaceX stock itself to leverage SpaceX. We launched a fund on leverage SpaceX as well as PCU. And you see the traders, really getting 2x leverage exposure to that as well. And right out of the gates, it's trading in quite a very healthy and popular way. But like any IPO, right, I think it comes out hot, and then you get these periods and these resets and things like this. The news over the last couple of days around memory, AI, and South Korea in particular, I think also weighed on that SpaceX trade. But you're going to have those investors that couldn't get in on IPO day, perhaps looking to kind of leg into this when you see these pullbacks in the market.
Well, I'm glad you bring up what's happening in Korea, because SK Hynix is looking for a U.S. listing, and it's been such a star performer in Korea. Korea, of course, is the world's best performing stock market as well. What's the potential for leveraged single stock ETFs around this company once it does list in the U.S.?
I think it's massive. And, we got caught off. We were talking a little bit about Micron, right? And high bandwidth memory is pretty much the fastest growing segment in the AI space right now. You're talking about a market that could reach 55 billion just this year, which is up, 60% year over year or so. And these companies like Samsung and SK Hynix and Micron are really the key players there. And so investors are very much going to be interested in these stocks when they come out, both as single name stocks, as leveraged stocks. And I think it just tells you more about these themes and thematic ETFs in general, right? So when you think about these themes, usually they're a little bit too early, and you get a lot of criticism that these are, some of these companies are pre-revenue, others are obviously not. Others are stellar and have, triple-digit year-over-year revenue performance and things like this, like some of the names we're talking about here. But these are long-term themes that play out, and so for investors who look to get in, they'll really start seeing this come to fruition, I think, when some of these names start trading and reporting.
So a lot of folks are saying, this SpaceX as a company, as an IPO is, it's a really once in a lifetime opportunity, because potentially some of these markets that Elon Musk is talking about are so massive, but yet they require a big leap of faith here. But how is the interest on your platform for these types of stories?
Yeah, incredibly high. And I'll bring it back again to the idea that this is part of the commercialization of these disruptive themes. So, we have a quantum ETF that has just grown massively over the past year. It's over $6 billion now. This was a small fund when you guys and I had been talking just a couple of years ago, right? I think investors are really starting to see that some of these disruptive types of themes are actually the real tech and the real tech allocation of today. And so space is the same thing. You're talking about that 28.5, total addressable trillion total addressable market, and just the different pillars, whether it's satellites, the launches themselves, providing compute to AI hyperscalers, the contracts with Google, things like this. So Elon Musk has several pillars that are coming out of SpaceX. So while it's one stock, it's actually 3 or 4 trades or themes within one stock, and I think that's why investors have so much interest in trading it.
Sylvia, thanks so much. Appreciate it. Sylvia Jablonski, Chief Investment Officer at Defiance ETFs. All right, let's get a reset here. This markets will go to Alexis Christophers for a Bloomberg Business Flash. Alexis.
All right, thanks a lot, Paul. We have got stocks higher right now with chip stocks on the rebound following yesterday's big sell-off. The NASDAQ composite is up 114 points, or about 0.5%. That is after falling more than 2% during yesterday's trading. The Dow Jones Industrial Average up 0.33%, or 203 points now, best level of the morning. S&P 500 adding 30 points. We've got our eye on Micron Technology. It's basically flat ahead of its earnings report, which will be released after today's closing bell. But shares of Hertz tumbling today 27%. That is the most in 2 years after the car rental company warned profit this quarter is trending toward the low end of expectations because of softness in the used car market. And it appears that Wendy's is the latest meme stock. Shares of Wendy's up 29%. No news announcement behind the jump. A post on Reddit Wall Street Bets, which was later removed, encouraged its members to, quote, save Wendy's before it's too late. Wendy's stock, by the way, had tumbled over 70% since mid-2023, and the company is in the middle of a turnaround to improve its sales. Oil is on the downside. Brent crude $73.72 a barrel, lowest level since the war with Iran began. WTI crude now at $70 a barrel, a loss there of 4%, and the Bloomberg Dollar Spot Index up 0.33% at 1227.54. For on-demand news 24 hours a day, subscribe to Bloomberg News Now wherever you get your podcasts. I'm Alexis Christoforous, and that's a Bloomberg Business Flash. Paul and Scarlett.
All right, Alexis, thank you so much. We appreciate that. Scarlett Fu and Paul Sweeney live here in our Bloomberg Interactive Brokers studio, streaming live on YouTube as well. As Alexis was just reporting, Micron is reporting after the close today, and that is a big tech name that the market really focuses on. Why not? The stock's up 267% year to date, even after a sell-off over the last couple of days. And on a trailing 12-month basis, stock's up 718%. It's not like it's a paper stock, over-the-counter stock. This is $1.2 trillion in market cap.
And it came very abruptly this year. And it's not just Micron. I look at the best performers in the S&P 500. Yep. SanDisk, Western Digital, Seagate, they're all up at least by that amount. SanDisk up 725%.
Yep, exactly. Jake Silverman, he is our semiconductor analyst at Bloomberg Intelligence. He joins us live here in our New York studio. Jake, what are you and the street going to be looking for from Micron after the close tonight?
Yeah, I think we're going to be looking for continued pricing momentum. It's been continually up over the last however many quarters. I lost track at this point. But really, I think the key thing at this point are signals about not just this quarter, not just next quarter, but the long term. Contracts, how many contracts they've signed, the length of those contracts, details about pricing and bit demand.
Wait, can I interrupt for 1 second? Is this pricing for DRAMs or for the high bandwidth memory chips?
More so for DRAM in general.
Oh.
But they haven't given a lot of details about high bandwidth memory in terms of their pricing agreements, and there's a lot of information out there, about the pricing, at least for the products in general, not necessarily Micron's pricing, but we think it's pretty competitive with the market. But I think more so what investors are going to be focused on is NAND and DRAM generally. What are those contracts? How many do they have signed? The value, et cetera, et cetera.
So there's a memory chip shortage, correct?
Yes.
A, how did we get there? And B, realistically, how did we fix it?
Yeah, so I got to take a little bit of a history lesson, I think. I'll keep it brief. But basically, there was a pretty severe downturn before the recent AI run-up. And so there was an underinvestment in capacity for a little bit because there was so much cash burn, tens of billions of dollars in the industry. So there was no real incentive to increase capacity because they wanted to make sure that their fabs were filled. And when I say they, it's Micron, SK Hynix, Samsung, SanDisk, et cetera. And so really the key here to think about is supply and demand. So when we think about how does this get solved, well, AI demand is so strong. I mean, PC demand, smartphone demand was fairly healthy up until more recently. There's some demand destruction related to the memory pricing, but generally speaking, premium tier products are continually doing fairly well. Apple's increasing some pricing, but I don't know that the elasticity impact will be that high. Me personally, if my phone is $100 more expensive, maybe it doesn't necessarily mean I'm not going to upgrade to the next iPhone. Anecdotally, obviously, but we need more supply in the industry in order to offset some of the pricing increases. But that does seem to be occurring.
Okay, so put into context for us this headline that we got this week that really sent the memory chip stocks lower. There was a report out of South Korea that SK Hynix is slowing expansion of its AI memory chip production. What does that mean, and what does that mean for the likes of Micron, SanDisk, and everyone here?
Yeah, so there's a few moving parts to keep in mind. That might be the case that they're slowing their high bandwidth memory production. It could be timing related. Samsung got into NVIDIA's Vera Rubin server, so it could be maybe they thought there was going to be a little bit of additional demand. Maybe they thought they would maintain majority share, and now they're not. Maybe they thought that there's some timing differences in procurement by a month or two. So, because there's a supply shortage, they maybe didn't transition as many lines over to HBM because they want to make sure that they can supply to their customers. It also could just be the case that general DRAM is more profitable right now, and so they're more than happy to accelerate the expansion of HBM in the future while maintaining some of that higher profitability, higher product profitability lines for now.
Just looking at your preview note and talking about a 60% increase in DRAM prices and NAND pricing rising at least 75% sequentially. You can't do that, can you?
Well, that's following on some pretty similar price increases just last quarter. Yeah.
So who's paying that higher price? Is that the Apples of the world?
Well, yeah, that's Apple. That's
eventually us.
Yeah,
so you're literally picking up the phone if you're, Micron saying, Apple, I'm raising the prices on these chips by 75%.
Yeah.
Wow.
Well, that's why Apple's, I think, at this point, they want to maintain a certain level of margins. I know Apple's tried to offset it with services and other areas where they can actually have higher margins, but at a certain point, I think they look at the product margins and just want to maintain at least some level of that, knowing they have some pricing power.
That's pricing power.
And once an Apple does that, then everyone else follows suit, right?
I think everyone else has already been doing it for the most part. Apple's maybe a little bit late to the game, actually.
So how long can you think about those kinds of pricing increases for? What's the street looking for, do you think?
Yeah, so I think the numbers that I published are probably fairly close to what the street is estimating. At the point right now, we think that there's going to be continual double-digit quarter-over-quarter pricing increases through the end of the year. It will be decelerating. I think 60 and 75% levels are unsustainable, but we couldn't expect to see that.
So this memory chip pricing used to be very cyclical. It had its ups, its downs. Is that gone now?
I don't think that we're out of the woods of cyclicality yet. I think really what you need to be looking for is AI CapEx and then supply, additional capacity in the industry. Because, look, I mean, I think we're in an elongated upcycle right now, just generally for a lot of semiconductors outside of, say, the analog semiconductors. It's all really, for the most part, it's AI driven, right? I mean, it's all AI servers, the supporting infrastructure around that. So with Micron, I think what we're looking for in terms of cyclicality is, not necessarily is cyclicality over, but when does the cycle start to peak? It doesn't seem like there's any ability for that to happen in the next 12 months, just simply because there's not enough capacity that can come online. The only way to offset it would be, lower AI CapEx or, really a lot of demand destruction on PCs or smartphones or something else.
When oil was like $100 a barrel, I said I'm going down to Texas and drill it.
Yeah.
Now I think I'm going to go in my backyard and build a fab and start putting some chips out there.
If you have any additional memory modules in your basement, maybe from
what I'll
computers.
Back there and recycle.
Paul always has a side hustle.
Jake Silverman, thank you so much. We appreciate it. Semiconductor analyst for Bloomberg Intelligence. We got Micron reporting after the close tonight. Street will be paying close attention, as we will as well. We got some green on the screen here. The Dow's up 300 points. This is Bloomberg.
This is Bloomberg Intelligence with Scarlett Fu and Paul Sweeney on Bloomberg Radio.
All right, Scarlett Fu and Paul Sweeney, we're live here in our Bloomberg Interactive Broker Studio, streaming live on YouTube as well. All I know is the weather apps on my phone, they're getting better and better and better. It tells you now, which is so cool, particularly when you're a beach guy, when you need weather forecast for boating and fishing, is rains can start in 12 minutes. Sure enough, 12 minutes later, it starts raining.
Yeah, it's pretty impressive. Gone are the days where you had to, stay up and watch the 11 p.m. news to figure out what things would look like the next day.
You would think people actually get PhDs in weather. That's a thing, Our next guest does that. Ryan Ward, he's a weather associate, BNEF. Ryan, talk to us about AI's hitting all parts of our life. It's got to be impacting your business, forecasting weather, because it's all about the models and what this model is saying. How is AI being used in the world of weather?
Yeah, definitely. I think a lot of people think, they hear AI and they're thinking like Claude or ChatGPT or whatever. We have very specific models now that are emerging for a variety of purposes in weather. And I think the one that we're, really shocked and excited by right now is tropical cyclones, right? It's hurricane season right now. We're expecting probably a lower than average count of hurricanes this year, but surprisingly, last year was basically the first year that AI models were deployed to actually model hurricanes. And they did really well insofar as they did basically better than every model that already exists, models that have been here for 30 plus years. Yeah.
I guess the question is, how far back do the models go when it comes to data? Because I remember how often we hear that this was the storm of the century, or we haven't had this kind of storm in X number of years. And if your data only goes back, say, 15, 30, even 50 years, that doesn't take you far back enough.
Yeah, definitely. I think this is one of the major concerns, is that we're concerned that if AI models are only trained on previous data and storms are getting more extreme, maybe they won't be able to actually predict those future storms that are, the most extreme stored on record. And yet last year we had one of those. It was Hurricane Melissa. And yet, the Google DeepMind model, which is an AI-based model, did better than every other hurricane model. Basically, it got its intensity basically correct and its path, where it exactly went, also correct. And it's a storm that it could never have seen in the trading data, right? So that was, I think, really remarkable and exciting for us as, meteorologists, that these models are doing so exceptionally well, given they're a couple years old.
What is El Nino, and how is it going to impact hurricane season this year?
Yeah, a lot of people are talking about El Nino right now. It's it's this large-scale climate phenomenon. It basically, all it means is that the Pacific is warmer than average, but that has a lot of downstream implications for weather across the world, really. As far as hurricanes are concerned, we nominally expect that there will be fewer hurricanes than average. If there's maybe on average 7 hurricanes in the Atlantic, that this year NOAA expects maybe somewhere between 3 and 6. Something like that. And so, that basically just results from the fact that the wind patterns change over the Atlantic and it's less conducive for hurricanes this year.
And what is the relationship between hurricane season here in North America versus, say, the typhoon season in Asia? Does it affect that?
Yeah, definitely. So what we generally expect is that the relationship between El Nino and what happens in the Atlantic, that's a pretty tried and true impact. We can look over 50 years of data and see usually during El Nino years, there's less hurricanes. In the Pacific, you kind of see different effects. In fact, on the eastern side of the Pacific, closer to the United States, you see perhaps more hurricanes than average, right? So the way that El Nino impacts globally hurricanes and the circulation patterns is different depending on where you are. And so just because we see less here, we might still see more in the Pacific, depending on where you are.
So who predicts our hurricanes and tells us where they're going and all that kind of stuff? Is that the government or is that a private thing?
Yeah, I think it's a lot of people, right? So there are a lot of government agencies which have these models because the models are really...
Is it like a Canadian model, American model?
Yep. Yeah, exactly.
That's what I hear about.
Exactly. I think as far as tropical cyclones are concerned, American stakeholders are more interested because, the Canadians don't really have an incentive to make a really great tropical cyclone model because there's not a lot of hurricanes in Canada, but NOAA, I think, is usually the gold standard for this kind of stuff.
Who was that?
NOAA, the National Oceanic and Atmospheric Administration.
Right. Are they still funded? I mean, DOGE took cut a lot of jobs, and I'm guessing that something that forecasts weather is not high on the current White House's priority list.
Yeah, definitely. I think we've seen pretty big highs and lows probably as far as NOAA is concerned. You'll see there's hiring pushes very recently to bring back meteorologists because some were, cut in that, the DOGE of it all, right? And so, I think, but all that aside, like the meteorologists who are doing hurricane prediction and general weather prediction are like super important, right? So these feel a little bit more like jobs that have a little more staying power, I would hope.
All right, so we're going to have fewer than average hurricanes this summer.
That is good news.
Good.
That's good news for everyone. Just a quick question. You have your PhD in atmospheric science. When you were growing up, what did you want to be? Like you knew you loved weather, but like how did you see things playing out?
Yeah, I think for me, there was two things. I was always like really interested, just like I grew up in Florida. And so Florida is known, like it's in this area where like the clouds are crazy. Like I lived in LA for 5 years. There's like no clouds there ever. But in Florida, you look up outside any day and just like the scale and scope of the clouds are so crazy. And I was just like always fascinated by that. And then also the BP oil spill was like such a huge impact on like all of our like Gulf communities. And I think just like that really got me turned on to like, environmental, like engineering, science, that kind of
brings
stuff.
them to our radio studio here in Midtown Manhattan.
Yes,
Isn't that funny how life goes? Ryan, thanks so much for joining us. Really appreciate it. Hopefully we won't have to talk to you too much this summer as it relates to hurricanes, but we'll see how that goes. Ryan Ward, he's a weather associate at BNEF. I'm telling you folks, the talent we got in this building just blows me away every single day, and Ryan's another example of that. For our listeners in the U.S., a reminder, you can listen to us via satellite radio on Sirius XM channel 121. Access the world's only global audio business network, coast to coast, 24 hours a day. Bloomberg Radio on Sirius XM channel 121 is presented by Golden Crest Metals. Stay tuned for the latest market news and industry research. Your top stories and global business headlines are coming up in just a moment. We got some green on the screen. S&P's up 50 points. We'll call that 0.7%. The Nasdaq's up 220 points, gaining back some of that loss from yesterday. And WTI crude oil, it's got a 69 handle. How good is that? This is Bloomberg.
This is Bloomberg Intelligence with Scarlett Fu and Paul Sweeney.
Concern about rising prices spooking investors.
What does renewables investment look like in the U.S.?
More tariff talk coming out of this administration.
Breaking market headlines and corporate news from across the globe.
The president wants lower interest rates. He wants a rate cut cycle.
How do you broaden out the AI play?
Are people just looking for something to worry about when it comes to China?
Bloomberg Intelligence with Scarlett Fu and Paul Sweeney on Bloomberg Radio, originals and the Bloomberg Business app.
Good Wednesday morning from the Bloomberg Interactive Broker Studio here in Midtown Manhattan. We are streaming live on YouTube. This is Bloomberg Intelligence with Paul Sweeney and Scarlett Fu. We've got a lot to cover today. Micron reports earnings after the close. Oil prices are down with WTI now trading below $70 a barrel. So we're going to kick things off and check in with our Mike McGlone, who's been calling for oil prices to drop. He got his wish, and now we're seeing it happen. We're going to see how long that can last for. Mandeep Singh, our global tech research head here at Bloomberg Intelligence, will talk to us about SK Hynix, the South Korean chip maker, looking to list in the U.S. To help fund what else? It's AI boom. So we'll get into all of that with Mandeep. Jerry Kudzel is a generalist portfolio manager in fixed income at TCW. He'll join us on the latest in the markets. We have yields coming down right now, the 2-year yield at 4.14%. And a special conversation with Linda Cohn. She's an ESPN Sports Center anchor. She is retiring after 34 years at the Sports
career.
Network.
Yep.
So we'll get into all of that shortly. But first, we're going to kick things off and check in with Amy Morris in Washington. Hey, Amy.
Hey, Scarlett. Yesterday's slide driven by those AI concerns seems to have slowed down and stopped. Traders now are waiting for Micron's earnings report. We do check markets for you all day long here at Bloomberg. S&P 500 up 0.8%, NASDAQ up just about 1%, and the Dow is up 0.8%. The Russell 2000 index up 1.25%. The 10-year Treasury yield at 4.4%, the 2-year yield at 4.14%. WTI crude oil now at $69.85 a barrel. That's less than $70 a barrel. Brent crude now right around $73 a barrel, trading below $75 a barrel for Brent crude, the first time since the war with Iran started, as more tankers are openly crossing the Strait of Hormuz. Will Kennedy is Europe, Middle East, and Africa news director for Bloomberg News.
Yet again, the oil market is showing that it's adaptable. It can get used to disruptions. It can get back to normal quite quickly.
Bloomberg's Will Kennedy. Online spending across all retailers in the U.S. hit $8.3 billion on the first day of Amazon's annual Prime Day sale. That beat estimates by Adobe, which tracks visits to retail websites. Adobe expects total online spending to reach $26.3 billion over Amazon's 4-day event. That would be up 9% from last year's promotion in July. Competitors like Walmart and Target scheduled overlapping promotions, boosting traffic and shopping across the web. Amazon shares right now are about 2.5% higher. For on-demand news 24 hours a day, subscribe to Bloomberg News Now wherever you get your podcasts. I'm Amy Morris. That's a Bloomberg Business Flash. Let's go back to Bloomberg Intelligence with Scarlett Fu and Paul Sweeney.
All right, Amy Morris, the pride of the University of South Carolina down there in Washington, D.C. We appreciate that. Scarlett Fu and Paul Sweeney, we're live here in our Bloomberg Interactive Broker Studio, streaming live on YouTube as well. As Amy's just reporting, got some green on the screen, but let's take a look at some of the stocks on the move today. We can do that with Christine Aquino. She's a managing editor for Markets Live. She joins us here in studio. Christine, what are you looking at?
We're going to take a look at Micron today, Paul. Of course, highly anticipated earnings later after the bell. So ticker MU, those shares, they're doing better now. They're just down about 0.3% after falling earlier by nearly 2%. And of course, we know that it fell 13% yesterday. But, you know, that was only the biggest drop since early June. So a lot happening in the stock, a lot happening in the chip space in general. But specifically for Micron, of course, expectations are still high. Bloomberg Intelligence expecting them to exceed their fiscal third quarter revenue by about 13% above estimate. Also expecting a guidance beat of about 18%, primarily because of that 60% increase in DRAM prices. You know, one of our Markets Live strategists, Cameron Kreis, calls Micron now the third most important stock in the world, just behind NVIDIA Alphabet.
You said that on Bloomberg Surveillance today.
I love that because you look at the performance and it's just been completely nuts, driving all the other memory chip makers up as well. Okay, Christine, Take-Two is on your list. And whenever I think Take-Two, I just think of one video game.
Yeah, exactly. Grand Theft Auto, of course. And that is very much the reason for why Take-Two shares this morning doing quite well. So ticker TTWO, TT2. Those shares are up about 0.5% at the moment, up for a third straight day. Also because of anticipation over their latest version of the Grand Theft Auto video game. Pre-orders apparently starting at midnight local time on June 25th, and it's going to be launching in November for $79.99. That's like the starting price. I don't know if I'm going to be lining up for that, but I'm sure a lot of people will. But that is reason enough for the likes of BTIG, for instance, to launch coverage on Take-Two. They launch it with a buy rating and a $290 price target. And of course, earlier this week, we got an upgrade from Bank of America as well for that stock. They lifted a price target to a street high of $368 versus the current price of about $243. So a lot of anticipation and a lot riding on this latest Grand Theft Auto release.
Video gaming for me is Pong. That was my back in the day. We thought we were cutting edge.
That's like first-gen video games.
Exactly. How about FedEx? They reported.
Yes, they did report, Paul. A bit of a mixed bag there, and that's why we're probably seeing the shares on the back foot. So ticker FDX, those shares are down about 0.8% here. First earnings report since they completed their spinoff of the freight unit. Adjusted EPS at $6.31, actually above expectations, but then it was the margins that really disappointed here. That fell to 8.4%, below expectations. FedEx citing a bunch of different factors, including significant headwinds to global trade policies, as well as the grounding of some of its cargo jet fleet. But, you know, they are still looking for a bit of an increase in terms of its future outlook. They're looking for a 16.90 to 18.10 in terms of EPS for the calendar year 2026, which is up for an estimated $15 in 2025. Let's see if they deliver.
All right. Thank you so much, Christine Aquino. She is a managing editor for our Markets Live coverage. You can check out her work at MLiveGo on the Bloomberg Terminal. And for more conversations like this, subscribe to our Stock Movers Reports, where we offer 5-minute audio reports on the biggest winners and losers in the stock market. You can do that on Apple Podcasts, Spotify, or anywhere you listen. Oil prices are down, and in fact, they are reaching some big round numbers. WTI below $70 a barrel.
Love that.
Brent, which is the global benchmark, below $75 a barrel. So the president has said that when there was a peace deal, oil prices would fall. They would drop like a stone. I don't know if this qualifies as dropping like a stone, but it's heading in the right direction. Sure. So Mike McGlone, he is our senior commodity strategist, joining us now from Miami. Mike, these key levels, $70, $75, how big a deal are these round numbers or these big numbers that people tend to fixate on?
Well, hello, Scarlett. They are. The key round number that we've reached in commodities, say, is 4,000 in gold. But for crude oil, 70,000. The bell curve the last 20 years, the apex of that is around 73 to 75. So now we're just doing a normal rotation from the upper end to the lower end. The key question is how low does it go? And I think by midterms, we're much more likely to get closer to 50. And you mentioned to be top of the show, it's the number one thing is what is the motivation of the leader of the world's most significant energy producer and a net exporter? Mr. Trump wants prices lower. He's getting it. What he's just flipped on is what was going to be drill at will in the U.S. is going global. Now we have Venezuela, UAE, and Iran jumping on board.
Mike, I've always said to you over the years, the last thing in the world I'd ever want to be is an oil trader because I'm always on the wrong side of the trade. But I got this one right, dude, because I listened to you. At $100 a barrel, I'm shorting this stuff. I'm buying puts. I'm doing all the stuff you told me to do. Are we going to see banks or hedge funds say, next quarter, boy, we crushed it on the downside on oil. We made a lot of money.
I think we might, Paul. I think they're finally learning the lessons of a highly elastic commodity that's being rapidly replaced by technology. Just the fact that my EV is 12 years old might tell you the problem. And the key thing that markets learn is you're always supposed to sell commodities. You only want to get long commodities before they go up. After they go up, it's like buying insurance after the house burns down. And now they're just rotating backwards. So I think that's what's happening in all the commodities, most notably precious metals, crude oil, corn, soybeans, and wheat. And that's a key thing to remember. But in crude oil, I don't, it's the key theme is it's the paradigm shift. That average cost of production is around $55 a barrel, and the lessons are you typically have to get below that in the U.S. to offset these surpluses in supply and demand. And what just happened just kicked in, accelerated the surpluses in supply and demand from the U.S. and Canada and the whole Western Hemisphere.
So, Mike, President Trump also has posted on Truth Social that he has ordered the Department of Justice to look into why gasoline prices are not falling as quickly as crude oil prices have dropped. What would the DOJ find?
Well, we know, I think, Scarlett, that's a little bit political because free markets are supposed to prevail. And any time trying to set limits on prices, things like Nixon did, is not a good idea. But it sounds very political. He needs to get votes. The bottom line is just let's not underestimate the motivation of our leader to get prices lower, inflation lower, and to actually help Republicans in midterms. And that also key theme that really happened for me in the last few months was that long bond got in near 5%. I think that was very important. Mr. Warsh came out and pointed out, by the way, we need to do something about inflation, so that'll help the housing market if yields go down or mortgage rates go down. So to me, that's the whole tilt. But it's getting very political as we get closer to midterms. The key thing is they need lower energy prices, and he's getting it.
All I know is the BP, Route 35, Wall Township, $3.85 over the weekend. I bet you it's lower when I drive.
$3 and what?
85 cents.
Wow.
2 gallons I put into the Vespa scooter. That's going to take me through the end of the summer. No question.
Do you go out of your way now to go to that gas station?
Totally.
Yeah.
Absolutely. Because the Phillips 66 across the street, these two guys are like in a death cage match against who can lower the prices more. Mike McGlone, thanks so much. Appreciate it. Mike covers all the commodity stuff for Bloomberg Intelligence. He's based down there in Miami Beach because why not? Let's talk about technology. When we talk about technology, we just bring in Mandeep Singh and we just kind of flip the switch. He's our tech leader at Bloomberg Intelligence here. Mandeep, we got a little bit of seasoning here for the SpaceX trade. Anything come out to you? Because we've had some stock had this great opening day. Then it's been kind of drifting a little bit lower here. They come out with a bond offering a couple days ago. That price as well. How are you thinking about the market's reaction to SpaceX?
I think there will be price discoverability, and that's expected with any new IPO until there is lockup expiration. But to me, there's just so much news flow in terms of what OpenAI is not doing with Broadcom, with their own chips. And everyone right now is going after getting as much compute they can, focusing on CapEx efficiency. And that's where this is a very evolving space. And SpaceX hasn't even reported their first quarter as a public company. So there will be a lot, I think, that will change in terms of just expectations, and that will be volatile for this stock.
SpaceX building out its AI ambitions, the hyperscalers building out their AI ambitions have had a huge effect on chip prices, including memory chip prices. And we've seen how SK Hynix of South Korea, one of the biggest makers of memory chips, is now planning to list in the United States, raising $29 billion to do so. What does that mean, Mandeep? Is this a case where SK Hynix is going to take the proceeds of that and build more memory chip plants so that memory chip prices can start coming down?
I don't think, I mean, if there's one thing that's very evident in this cycle is all of the component players have not invested in a big way to add capacity, whether it's on the memory side, networking side, storage side. Like all these components used to be commodities. And suddenly it's like there is a grand shortage of everything to the extent like quarter over quarter prices are going up 30-40%. And that's been happening last couple of quarters. So I don't think, the capacity planning was done very well by the executives of these companies,
Are they incentivized to change that? I mean, if everyone can kind of live with the higher prices, then what would prompt them to say, let me address this?
I think we may be getting to an inflection point where the cost is so high that people are like, yes, this stuff is useful, but it's too prohibitive for me to keep buying your memory chips or your storage, which used to be, 10 times cheaper. Suddenly you're asking me for, a 200-300% markup over what you were selling me a year ago. And that's where people are now looking at it very closely, especially the CFOs. And, yes, there is ROI in using AI, but the cost is not coming down.
Well, I was telling Scarlett just in the last segment, my next side hustle is I'm going to build a fab in my backyard. How long does it take to build?
He's no longer going to be a wildcatter.
Yeah, I'm no longer going to be a wildcatter because now oil's down to $70. How long does it take for these companies to build these plants, these chip plants?
I mean, to get a fab up and running, we are talking about 18 months, and then, you layer on more capacity. So that's been the case with TSMC and all those guys. But look, you brought up oil. When oil prices get up to a point where they're too high, it causes a recession. There is demand destruction. I think we may be close to hitting that point with the compute prices. And I'm not even talking about GPUs and, the accelerator chips. The basic memory, storage, networking, that gear is getting so expensive that it's becoming prohibitive to keep buying and, using.
And will we see that in tokens? Isn't the token
token pricing?
Token pricing.
Yeah.
That's where the CFO of a company is going to say, no, I don't. You can't install that on your machine because it's too expensive. Do we get to that point?
I mean, look, we're not there yet because these companies are still subsidizing. What they care about is the revenue growth, and Anthropic wants to keep up that pace of adding, $5 billion in ARR every month because they want to raise that next round of funding to invest for next year and the year after, and they want to show the revenue growth to be able to maintain that pace of investment.
So if I need to buy a laptop for my kid,
it's going to be expensive.
How much more expensive is it going to continue to go? I mean, is that trajectory just kind of never ending at this point?
Apple, out of all the companies that has long-term agreements with every supply chain provider, said we'll be raising prices because memory prices are just going through the roof. And it's already $100 up for your iPhone.
All right,
See,
there you go.
That's where you're going to get the demand destruction.
Yeah.
That and the token pricing.
And
at the enterprise level.
You're going to blame the memory guys for not adding capacity. The executives saw this coming. NVIDIA told them that they need 10 times more compute.
Right.
Why didn't they plan for adding more capacity?
There had been a glut for so long, right?
Yeah,
it's a cyclical business. I mean, the first thing I learned about the chip business on Srinivasan was it's cyclical. It's hard to predict the cycle. And that's probably what these guys were thinking but maybe it's less cyclical now we were talking about that.
So, I mean, but then there will be demand destruction if you don't add capacity. So there is a fine line between, the oligopoly and planning for cyclicality versus not adding capacity. Yeah.
All right, Mandeep Singh, putting things into perspective for us here. He's our global tech research head. I know. Mandeep, thank you so much. And by the way, this Independence Day, join Bloomberg this weekend for a special live show from the Intrepid. David Gura, Christina Ruffini, and Lisa Mateo will be celebrating America's 250th birthday all morning on the deck of the Intrepid, right on the Hudson River. Watch and listen live on Bloomberg Television, Bloomberg Radio, and the Bloomberg Business app on Saturday, July 4th, starting at 7 a.m. Eastern Time. Stocks are in rally mode. The S&P 500 gaining 0.75%. The Nasdaq up by 0.9%. This is Bloomberg.